Hello students, this is your Mr. GST who actually makes GST good and simple tax for you. Yes, this is regarding CA Final IDT Marathon Part 1. Before going into the marathon, just watch this 2 minutes introduction. Before the marathon introduction, a small update for you. I am coming up with a 100% English batch for May 26, September 26 and Jan 27 exams for CA Final IDT, which is going to be face-to-face in Chennai, and it is also going to be live at home batch. Please pass on this message to your juniors and friends. Regarding this, I made a separate video, that link is given in the description. So it will be from the morning 6:30 to 9 o'clock. Okay, so that it will be convenient even for the office goers, the articleship students, all that stuff. So regarding this, the video is like, link is given in the description. You watch it and let us talk about our marathon here. In this marathon part 1, sir, I have covered the very important chapters: supply, charge, place of supply, exemptions, toss, was and ITC in a very detailed way, covering all the amendments applicable for your Jan 26 exams, fully updated for your Jan 26 attempt, including all the amendments, all that. Next one is regarding part 2. Sir, part 2 is also going to be like uploaded in few days time, and for all the updates and all the notes, etc, the Telegram channel link is given below in the description. You can use it. And already I have done an MCQs workout marathon. That link is also uploaded. We're covering all the ICAI case study based, that 32 case studies, all these things were there, no? That all complete case studies, just covering in 2 hours time, all that. So I have done a MCQs workout marathon, very helpful for you. And a separate Jan 26 amendments video, that is also there, and the links of all these things will be available for you in the description. And more and more related to CA Final IDT stuff is going to come in our channel. So please make sure you are staying along with me, staying in touch with me. So please make sure you are referring this to your friends also, right? So now enjoy watching your marathon. As you all know, section 7 of CGST Act deals with supply. In supply, first of all, if you see, supply has been defined in section 7 subsection 1, and this has been defined in clause A, AA, B and C. So whatever the transaction happening, if that is falling within clause A, clause AA, clause B and clause C, then only we can call it as supply. Otherwise it is not a supply, and if it is not a supply, you cannot charge GST on that. That is what the whole idea. So for a transaction to charge GST or not, how do we decide? We decide only when that particular transaction is supply. So whether that particular transaction is supply or not, where it is defined in section 7 subsection 1 of CGST Act 2017. So that is what we are going to see here. Now, first of all, before going into that section 7 subsection 1 clause A, section 7 subsection 1 clause A says, one second, clause A says, all forms of supply of goods or services or both, for consideration done in the course or furtherance of business, is what called as supply. That means for a transaction to be called as supply, first of all, there should be either goods or services or both, and next one, it should be done in the course or furtherance of business, and finally there should be consideration. So to understand this particular supply, see, we should be clear with 5 important definitions: goods, service, consideration, person and business. If you are clear with these 5 definitions, then the section 7 subsection 1 clause A, which is covering majority of the transactions, will be done. So now, what are the meanings of these definitions? Let us understand one by one. As you all know, what do you mean by goods? Goods means nothing but every kind of mobile property, but other than money and securities. That means if you are dealing with money and if you are dealing with securities, shares, debentures, bonds, all that stuff, it is not goods. And also services definition is also excluding goods, money and securities. That means simple, money and securities are not at all goods, not at all service. So if you are dealing with money or if you are dealing with securities, no GST. That means I give you 1000 rupees and you give me 1000 rupees back, not goods, not service. Clear? So what is mean by goods? Goods means every kind of mobile property other than money and securities. Okay, we have understood they are not goods. But includes what? Includes even actionable claims, growing crops, grass and things attached to or forming part of land which are agreed to be severed. This is not served, I'm sorry, it is severed. That means separated from the land under the contract of supply. Please understand here, the interesting point is actionable claim. About that we will discuss later on, just keep in mind. So we have understood goods means nothing but every kind of mobile property other than money and securities, including growing crops, grass, all these things which you are agreeing to separate. Even though it is attached to land, you are agreeing to separate it from the land, then it is still we call as goods. So that is goods definition. Next, service definition. if you see service definition says service means anything but other than goods, money and securities. That means if it is already somewhere classifiable under goods definition, don't call it as service. And money and securities, not goods, not services also, so no GST, simple. And here one interesting point is activities includes here somebody, you're allowing somebody to use your money, or you are converting money from one form to another form for which a separate consideration is charged, that is also service. That means, for example, bank is giving loans and they are charging interest, or you are going to any forex dealer giving dollars and taking rupees, for which they are charging a separate consideration. So all these things are what? Service. If I give you 1 lakh and take 1 lakh, it is not a service. But if I give you 1 lakh and charge 1% interest, that 1% interest becomes service. Clear? So that is what? Service definition. Next interesting thing, consideration here in GST, consideration can be in cash, or it can be in kind, or also it can be, that means, for example, I take lectures for you, you pay me 10,000 rupees, or I take lectures for you, you give me a BMW car. Both are nothing but what? Consideration. So cash or kind. Next one, sir, agreeing to do something or agreeing not to do something. For example, I'm going to a barber and he is doing haircut regularly. Okay, so when he is doing a regular haircut to me, once he asked me to file his income tax return and I'm filing his income tax return. When I'm asking him the fees, he said, sir, for next 1 year I will do haircut for you, sir, whenever you come to the salon. That means for the services whatever I did filing his income tax return, he is doing in return what? Haircut to me. So agreeing to do something or agreeing not to do something, these are also what? Consideration. That means consideration in simple terms, it can be cash or kind, or it can be somebody agreeing to do something for you or agreeing not to do something for you. So exchange of goods and services, simple. That is also what? Consideration for whatever I am doing. Next, person definition. Person definition, if you see, simple, whatever the definition has been given in income tax, same definition plus central government and state government will give you person definition. Okay, now see, let us go with this definitions and we'll see some set of examples and close this transaction. Next, very important definition, business. See, in GST, business definition is so widely defined. Whatever they do, whatever you do, that will fall under business. You do normal trading, profession, manufacture, occasion, adventure, venture, or any, see, the law says any other similar activity. That means if they have forgot any wording here, the lawmakers, if you are good in Oxford dictionary, all that, take any word which is of similar nature. Very important point is whether or not it is for pecuniary benefit. That means whether there is intention to make profit or not, it doesn't matter, sir, it is business. So generally, if you have intention to make profit only, we feel like business, otherwise charity. No, it is not like that. Even charitable institutions, we feel like they are doing business. Okay, that one. And irrespective, anything whatever is incidental for that, whatever is incidental for the main activities, that is also called business. And irrespective of whatever the volume you are doing, how regularly you are doing, how frequently you are doing, all these things, whatever you are doing, that is called business. And important thing here is the government undertaking the transactions which are assigned to them as a public authority, that is also what? Business. So business definition is so properly defined, except to what you do in your personal capacity. For example, let us assume here CA Ramesh, employee of Google, selling his personally used BMW car to CA Vishnuvardhan for 25 lakhs. Is this supply? No, this cannot be called as supply because he is selling this car, he is supplying this in his personal capacity. This is not business for him. This is not in the course of furtherance of business. But please understand, a private limited company, let us assume Vivar Private Limited, is disposing their old used car, that will be supply. So disposal of old assets is also part and parcel of business. That is also a business transaction. So it will attract GST. Are you understanding the point? But here this person has used this car for his personal purpose, now disposing that car. So it is not coming under business definition. Okay. Now, if he does the same thing, if he is selling it to a second-hand car dealer, Cars24 Private Limited, then also you should see whether it is done in the course of furtherance of business or not from the supplier point of view, not from the recipient point of view. So here, same story, the person is selling car to me or the person is selling the used car to Cars24 Private Limited, a second-hand car dealer, still it is not a supply because supply is not done in the course of furtherance of business. So the only thing which will escape this business concept is that whatever you do in the personal capacity. Otherwise, the business definition is so beautifully defined, whatever you do will come under business definition. Okay, so that is the case. Suppose if now the Cars24 Private Limited is selling that car to me, then for them it is obviously business, so it is supply. Okay, so business definition, I repeat, it is so widely defined. Even the charitable activities, whatever you are doing, you cannot say, sir, I don't have intention to make profit. For example, there is an yoga camp, yoga seminar going on, 100 rupees, that is supply done in the course of furtherance of business. You cannot say, sir, I am recovering the expenses here, I am not having any intention to pay or intention to earn profit. That way you cannot say, because we don't care about your intention whether you want to make profit or not. Okay, that is what the story. Fine. So we are clear with the definitions: goods, service, consideration, person, and business. Let us see some examples quickly. Now, first example, if you see, Hulk is selling to Dr. Strange the Stark Towers for 100 crores. Is it supply or not? Sir, land, immovable property. It is not a good, it is not a service, so not at all a supply. Here, SOG, SOS means supply of goods, supply of service. It is not supply of good, it is not supply of service. Now, for example, if you see, Mr. Ranbir is transferring 1 lakh equity shares of Animal Private Limited to Rashmika for 25 lakh rupees. Is it supply or not? Because securities are neither good nor service, so it is not at all a supply. But Miss Joya, a stockbroker, she is facilitating the transaction between Ranbir and Rashmika. Further, she is charging a consideration, a commission of 20,000 rupees. Is it supply? Here she is facilitating the transaction of arranging the securities. She is not supplying securities, she is just facilitating the transaction. Okay, that is very much supply of service. Okay, that is example 2 for you. Next, you can just go through the small examples. Pushparaj selling the sandalwood trees, yes, supply of goods, because they are attached to land, but you can separate them from the land. Next, Udta Punjab National Bank transferring cash of 250 crores to Chennai branch from Mumbai head office. It is merely money, not a supply. Next, Udta Punjab National Bank giving you loan to Ajay Malia for 9.75% interest per annum, 500 crores. So as I already told you, when extra consideration is charged for allowing somebody to use your money or converting money, for that you are charging extra consideration, that is very much what? Supply. So this is supply of service. Yes, supply of service. Same way, one person is converting money from dollars to rupees, where the forex dealer is charging commission or the bank is charging commission. Supply of service. Okay. Next, mm, so Vishnu is auditing the company. Supply of service. Next, MSD is endorsing a brand occasion. Yes, it is not business, but it is occasion. Occasion is nothing but which you don't undertake regularly, which is not your regular profession or trade. Next, Isha Foundation conducting a winter yoga camp for 100 rupees per person. There is no profit intention, but still we call it as business. So if all other conditions like good, service, consideration, everything is satisfied, yes, it will be treated as supply. Now see, for example, JK Shah classes providing coaching to students. Main activity is what? Providing students. We are also providing books or materials for students, or conducting test series. All these things are incidental for us, but still that is business for us. So main activity is coaching, incidental activity is providing test series or providing books, etc., etc., for example. So we cannot say this is nothing but incidental to us, this is not our main activity, so this is also business. Next, Greater Chennai Corporation, local authority providing access to local park to general public. So providing access to a particular place is a service, and that is also treated as business. There is a consideration of 20 rupees per ticket, and this is provided by local authority, which is nothing but a person. So all the conditions are satisfied. There is service in the course of furtherance of business for consideration by a person. So it is happily what? Supply. So guys, please understand here, for a transaction to be called as supply, first thing what we have to see, there should be goods or services, and it should be done for consideration in the course or furtherance of business. If all these conditions are satisfied, then only we can call it as supply. Then only we can call it as supply. See, for example, here, CA Stark has been appointed as an internal auditor of Jurassic Park Private Limited. Sir, he is holding an office. Holding an office and providing your service is also what? Business. So that is as per the business definition. So there is also business. Tamil Nadu state government providing some uh, security for your fourth wedding. Let us assume they are charging 50,000 rupees consideration. So that is also what? Business. What I am trying to tell is, even government doing their duty as a public authority is also business as per the definition. Okay, as I told you, except in your personal capacity, whatever you do, that is business. Okay. Suppose, as I told you, Vivarth Private Limited is disposing the old car of the company to Mr. Leo. Is it supply? Of course supply, because disposing the old assets is nothing but incidental to business activity. So incidental things is also what we call as business, so that is supply. Okay, so now please understand here. For example, you're going to Taj Hotel and having a teacup of tea or coffee. Will they charge GST? Yes. You're going to a roadside tea stall. Same tea, same tea powder also. Only difference will be the way they wash the vessels. That might be different. Apart from that, everything, the taste, everything is same to same. The color, the taste, the flavor, the aroma, everything is same. So why they are not charging GST? The reason is, sir, the roadside tea stall is not a taxable person. So supply should be made by the taxable person. That means there should be goods, there should be service or business should be there, consideration should be there, everything. But the supplier, the person who is making supply, should be a taxable person. So what do you mean by taxable person? Who is already registered under GST or who is liable for registration under section 22 or 24 is called as a taxable person. So always remember, when you are taking same good, in one place they are charging GST, another place they are not charging GST, means the reason will be the other person is not a taxable person. If he is a taxable person, then he has the responsibility to collect and pay tax to the government. So that is what the concept. Okay, from now remember, it is roadside tea stall and Taj Hotel. Whenever in further references I use roadside tea stall, you are drinking tea, means it means you are taking the supply from a non-taxable person. You are drinking tea in a Taj Hotel, means you are taking the supply from taxable person. Okay, so that way you remember in our further discussions also. So that is what supply all about. So 7.1a, if you see 7.1a, we have discussed. What is 7.1a? We have understood that for the purpose of 7.1a, we need, there should be at least goods or services or both. There should be consideration and it should be done in the course of furtherance of business. Okay, now coming to the another point here, the consideration. When we are talking about consideration, normally there are some deposits taken by suppliers. Whether the deposits are treated as consideration or not, it purely depends upon the intention of the supplier. For example, you are going to a hostel, you're going to stay there, and they took some advance from you, 2 months deposit something. Is it consideration or not? See, first of all, that deposit, whatever they have taken, they are going to refund it to you when you are vacating the hostel. That means the supplier never intended to take it as a consideration. He just took it as a security. He will return it to you. Then it is not a consideration. No, sir, he has taken the deposit and he will be adjusting that in monthly rentals. That means his intention is to treat that deposit as a consideration. That means if it is refundable, then he is not treating it as consideration, so it is not a consideration. If it is non-refundable, then he is adjusting it for consideration, then it is treated as consideration. Okay, so that is what the point. So deposits purely depends upon the intention of the supplier. Clear? Right. So with this, we are done with 7.1a fully. Here and there some small clarifications are there. Let us see that. So here, two clarifications. One is with respect to, there are artists. What artists are doing, sir? Artists are drawing the paintings and they are having their paintings in their particular house or office. From this house or office, they are sending these paintings to the art gallery or exhibition. Somewhere exhibitions are happening, you are conducting an art exhibition. I am an artist, I am drawing a painting and I am sending that painting to you. I am sending that painting to you to exhibit in that exhibition. Somebody comes and buys it. If they likes, okay, let it get sold. You take your commission and pay me money. That is what our arrangement. So now I am sending the artwork from my office or residence to your exhibition location. Sending this painting from my place to your place, is it a supply? Oh, it can be supply, sir. There should be consideration. No, there is no consideration here. So we cannot call it as supply. Yes, if that painting gets sold from your art exhibition, then it is supply. There is no doubt about that. The only doubt is, sir, from my location, from the residence of the artist or office of the artist, the paintings are sent to the art galleries exhibition. Whether that will be called as supply means no, because you are just sending it. There is no consideration. So that is first clarification. The another clarification here is with respect to, you will be visiting various religious premises or charitable organizations, etc., etc. In those premises, you would have come across there are so many donations, etc., or there will be, like, for example, you see an AC. On the top of the AC, they would have put up a sticker like donated by the great, the honorable chartered accountant Vishnuvardhan, like that. Imagine if they have put the sticker. I gave the AC for what purpose? For advertising my brand name, advertising my office name. For example, you see a water purifier in any particular temple or etc. place, sir, they would have mentioned donated by so and so company. So is that temple or etc. anybody taking that donation is to advertise that particular person name? Here the main criteria is, please understand, what is the intention in giving this donation is what matters. For example, you have passed your CA exam, and while studying for CA exams or when you are waiting for the results, you went to ISKCON temple and prayed to God, Swami, this time if I pass, I will donate a water purifier to your ISKCON temple. So you have passed and you are donating. and after donating the ISKCON temple, people are putting up the stickering on the water purifier, all that stuff, or you are putting up your stickering and giving like donated by CA so and so, or let us assume donated by Vishnuvardhan and associates, like that you are giving the water purifier with the name. Here please understand, they are displaying the name or you are printing the name, all that stuff. See, that is only to show that gratitude. For example, ISKCON temples are putting donated by Vishnuvardhan. Why they are putting my name? Why they are putting my company name? All that stuff purely to show their gratitude. To show their gratitude. So when that is done, that printing the names, etc., etc., to express the gratitude towards the donor, then it is not a supply, because there is no direct consideration which is flowing. I gave the water purifier, I gave the donation something. What is that in return I am getting? There is no direct nexus, there is no direct consideration here, so it is not a supply. But you imagine during this Sri Krishna Janmashtami festival, I know that so many students will go to temple, all that stuff. So I'm going to ISKCON temple board and telling, sir, this time during ISKCON Sri Krishna Janmashtami, I will donate 10 lakh rupees for ISKCON temple. They said like, thank you Swami. I said, I don't want thanks, but I want outside the temple a 10 feet banner of me in front and background Lord Sri Krishna. Okay, and there should be a tagline there, for all your CA inter and final IDT, contact Mr. GST CA Vishnuvardhan, like that we are putting the advertisement. That should be the thing, then only I will give you donation 10 lakhs, I told. Now is it a supply or not? Yes, that is supply. Please understand, when I am giving donation, the name is not important here, sir. I am giving donation, fine, but that name is not important here. We should understand the purpose. So my donation has a direct nexus, direct consideration of what? Advertising my brand name or advertising my name. So that is obviously treated as supply. Okay, so that is what with respect to GST on display of name of donors in the premises of the charitable organization. The next clarification is, see, actually when there is any oil exploration or production contract entered between government and the private people, sir, what they do is they will say you explore the oil, all that stuff, but you should share the profit petrol you have extracted here with the government. That means, for example, see here, for example, you got the license to explore the petroleum, crude or natural gas. Now you have, imagine, let us assume you have extracted 100 lakh liters. In that, first, out of, like, when you extract that 100 lakh liters, as per the agreement, you can sell the petrol to recover whatever the cost you have incurred first. After that, whatever left out, that is called profit petroleum. In that, you should give some share to the government. So out of this 100 lakh liters petrol, whatever you have extracted, 20 lakh liters is to recover your cost you are using. That means you are selling all the stuff. Now, what is that government getting from this 20 lakh liter petrol? Nothing. So there is no consideration here to the government. Nothing has been paid to the government. No service is provided to the government. Okay, no goods is sold to the government. Remaining balance 80 lakh liter petrol, here 30 lakh liters is given as the share of the government. The share of the government. So now this 30 lakh liters, why am I giving as a share to the government? Because government gave me the license to explore that petroleum. So this 30 lakh liters is nothing but consideration paid by me to the government for giving me the permission to explore the petroleum. So that is treated as supply. But however, that is exempt under GST. No need to worry. This is another clarification. Right. So let us move on to the next one. GST implication on certain financial transactions. Important one. A simple and important clarification here. See, there's GST implication on certain financial instruments. Before going to this, you should remember that money and securities are not a supply. Now the doubt is, sir, what about commercial papers or certificate of deposits or any drafts or letters of credit we are issuing? What is the tax treatment for that? They are nothing but coming within the ambit of money. They are also nothing but another form of money. And you know, money is outside the ambit of GST. So these things are outside the ambit of supply and no GST. But for issuing this commercial paper, certificate of deposits or issue of drafts, etc., etc., any other service charges you are taking, documentation charges you are taking, whatever it is, extra things, that will be treated as supply. Okay, just like when you are selling the land, sale of land is not a supply, but for selling the land, some real estate agent is providing his services, broker, that is supply. Documentation charges, that is supply. The legal advisory services a lawyer is providing, that is supply. So that way, here also, sir, commercial papers, all these things, certificate of deposits are nothing but another form of money, and they are nothing but outside the ambit of supply, and hence no GST. But any extra service charges collected for issuing all these things, then that is
supply. Sir, what about derivatives, sir? Derivatives like forward contracts, futures, interest swaps, foreign exchange swaps, all that. So these things, what about these things, sir? Sir, whether it is supply or not. Okay. So for that we should understand, sir, securities includes derivatives. Securities includes derivatives. So derivatives are neither goods nor services, hence it is not liable to GST. Okay. But here one interesting thing is, sir, when I'm dealing with derivatives, there are two ways. When you're dealing with derivatives, you may settle the transaction by actually delivering the underlying asset or by settling with the differential amount. If you are actually delivering the underlying asset, then it will become supply and hence liable to GST. No, sir, I am not settling it with the underlying asset. I am not delivering the underlying asset. I am just settling it with the differential price, whatever I have entered that derivatives, forward contract, etc. With the difference price, we are just booking the profit or loss and coming out. Then it is absolutely securities. Then no GST on that. So that is what the treatment for derivatives. Same way, sale or purchase of this debts, anything like when we are having, like, let us assume 100 crores debts, we are selling that 100 crore debt. This is nothing but what? Money. You are exchanging money, so that is also not a supply. So these are the key things with respect to financial transactions. And one more point is with respect to lending of security services. In lending of security services, you are not selling the security, you are just allowing somebody to use your securities, for which you are charging a separate consideration. So it is very much treated as service and hence it is taxable only. And if you remember, you will be seeing this in reverse charge mechanism also, the security lending services coming under RCM. Okay, so this is another clarification for you. With this we are done with 71A. 71B, now again the easy one. See, understand, when we are discussing 71A, 71A actually needs business and consideration, very important things. So A needs B and C, but B says I am B, I don't need B. That means in clause B there is an exception to business. Same way clause C says I am C, I don't want C. That means this is an exception to consideration. What I am trying to tell here you is, remember the clauses like this. 71A needs, obviously everywhere goods or services should be there, provided by a person should be there. But in 71A the key points are business and consideration. But in clause B, B for business is not required. Clause C, C for consideration, not required. Okay. What clause B says? What clause B says? Okay. Clause B says importation of services for consideration, whether or not in the course or furtherance of business. Whether or not in the course or furtherance of business. That means, see, for example, now Miss Ivanka Trump is providing services to Mr. Sallu Khan regarding how to maintain the bachelorship for a consideration of 1 lakh rupees. This is for Sallu Khan personal services. Yes. But when importation of service is happening, whether there is business element is there or not, doesn't matter. Sir, it is supply if there is consideration. Same case, see, for example, Donald Trump is providing advisory services to Mr. SRK regarding his film production business, Red Chillies Entertainments, for 10 lakh US dollars. Is it supply or not? As I already told you, if it is importation of service, if there is consideration, blindly you can close your eyes and tell that is supply. So importation of service for consideration, straight away supply. Why I am importing, that doesn't matter. Why I am importing, that doesn't matter. And one more thing I just wanted to tell you, when you are talking about importation, you are talking about the recipient. You're talking about the recipient. So whatever you see the condition should be seen from recipient point of view. Okay, so keep this in mind always. Okay, now coming to the point, as I told you, sir, importation of service for consideration, whether or not in the course of furtherance of business is a supply as per 71B. Sir, now what about goods, sir? What about goods? The goods, when you are importing or exporting, they are covered under customs law. Only services, import and export, are covered under GST. So importation of service, even though it is without business purpose, it will be treated as supply as per 71B. So that is what the flowchart given here. So hope it is clear. So this is the only case where you see exception to business. Okay, so with this we are done with 71B. As I was telling you, 71C talks about exception to consideration. Sir, generally to call it as a supply, the transaction, it needs consideration. But even though there is no consideration, section 7 subsection 1 clause C read along with schedule 1 says, I have given, clause C says, go and refer schedule 1. In schedule 1 there are 4 activities mentioned. Those 4 activities, even though there is no consideration, you treat it as supply. You treat it as supply. That means what they are trying to tell, see, if there is any question with respect to whether a transaction is supply or not, first of all, we should see goods or services, by person, consideration, business. If there is no consideration in that transaction, what you have to do? If there is no consideration in that particular transaction, you should not say straight away this is not a supply. You should go and refer schedule 1. In schedule 1 there are 4 activities. See activity para 1, para 2, para 3, para 4. given transaction can you fit anywhere in these four activities, then it will be called as supply. No sir, I am not able to fit it anywhere sir in these four situations, then it is not a supply. So I repeat, if there is no consideration in transaction, straight away go to schedule 1. In schedule 1, if you are able to fit it, then it is supply. If you are not able to fit that in schedule 1, it is not a supply. Okay, so what are the four activities sir? What are the four activities? First of all, first activity, para 1. Para 1 says permanent transfer or disposal of business asset on which ITC was taken. That means we have purchased some goods, we have booked them in our books, took ITC, we are freely disposing that to some other person. For example, you are a chartered accountant in practice running your business. For your business purpose, you are buying a laptop, showing that it is a business purpose, you are buying a MacBook and gifting it to your girlfriend on Valentine's Day. You have taken ITC on that MacBook. Now what you are doing, you are permanently transferring or disposing that MacBook, then still it is called as supply, even though there is no consideration. Am I clear? See, generally if there is consideration, no problem, it is supply, but here what we are saying, even though there is no consideration, we are calling it as supply. So that is para 1. Or para 2. The para 2 talks about the interesting para or lengthiest para we will going to discuss here. The transaction is happening between related person or distinct persons. Please understand, here it is not from related person to distinct person, or it is not from distinct person to related person. This is not the case. It is between related person. That means related person to related person or distinct person to distinct person. In such cases, even though there is no consideration, but if it is in the course or furtherance of business, then it is treated as supply. That means you should know the meaning of related person and distinct person. Related person, distinct person. First I'll tell you the basic fundamental difference. Understand, related person means there are two persons, we are talking about the relation. Distinct person means only one person, we are treating them as two. Okay, so I repeat, related person, there are two persons, we are talking about their relation. Distinct person, only one fellow, you are treating them as two persons. Okay, so who are related person? Between them anything happening without consideration is also supply if it is for business purpose. I repeat, if it is for business purpose. Business purpose is important there. Next, number 2, sir, distinct persons, they are treated as distinct persons. Between them anything is happening without consideration, but in the course of furtherance of business, still we call it as what? Supply, even though there is no consideration. Okay, first let us understand who are related persons. So related person, you have 9 points here. So look at this, what are the 9 points with respect to related person? Easy one, you might have gone through already. Just a quick recap. So what is that? These two people, Vishnu and Vamsi, officers or directors of one another's business. We are calling them as related. These two people are legally recognized as partners. Vishnu and Vamsi, both are partners in a partnership firm. Or employer and employee, we call them as a related person. Mark that employer-employee important, because we'll have a detailed discussion about that employer-employee concept. Okay. So employer employee, again an important concept which we'll have an elaborate discussion. Next, they are called as related. Anything happening between them is supply, even without consideration. And next, when there is any common ownership, for example, Vishnu is holding 70% ownership in Boys Private Limited and Vishnu is holding 30% ownership in Girls Private Limited. Boys Private Limited and Girls Private Limited are becoming related. That means because of common ownership of Mr. Vishnu, where greater than or equal to 25% of the outstanding voting stock I am holding. That means common ownership. Because of common ownership, they are becoming related person. Next, sir, one of them are directly or indirectly holds the other person, holding company, subsidiary company. Next, both of them are directly, indirectly controlled by a third person. As I told here, there is a common ownership. There can be common control also. So because of that, they are becoming related. Please understand, in point number 4 and 6, there are 3 persons. Out of the 3, 2 members are commonly controlled by third person, or in these 2 entities, this fellow is having common ownership greater than or equal to 25%. Okay, remember that. Next, together they are directly, indirectly controlling a third person. That means these 2 people are controlling this fellow. Then these 2 people are called related. These 2 people becomes related. Hope it is clear for you. Next, members of a same family. Sir, what do you mean by family here? Members of a same family when you say. So what do you mean by family? Family definition clearly says here, parents and grandparents. There's the definition here. You will be getting this in this particular page. Okay, parents, grandparents, brothers and sisters. Only when they are wholly or mainly dependent on you, then only they are your family. But your spouse and children, they are your family no matter whether you like them or not. I mean, whether they are dependent on you or not, they are your family. So family definition is your spouse and your children always your family. Your parents, grandparents, brothers and sisters are your family only when they are wholly or mainly dependent on you, then otherwise they are not your family. Okay, fine. So these are the meanings of related person. So these people are related person. Okay, now, or sir, I have a sole agent, my entire production I'll give only to one agent or one distributor, then we call them as sole agent or sole distribution or sole concessionary, whatever name called. Sir, that person is called related person. Among these people, if anything is happening without consideration, then it is supply. That means from subsidiary company to holding company or holding to subsidiary or anything, as we have discussed, family business we are doing, then we are, let us assume father is the manufacturer, son is a distributor. Father is sending the stock to the son in the course or furtherance of business without consideration, then it is supply. So that way, if you are satisfying the meaning of related person, and between you if there is a transaction happening without consideration, then it is supply, even though it is done without consideration. But main criteria is you should be related person, and the next one is it should be done in the course or furtherance of business. That is very important. Okay, now sir, okay, related person we have understood, and between them whatever is happening without consideration is supply. If it is done in the course or furtherance of business, fine. But what do you mean by distinct person? What do you mean by distinct persons? So if you are a distinct person, between you anything is happening without consideration is a supply, that is for sure, correct? Now, what do you mean by distinct persons? Normally you know that you have an idea that when you are operating from multiple states, you have multiple registrations. But when you are operating in same state, multiple registrations are optional, that depends upon you to take a call. So multiple registrations for the same person are possible, either within the same state or in the different states. So when we are talking about distinct person, you should keep this in mind. A single person, how can I identify this fellow as a single person? Based upon the PAN. That this person having multiple registrations in the same state or in different states, whatever it is. Sir, if any person is having multiple registrations, maybe in the same state or different states, when you compare these two different registrations of same person, they are belonging to same person, but they will be treated as distinct person. Anything happening between them, for example, Vishnuvardhan is having a business furniture dealer. Vishnuvardhan is having business branch in Tamil Nadu also, branch in Karnataka also. Sir, both are belonging to Vishnuvardhan individual. Vishnuvardhan in Karnataka, Vishnuvardhan in Andhra Pradesh are different persons? No. So Vishnuvardhan in Andhra Pradesh, Vishnuvardhan in Karnataka, Vishnuvardhan in Tamil Nadu, wherever, he is one and the same. But for GST purpose, those registrations of Vishnuvardhan will be treated as registrations belonging to different persons. So distinct persons, the meaning is given in section 25, subsection 4 and subsection 5. Subsection 4 says in two different states, sorry, you should have two different registrations, maybe in same state or maybe in different states. As I told you, Vishnuvardhan registered in Tamil Nadu and Karnataka, or Vishnuvardhan is having two registrations in Tamil Nadu, whatever it is, maybe in Chennai one registration, Coimbatore another registration, maybe I am doing furniture business also, restaurant business also in Tamil Nadu. For restaurant business I have a separate registration, furniture business I have a separate registration, possible. So two different registrations is the primary criteria. Two different registration, same state or different states, these two registrations are called as belonging to distinct person. Clear? Or section 25 subsection 5 says two different states, one state registered, another state unregistered. One state registered, another state unregistered. Okay, then also you are called as distinct person. For example, in Goa I am selling liquor, I did not take registration because I am selling only liquor. In Karnataka I have a restaurant and I took registration. So in Karnataka I am a registered person, Goa I am not registered, correct? So with respect to these two things, both are my establishments, but one is registered, one is unregistered. Still we call it as establishments belonging to distinct persons. Both are belonging to Vishnu, but still we call them as both are belonging to distinct persons. Am I clear? So now anything happening between them, is what? Anything happening between them is supply, even though there is no consideration. Those who are you are watching the recording, yes. So pause the video and just go through this example. Just go through the example. Pause the video and go through this example. See whether you are able to understand the question or not and the example or not, and then continue the video. So if you look here, Chennai to Tirupati, both are belonging to Vivad Notebooks Private Limited. Chennai, Tamil Nadu registered, Tirupati, Andhra Pradesh registered. Both are having separate registrations, but both are belonging to Vivad Notebooks Private Limited. Now, as I told you, 25 subsection 4 needs two different registrations. Here we have two different registrations. Between them, they are doing stock transfer without consideration. Still, we call it as supply because there are two different registrations. 25 subsection 4. Same state or different state, it doesn't matter. So they are distinct persons. Anything happening between them without consideration is a supply. Okay. Now here, if you see Chennai and Coimbatore, Tamil Nadu, both are under same registration. So when both are under same registration, 25 subsection 4 needs two different registrations. Here there is only one registration, so we cannot impose subsection 4. So fine. 25 subsection 5. 25 subsection 5 needs two different states. Here there is only one state. Both are belonging to Tamil Nadu. Then you cannot fit this in subsection 4 or you cannot fit this in subsection 5. So both the cases, it is not at all satisfying distinct persons concept. So here stock transfer from Chennai to Coimbatore is not a supply because they are not distinct persons and there is no consideration, no supply. Nowhere you can fit this in schedule 1 transactions. So it is not a supply. Okay, so that is what the point. Same way here the examples, if you see Tirupati Andhra Pradesh, Vijayawada Andhra Pradesh branch, both are having different registrations. Subsection 4 says two different registrations. Same state or different state, it doesn't matter. Both are called as distinct persons and hence it is supply even though without consideration. Next, fourth situation satisfies 25 subsection 5. So one state registered, another state unregistered. So stock transfer without consideration in the course of furtherance of business, that is also supply. So hope that is clear for you. With this we are done with related person and distinct persons except that employer-employee concept. Let us finish that employer-employee concept also. As you all know, employer-employee, sir, this people are called as related person. And generally when you see employee concept, employee is drawing salary from the employer and whatever the services employee is providing to employer in the course of employment contract is not a supply as per schedule. As per schedule what? Schedule 3. What is schedule 3? Neither supply of good nor supply of service. So if you analyze this situation, if you analyze this situation, as I was telling, schedule 1 and schedule 3 put together the common reading, the employee providing to employer his services in the course of employment. And as a part of employment contract, whatever the employer pays to employee, that may be salary, that may be perquisites. Please understand, perquisites also will form part of employment contract. So salary and perquisites, both whatever he is getting paid from the employer because he is providing his services in the nature of employment contract according to employment contract, both are coming under schedule 3. So it is neither SOG nor SOS. It is not at all a supply. So this is number 1. Okay, but sir, during this certain things are provided by employer to employee which are not even forming part of this employment contract. What about them? That means, see, for example, there is any new year celebration happening or there is any best employee award given. In that case, some gifts are given by employer to employee which are not mentioned in employment contract. It is not a salary, it is not a perquisite, which is not mentioned in the employment contract at all. Then in such cases, understand what happens is this becomes gift. That means without consideration, because this is for the services you are providing as an employee. I am paying you salary and perquisites. So whatever extra is given, that is nothing but gift. And if it is not defined under GST, that's a different story. And schedule 1 says employer and employee are related and anything happening between them is a supply. So these gifts given by employer to employee is nothing but attracting schedule 1 transaction para 2. So now we came up with a relaxation saying that if at all aggregate value of gifts given by the employer to the employee in the financial year, so per annum per employee greater than 50,000, if we give anything, then only that entire amount is supply. If it is less than or equal to 50,000 per annum per employee, it is not at all a supply. But I repeat, if it is 70,000 aggregate, that means all the gifts given in the year, if you add, once you give 10,000, another time you give 5,000, another time you give 20,000, all these things, sir, you add and see it. If it is exceeding 50,000, let us assume if it is 70,000, total 70,000 becomes taxable. But if it is falling within 50,000 limit, that is less than or equal to 50,000, then it is not a supply at all. So that is what the point. So this is something related to employment contract, all that fine. Suppose one more step ahead, if we discuss, what if employee is providing to the employer some other services which are not even covered under employment contract? That means that so long we have discussed payment is covered under employment contract or not. Payment is covered under employment contract, then it is salary or perquisite, it is not taxable, not a supply because of schedule 3. If something extra is given, it is treated as gift and we have seen 50,000 relaxation. But sir, if at all the work itself, whatever I am doing, for example, you are acting as CFO of my company, you are providing your services, getting salary and perquisites, not a supply. And extra I'm giving gift during Diwali or New Year, 50,000 limit we have. What if you're acting as a CFO of my company, and personally also you are providing me some investment advisory services for which I'm giving you some consideration? This is not a service which you are providing to me as per employment contract. So automatically this is what? This is supply and attracts GST. Are you understanding the point? This is not at all covered under employment contract. I repeat, anything you provide outside the employment contract, for that if I pay consideration to you, that will automatically attract supply provisions, and hence it will be liable to pay GST. Clear? So that is what the employer-employee discussion. So again, summarizing the concept, the employer-employee concept, employer paying to employee salary, perquisites, all these things for the work done in the employment contract, not a supply because of schedule 3. If anything extra is given which is not mentioned in employment contract, any consideration extra, anything is given extra, that is nothing but gift. For that we have 50,000 limit, we can enjoy. No sir, the work itself, what employee is doing to the employer, is not covered in employment contract. That means it will not come under schedule 3, hence it is supply, it will attract GST. So that is what the comprehensive discussion of employer and employee. So here there is the example for employer-employee concept. So Vivar Private Limited paying to the employees Mr. Animal, Mr. Tiger, Mr. Leo, Mr. Animal, Mr. Tiger, all this value of gifts, all that. So we can just go through the example. We have clearly discussed it. The next one is para 3. Para 3 is nothing but principal and agent concept. You know that if anything is happening between principal and agent, here the important thing is anything means here we are talking only about goods, not about services. So goods are going from principal to agent or from agent to principal, that without consideration still we call it as supply. Still we call it as supply when agent has the authority to raise invoice in his own name, then only schedule 1 para 3 can be invoked. So please understand here, for example, Vishnu is having an agent. Vishnu is selling notebooks and he has an agent by name Mr. Spartan in Coimbatore. CBE means Coimbatore. So here I am sending the goods. Here the concept is all about principal sending the goods to agent, agent sending the goods to principal. That will be still called as supply if agent has the authority to raise invoice on that particular transactions, for the transactions. Now Vishnu, the principal, is sending the goods to agent and is asking to sell the notebooks to the local bookstall owners in Coimbatore. Spartan also said, okay sir, I will do it. But now when Spartan is selling it to the local bookstall owners, who is raising invoice to the local bookstall owners is what matters. Sir, when the principal himself is raising invoice to the local bookstall owners, so whatever is the movement happening between principal and agent is not a supply. Okay, directly principal is raising invoice on the bookstall owners, fine. But sir, if agent only raises the invoice to the local bookstall owners, that is Spartan only raising invoice in his own name, then this movement of goods from principal to agent will be treated as supply. That is what the concept. Okay, so that is what all about that. So with this we are done with para 3 also. Let us move on to para 4. Okay, coming to para 4. Sir, what is para 4? Para 4 is all about importation of services without consideration from a related person or own establishment located outside India in the course of furtherance of business, as we have told. So here importation of services we have already seen. So importation of services, when you see, we can compare this with clause B, section 7 subsection 1 clause B. In 7 subsection 1 clause B, what it says, consideration should be definitely there, but here consideration should not be there. Here it may be in the course or furtherance of business, it doesn't matter. So business requirement is not there, but here business requirement is mandatory. 7(1)B, supplier should be, can be any person, but here in schedule 1 it should be related person or own establishment located outside India. Then only what we call it as supply. Okay, so if importation of service is tested with consideration, now go to clause B. Without consideration, come to clause C. So as per clause C, what are the conditions? Conditions are, it should be without consideration, in the course of furtherance of business, and from a related person or own establishment located outside India. Then only we can call it as supply. You know, for example, Mr. Mahendra Bahubali, who is a lawyer in USA, the son of Devasena. Devasena mother is staying in India. right? So now Mahendra Bahubali is providing legal advisory services to his mother for filing a divorce suit without consideration, obvious. Now, is it a supply or not? Please understand. Now, the important thing is whether this is supply or not, we should see from Devasena's point of view, not from Bahubali's point of view. Because importation of service, the recipient is liable to pay GST. You know that the recipient is liable to pay GST. So, we should see from whose point of view? We should see from recipient's point of view. So, recipient point of view, if you see, this is importation of service from son, related person, without consideration. Is it in the course or furtherance of business? Devasena, for her personal purpose, she is importing the service here. There is no business element, so it is not a supply. But same Devasena, if she is importing the legal advisory services from her son without consideration for filing a suit against Mahishmati and Co. Balal Dev, with respect to Mr. Balal Dev, with respect to her business Mahishmati and Co., then importation of service is there from her son, related person, without consideration, and it is in the course or furtherance of business, then automatically we call it as what? We call it as supply. So obviously, so please understand, whether it is for business or not, we should not see from supplier point of view, we should see from recipient's point of view. Please understand, when it is importation of service, yes, generally supply we should see whether it is for business or not from supplier's point of view, but in case of importation we should see from recipient's point of view, importation of service, whether it is business purpose or not, as per schedule 1. Am I clear? So that is what the point. Same story here, if you see again with respect to Mr. Kattappa, same story, just I'm changing the character. Mr. Kattappa, father of Devasena, who is in USA, he's a lawyer. Now please understand, both the cases, again, personal purpose and business purpose. Here please understand, both the cases it will not be supply, whether it is personal purpose or business purpose, because you should see whether Kattappa is related person to Devasena or not. Kattappa is the father of Devasena. When she is looking at the father is a lawyer in USA. That means he is not wholly or mainly dependent on Devasena. Parents are my relatives only when they are wholly or mainly dependent on me. So according to Devasena, father Kattappa is not related to her. Even though she is importing the service for her business purpose here, it cannot be called as supply. It cannot be called as supply. Hope you are able to understand. Just pause the video and just go through this explanation. What I am trying to tell is, as per GST law, I am always related person to my mother, but my mother is not related to me because she is not wholly or mainly dependent on. You understanding the point? So for my mother, I am always a related person, if you see from my mother's point of view. But for me, from my point of view, my mother is not related to me because she is not wholly or mainly dependent on me. So that is the interesting point here in related person, the family definition especially. Okay, hope it is clear for you. So with this, we are done with para 4 also. We are done with schedule 1 completely. Hope it is clear for you. Now let us move on to schedule 2. Schedule 2 is nothing but if a transaction is already treated as supply, whether it should be treated as supply of goods or supply of services. So I always tell schedule 2 is either SOG or SOS, supply of goods or supply of service. So there are the general points which you can go through. Here the interesting thing is, see, when you're transferring title in goods. Okay, sir, what I say is, just take it this way. This transfer of title. Transfer of title in movable property, then it is supply of goods. If it is transfer of title in immovable property, you cannot call it as supply of good or supply of service. No sir, I am not transferring the title, I am just transferring the right to use. If you are transferring the right to use, whether it is movable property or immovable property, it is obviously treated as supply of service. With this logic, you can just crack various points here. So just make sure you are thorough with this flowchart. Simple one. Next, as I already told you, transfer of title, transfer of right to use, transfer of title at a future agreed date or current date, it doesn't matter. Whether are you transferring the title or not, that is what matters. So supply of goods. Next, transfer of right to use the land, that is immovable property, right to use services, letting out any properties, building, supply of services. Next, somebody doing treatment or process on the goods belonging to another person, job work, example, supply of services. Your business assets are being transferred or disposed of because they are no longer to form part of your assets, supply of goods, permanently or completely transferring or disposing the business assets. As I told, transfer of title, supply of goods. Goods which are your business assets are put to private use or allowing somebody to use for any purpose other than business. That means personal purpose. That means you are allowing somebody to use it. You are not selling. You are just allowing somebody to use. Supply of service. Next, where you are closing down your business, the goods which are forming part of your business, if they are lying still in the godown, they are deemed to be supply. But if you are not closing down the business, you are just transferring the business to somebody else, then it is not a supply. Or your business is going to be carried out by any person who is treated as a personal representative, then also it is not a supply. Simple thing, your business you're closing down, whatever the goods are lying now in the business will be deemed to be supply. Even though you have not actually supplied, you should pay GST and close it. But there are two exceptions. One is, if at all you are selling the business, that means the other fellow will carry on the business, so there is no problem to the government. Or if the business is carried out by any authorized representative, then also fine. That means business is not getting closed, just the owner is being changed or taxable person is being changed. Now, renting of immovable property, temporary transfer of or permitting use of enjoyment of any intellectual properties like trademark, patents, all that stuff, or any developing the design or any softwares, etc., etc., all these things are what? Supply of service only. For this I have given notes, you can just refer the notes here. So intellectual property rights, permanent transfer, supply of goods, temporary transfer, supply of services. IT software, pre-packed form, supply of goods, that is coming in music, CDs, etc., etc. Others, it is service only. Okay, so that way you can just take it up. Next, construction. This is very, very important one. For this I have also given an example. Simple, if there is any under construction building, if it is being sold, whether it is supply or not, it will be treated as supply even if 1 rupee consideration is taken before the completion certificate or first occupation, whichever is earlier. So if you are constructing anything, under construction things, anything, if you are buying, so even if the, see, understand, if the building is already ready made, it is like ready made product but immobile, so if you sell that, it is not a supply because it is not good, it is not service. But if it is still under construction, you go and pay 1 rupee advance. That means you are hiring that opposite fellow to construct your house, so it will be treated as supply of construction services for you, so it is service. So I repeat, under construction buildings, supply of service. It is completely constructed, immobile, it is not a supply. Clear? So this is the example and you have the answer for this. You can just go through that. Okay, that is important point here. So construction one, so in the schedule 2, this is important thing. Next, here one more thing is there, agreeing to tolerate something. This is also important, so we'll discuss here. So the analysis has been given here. And I repeat, if you are buying the under construction properties, the total consideration will become supply of service, not just the advance amount what you give during the construction. So even though you have given 10 rupees advance during the construction, the total building cost will be treated as supply of service. Next, works contract. Works contract. What do you mean by works contract? Generally, when you talk about immobile property, if the contractor brings only the labor, that is called pure labor contract. No, sir, the contractor is bringing both labor and material, then we call it as works contract. See, if they are just bringing the labor and doing the construction related activities also, then it is supply of service. Or they are bringing both material and labor and doing the construction work, then also it is called supply of service only. Technical meanings will change. That is pure labor contract, this is called works contract. Remember this word works contract, very important. So always remember, works contract means with respect to construction, both goods and services the contractor is providing, the material and labor both he is only bringing. That is what we call as works contract. So remember, very, very important wording. But both are, pure labor contract is also service, works contract is also supply of service, nothing to worry about. Next, supply of food and beverages. The restaurant services, supply of service only, so that also schedule 2, last point. Okay, so with this we are done with schedule 2, except that some clarifications below. Now this is one interesting clarification given by the department actually after 5 years of implementing GST. In this clarification they have discussed about various occasions and whether it is taxable or not. See, the fundamental concept of this particular clarification is, when you have an agreement to do something or not to do something or tolerate something, for that agreement, either to do something or not to do something or tolerate something, for this agreement, if there is also consideration, then only we call it as supply. Okay, that means, now see, for example, sir, you are driving a bike, and when you are driving the bike without helmet, if the traffic police is charging 1000 rupees penalty or fees, please understand that 1000 rupees is not a consideration for violating the law. Correct? The same way, when you are entering into a contract with a person and you are breaching the contract, and because of the breach of contract you are paying the penalty or liquidated damages, is it consideration for breaching the contract? No, that is compensation you are paying to the opposite fellow because he has incurred some loss because of you breached the contract. So because of this, please understand here the fundamental thing is that if there is agreement to do something and further there is consideration, if there is agreement not to do something and there is consideration, agreement to tolerate something and there is some consideration, then only it is called supply. So taking that logic into picture here, see, any liquidated damages are not consideration for breaching the contract, so it is not a supply, not taxable. Cancellation of coal blocks. The government has entered into a contract where the private entities have been allotted with coal blocks, and those contract has been breached by the government and they have paid damages to them. So again, breach of contract, the damages paid not because of an agreement to tolerate the breach, all that. So this is not a supply, so no GST. Next, check dishonor charges. Bank is agreeing to, like, okay, no problem, you deposit the check without balance also, let it get dishonored, you pay us this much fees, like that they are asking consideration. No, that is penalty for you to depositing the check without sufficient balance. Any other penalty imposed for violating any laws, as I told you already, that is not consideration for violating the law, that is not the consideration for violating the law, so it is not a supply. Next, any employee terminating the employment contract before the period. So if he is not serving the complete period, notice period, etc., for which the employer is forfeiting his salary, so that is punishing the employee for not fulfilling his contract. That is also not consideration for agreeing to tolerate something, so it is not taxable. But here if you see certain cases where late payment surcharge or fees, for example, sir, if you go and try to purchase a mobile, the mobile shop owners itself nowadays they are saying pay after 30 days, pay after 60 days, pay in 3 installments, pay us so much extra, that's all, like that. They are giving you an option for making late payment. They are not punishing you for making late payment, they are giving you an option of making late payment, but they want some extra consideration. So in such cases what is happening, they are agreeing to tolerate you making late payment. Okay, so for extra consideration, so in such cases, yes sir, it is treated as supply, and the amount whatever they are charging, they will the amount will be treated at par with the principal supply. Okay, suppose if it is a mobile phone and you are purchasing the mobile phone charged at 12% GST, for example, if they are asking you to pay 300 rupees extra, 400 rupees extra for allowing you to pay the amount late, 30 days late or 40 days late, etc., that 400, 500, whatever extra they are charging, that also will be treated as what? Treated as sale of mobile phone. For example, here see one more case, like cancellation charges. Nowadays if you see, mostly with respect to hotel industry, the travel industry, all that stuff, when you are booking the flight ticket or train ticket, there will be an option refundable, non-refundable, all that. So if you pay 250 rupees extra, 300 rupees extra, all that stuff, what they are doing, they are giving you an option to cancel the ticket also, right? In such cases, for example, if it is a train ticket in AC, sir, it is taxed at 5%. That ticket you are cancelling by paying cancellation charges 150 rupees, that also will be taxed at 5%. Here they're agreeing to tolerate, no problem, you cancel, pay us this much consideration, we will arrange another alternative and we will pay you the ticket amount fully, don't worry, so cancel, like that. They're giving an option, they are not punishing you for canceling the ticket, they are giving you an option to cancel also, so they are agreeing to tolerate you canceling, so the amount will be treated at par with the principal supply. Suppose for example, if it is a sleeper ticket in train, it is exempt under GST, so the cancellation charge is also what? Exempt under GST. Okay, so that is the situation, clear? So at par they will be treated with the principal supply. There is one more doubts are regarding the minimum electricity bill we pay, no, monthly, whether you use it or not, at least for 50 units, 100 units, will be paying that 150 rupees, 250 rupees extra, so etc., something like minimum amount, correct? So the doubt was, are we punishing the consumers for not using that minimum electricity? No, it is not like that, sir. We are selling electricity, and for selling electricity, this much minimum amount is my bill, 150 rupees minimum starting package. So like that, they are selling the electricity and they are taking the consideration, so it is supply, and of course it is very much exempt under GST also. Yeah, so there is another clarification there. And there are certain cases like where they're forfeiting the advance amount paid for agreement to sell the immovable property. You know, normally when we are buying the land or selling the land, buildings, etc., we will enter into first an agreement, we'll pay 20%, 25% advance, and we'll agree we'll pay that balance amount in 30 days or 60 days, 90 days, based upon your understanding, and after paying the balance amount we'll get the land registered, so that way we'll agree. Now we will also tell initially, if you don't pay the balance amount within the specified time of 90 days, 60 days, 30 days, we will forfeit the advance, we will not repay you the advance back, return the advance back. Okay, so that way we'll agree. So in this case, the forfeiture of that advance amount, is it consideration for agreeing to tolerate your breach? This is also similar to breach of contract. Here we don't want people coming and just doing some time pass. We want to sell the land, correct? It is not like, okay, you breach the contract, you don't come within 30 days, you don't come in 60 days. Even if you are not coming and paying, don't worry. I am okay with the advance amount. I'll forfeit the advance. That is not my agenda. My agenda is to sell the land, not to forfeit your advance. So this is also similar to breach of contract. So whatever the forfeiture is happening, so it is not a supply because there is no agreement to tolerate the breach. Okay, so that is the case. Next, there are 2 points here which I did not give actually. So here, for example, we have a building, 7 floors building, east facing, nice sunlight, nice ventilation, everything. So we are getting proper ventilation. Next to our building, another fellow got a permission to construct 20 floors. And if he constructs the 20 floors, the ventilation, the sunlight, everything what we are getting, that will be definitely gone. Normally sun rises in the morning 5:30, 6 o'clock. Now for us, if that fellow constructs the building, for us the sunrise will happen afternoon somewhere 11:30 or 12 o'clock. Okay, so what we are doing, we are asking that person, sir, even though you got permission to construct so many floors, sir, reduce 3 floors, sir, or reduce 4 floors, sir, we'll pay 40 lakhs, 50 lakhs, 1 crore, 5 crores for you, please don't construct so many floors. Like that we are asking, and that opposite fellow is also like, fine, okay, no problem. He's agreeing not to construct the higher number of floors for a consideration. So that is supply. So there is an agreement not to do something, there is an agreement to do something, there is agreement to tolerate something, and for that agreement there is consideration also. Then obviously it will be treated as supply. So it is supply and taxable. Okay, of course. Sir, we'll be seeing, for example, outside a ladies fancy store, there will be a pani puri anna will be setting up his pani puri stall kind of thing. So the hawkers we call on the roadside footpath, where there is a common entrance area for the shops. Outside that there will be some mehendi shops or pani puri shops or stalls that way. So the shopkeeper is allowing the hawker to operate from the common pavement, even though it is a disturbance for his customers, for his business, all that stuff, for which he is charging some consideration from the hawker, from the pani puri vendor, all that, right? So the shopkeeper is agreeing to tolerate the hawker, the pani puri and operating from the common pavement. So there is an agreement to tolerate that, and there is consideration for that. So that is treated as supply as well. Okay. Now, so that means the overall summary, the overall understanding of this concept is nothing but, please understand, sir, there should be an agreement between you and me. It need not be writing, it may be in oral or written, whatever it is, sir, there should be an agreement to do something or not to do something, or to tolerate something, for which we are accepting some consideration. That is the case, it is supply. Otherwise, in simple terms, penalty, penalizing you, punishing you because I have incurred some loss, taking compensation from you, all these things will not be considered as consideration for agreeing to do something or not to do something or tolerate something. That will not be supply. So penalty, punishment, compensations, leave it, it is not a supply. But consideration to do something, consideration not to do something, consideration to tolerate something is supply. Okay, so that is what the clarification all about, in which they have covered multiple situations. See, the next clarification is regarding the joint venture transactions. In joint venture transactions, normally there will be members in joint venture, and there will be one operating member who will be operating the things, all that stuff. So the contribution what they are receiving from all the members in the joint venture, what is the tax treatment for that? See, now for example, in the joint venture there are 5 parties, and each party is contributing 200 rupees, and totally they have pulled up 1000 rupees. Using this 1000 rupees, the operating member has purchased certain for the joint venture. So taking money from these people and buying something for the joint venture. But taking money here is nothing but transaction in money. I am receiving money from them, from the joint venture members. So it is not a supply because it is purely transaction in money. Or there can be another story where I am the operating member of the joint venture. So there is a pulled up amount 1000 rupees. This 1000 rupees, sir, why I am taking this now? Not to buy something for joint venture. Sir, as an operating member, I am providing something to joint venture. So for that, I am receiving that contribution from them, 1000 rupees collected. So now this is nothing but for the services I am providing to the joint venture, the consideration I have collected. So that is supply, and that is, am I clear? So whatever the contribution they are giving for purchasing some common goods or services is fine. Whatever the contributions they have made for the services, for the supply provided by operating member to joint venture, then here there is a supply happening by the operating member to the joint venture, and the joint venture is paying consideration to the operating member. So you have to see in that way. So that is what the clarification here, right? So that is joint venture clarification here, it has been given. Okay. The next clarification is regarding Pagadi system. See, generally we know that if there is sale of land or building is happening, there is no GST because we understand that is immovable property. But normal people's understanding, the common man understanding is we are already paying stamp duty, the registration charges, all the stuff. So there is no GST. That means stamp duty, registration charges, if they pay, there is no GST according to them. So they got a doubt. Sir, there is a system called Pagadi system, and where we are transferring the tenancy rights, so lease. So when they are entering into the lease agreements, they are registering that in sub-register office, paying the stamp duty, registration fees, all that stuff. And they got a doubt: is GST applicable in this case? Because we are paying stamp duty and registration charges. Then the department has clarified, sir, you are paying stamp duty or registration charges. That's a different story. But what is that you are doing here? You are renting the immovable property. When you are renting the immovable property, it is nothing but supply of service. You are allowing somebody to use the immovable property. In Schedule 2 also we have seen it is nothing but supply of service. So hence it is supply and taxable accordingly. Okay, so that is what the clarification. So the next clarification is regarding priority sector lending certificate. Priority sector lending certificate. See, first of all, what is this priority sector lending certificates actually? Now see, for example, as per RBI guidelines, there are some priority sectors for which the bank should do lending. For example, let us take agriculture or MSMEs, etc. There is a bank, Bank 1. What this bank is doing, as per the norms, as per the guidelines to them, their target is at least they should provide 70 crore worth amount to priority sectors. But what they did 100 crores. That means they have done extra. They did over performance. Okay. So what they will do now, the excess 30 crores, whatever is there, no. For that, they will create a certificate called priority sector lending certificate, and they will sell it to another bank. They will sell it to another bank which also has a target of giving priority sector lending, but they are not able to achieve that. So now what this second bank will do, they will purchase this priority sector lending certificates from bank 1, which makes them, they have satisfied that priority sector lending conditions or criteria. So bank 2 also know for what, for 30, let us assume for 10 crore worth there is a shortfall for bank 2. What they will do, they will buy 10 crore worth priority sector lending certificate from bank 1. So that will be like 10 crore conditions satisfied for them. Okay, so that way those banks which are not able to achieve the targets of priority sector lending will buy the priority sector lending certificates from the banks which have achieved the targets. Okay, so now let us assume 10 crore worth the PSLC has been sold to bank 2. Now what is happening here? What is the tax treatment here? Na? The law has clarified that these are not in the nature of securities. These are not in the nature of securities. Okay, so PSLC are treated at par with goods, and hence it is treated as supply of goods and taxable. So that is the another clarification for you. So with this we are done with the clarifications. We can move on to the next one, Schedule 3. So the next one we are going to see is nothing but Schedule 3. Schedule 3, what is Schedule 3? Neither supply of good nor supply of services. So whatever the items given in Schedule 3, you know that they are not at all supply. It is neither supply of good nor supply of services. So what are the activities given in Schedule 3? So number one, you know, obviously employer and employee providing his services to the employer in the course of employment contract is neither a supply of good nor supply of service, hence it is not subjected to GST. So here if you see the interesting things, as I have already told you, whatever is part and parcel of employment contract, the salary, perquisites, everything is nothing but not a supply, so no GST. But if anything is provided on principal to principal basis, which is outside the contract of employment, all that, then it is supply, it will attract GST. And here, see now, for example, sir, any amount received by the employee from employer on premature termination. Premature termination is also part of employment contract. So whatever is given is not a supply. Next, the services provided by the casual worker on daily basis. No matter whether you are paying the wages on daily basis, weekly basis, or monthly basis. Employee is an employee, so not a supply. Next, casual workers in construction contract, all that stuff, there is also not supply. Workers are workers, employees are employees, so obviously sir, it is an employment contract and there is not a supply. Next, services provided by employee to the employer in the course of employment contract are outside the realm of supply, that we have already understood. But suppose if the employee is leaving the organization and the employer is asking, don't join the competitor, there is non-compete agreements, then whatever the employee is agreeing not to enter into competing business or not join the competitor, so for that he is getting consideration from the employer which is outside the contract of employment, so it is supply. That is very interesting thing for you. This is not a part and parcel of employment contract, so it is not a supply. So this is regarding first entry in Schedule 3, neither SOG nor SOS, that is neither supply of good nor supply of service. Next, the second one, services provided by courts or tribunals, that is the court fees whatever you pay when you go for filing an appeal, all that, that is neither supply of good nor supply of service. And here there is like this court includes what? District court, high court, supreme court, all these things. And that also covers consumer dispute redressal commissions. So whatever the disputes you are taking to consumer dispute redressal commission, and whatever the application fees etc you are paying, see, generally these are not tribunals, but they have the characteristics of tribunal. So what the department has clarified here is, so whatever the services provided by these people are also covered under schedule 3, neither supply of good nor supply of service. That is the second one. Next, third one. The third one, in third entry there are again 3 points. Number one, I can just tell you for your remembering purpose or for your memory purpose, politicians with power, that means you can take the MLAs, MPs, member of panchayats, all that stuff. So the salary what they are drawing, being the people's representatives, that is neither supply of good nor supply of service. You cannot say that they are employees of public, so it is not employment contract, so it is not covered there. So anything else, so I can just tell you simple terms, politicians with power, that means the members of parliament, members of legislature, MLAs, MPs, members of panchayat, member of municipality, sarpanch, ward member, corporator, councillor, all these things, and other local authorities is neither supply of good nor supply of service. Okay. Next, the next one is with respect to any constitutional post you are holding, for example president, vice president, chief justice of India, prime minister, chief minister. For that, see, even though you are an MLA, being a chief minister, you will get extra salary. So that whatever the post created by constitution that you are doing, there is neither supply of good nor supply of service. So that is the third one here. So the second one, the third one, the final third one is, you are acting as a chairperson, member, or a director of a body established by central government, state government, or local authority, and who is not deemed as an employee. If you are deemed as an employee, obviously you will come under first category. So here you are not an employee, but you are acting as a chairperson, member, or a director of a government body. So example, as I told, independent director of BSNL company. Sir, BSNL is a government company, so government body established by central government. If you are acting as an independent director there and getting remuneration, it is not a supply. But same if you are an independent director of TCS company, then it will be treated as supply. Okay, hope you remember the reverse charge mechanism entry of director services also. We will see in reverse charge mechanism the connection with this, and we'll have an analysis of director services. Okay, so that is number 2. Sorry, number 3. Okay. Next, the fourth service, we can say rest in peace services actually. So the services of funeral, burial, crematorium, mortuary, including transportation of deceased, these things are also neither supply of good nor supply of services. The government is saying, may your soul rest in peace at least after your death without paying taxes, like that. So they are saying these are not at all a supply. Okay, so this is the next one. Next, coming to the next one, sale of land is neither SOG nor SOS, because it is not a good, it is not a service. Sale of building subject to paragraph 5b of schedule 2. If you remember, we have discussed under construction buildings, if you are paying an advance amount, then totally becomes supply of service, except those cases. Remaining any case, if you are selling a building, then it is not supply of good, not supply of service. If you remember, we have discussed an example also there, diamond apartment. Yes, there is an example which I have just displayed, so you can just go through that. So simple, under construction buildings, neither supply of good nor supply of service. But if it is any other case, so automatically what will happen? So automatically it is not a supply. Under construction building, supply of service. Okay, so that is what the fifth point. Next, the sixth point, actionable claims other than specified actionable claims. If you remember, I told you when I was discussing goods definition, remember the word actionable claims. I will discuss about that later. For actionable claims, generally we don't have any intention. If you remember Sale of Goods Act, in Sale of Goods Act, goods definition, actionable claims is not included. But here in GST, we are adding actionable claims definition mainly to target lottery, betting, gambling, not any other actionable claim, not anything which is satisfying the meaning of actionable claims. So what they said, in goods definition, they have added actionable claim, and in schedule 3, what they are doing, they are again saying actionable claim is neither supply of good nor supply of service, except specified actionable claim. So what they are trying to tell, that they are trying to tell that specified actionable claims, other than that, remaining any actionable claim is not a supply. Then what will happen to specified actionable claim? Specified actionable claim will be treated as supply of goods, simple supply of goods. But sir, what do you mean by specified actionable claim? Specified actionable claim means nothing but lottery, betting, gambling, casinos, online money gaming, and horse racing. Remember, lottery, betting, gambling. We play all these three in casino, and we play all these things online. So online money gaming and one odd man out horse racing. These six people are called specified actionable claims, and if you are providing them, it is treated as supply of goods, and hence it will attract GST just at a rate of 28%. Simple. Okay, enjoy gambling, right? So that is what the point. Now coming to the next one, out and out supplies, that is merchant trading. Sir, what do you mean by this merchant trading? Now please understand, when one person is selling the goods to another person from a place in non-taxable territory to another place in non-taxable territory without such goods entering into India. Now see, for example, Mr. Vamsi Krishna is purchasing goods from China. Vamsi Krishna from India, he is buying the goods from China and sold it to Mr. John in Brazil without bringing that goods to India. This is called out and out supplies, where the goods without being brought to India are being sold outside the taxable territory itself. Then whether at least goods are coming to India, no sir, they are not coming. Then it is neither treated as supply of good nor supply of service, so it is not a supply. Okay, so that is next one. And the last one here in schedule 3 is nothing but the inbound sales. Inbound sales, supply of warehoused goods. In inbound sales we have two things actually, sir. Here, sorry, in this particular entry we have two things which is important for you. 7th and 8th point are important for you. So here, when the goods are being warehoused and before clearance for home consumption itself they have been sold, then it is not a supply, no GST on that. Or sir, high C sales, that means when the goods are coming from outside India. I will just show you one example also on this. When the goods are coming from outside India before clearance of home consumption, the goods are being sold in the high seas itself. That means by endorsing the documents of title, sir, the goods are being sold even before clearance for home consumption. Then we call it as high sea sales. So the goods are simple. They are on high seas. That means they are in transit. Simple. Now, when that is being done, that is neither supply of good nor supply of service. Now, both of them I will just give you with a common example. See, understand. Mr. Donald is selling goods to Mr. Vishnu. Donald is from USA. Vishnu is from India. Vishnu is from India. Sir, when he's selling the goods, he's sending the goods through Titanic ship. Of course, the ship is not sinking, don't worry. So the goods are coming, and while the goods are coming, sir, what Vishnu did, Vishnu has the document of title over those goods, and that document of title Vishnu is transferring to Mr. Vihan. So this is neither supply of good nor supply of service. We call it as what? This is nothing but IC sales. This we call as IC sales. So this is neither SOG nor loss. Next, what Mr. Vihan is doing, Mr. Vihan is taking these goods and depositing them in the warehouse. He is not clearing the goods for home consumption. He is depositing the goods in the warehouse. And now when the goods are in the warehouse, Vihan is selling these goods to Mr. Varun. So this we call as in-bond sales. This we call as in-bond sales. This we call as in-bond sales. Okay. So in such case, that this is neither supply of good nor supply of service. Now when Varun is clearing these goods for home consumption, Varun has to pay basic customs duty and IGST. Okay. On what value he will pay, that we will see in a different chapter. But this is how the scenario works. Okay. So with this, we are done with this particular entry.
If you look at the first amendment here, actually, see, this is regarding, we have actually inserted two new things in schedule 3, that is para 9 and 10. So, you know, schedule 3 is nothing but neither supply of good nor supply of service, right? So in schedule 3 now, if you see, the new para says the services provided by co-insurer to the lead insurer. So whatever the premium charged by the co-insurer from the lead insurer is neither supply of good nor supply of service. That means there is no GST applicable on this. So what do you mean by this? See, first of all, understand. I'll take an example and explain to you. See, any like huge insurance projects, whatever as they are there, for example, Airport Authority of India, that they are taking insurance on their new terminal building for 2000 crores. Because of the amount involved here, see, first insurance is given to this Airport Authority of India by New India Assurance Company Limited. So they are giving the insurance. So 2000 crore premium. Okay, so 2000 crore premium they are taking. Now, please understand. You understand 2000 crore premium na? So how much will be the insured value? Okay, now in this, New India Assurance Company Limited is thinking, we cannot take up so much risk, or we cannot give total insurance for this particular project, this is too huge. So two three insurance companies together, let us do this, like that New India Assurance Company is thinking. So this is not informed to Airport Authority of India. So what New India Assurance Company Limited is doing, along with ICAI Lombard and HDFC Ergo, sir, what it is doing, it is saying that all three of us, let us take this insurance policy. So 2000 crore premium, no, 50% I will take the risk and premium, 30% you take, 20% you take, like that they are dividing. Now understand, on this 2000 crores, sorry, this 2000 crore is not the premium, 2000 crore is the project value. So premium is 0.5% of that sum insured. So what is 0.5% on that, sir? 0.5% is 8 crore rupees. This is the premium. So on this 8 crore rupees, 18% GST, if you see, 18% GST is nothing but 1.44 crore. Okay. So this 1.44 crore GST liability, this will be fully paid by New India Assurance Company Limited to GST department. Now the problem is not that. Now out of this 8 crore, see, 50% only will be with New India. That means 4 crores with New India. So New India will take 4 crore premium, and 30%, that is 2 crore 40 lakhs. ICICI Lombard will take 20%, is nothing but 1 crore 60 lakhs. That HDFC Ergo will take. See, already 8 crore is collected and GST collected 1.44 crores by New India. If New India is paying this entire GST amount to GST department, again on this 2 crore 40 lakhs, 1 crore 60 lakhs, ICICI Lombard and HDFC Ergo need not pay GST. Okay, that means I'll tell you now the concept is, when any insured person is paying premium plus GST to the lead insurer, okay, and lead insurer is paying that entire GST amount to the department. Now the lead insurance is sharing the premium partner to his co-insurance companies, the co-insurers. On that premium, whatever he is sharing to the co-insurers, they need not pay GST. But what is the condition? That is called neither supply of good nor supply of service. So the co-insurer taking part in this particular insurance and taking his premium share is not subjected to GST. It is neither SOG nor SOS. But what is the condition? The condition is the lead insurer has paid full premium, GST on full premium. Then this is neither SOC nor SOS, neither supply of good nor supply of service. Hope you are clear with this example, all that. Okay, right. So this is the amendment with respect to co-insurance. I repeat, co-insurance, simple. Co-insurance means two or more insurance companies coming together and giving one insurance policy. That is co-insurance. Next, we will see reinsurance, that is different from co-insurance. Okay, so co-insurance means two or more people coming together and giving insurance and sharing the premium. So first fellow, who is the face, that lead insurer, is paying GST on full premium. So when he is giving share to that respective insurance companies, that is nothing but neither supply of good nor supply of services. Again, these people need not pay GST on that. Okay, that is what the amendment. So just now we have seen co-insurance. Now we are going to see a concept of reinsurance. First of all, understand, sir, the difference between co-insurance and reinsurance. What is the difference between co-insurance and reinsurance? Co-insurance, what it says, co-insurance is two or more insurance companies coming together and giving the insurance. But reinsurance, what happens now? See, now for example, I'm an insurance company. Okay, Vivad Insurance Limited. Okay, keep it that way. So I'm giving insurance policy. So I'm giving insurance policy, some 10,000 crore worth insurance policies I give. And later on, I'm thinking, this much risk I cannot take. So let me just take insurance on this again. So out of 10,000 crore, let us assume some 4,000 crores, 40% I am taking reinsurance to just what I'm ceding my risk. That means I'm passing on the risk to some other person. Okay, some other insurance company. So I am taking insurance from another insurance company. So this is called reinsurance. So in this, what happens? Now please understand, I will just show you the situation. Client will pay me premium plus GST. Okay. So now what I will do, sir, when client is paying me premium plus GST, some portion of it, as I told you, 10,000 crore worth, I have taken policies. So in that, some part of it, some portion of it, I am giving the risk to some other person. So what I am doing, I am telling the insurer, sorry, I am the insurer. I am telling, the reinsurer, you take this risk. Okay, I'll give you the premium plus GST, all that. But when I am giving this premium plus GST to you, please understand, I need some commission in that. I need some commission in that because I'm only bringing client to you. So I'm telling to reinsurance fellow, I'm only bringing client to you. So on that, even I want some commission. So what I will do now, I will give him premium fully. Whatever I have collected from the client, I will give the premium. But on that premium, he will pay GST. There is no doubt about that. That is also clear. But sir, what is happening now? On that premium when I'm giving, he should also pay me some commission. So that is called seeding commission. Okay. So on that seeding commission, we are saying that I will deduct the seeding commission and will pay to the reinsurer. On that seeding commission, there is no GST. Understand carefully. I collect premium and I give the same premium to the reinsurer also. We are paying GST on the premiums, no doubt about that. But sir, when I am giving the premium to him, I am giving business to him. Please understand. To the reinsurance company, I am giving business. So because I am giving business, he should give me commission. That commission is called seeding commission, right? So on that seeding commission, nobody needs to pay GST. When the reinsurer has paid full GST on the seeding premium, so whatever the premium I am giving to him, on that full he is paying GST. Then again on seeding commission, we need not pay GST. It is neither sauce nor sauce. So don't worry, I have an example here. I'll explain through an example. See, ABC Life Insurance Company Limited, registered in Maharashtra, taken out reinsurance for one of its large group term insurance policies. Total premium collected is 120 crores. Portion ceded to reinsurers. For some reinsurance companies, we have ceded 40% of the premium collected. That means 40% of the premium collected, you only take and you only take that risk also. Like that, we are ceding it. Okay. Now, ceding commission agreed is 15% of the premium ceded. GST rate applicable is 18%. The reinsurance arrangement does not relate to any government notified reinsurance. That means it is not exempt under all that stuff. So now, for example, here if you see, first, I have collected total, that is ABC Life Insurance collected total 120 crores. Out of this 120 crores, 40% premium collected is ceded, correct? So 40% premium is what in this 48 crores. So if you see, gross premium ceded to reinsurer will be 48 crores. What is the commission on this? Commission on this, as we have discussed, 15%. 48 crores into 15%, how much? 7.2 crores. So 7 crore 20 lakhs is the commission which ABC should get. Okay. So what we have to do now? See, understand, ABC is the insurer. Next, GIC is the reinsurer. Okay. Now, sir, what happens is ABC should pay 48 lakhs. Sorry, 48 crores. Sorry, 48 crores plus GST. Okay. Now, what GIC should do? GIC should pay 7 crore 20 lakhs as commission. On this 7 crore 20 lakhs, no GST provided, sir, GIC pays GST on entire 48 crores. Are you understanding the point? So what we are trying to tell here is, sir, insurance companies will take reinsurance, so they will part with their risk, so they will cede that risk, and so because they are giving business to reinsurance companies, sir, they will also in return take commission from the reinsurance company, that we call as ceding commission. So when paying this 48 crore plus GST, ABC, what they will do? Their 7 crore 20 lakhs commission they will deduct and pay balance. That means he will pay 41 crore 80 lakhs plus GST on 48 crores. Are you understanding the point? GST on 48 crores. So GIC will pay GST on 48 crores and close this. ABC need not pay GST on 7 crore 20 lakhs because this is neither supply of good nor supply of service. Okay. So hope this is clear to you. I'll again explain to you. See, understand. Client pays premium to insurance companies, and now insurance companies, what they will do? Sir, insurance companies, they will later on they may feel, okay, let us take some reinsurance, this much risk we cannot handle, so they will take again insurance. So they will say, the client has given me so much of premium, in this much portion I am ceding with you, so you take this much premium. Client gave 100 crores, now we are seeing 120 crores here, you take 40%, that means 48 crore premium you only take, and 40% risk also you only take. I don't want, but I am giving business to you also, so give me commission, like that I am asking. When I'm asking that commission, sir, they are giving the commission. So instead of they giving the commission, I should give them the portion of the premium amount that I am paying, and I'm deducting my commission and giving to them. That commission what I'm having as a seeding commission, on that there is no GST, provided opposite reinsurance company has paid GST on full premium what they are taking. Okay, so here as I told example, 48 crore premium I should give to them, but I will deduct my 7 crore 20 lakhs commission. On that 7 crore 20 lakh commission, GST will not be applicable. It is neither SOG nor SOS, provided whatever the premium I'm paying to them, reinsurance premium, that 40 crores is there, no, on that entire 48 crores, they are paying GST. That is the condition. Okay. Now, we understand the basic differences between co-insurance and reinsurance. Co-insurance, at the time of issuing insurance policy, we already, the co-insurance have the agreement, we are agreeing to take this policy, okay, or give this policy to the client. Client may not know that, that's a different story, but we know it. So we all together we are sharing it like that. But in case of reinsurance, at the time of me issuing the insurance policy, I am alone. I am giving the insurance policy. Later on, I thought this is going to be too risky, so that I am ceding it with some other fellow, sharing it with some other fellow. That time I am taking reinsurance commission. Okay, that is called ceding commission. On that GST is not applicable. Okay, that is the difference between the previous entry we have in schedule 3 and this entry. Hope it is clear for you. Okay, so this is the notes.
So we are done with schedule 3. Now we are moving into the next 7 subsection 2 clause B. Nothing but the government has given, the law has given powers to the government to release any notification to declare anything as neither SOG nor SOS. So the panchayat and municipality undertaking the functions which are entrusted to them as per article 243W and 243G is neither supply of good nor supply of service. I have given some examples, you can just go through that. And alcoholic liquor license. So state governments giving liquor license to anybody is neither supply of good nor supply of service. But please understand, this relaxation is only for liquor license, but not for mining license, telecom license, any other licenses. This is only purely for, you know, our favorite liquor license. Okay, I mean favorite for the government to generate revenue. Okay, so that is the case. So this is what with respect to the notifications, and there are some clarifications here. One super duper clarification, my favorite clarification actually. So this clarification is all about, this clarification is all about, the clarification is all about here. See, I'll just tell you with an example. There is Orange Travels. Orange Travels is operating a bus from Chennai to Hyderabad. So they are in Tamil Nadu also, they are in Telangana also. Both the states they are registered. Now if you see, they are registered in both the states, but a same person. But because they have two registrations, we will be calling them as distinct persons under section 25 subsection 4. Now, what is happening now? They are transporting passengers from one state to another state. When they are transporting passengers from one state to another state, incidentally what happens, something called bus, which is a movable thing, which is good, it is also moving from distinct person, one distinct person to another distinct person. So I repeat, this concept is not about transporting the passengers. The doubt is not about the taxability of transporting the passengers. The doubt is about when these two distinct persons are there, from one distinct person in Tamil Nadu, the bus is moving to another distinct person in Telangana. So there is movement of goods. Schedule 1 para 2, if you strictly apply supply of goods between distinct persons, okay, then it is without consideration, but in the course of furtherance of supply, furtherance of business. I repeat, here the concept is not about transportation of passengers, not about transportation of goods. It is all about movement of bus from one distinct person to another distinct person. Okay, that movement is obviously called as supply if you strictly follow schedule 1 para 2. So people got a doubt and asked department, then department said, "Arey yaar, what is this actually?" So they felt the seriousness of this provision later on. And imagine, what if a train, let us assume there is a Chennai Express coming from New Delhi to Chennai, traveling across so many states. How many trains Indian Railways will be operating every day across how many states? So you can understand the practical difficulty here. So they said, the movement of conveyances, leave about bus, whether it is bus, lorry, taxi, whatever it is, train, aircraft, ship, vessel, whatever you call, any conveyance moving from one distinct person to another distinct person for the purpose of transporting the passengers. Why the bus is moving here? The bus is moving here because they are transporting passengers, that is transporting the goods, or that is being moved for repairs and maintenance. In such cases, that movement is not treated as supply. I repeat, that movement is not treated as supply. Transporting the goods is supply, transporting the passengers is supply, doing repairs and maintenance is supply. But moving the vehicle for the purpose of transporting passengers, moving the vehicle for the purpose of transporting the goods or repairs and maintenance, I repeat, that movement is not a supply. That is what we have clarified here. Sir, no sir, I am taking this, for example, bus or lorry or a car from one distinct person to another distinct person to sell that car or bus from that another distinct person's location or state, then that is supply. That means the movement is for what purpose? Not for transporting goods or passengers or repairs and maintenance. The movement is for the purpose of further supply of such conveyance from that particular distinct person. So I give example here, sir, I am registered in Tamil Nadu also, registered in Kerala also. I am a dealer in cars. I have cars in Chennai, Tamil Nadu, and those cars I am transporting from Tamil Nadu to Kerala. For what purpose? To sell them from Kerala. Then this is supply, because the movement of cars from Tamil Nadu to Kerala is happening not for transporting goods or passengers, but for further supply of such cars from Kerala. Okay, so that is what the concept. That is what the concept. Hope it is clear for you. Okay, right. So that is what the clarification, which actually I liked a lot, because understand the interpretation levels of people. Okay, and the same logic applies even for the rigs, tools, spares, and all other goods on wheels like cranes, all that stuff. The same clarification, mutatis mutandis, is applicable. So it is equally applicable. Then that is also neither SOG nor SOS, neither supply of good nor supply of services, except where the movement is for the further supply of same goods. If you are moving this rigs, tools, space, all the stuff, even for further supply from such particular distinct person, then only it is supply. Otherwise, it is not a supply. Okay, so that is what with respect to clarifications. So additional conditions to attract GST, obviously what the supply shall be made by a taxable person and supply shall be a taxable supply, the normal things. So with this we are done with this particular concept. Okay, hope it is clear for you all. So now there are some other miscellaneous clarifications here. In this first one is regarding the printing activities. See, generally, for example, I have prepared the book and I am going to the printer and giving him the content, the soft copy of the book, for printing the book and giving to me. Now the printer is providing goods to me or services to me. He is printing, let us assume, some 1000 books and giving to me. Is he giving me supply of goods or supply of service? Same way, when you go to get your pamphlets or leaflets or envelope covers, annual reports, brochures, all these things printed, sir, what is that they are doing? See, you are going to the printer mainly, predominantly for getting the printing services. So how do he print the content what you are giving? He has to print it on the air. No, he has to print it on some material, and that material is obviously becoming your brochure or a pamphlet or a leaflet or a book. So here predominantly why you are going to the printer is getting for printing services. So in such case, it is treated as supply of service. But now the another interesting thing is, for example, you are going to buy a tissue paper for your restaurant, tissue papers, or you are going to buy some envelope covers for your office. When you are going to buy the tissue papers or envelope covers, the seller is telling, sir, pay me 1 rupee extra for every tissue paper or for every envelope cover, pay me so much amount extra. I will also print your company logo or office logo, or on the envelope cover I'll print your from address, the office address, and give it to you. So here you are buying the tissue papers also, and also they are printing your logo there. You are buying the envelope covers also, they are printing your from address there. So in such cases, you are also getting goods, you are also getting printing services. But sir, here what is predominant thing? Here the predominant thing, you went to buy tissue papers, you went to buy envelope covers, you went to buy some office stationery. Incidentally, they are printing your office logo, etc., etc., all this. So in that case, it will be treated as supply of goods. So what is the predominant thing? Clear? So printing anytime when you are getting certain things printed on like books or pamphlets or brochures or envelopes or annual reports or leaflets or cartons, boxes, etc., where it is printed with a design, logo, name, address, or other contents. In such cases, is it goods or service? That depends upon actually what is the circumstance. Okay, so that way it can be supply of service also, supply of goods also. Now coming to other clarifications. Sir, whether bus bodybuilding, is it supply of goods or service? Then again, bus bodybuilding, whether it is supply of goods or services, it depends upon facts and circumstances. So it may be supply of goods, it may be supply of services based on various situations. Okay, next, retreading of tires. This also there can be supply of goods or supply of services. See, for example, retreading of tires means what? The retreading of tires means you are processing the old tire and making it into a new tire. For example, I am retreading the tires, you are bringing me your old tires, I am doing the retreading process and giving it to you. That is supply of service. Or I am going to every puncture shop in the market, buying the old tires, doing the retreading process and now selling the retreaded tires. So this is supply of goods. So I procure old tires and do retreading and sell them now, supply of goods. You bring your old tires and I do the retreading and then give it to you, then it is supply of service. Simple one. Sir, what about food supply to the patients? Food supply to the patients, please understand, if at all it is an inpatient, that means the patient who is admitted in the hospital. For that patient, if you are supplying the food, it is nothing but part and parcel of your healthcare service. So it is treated as composite supply of healthcare service and not charged separately. But if the food is supplied to patients who are not admitted or their attendants or visitors, for example, when you are getting admitted in hospital, your friends will come to meet you in the hospital, okay, maybe to see the nurse or you, that's a different story. But when they come there and they eat in the canteen or etc in the hospital, all that, sir, that is not supplied to inpatients, so that will be obviously taxable. So that is what with respect to the fifth one. Sixth point already we have seen, so already discussed one, buy one get one free or free samples and gifts, all that, so already discussed. Now seventh one, the very important one. So the seventh one is when you are going to theaters, movie theaters, you are buying the food and beverages. Some people will go to theater only for eating popcorn, that's a different story. So for such people, sir, we are selling the ticket also, we are selling the food and beverages also. What is the tax treatment? There the department has clarified, if the food and ticket are billed together, then it will be treated as composite supply. The predominant element is sale of ticket here. So the total transaction will be treated as sale of ticket and will be charged accordingly. No, they are billed separately. The ticket billing is separate and the food and beverages billing is separate. So ticket is obviously, you have understood that it is treated as supply of service of exhibiting the cinematographic films, and supply of this food and beverages will be treated as restaurant services. So food and ticket in theater charged together, sale of ticket, consider it that way, supply of service. Now food and beverages are charged separately, ticket is charged separately. So food and beverages, treat it like restaurant services and tax it accordingly. That is what the point. Right? So next, point 8, taxability of shares held in a subsidiary company. There was a doubt here, sir. Holding shares in a subsidiary company, is it a supply? Holding shares in a subsidiary company, how it becomes supply? Mere holding of securities, does it become supply? No, you are providing something to your subsidiary company, goods or services, that will become supply. Mere holding of securities doesn't become supply. So that is what the concept here. Mere holding of shares in a subsidiary company doesn't become supply. So that is what the point. Now the next one, the important one, GST on warranty replacement of parts and repair services during the warranty period. What is this clarification all about? So now replacement of spare parts, etc etc, I will take a small example here, and based on that let us understand this. Now see, for example, I have a car. Now for this car, let us assume this is car. Please excuse my artistic skills. Now, sir, for this car, imagine, let us assume the silencer has some issues when I have purchased. So there are some issues with silencer. So what I am doing, I am going to the showroom. So that means I can say here it is nothing but dealer. Now what this dealer is doing, dealer is saying, Vishnu sir, this is in warranty period, we will do free replacement because this is in warranty period. Now what is the tax treatment for this? Sir, what is the tax treatment for this? Sir, there is no GST here because it is free. Because it is free, no GST for the free replacement of the spare part. And even though they are saying it free, you know, technically whatever the replacement period, etc etc, all these things, they would have made a calculation and they have added that in the cost. So even though for the namesake it is free, sir, it is the cost of all these things they would have estimated and that would have been added in the cost of the car. So the GST losses, even though you are saying it free, it is technically not free. So no need of any reversal of ITC. No reversal of ITC also required. Okay. So this is the story of what I want to replace my silencer, car silencer, because it is in warranty period. No consideration they are charging, no consideration they are charging, and no reversal of ITC also involved. Am I clear with this? Now, coming to the next step, sir, here the showroom dealer is making the replacement here, correct? But what is the tax treatment for this? Because the showroom dealer, he will charge this to the manufacturer. He will charge this silencer to the manufacturer. That means how this showroom dealer is getting that silencer is what important, because to do this free replacement, all that stuff, that is the responsibility of the manufacturer. So on behalf of manufacturer, the showroom dealer is doing it. For the customer, from Vishnu's point of view, from my end, they are not charging any consideration from me. There is no GST. But here, sir, to do this replacement, the showroom dealer uses a silencer. Uses the silencer. Now, who has to bear that? The manufacturer has to bear that. So what can be the various possibilities? Now please understand that generally the manufacturer is selling the spare parts, selling the spare parts to the dealer. Dealer is also selling the spare parts to the customers whenever they need, whenever they buy, apart from replacement activities actually. So whenever the customers are coming, that spare parts the dealer is selling. Now, sir, my car silencer dealer, the Honda showroom dealer, is doing the replacement. So for that, first thing, what is happening now? He is already buying the spare parts from the manufacturer and using. In this replacement period, whose responsibility to replace this? Manufacturer responsibility. Who is doing it? The showroom dealer is doing it. When showroom dealer is doing, who should give silencer? The manufacturer should give. What is happening here now? Showroom dealer, the Honda car dealer is saying, sir, I have already a silencer, I have purchased from you, spare parts, so that I am using. So for example, now, so what can be the possibility now, sir? Manufacturer will sell the spare parts to the distributor. So what distributor will do? That distributor means, here I am talking about the showroom dealer. Distributor sells the spare parts and raises the invoice to the manufacturer for spare parts. That means the dealer has purchased the silencer from the company, Honda company. What the Honda car dealer is doing, the showroom fellow, because he is using the silencer. See, he has purchased it to sell to customers, but he is using the silencer for replacement period, which Honda company should do. So what he is doing, whatever the stock he is having, he is using that silencer, and then he is raising invoice to Honda. Sir, this silencer I have used, you pay consideration for that and pay GST. So they will pay GST and close it, and of course the Honda company will take ITC. Or there is another option. What is another option? For example, the Honda company would have purchased 100 silencers from Honda company. The dealer would have purchased 100 silencers. So Honda company gave invoice for 100 silencers to the dealer. Now what dealer will say, sir, 100 silencers I have purchased, sir, but one silencer I have used for your purpose only, for your free replacement only, so I will not pay for 100 silencers, I will pay only for 99 silencers. So for this one silencer, he will ask the Honda company to raise a credit note. So what will happen? Honda company will raise a credit note on the Honda showroom dealer, and the dealer will reverse the ITC accordingly. Am I clear? So the distributor uses the spare parts and asks the manufacturer to raise the credit note. So the manufacturer will raise the credit note, that is the Honda company raises the credit note on the dealer, and this fellow will reverse the ITC, proportionate ITC. That is why the ITC comes down for the showroom fellow, the dealer. Clear? So these are the possibilities here. So manufacturer is selling the spare parts to the distributor. Distributor is using the spare parts which he has purchased. One option is, because he has already purchased, now it is like indirectly he is selling it to the manufacturer again. So he will raise a new invoice on the manufacturer, charge GST, manufacturer will take ITC. No, what is another option? Manufacturer already sold the goods to the spare parts to the distributor. Those spare parts he is using for free replacement, which is the responsibility of manufacturer again. So what he will do, he will ask the manufacturer, sir, reduce my invoice, because out of 100 silencers I have purchased, 1 silencer, 5 silencers, 10 silencers I have used for your free replacement, I will not pay money for that. Then the manufacturer will say, okay, no problem, I will raise credit note on you, so no need to worry. And as a recipient, the showroom fellow, the dealer's ITC will come down, because he has taken a credit note from the manufacturer. That is the possibility. Now, sir, manufacturer is selling the spare parts to distributor, distributor is using those spare parts, fine. What if manufacturer is not selling any spare parts to the distributor? Manufacturer says, hey, any free replacement comes, you tell me, I will send the goods to you, you use it. So manufacturer is not selling the spare parts to distributor, but manufacturer is sending whenever the free replacement is there. silencer you need, you just place an order like this, free replacement, one silencer came, I will send the silencer, you use it. Now please understand, manufacturer sends the goods first and distributor uses them. Where there is consideration here between manufacturer and distributor? So no GST, nothing, no GST implication. Or manufacturer already has sent some silencers and that is there with the showroom person, the distributor, and he is using them, and later on, sir, I have used already whatever you have given, so send some more, like that he may send a request. So then also the distributor first uses the goods and then manufacturer sends the goods, then also no GST implication. Both the cases, manufacturer is just sending the goods to the distributor to use them and distributor is using them. There is no GST implication at all here because no consideration has happened between manufacturer and distributor for giving this spare part. Okay, so that is what the whole concept here. Sir, the one more interesting, the further step of discussion here is, so as I was telling, the next interesting step here is nothing but, see, okay, replacement of spare parts, everything is done. See, first of all, we are discussing so long the spare part replaced here, the silencer. But for replacing the silencer, the distributor, that is the car showroom dealer, what he will do, he will use some services. He is providing services to me, that is the car owner. What they are doing, they are providing services of replacing the part. That means goods is involved, silencer example. Fixing the silencer is also involved. There are two things. We have spoken about the goods element. Now what is about the service element? Service, it is a free service to the customer. For customer it is free service, sir, but that means it is nothing charged to the customer, it is free for customer. But the car showroom dealer, the distributor, what he will do, he will raise invoice to the manufacturer, because manufacturer's responsibility is, when the free services are provided by these distributors or car showroom people, to make the payment to them. So this fellow car showroom dealer, what he will do, he will raise invoice on the car manufacturer and manufacturer will make payment. So just like supply made to car manufacturer, there is supply of service and there is GST, and manufacturer will take ITC of it, simple. So I repeat, replacement of goods, goods portion we have discussed, what is the tax treatment, and we have also discussed service portion, fixing that goods which has got damaged, all the stuff. So for that, customer will not get any tax implication, there is no GST, nothing, but the distributor will raise invoice on the manufacturer, so obviously that will be subjected to GST. That is another step. And one more next step or next thing here with respect to this clarification is, sir, hope it is clear till now. And the final thing here is, as I have explained here, this is regarding replacement service. So this is regarding servicing. Okay, the last point is regarding, in this particular clarification, in this particular thing, sir, whether GST would be payable on extended warranty to the customers. What do you mean by this extended warranty to the customers? You will be seeing, no, whenever you are purchasing a mobile, for example, there is a warranty for the display 1 year. They will say you pay something extra, 500 rupees extra, 2000 rupees extra, will give you 2 years extra warranty. So like that, the warranty period will get extended. You are buying a TV, so they will say for TV display so many years warranty, you pay 5000 extra, we will extend the warranty. So we are talking about the tax treatment about this extended warranty. So what is the tax treatment for this extended warranty? There are two possibilities. First of all, whether this extended warranty is given at the time of buying that product itself or later on. If that is given at the time of buying the product itself, then please understand, if the extended warranty is provided by the supplier himself, I am buying the mobile phone, let us assume in Sangeeta Mobiles, sir, Sangeeta Mobiles itself is giving me extended warranty, then it is nothing but, see, part and parcel of the main supply, so treated as composite supply and will be taxed accordingly. That means it will be treated as supply of mobile phone only and will be charged accordingly. It is not taxed separately, it is added to the entire supply and it is treated as composite supply. The principal supply is supply of mobile phone in the example. Entire transaction, even that extended warranty, will be treated as what? Supply of mobile phone, right? Next one, sir, if at all when I am buying this mobile phone in Sangeeta Mobiles, in the mobile store there is a person from Bajaj Finance, he is saying, sir, you pay 1000 rupees extra to us, we will cover extra warranty, extended warranty for this mobile phone. Whenever you are angry, throw the mobile phone onto the wall and let the display get broken, we will replace it, sir, don't worry. Like that, they are giving the extended warranty. So now extended warranty is provided by a different person. different person altogether, then it is treated as a separate supply, taxed as a supply service. But please understand, this will be like when this is provided at the time of buying the goods. What if later on, after 6 months, I have understood my BP levels have gone up so much, so whenever I am just getting frustrated, I am throwing the mobile. So in such case, I want to go and take extended warranty for safety, because nowadays, if you see, mobile will be like 1 lakh rupees, and if there is any display is broken, the display itself is costing 60-70,000. So that should not be the case. So we are going for the extended warranty. So when I'm going for extended warranty now, no matter extended warranty is given by the mobile shopkeeper or any other separate person, both the cases, that means when you go for extended warranty after the supply is over, it will be treated as a separate supply and will be taxed accordingly as a supply of service, no matter whether it is provided by the supplier or by the third person, it does not matter. Okay, so that is what the point. The next point is regarding, see, generally to manufacture a chemical called linear alkyl benzene, they need a chemical by name N-paraffin. This N-paraffin people will extract from superior kerosene oil. So whoever is manufacturing lab, that is linear alkyl benzene, so first they will procure superior kerosene oil. From that superior kerosene oil they will extract N-paraffin, and balance superior kerosene oil they will return. Okay, so now for example, that they are procuring 1000 liters of superior kerosene oil. After extracting N-paraffin, let us assume they are returning back 400 liters of superior kerosene oil to the person from whom they have purchased. So 1000 liters they have purchased superior kerosene oil, 400 liters they are returning. So the GST applicability is what? GST applicability will be on the net quantity. So that is on 600 liters only the GST will be applicable. So that is what they are trying to tell here in this clarification. And one more interesting thing is, same logic is equally applicable to the petrochemical and chemical product manufacturers. What they do is they procure this petroleum gas and they will extract whatever the petroleum gases or whatever the chemicals required for that and return back that petroleum gas. So as I was telling, petrochemical and chemical product manufacturers, so they will collect petroleum gas, retain the required chemicals and return back the balance again petroleum gas. Same logic here also, whatever is there the net quantity, on that net quantity only GST is applicable. So the next one, I don't know which intelligent fellow got this doubt actually. So the doubt is regarding, we'll be seeing there will be so many ventures which will be like selling the lands, etc., etc. People will be doing purchasing acres of land outskirts, and they will be leveling the land and they will be selling the plots. Somebody got a doubt, sir, after leveling the land we are selling that land in plots, whether it is supply, whether it will attract GST. After leveling the land remains still land, it doesn't become a cricket bat, right? So it is still immovable and it is not a supply. But the process of leveling the land, the process of constructing the compound wall, the process of putting up the drainage lines or putting up the electricity infrastructures, all that stuff, these things will become supply. But sale of land after leveling the land, still it is a land only, it is immovable property, so it is not a supply. So the final clarification is here, please understand, generally the Indian companies will allot the holding company or subsidiary company, whatever is there in foreign company of that particular entity. So Indian entity, I repeat, for their employees, they will be granting the shares of their holding company, which is a foreign company. In that case, what is the tax treatment is the doubt here. I'll show you here with the notes here. I'll explain you. So please understand, sir, there is a subsidiary company of a foreign company in India. So domestic company is a subsidiary company, holding company is a foreign company. Domestic company, it is giving to its employees of domestic company, the shares of foreign company, the holding company. For example, if you see the employees of Amazon company here in India, the software developers, etc., etc., they get Amazon company, the foreign company shares as the part and parcel of their package, all that. So a simple example. So now the concept here is, so that way any domestic company is granting shares to their Indian employees, the shares of foreign company, holding company, which is located abroad, and the shares are directly allotted by the foreign company to these employees, the holding company to these employees. In that case, please understand, allotted by foreign company, but these are granted by what? This is given because of the subsidiary company. So giving securities is not a supply, because it is not a good, it is not a service, first thing. And one more thing is what, sir, it is not a supply because it is a part of employment contract. Okay, so the transaction between the subsidiary company, the domestic company, and the employees is not a supply, it will not attract GST. Now the interesting thing is, because the foreign company, the holding company, is granting the shares to the employees, what this foreign company will do, the foreign company will take from the subsidiary company the reimbursement for the cost of those shares. If at all the subsidiary company is paying only the cost of that particular shares, then it is not a supply. But if that subsidiary company reimburses something extra, then it will be treated as supply and will be subjected to GST under RCM, because it is treated as importation of services by subsidiary company from the holding company. So it will attract GST and it will be treated under RCM. So that is what the concept.
So if you see this amendment actually, what is this now? This is just a clarification. What is this clarification all about? If you see what happens is, generally when anybody is borrowing money from banks, NBFCs, all these things, and they are entering into some loan agreement. If there is any breach of that loan agreement, that means not paying the EMIs, etc., on time, the banks and NBFCs were charging penal interest. Now, what RBI has done, RBI has come up with a guidelines saying that you should not use the word penal interest anymore, and instead of that, use the word penal charges. Okay, so the point is simple. Borrowers are defaulting the loan agreements, and because of that, the banks, NBFCs were charging something called penal interest. Now, RBI is saying, don't use the word penal interest, use the word penal charges. Now, the doubt is, sir, whether these penal charges can be taken as consideration for agreeing to tolerate an act. And if you remember Schedule 2, there is one point where you are agreeing to tolerate an act for a consideration is treated as supply of service. So, I should be agreeing to tolerate something, for that I should get consideration, that is supply of service. But in that we would have discussed, see, breach of contract, for that whatever the penalty, whatever the interest, etc., damages you are paying, that can never be said that yes sir, I am agreeing to tolerate the breach of contract, so I will take the consideration, damages, penalty, all these things. No, for breach of contract, the penalty or the damages what you are paying are never the like consideration for tolerating the breach. Okay, so the department has clarified, see, this is never a consideration for tolerating the breach of contract, so this is just a punishment actually. So to make you like you are falling in line, you are getting some credit discipline, etc., we are charging this cannot be treated as agreement to tolerate an act, for that you are receiving consideration. So this is not a supply of service, there is no GST. So in simple words, see, penal interest now renamed as penal charges for breach. Why they are charging this? For breach of loan agreement. Sir, we are paying this for breach of loan agreement, can you call this as what, agreement to tolerate something, and for that we are paying some consideration? No, you cannot call this that way. So this is not supply of service, this is not an agreement to tolerate an act, for that you are getting consideration. No, and hence there is no GST applicability. Okay, that is what the concept here. Fine. Next, but understand this is not applicable for credit cards or other borrowings which are covered under product specific directions. So simple, for default of these credit cards, etc., whatever the penal charges they are charging, that is very much taxable, that is what they are trying to tell. Okay, so remember that way. So this is not applicable for mm, but taxable in case of credit cards. Okay, so remember that. If you see the next amendment actually, the next amendment is regarding, there is an amendment in charging section 9 subsection 1. So what they are doing in section 9 subsection 1, charging section, sir, in charging section they have given all goods or services except alcoholic liquor for human consumption is subjected to GST. That means alcoholic liquor for human consumption is not subjected to GST. There is no power to charge GST on alcoholic liquor for human consumption. Now what we are doing now, sir, you gave relaxation for alcoholic liquor from GST. That means, of course, states will charge different taxes on alcoholic liquor. But there is some raw material to manufacture alcoholic liquor, sir, that is undenatured. undenatured extra neutral alcohol, or you call it as rectified spirit, whatever it is. It is just like a raw material to manufacture the alcohol. For on alcohol there is no GST, but on the raw material there was GST. So what they did, so they have brought this raw material also inside this. So they said on raw material also there is no GST, on final output also there is no GST. So you can now happily consume liquor without GST, is what full and full they are trying to tell there. So undenatured extra neutral alcohol or rectified spirit, these are now removed from the charging section, so you cannot levy GST on that also. So alcoholic liquor final product also no GST, the raw material used also no GST. Not every raw material, only this undenatured extra neutral alcohol. Look at the technical name, huh? Okay, this is also now removed from the charging section.
So you all know that section 9 subsection 3 deals with reverse charge mechanism. Generally under GST, the liability to pay tax will be with the supplier. So the responsibility to pay tax to the government is generally in the hands of the supplier. That is what we call as forward charge mechanism. But in certain cases, as we have discussed in our regular batches, you know, when it is easy to collect GST from the recipient, the burden has been shifted to the recipient, and those scenarios are called reverse charge mechanism. And not whenever you buy any goods or any service, reverse charge mechanism will come into picture. Only when you are purchasing the notified goods or notified services, then only reverse charge mechanism will come into picture. And earlier in your syllabus only notified services were there, but now they have added notified goods also. So let us see what are the notified goods and what are the notified services. Quickly we'll revise which are under reverse charge mechanism. First let us go with services. So the first service covered under reverse charge mechanism is goods transport agency services. Please understand, when you are going with reverse charge mechanism, we should keep in mind 3 points always. Number 1, who is the supplier, who is the recipient, what is the nature of supply. If you are clear with these 3 things, and automatically the answer will be correct, because any changes here and there in supplier, recipient and nature of supply, if the law is getting violated here, then automatically it will fall under forward charge. So whatever are given here in this notification, if all the conditions are satisfied, then it is reverse charge mechanism. Otherwise, if even one condition is not satisfied, it will go with forward charge. Coming to GTA, what are the conditions? Who should be the supplier? Supplier should be a goods transport agency, and they should be transporting the goods by road. And here the triggering point or the interesting point is the recipient. If it is provided, see, in this particular entry, I am dividing the customers of GTA fully into 3 categories. One is those customers, those recipients who are given in section 9 subsection 3, and next other recipients, and next finally those people who got registered under GST under section 51. Just to comply section 51 purpose, they have registered under GST. For those people, GT is providing their services. So now, as I told you already, if the recipients are specified under this particular notification, who are specified under this notification, if GT is providing the services to these people, the factory registered under Factories Act, society registered under Societies Act, cooperative under Cooperative Societies Act, any person registered under GST or a body corporate, partnership firm plus AOP, whether registered or not, association of persons, okay, and finally casual taxable person registered. These people, see, understand, everybody here are registered under some or the other law except this partnership firm and association of persons, whether registered or not. These people are the recipients, and GTA is providing services of transporting goods by road to them. Then who is having the liability to pay GST? The recipients are having the liability to pay GST. So these people are supposed to pay tax under RCM at 5%. Okay, here the interesting things are, see, now for example, Vishnu's GTA is providing services of transporting gold, the goods, to KGF factory. KGF factory is liable to pay GST on that under reverse charge mechanism, and being recipient there, KGF factory can take ITC of it. That means, understand, even though you buy something which is covered under RCM, yes, you have the responsibility to pay tax to the government, but you can still avail that amount as ITC, no need to worry. So you have a purchase, whether it is FCM or RCM, you can take ITC happily. The problem is not for you, the problem is for GTA. That is, sir, any person who is making RCM supplies, for him, sir, whatever the purchases he is making, he cannot take ITC because his sales are covered under reverse charge mechanism. So on his purchases, he cannot take ITC. That is very important point you should remember. So here, this logic is applicable for all the RCM transactions. If I am selling something under RCM, for selling that, if I buy something, I cannot take ITC. Okay, but my customer who is buying that goods or services from me under RCM, my customer can happily take ITC. That's not a problem here. So in this example also, as I was telling, sir, KGF Gold Mine factory buying the GTA services covered under RCM, that amount whatever they pay under GST they can take as ITC. But the problem is, to provide these services, if GTA purchases a lorry, GTA takes some premises on rent and pays GST on all those purchases, GTA cannot take ITC. Why? Because GTA is supplying something which is covered under RCM. Not only GTA, anybody for that matter supplying something covered under RCM, they cannot take ITC on their purchases. Am I clear? So this is the interesting point here. Now, sir, what do you mean by casual taxable person? As you know, casual taxable person is a person who doesn't have fixed place of business in the state from which he is making the supplies. Okay, so yes, coming to this GTA services, as I told, specified recipients. Yes, if specified recipients are receiving the supply, then it is taxable under RCM at 5% rate. But here one option is given to GTA, that is GTA wants to decide it under FCM, they can go with FCM. And if they are going with FCM, they should charge GST 12% from the customer and collect it from the recipient and pay it to the government. Here the interesting point is GTA now is providing FCM supplies, that means their sales are covered under FCM. So automatically whatever they are purchasing, they can take ITC on that. Are you clear? So GTA has two options. General option is not FCM for GTA, general option is RCM. If GTA wants to convert it into FCM, GTA has to take registration and has to raise invoice to the customer with 12% rate and has to charge 12% GST from the customer and pay it to the government. And now GTA is buying a lorry, GTA is taking any premises on rent, etc. Whatever the purchases are there, GTA can take ITC. That is the first set of customers about. To anybody else, if GTA is providing services, for example, individuals who are not registered under GST. For example, you are traveling, like you are in a hostel, vacating the hostel after your exams and going to your native, booking your luggage in the GTA, paying consideration. Is it coming under RCM? Leave about RCM, sir. It is exempt under GST, so there is no question of RCM or FCM. Not only that, sir, if GTA is providing services to the government departments, local authorities, government boards, authorities, which are covered under section 51, they are taking registration under GST not because they are doing some business, because they have to comply with section 51, they are taking registration under section 51. For those people, if GTA is providing services, then that is also exempt under GST. No RCM, no FCM. That means, see, I am dividing the entire set of customers of GTA into three categories. One is specified recipients, taxable under RCM first, then if GTA wants, they can convert into FCM. But option 1's exercise, that cannot be reversed in the entire financial year. So only financial year wise they have to exercise this option. This is number 1. Number 2, other than specified recipients, and number 3, section 51 entities. For our understanding, for our discussion, let us call them as section 51 entities who got registered just for the purpose of complying section 51. With those people, if GTA is providing services, then these two categories is exempt under GST. They are not coming under RCM or FCM because it is exempt under GST. So that is what GTA transaction all about. Here there is an example. You can just go with this example as well. The next entry is legal services. Legal services, individual advocate or firm of advocates or a senior advocate providing legal services to any business entity. That is very important. Business entity means, generally we understand, when we listen about the word business entity, we feel like, sir, only companies, corporates, big factories. Not only that, even the individual, the sole proprietors doing business are also called as business entities. So please be clear with that. So individual advocate, senior advocate or firm of advocates providing legal services to business entity located in India, no matter whether they are like partnership, from body, corporate, all that stuff, it should be a business entity. Business entity means even individuals doing business, sole proprietors are also business entity. Another important thing is legal services means just not only going and representing in the court, but also the legal advisory services in any branch of law is called legal services. So that is what the point. And here parallelly I will be teaching you exemption also with respect to legal services. If you remember, legal services are provided to these business entities, then it is taxable. But if they are provided to any person other than business entity, like let us assume, for example, Jolly LLB senior advocate is providing a divorce case related services to Mr. Imran Hashmi, an individual. He is not a business entity because marrying and giving divorce is not his business. So this is not taxable under GST at all. It is exempt. So no RCM, no FCM. If you recollect the exemptions, legal services provided to person other than business entity exempt under GST, to a business entity whose aggregate turnover not exceeding the threshold limit for registration. So we will be calling them as small business entities. What do you mean by small business entity? There is no such word called small business entity in the law. This is just for our understanding. Small business entity means the business entity whose aggregate turnover is not exceeding the threshold limits for registration under section 22, it means 10 lakh, 20 lakh, 40 lakhs, that much also they are not doing. For such business entities, if you provide legal services also exempt under GST. Any other business entity, that means all other big business entities who are liable for registration as per section 22, crossing the threshold limits, all that stuff, sir, for them if you provide, it is taxable under GST and taxable under reverse charge. That means those business entities only liable to pay GST. This is with respect to legal services. And the same point regarding arbitral tribunal also, same logic. If you remember, exemptions with respect to arbitral tribunal and advocate services are same to same. Arbitral tribunal also equally, whatever we have discussed for legal services, equally applicable for arbitral tribunal services as well. So they are providing services to business entity, small business entity exempt, other than business entity exempt. For other business entities like whose aggregate turnover exceeding threshold limit, taxable under reverse charge mechanism. The next one is sponsorship services. See, generally we have a misunderstanding. Sponsor means is providing some supplies or services to us, like that we'll have a misunderstanding. Please understand, sponsor is the person who is receiving the advertising services from us. We are advertising the brand of the sponsorer. So sponsorer is nothing but the recipient, not the supplier. So supplier can be any person who is advertising the brand of the sponsorer. So sponsorship services, in that case, supplier any person, recipient should be the sponsor, should be the body corporate or a partnership firm. In that case, here it is not a business entity, the recipient should be body corporate or a partnership firm. In that case, the recipient is liable to pay GST. So please be careful here. Sponsor is the recipient, not the supplier. Next amendment, if you see, regarding sponsorship services in RCM. RCM, you know, sponsorship services, any person providing sponsorship services to any person who is a body corporate or a partnership firm, it is coming under RCM. That means supplier can be any person, recipient should be body corporate or a partnership. Now they have amended the condition in such a way, supplier should be any person other than a body corporate. That means if the supplier is body corporate, automatically FCM. Okay, I'll just show you a small example here, small notes. Look at this. You know, supplier is a body corporate, recipient is a body corporate or a partnership firm. Then what is it, RCM or FCM? You tell me. You just comment the answers in the chat box here before me discussing the answers. Just pause the video and do it. Pause the video and do it. Right. So you know, sir, supplier is body corporate. Now in this both cases, automatically FCM, sir. No matter what, who is the recipient. Straight away, because other than body corporate. So straight away what? FCM. Next, if you see, supplier is non-body corporate, recipient is body corporate or partnership firm. So all the conditions are satisfied. You know the conditions are what? Supplier should be non-body corporate, recipient should be body corporate or a partnership firm. So then only RCM. Next case, if you see, supplier is non-body corporate, condition is satisfied, but recipient is others, not a body corporate, not a partnership firm, then automatically that is FCM. That means to bring RCM into picture for sponsorship services, understand, supplier should be definitely a body corporate, recipient should be supplier should be any person other than a body corporate. Supplier should be any person other than a body corporate, recipient should be body corporate or a partnership firm. So only in this case RCM will come into picture. Remaining all cases it is FCM. And one more small point is, you know, sponsorship services means the sponsor is the recipient, not the supplier. The person who is giving sponsor is the recipient. We are going to advertise his name, advertise his brand. That is what sponsorship service is all about. So please be careful with that. Okay, that is the another entry. So RCM amendment. The next one with respect to government services. See, government services, I can teach this RCM only when I'm linking these provisions with exemptions. So please be careful, a very important discussion here. First of all, understand with respect to government services, I'm treating the government services like this. See, we have a comprehensive discussion here. So in this comprehensive discussion, first let us understand what is taxable, what is exempt, and then if it is exempt, no need to worry about RCM or FCM. But if it is taxable, then we should check whether RCM or FCM. So government services, some services are exempt, some services taxable under forward charge, some services taxable under reverse charge. So let us understand first the taxability of government services. Coming to taxability of government services, see, government services, now let us divide the customers of government services into two categories. So the customers of government are divided into two categories. Number one is general public, the other is business entities. See, first of all, coming to government services, government means here we are talking about central government, state government, union territory, local authority. These people providing services to general public. See, for general public, whatever the services they provide, they are exempt under GST. except three things. Always remember these three things: A, B, C. That is based on exemptions entry 6 A, B, C. I am not talking about RCM entry. I am talking about exemption entry 6 A, B, C. 6A is Postal Department and Railway Services. 6B is services in relation to aircraft or vessel. 6C is transportation of goods or passengers. Sir, these three services. This is 6A. This is 6B. 6B of I am talking about exemption entries. Again, I am not talking about RCM entry. In exemption entry number 6A, B, C. Always you should remember what is 6A, B, C, because in further other entries or notifications you will be seeing this word. So now coming to the point. Except these services, these three, whatever are provided by government to general public are exempt under GST. Simple, remember this. Now on these three services, these three are taxable. These three are taxable under forward charge. Always remember these three services, always taxable, always forward charge. Postal Department, Indian Railways. Next, transport services in relation to aircraft or vessel. Next, transportation of goods and passengers. These three services taxable under forward charge even if it is provided to general public. Any other services to general public? Exempt. No RCM, no FCM. But sir, if you come to business entity, when you come for business entities, any service provided to business entity, 6ABC is for taxable for general public itself, then will we give any exemption to business entity? For them also it is taxable only. 6ABC it is taxable. Apart from 6ABC, any other services also taxable. But the only relaxation here is, sir, if the business entity, what we are doing now, if the business entity is a small business entity, that means whose aggregate turnover is not exceeding the threshold limit 10, 20, 40 lakhs. In such cases, for such business entities, if government is providing services other than ABC, other services will be exempt under GST. No RCM, no FCM. Are you understanding the point? But 6ABC, the Postal Department, Indian Railways, this transportation of goods and passengers, this services in relation to aircraft or vessel, all these are taxable even if it is a small business entity. Apart from that, any other service provided to small business entity, exempt under GST, no need to worry about RCM or FCM. But for other big business entity like Jio or Reliance, Wipro, Infosys or anybody, sir, we are doing a turnover greater than the threshold limits. For us, if any service provided by government, that is taxable under RCM. But for business entities like other than small business entities or big business entities, for them, if the government is providing services for which they are charging consideration less than or equal to 5,000 other than ABC, that is exempt under GST. Always remember whatever we discuss here, for ABC no relaxation whatsoever. Right away taxable under forward charge. General public, ABC taxable. Business entity, small business entity, ABC taxable. Big business entity, ABC taxable. Greater than 5,000 taxable. Less than 5,000 taxable. Equal to 5,000 taxable. ABC doesn't enjoy any relaxation here. Okay. So for general public, ABC taxable, forward charge. Other services exempt. For small business entities, ABC taxable, forward charge. Other services fully exempt. No need of RCM, FCM. For other business entities, that means like whose aggregate turnover is exceeding 10, 20, 40 lakhs, ABC taxable, forward charge, no matter what is the consideration. But other services, if the consideration is less than or equal to 5,000, enjoy the exemption. If it is greater than 5,000, taxable under reverse charge. That is what the whole concept. Clear? Here, in this entire discussion, there is one more special guest for us. That special guest is nothing but renting of immovable property. Combined reading of exemption entry number 5 and 5A. Entry number 5 and 5A. So combined reading of entry number 5 and 5A. See here, renting of immovable property. Sir, renting of immovable property, if we are provided by the government, then understand, if the recipient is registered fellow, then RCM. If the recipient is unregistered, then FCM. That means when I am renting the immovable property, central government, state government, union territory, all these people, sir, here for reverse charge mechanism purpose, we are also adding this reverse charge mechanism notification here. It is also extended or applicable to even the parliament, assembly, courts and tribunals. So these people renting the immovable properties, sir, to a recipient who is registered under GST, then recipient will pay GST under reverse charge mechanism. But if the recipient is unregistered, under forward charge mechanism, government only has to pay GST to the department. Are you clear? Recipient is registered now, RCM, not registered now, FCM. But this whatever renting of immovable property related provision is not applicable for Indian Railways. That means what is the bottom line of the story? Indian Railways renting the immovable property. It is always forward charge. The reverse charge will not come into picture. So many points we have discussed. Please understand, for everything we have a notes properly, and there is an example also properly here, all that stuff. So please make sure you are just going through the notes, writing it properly and taking the examples. Clear? Let me finally summarize again. Government services to general public, ABC, taxable, forward charge. Other services, exempt. Okay. For business entities, if it is a small business entity, that means as we have discussed, aggregate turnover not exceeding even the threshold limits. ABC, taxable, forward charge. Other services, exempt. For any other business entities, ABC, taxable, forward charge. Other services, if consideration is less than or equal to 5,000, exempt. Greater than 5,000, fully taxable. Clear? And one special guest is there, renting of immovable property. What is that renting of immovable property? If the recipient is registered, RCM. Recipient is unregistered, FCM. But if it is provided by Indian Railways, recipient is registered or unregistered, both the cases it is forward charge. That is what the summary of entry 5 and 5A in RCM. And for this purpose, we have discussed exemptions entry number 6 to the extent required. Mostly everything we have discussed. Okay.
The next amendment is nothing but a clarification, my dear friends. The clarification is regarding whether Delhi Development Authority is treated as a local authority. So why this doubt has come into picture? Now, please understand, in RCM we have seen, sir, any local authority providing services to a business entity are taxable under RCM. Okay, if at all it is a taxable one, it is taxable under reverse charge basis. Now, sir, Delhi Development Authority, is it a local authority? So that the services provided by Delhi Development Authority to business entities, whether it comes under RCM, was the doubt. Then the department has clarified, sir, local authority definition as per section 269, it is not meeting the requirement. So Delhi Development Authority, DDA, cannot be called as a local authority, sir. Hence, the services provided by DDA are not covered under RCM. That's all. Only lengthy points, that's all. But apart from that, concept is very simple. Delhi Development Authority is not a local authority. Services provided by them to business entities are not subjected to RCM. That means, hence what it is, FCM only. So that is what the point. Okay, this is the clarification.
The next entry is with respect to entry 5AA. So entry 5AA is with respect to renting the residential property. See, renting the residential property for residential purpose, it is exempt under GST. But people are taking residential property on rent and using it for commercial purpose. So in such cases, that is taxable. So in such cases, if the recipient is registered, then the renting of that residential property for commercial purpose will become taxable under RCM. If the recipient is unregistered, then it is taxable under FCM. So simple, residential property for residential purpose exempt under GST, but residential property for commercial purpose, business purpose, taxable. Recipient is registered now, the tenant, then it is RCM. If not registered, then it is FCM. That is what the point. Okay, so this is entry 5AA. Next, coming to entry 5AB. 5AB, I am here connecting it with 5A also. 5AB is all about 5AA. We have seen renting of residential property, but here 5AB is all about renting the commercial property. Renting the commercial property is taxable, but here through entry 5AB, which they have implemented with an intention to make sure when the commercial properties are being rented out, if the recipient is registered, let the recipient pay GST under RCM. When supplier is unregistered, here the important criteria is supplier should be unregistered, recipient should be registered, and renting the commercial property comes under RCM. So I repeat, if supplier is unregistered and recipient is registered, then only RCM. In any other case, it will go with FCM. That means supplier is also registered na FCM. Supplier is registered, recipient is unregistered na FCM. Any other case. The main thing to trigger RCM here is the supplier should be unregistered, recipient should be registered. That is the important factor. Okay. Now, when you compare this with entry 5A, same thing we have seen with Renting of immovable property by government also. Renting of immovable property by government, if the recipient is registered, RCM always. Recipient is unregistered, na FCM. But in this, anybody other than government, for example, renting any commercial buildings, all that stuff, recipient is registered, and the supplier who is giving the premises on rent, the owner is unregistered. Owner is unregistered, recipient is registered, commercial property, then only RCM. Any other case, it is FCM. So that is the new entry, entry number 5AB. If you see the next one, again another amendment in RCM entry only with respect to renting of commercial properties. Okay, sir, with respect to renting of commercial property, you know, renting of commercial property is taxable only. But if the supplier is unregistered person, recipient is registered person. Recipient is registered person other than who has opted for composition scheme. Earlier, this other than who has opted for composition scheme was not there. Now, through amendment, they have added this. So, what is the impact of this? If you ask me, I will show you again here. See, renting of commercial property. Supplier should be unregistered person, recipient should be registered person not opting composition scheme, then only RCM. Remaining all cases FCM. So you just pause the video and see what is this and comment the answers in the video, like give me in the comment box. Pause the video and you try. Okay, so here first case is satisfying the condition. Supplier is unregistered person, recipient is registered person. So this is RCM. But remaining cases, if you see, supplier is unregistered person but recipient has opted for CS, means composition scheme. That means FCM only will come. Remaining all cases FCM, FCM. Correct? Registered person straight away FCM. So if you see in these two cases, second case and third case, you will get a doubt. Sir, if supplier is unregistered person, you are saying FCM, who will pay GST? Nobody will pay GST. Okay, that means it is taxable, but there is no person who is there to collect that and give to the government. Okay, it is just like drinking tea is taxable, but if you are drinking tea in a hi-fi restaurant, but if you are drinking tea in a roadside restaurant, roadside tea stall, sir, it is taxable, but there is no person to collect GST and give to the department. So the second case and third case is like drinking tea in a roadside tea stall. Okay, first case, of course, roadside tea stall only, but a registered person is going and drinking, so RCM. So fourth case is like drinking tea in Taj Hotel. Okay, so that is what the point. Hope it is clear for you. Very simple amendment. Please be very careful. Good chances of being tested as an amendment or like adjustment in the problem or a separate case study based question also. The next one, services provided by director of a company coming under reverse charge mechanism. So the recipient, that is the body corporate, is liable to pay GST under RCM. Here the important point is that director should not be employee of the company. If the director is employee of the company, already it is covered under schedule 3, so there is no GST at all. So if the director is not an employee, then automatically his services are covered under reverse charge mechanism. It is a supply taxable and they are covered under reverse charge mechanism. Sir, how do I identify whether the director is an employee or not? Based upon the TDS what the company is deducting from his remuneration. TDS under section 192, then he is an employee, no GST at all, no RCM, no FCM. If the TDS is under section 194J, then it is supply and it is subjected to RCM. But here the interesting thing is, please understand that only when the services provided by him in the capacity of director, for that he is getting remuneration, then only this RCM comes into picture. Any other services he is providing in his personal capacity to the company, then we should see that independently. We should not bring that here. So I am a director of a company. Whatever the services I give to the company in the capacity of a director, then only RCM will come into picture. Sir, whatever I am doing in my independent capacity, individual capacity, separately, not as the director of the company, providing some goods or some services to the company, then we should assess that case independently. We should not bring that here. So this is another important point. And one more interesting thing here is, when we talk about director, we understand what are the possibilities with respect to director services. The director services, director may be treated as an employee. How do we understand that? TDS under section 192. So neither SOG nor SOS, no GST implication at all. But if director is not treated as an employee, section 194J, in such cases, if he is a director of a body established by central government, state government or local authority, as we have seen in schedule 3, that again neither supply of good nor supply of service, no GST, no RCM, no FCM. In any other case, then only RCM comes into picture. Hope it is clear for you. For example, you are an independent director of BSNL company, no GST, no RCM, no FCM. But if you are an independent director of a TCS company, then it is RCM. Clear? So that is what with respect to director services, which you should be careful about. Okay. Next, services provided by insurance agent to insurance company. The insurance company is liable to pay GST. The services provided by recovery agent to a banking company, financial institutions and NBFCs. The banking company, financial institutions, and NBFCs are liable to pay GST. The same way, a music composer or a photographer or artist providing their services. What is the service they are providing? Now, please understand, they are allowing somebody to use their copyright, which they got registered under Section 13(1)(a) of Original Copyright Act 1957. So the point is, somebody is allowing, this music composer, photographer, artist is allowing somebody to use their copyright for which they are getting the royalty. On that, who is liable to pay GST? That particular music company or producer is liable to pay GST. Okay, so I repeat, the important point here is allowing somebody to use the copyright. That is what the point. And the same logic applies to author also in entry 9A. So author is allowing somebody to use his copyright on the book. For example, I wrote a book, for example, how to pass CA in 30 days, and I am transferring this right to publish to the Boys Publishers, a publishing company. Who is liable to pay GST on the royalty? The Boys Publishers. The publishing house is liable to pay GST on that under RCM. The only difference here we are going to see is, just like in GTA, here also for author we are giving an option. What is the option? Now, if the author wants to make this under FCM, he can make it under FCM. Generally, the author allowing somebody to use his copyright, that is the publishing house. Obviously, publishing house is liable to pay GST. But if the author wants to make it under FCM, he can make it under FCM. So he can take GST registration and collect GST and pay GST to the department under forward charge mechanism. But once the option is exercised, it will be valid for the entire financial year. So that is what the concept. For music composer, photographer, or artist, that FCM option is not there. Only for author, that FCM option is available. Next, the services provided by the members of overseeing committee appointed by RBI. The RBI is liable to pay GST. Next, individual direct selling agents. What do you mean by individual direct selling agents? Who are selling the products of the banks, like loans, deposits, etc., for which they are providing their services to banking companies and NBFCs, and they are paying commission to that individual direct selling agents. Here, please understand, direct selling agent license you can get as an individual or a partnership firm or a body corporate, whatever it is. But here, only when in the supplier the direct selling agent is an individual, then only RCM provisions will come into picture. Otherwise, RCM provisions will not come into picture for partnership firm or a body corporate kind of direct selling agents. Hope it is clear for you. Next, the business facilitator and business correspondent. See, business facilitator and business correspondent related to banking sector. Just remember the technical words. Let us not worry about their in-depth meaning. Business facilitator providing services to a banking company. Banking company is liable to pay GST. But business correspondent providing services to banking company, it is not covered under reverse charge mechanism. It is under forward charge. So then what is covered under reverse charge? What is covered under reverse charge? Now, agent of business correspondent to business correspondent is covered under reverse charge. Now see, for example, here what happens is, the business facilitator providing services to bank, that is covered under RCM. And one more thing, agent of business correspondent to business correspondent is covered under RCM. But sir, if agent of business facilitator is providing services to business facilitator, or business correspondent is providing services to bank, both these things are covered under FCM only. So in RCM only these entries are covered. Okay, for your clarity, I have discussed these things also here in this particular diagram. Hope it is clear for you. So I repeat, services provided by business facilitator to bank, RCM. Agent of business facilitator to business facilitator, FCM. Same way, business correspondent to bank, FCM. Agent of business correspondent to business correspondent, RCM. So that is what entry number 12 and 13. So the next one is security services. Security services provided by any person other than a body corporate. That is important. That means non-body corporate is providing security services. Security services means supplying the security personnel to whom any person registered under GST, individual, HUF, partnership firm, body corporate or not, all that stuff irrelevant. For us, it is person registered under GST who is not opting composition scheme. That's all. Then it is RCM. So now, if the recipient is unregistered fellow, FCM. Sir, if the recipient is registered, RCM. If the recipient is registered but under composition scheme, FCM. Sir, if the recipient is registered but registered for the purpose of section 51, that is also FCM. So please understand, RCM is not applicable when if you are providing services to a registered person, if he is a composition dealer, or if you are providing services, the security services, supplying the manpower, sir, to a recipient who is registered under composition scheme, or to a recipient who is registered just for the purpose of complying section 51 provisions. You know this, government department, local authorities, all that. In that case also it is FCM. For this purpose I gave an example number 41, or whatever the number may be changing here and there, but just don't worry about the numbering. So this is what the example, you can just go through this. So that is what the concept of supply of security services. The next one, the interesting entry, renting of motor vehicle to a body corporate by any person other than a body corporate, along with the cost of fuel included in that. So renting of motor vehicle with the cost of fuel by any person other than body corporate to a body corporate, coming under RCM. Here the interesting part is, see, generally when we are providing RCM supplies, we cannot take ITC. But in this case, these people can take ITC even though they are providing supply covered under RCM at 5%. But that ITC is limited. What is that limited ITC? Na? They can take ITC only of the same line of business. That means I am renting a motor vehicle to a body corporate. I am non-body corporate. I am renting a motor vehicle to a non-body to a body corporate, and that is covered under RCM. So now recipient is liable to pay GST. The body corporate is liable to pay GST at 5%. For me, generally ITC will not come, but in this case I will get ITC on only one purchase, that is same line of business. What do you mean by same line of business? Sir, when I receive another motor vehicle on rent, then I can take ITC on that, whatever the GST I pay to the supplier. Now see, for example, see, Mr. Vin Diesel is renting a motor vehicle to me. So I am Optimus Prime, Mr. Optimus Prime, so not a body corporate. Now Vin Diesel is renting the motor vehicle to me and he will charge GST. The same thing what I am doing now, I am renting that motor vehicle to Transformers Private Limited, a body corporate, with cost of the fuel included. So this is coming under RCM. So this is coming under RCM at 5%, and sir, I can take ITC. Optimus Prime can take ITC on this particular same line of business. That means generally when I am supplying RCM supplies, I cannot take ITC. I cannot take ITC, but I can take ITC on same line of business. If I take a motor vehicle on rent, I can take ITC. Any other purchase, I cannot take ITC. This is number one. Number two, sir, if I don't want to go with RCM, I can go with FCM by charging 12% in the invoice. So I can make it as FCM if I want at 12%. So I repeat, any non-body corporate to a body corporate renting of motor vehicle with cost of the fuel included, that will be subjected to RCM. Okay, but if they want to shift it to FCM, they can shift it to FCM. RCM means 5% with limited ITC. What is that limited ITC? Only on the same line of business you can take ITC, or if you can go with FCM, complete 12% with full ITC. Enjoy. Sir, if for example I am non-body corporate and renting the motor vehicle to a non-body corporate, then you are straight away violating the condition. No RCM, it is straight away FCM. So that is what the entry of renting the motor vehicle with cost of the fuel included. Now there is a clarification here. People got a doubt that, sir, whether RCM is applicable on services of renting the motor vehicle or services of transporting the passenger. First, understand the basic difference between renting the motor vehicle and transporting the passenger. Renting the motor vehicle means the motor vehicle will be completely at the disposal of the recipient. For example, I am taking a car on rent to travel from Chennai to Bangalore. I took the car on rent and I decided, let me go from Chennai to Pondicherry, not Bangalore. Or I decided, let me just take a holiday in the weekend, so let me not drive anywhere. So it is completely my wish. So the vehicle is under my disposal. That is renting of vehicle. Transporting the passenger means, now for example, I am booking a ticket in a train or booking a ticket in a bus. Sir, they are saying Chennai to Bangalore, 1000 rupees. I am paying that and I am boarding. Whether the vehicle is under my control, or I am just booking a Ola cab or a Uber cab, they will drop me from one location to another location. Correct. Sir, will I ask the driver, you get down, I will drive the car? No, the car will not be, the vehicle will not be under our disposal. So renting of the vehicle means vehicle will be at your disposal. Transportation of passenger means, sir, it will be based on predetermined route and predetermined schedule. The vehicle will not be at your disposal. Here we are talking about reverse charge mechanism in a case where it is all about renting the vehicle with the cost of the fuel is included, and the supplier should be non-body corporate, recipient should be body corporate. Clear? So that is what the clarification here. The last entry under CGST Act with respect to services, the lending of security services. When the securities are lended under security lending scheme, the borrower who is taking the securities, borrowing the securities, that person is liable to pay GST on that under reverse charge mechanism. So with this, we are done with all the RCM services covered under CGST Act. So under IGST, the only entry which is there under RCM is nothing but, see, import of service. So you're importing service, any service from a person located outside the taxable territory. So you are importing service. When you're importing the service, obviously if it is taxable, automatically RCM. If it is taxable, automatically RCM. But there is an exception. So I repeat, import of service straight away RCM, but there is an exception. What is that exception? What is that exception now? Please understand, the exception is NTOR, non-taxable online recipient. That means you are importing service, but the import of service is by an NTOR, by a non-taxable online recipient, then reverse charge mechanism will not come into picture. Sir, if reverse charge mechanism doesn't come into picture, what will come into picture? Forward charge mechanism will come into picture. So if it is the recipient is non-taxable online recipient importing service, straight away forward charge. That means the supplier from non-taxable territory, that fellow has to pay GST, that fellow has the obligation to pay GST. Now coming to the point, sir, what do you mean by non-taxable online recipient? Non-taxable online recipient means who is unregistered in India and receiving OIDR services, receiving online information data access and retrieval services, unregistered, then he is called NTOR. Now even though you are registered under GST for the purpose of section 51, that is TDS compliance, still we will treat you as unregistered fellow, still we will call you as NTOR, non-taxable online recipient. So let us understand with a small example here. See, Mr. Captain America from USA, sir, what he is doing, he is providing various services. Okay, now let us assume he is providing how to design the mask services to Mr. Krish, who is registered in India for his business of mask selling, all the stuff. Because he is registered under GST here, he is not NTOR. Okay, so automatically RCM will come into picture. If it is NTOR, then only FCM, otherwise RCM. Okay, now sir, Captain America is providing some online gaming services. So online gaming services to Mr. Nibba, unregistered under GST in India. Sir, this fellow is receiving OIDR services, online gaming, and unregistered. So this fellow is called as non-taxable online recipient. So automatically what? FCM, RCM will not come into picture here. Or Captain America is providing cloud storage services to Viverse Private Limited, registered under GST. This is not an NTOR. Because it is not an NTOR, automatically what will happen? There will be reverse charge mechanism. Okay. Or Captain America is providing services to Greater Chennai Corporation, which is registered under section 51, like registered for the purpose of section 51. Okay. So for the purpose of this, that is also treated as unregistered. So that is also non-taxable online recipient. So now see, for example, here the catching point here is Captain America is providing advisory services relating to the security of the city. Now please understand here, what do you mean by NTOR? NTOR means you should be unregistered plus receiving OIDR services. Here I am treating this fellow as unregistered, but what is the service they are receiving? They are receiving advisory services, which is not at all OIDR, That means here RCM will come into picture. Please understand that only if you are unregistered plus receiving OIDR put together, then only FCM. Remaining cases, yes, it is RCM only. So I repeat, sir, NTOR means you should be unregistered person plus OIDAR, then only it is FCM. Otherwise it will go with RCM. Please remember this very important point. So now same Mr. Captain America is providing online cyber security firewall services to this Greater Chennai Corporation, which got registered for the purpose of section 51. So first thing, they are unregistered person as per this particular NTOR definition, and number two, they are receiving OIDR services. So in these two cases, automatically when these two conditions are satisfied, it is FCM. So this is FCM. So hope you have understood and enjoyed the example as well. Clear? So just go through the example. So as I told you, the notes, the soft copy here is in the Telegram channel, and the Telegram channel link is given in the description of this video. You can just check. So hope you are clear with this example. Okay, fine. So with this, we are done with reverse charge mechanism entries of services. So now what are the goods covered under reverse charge mechanism? So the goods covered under reverse charge mechanism, if you see, I have given the list of goods, the supplier and the recipient. If it is cashew nuts, not shelled or peeled, agriculture is supplying to an registered person. Agriculturist to any registered person, RCM. Any agriculturist selling to any registered person, again BD wrapper leaves, RCM. Any agriculturist to any registered person selling tobacco leaves, RCM. Next, any unregistered person selling to a registered person following essential oils other than citrus fruits. So citrus fruit, automatically citrus fruit oil will come under FCM. Sir, other essential oils like peppermint oil, or other mints like spearmint, watermint, horsemint, ergamint, mentha, arvensis, all this stuff. Seriously, I forgot my biology, all that stuff in childhood itself. So all these things are what? RCM if it is provided by unregistered person to registered person. Citrus mint, just remember it is FCM. Okay, some mint will come automatically, right? RCM. If citrus fruit comes, right? FCM, simple. And again, silk yarn supplied by any person who manufactures the silk yarn. Okay, the manufacturer of silk yarn to a registered person, RCM. Next, raw cotton by an agriculturist to the registered person, RCM. Supply of lottery. If you understand supply of lottery will come under specified actionable claim wording, and it is treated as goods. Okay, it is not service. So supply of lottery by state government or union territory or local authority to any lottery distributor or selling agent, then it is coming under RCM. Next, used vehicles or seized and confiscated goods or old and used goods and waste and scrap. This is sold by central government excluding Indian Railways, state governments, union territory, local authority. So central government, state government, union territory, local authority selling all these used vehicles, seized vehicles, confiscated goods, all that stuff, waste and scrap, then it is coming under RCM if it is sold to a registered person. If it is sold to a registered person, not unregistered person. So these are the goods covered under RCM. And we have already discussed private sector lending certificates are also treated as goods equally. So any registered person selling them to another registered person, both the persons are registered here. Please be careful. So long we have discussed supplier is unregistered, all that, or agriculturist, but here supplier is also registered, recipient is also registered, selling private sector lending certificates, that we have already discussed in previous supply chapter. Next, this is very important entry where the sale is metal scrap, the notified goods, the metal scrap by an unregistered person to a registered person, then RCM will come into picture. So these are the goods which are coming under RCM. So students, in this video we are going to see section 9 subsection 5 of CGST Act 2017, where e-commerce operator is liable to pay GST. When e-commerce operator is liable to pay GST, please understand, through the e-commerce operator, that is through the e-commerce operator, if notified services, not goods, notified services are supplied, then e-commerce operator is liable to pay GST, not the supplier. Okay, so now we have seen, sir, generally supplier is liable to pay GST. Then we have shifted to reverse charge mechanism where recipient is liable to pay GST. Now we are seeing not the supplier, not the recipient, the intermediary, the e-commerce operator is liable to pay GST. When? In only 4 cases, only 4 notified services. So just to remember the notified services, you just remember this code THAR, THAR. Sir, transportation of passengers, housekeeping, accommodation and restaurant services. 4 points has 4 exceptions. So if I am transporting passengers, sir, using radio taxi, if I'm transporting passengers using radio taxi, motor cab, maxi cab, motorcycle, omnibus. Omnibus alone we have the exception, that is why I marked it there, or other motor vehicle. Sir, if it is supplied through e-commerce operator is liable to pay GST, not the supplier, not the recipient. Example, Ola, Uber, Rapid, all that stuff. But what is the exception? Exception is if it is by omnibus. Omnibus is the vehicle being used and supplier is a company through e-commerce operator, but still company is liable to pay GST, not the e-commerce operator. I repeat, if the transportation of passengers through e-commerce operator, yes, you are using, but it is omnibus you are using, whatever it is. And next one is, sir, it is the supplier is company. In that case, sir, who is liable to pay GST? The company is liable to pay GST, not the e-commerce operator. You know, for example, Vivarth Travels Private Limited. Person by name Mr. Sanchar is booking the ticket through GoIBibo Private Limited. On that, who is liable to pay GST? In omnibus, the supplier is company is liable to pay GST. But same Mr. Sanchar is booking ticket from a travels company called Transformers Travels, which is a sole proprietor, and booking the ticket through GoIBibo. Who is liable to pay GST here? GoIBibo is liable to pay GST. Okay. Next, H for housekeeping. Sir, housekeeping services and accommodation services, if you see, housekeeping services and accommodation services, they enjoy the same exception. That means generally if you are providing housekeeping services or accommodation services, that the e-commerce operator, housekeeping for example urban company, accommodation services like Make My Trip, Agoda, Oyo, whatever it is, sir, these e-commerce operators are liable to pay GST. But in both the cases, what is the common point? What is the common exception is if the supplier, if the supplier who is supplying this housekeeping or accommodation services is a person who is liable to get registration under section 22 subsection 1, that means whose aggregate turnover is exceeding the threshold limit. Simple. So if the supplier's aggregate turnover is exceeding the threshold limit, then supplier is only liable to pay GST. For example, in Goa Bibo, I am booking a room in a small roadside small hotel, okay, who is not even liable for registration. That much turnover they are not doing, then Goa Bibo is liable to pay. No, I am booking the room in Taj Hotels using Goa Bibo app. Taj Hotel is like doing such a great turnover, right? So Taj hotels are liable for registration under section 22 subsection 1. So Taj hotel is liable to pay GST. Hope you are able to understand. Housekeeping and accommodation services. Sir, the common point is what? The exception is if the supplier is a small fellow not even liable for registration, then e-commerce operator is liable to pay GST. No sir, supplier is liable for registration under section 22. That means they are doing that great turnover. Then in such case, that supplier, that is for example Taj hotels, you are booking room in Goa Vivo, Taj hotels is liable to pay GST. Or you are booking an electrician through urban company for some electrical work in your house. In such case, sir, if the electrician is already doing a great turnover yearly, some 30 lakhs, 40 lakhs kind of thing, he is already liable for registration under section 22 subsection 1, then he is liable to pay GST, not the urban company. Okay, so that way, please remember these exceptions. So these are the 3 points. Next, last one, restaurant services. If you go to restaurant services, the restaurant services generally what e-commerce operator is liable to pay GST. Best example, Swiggy, Zomato. Sir, let us assume there is a standalone restaurant, 7 floors you imagine. From that you are placing an order through Swiggy. Swiggy is liable to pay GST. Sir, it is a 7-floor standalone building restaurant. Still it doesn't matter. But if the restaurant is located inside a hotel, please understand restaurant is different, hotel is different. Hotel you sleep, restaurant you eat. Okay, so restaurant is located inside a hotel. Which hotel? The hotel which is like costly hotel where your declared tariff for the room per day itself is greater than or equal to 7,500. In such type of rooms, if you are in such type of hotels, sorry, you are having the restaurant. From that restaurant I am ordering through Swiggy, 1 plate idli, 1 plate dosa. Restaurant is liable to pay GST, not the e-commerce operator, not the Swiggy, Zomato. Clear? So that is what the concept. I repeat, if you are, for example, sir, ordering a masala dosa from Sarvana Bhavan restaurant, so Swiggy is liable to pay GST. Sir, you are going to restaurant and eating in Sarvana Bhavan, sir, Sarvana Bhavan is liable to pay GST. Sir, you are ordering masala dosa from Sarvana Bhavan own website or own mobile app, then also Sarvana Bhavan is liable to pay GST. But if you are ordering through Swiggy from a restaurant which is located inside ITC Grand Chola Hotel, where the declared tariff is greater than or equal to 7,500, then the restaurant itself is liable to pay GST, not Swiggy, Zomato. Hope it is clear for you. So with this, we are like, what are the services covered under 9 subsection 5? We are clear. But here the problem is, sir, if the e-commerce operator is not having any physical presence in India, then who is liable to pay GST? If the e-commerce operator doesn't have physical presence in India, then any person representing such e-commerce operator for any purpose in India is liable to pay GST. Because to do this business as an e-commerce operator, you need not have any physical presence in India. So if you don't have any physical presence in India, there might be some representatives for you in India for any purpose. Those people will be liable to pay GST. Sir, I don't have even any representative also in India, sir, representing me. Then appoint a person in India just for the purpose of paying tax. So that is what the concept. So with this, we are done with section 9 subsection 5.
So the next one, if you see again, another clarification here. See, this is regarding, e-commerce operators are liable to pay GST under notified services under section 9 subsection 5 supplied through them. Okay. In this case, the doubt was, sir, e-commerce operators are supposed to pay their GST liability under 9 subsection 5. Are they supposed to reverse any ITC on the inputs and input services they are using to provide their services as an e-commerce operator? First of all, when we decode this particular concept of e-commerce operator, let us take this Rapido bike taxi example. Sir, if you look at their tax liability, they'll have tax liability in two different cases. One is because they are providing services to the drivers there, they are charging commission from the drivers. So they are getting some commission or consideration from the drivers. So Rapido or any other e-commerce operators, because they are providing the platform, they are connecting with the customers, they are connecting the suppliers with the recipients, these e-commerce operators will get some commission. So that means this e-commerce operator, in this case Rapido, is purely acting as a supplier, collecting consideration, liable to pay GST. So this liability they are supposed to discharge under section 9 subsection 1 generally. Okay, so when the e-commerce operator is discharging the GST liability as a supplier, sir, it can discharge its GST liability either using ITC balance or using cash balance. Okay, that is fine. But now the problem is, sir, this Rapido is liable to pay GST under section 9 subsection 5 as an e-commerce operator, and when they are discharging this liability, please understand they have to pay this GST liability using only cash balance. They cannot use ITC balance, because this is nothing but, understand, e-commerce operator will collect consideration plus GST, and on behalf of the supplier they will go and pay GST to the government. While paying this GST to the government as an e-commerce operator under section 9 subsection 5, e-commerce operator cannot use ITC balance. So here full and full this liability 9 subsection 5 liability should be settled only in cash. Okay, that is first clarity for you. And please understand, when they are settling their GST liability under 9 subsection 5 fully in cash, there is no situation of ITC reversal. Sorry, ITC reversal on inputs and inputs services used by such e-commerce operator to provide service as an e-commerce operator will not arise. So please understand, simple. What is this all about now? For this e-commerce operators, tax liability will come in two circumstances. One is 9 subsection 5, the other is 9 subsection 1. 9 subsection 5, as an e-commerce operator, fully they should pay in cash. Because they are fully paying in cash, no reversal of ITC concept will come into picture, because they are not using any ITC balance to pay this. Second one, 9 subsection 1, as a general rule. So as a general rule, supplier is liable to pay GST on the supplies made by him. So in that case, e-commerce operator is providing a platform, electronic platform to the suppliers. For that, e-commerce operator is charging consideration from the suppliers. On that, GST is payable by the e-commerce operator. But for providing these services as an e-commerce operator, Rapido might be having some corporate office paying rent to that, paying GST to that, might be taking some audit services, paying GST on that. Like this, anything would have been purchased by them. On that, they would have got ITC that they can happily set off. So, if it is a GST liability, normal GST liability for Rapido, for their sales, for the services they have provided, they can use ITC balance if sufficient, otherwise cash balance is there. No sir, they are discharging the GST liability as an e-commerce operator for the services supplied through it. Okay, under 9 subsection 5. That liability they should definitely discharge by cash. Okay, ITC cannot be used. And here ITC reversal concept also will not arise, because e-commerce operator liability as 9 subsection 5 is fully discharged in cash. Okay, so always remember, these people are having liabilities to discharge the tax liability, or we can say responsibilities, in two different cases. 9 subsection 1 for the sales they are making, 9 subsection 5 for somebody making sales through e-commerce operator through 9 subsection 5. Okay, that we have to understand. Hope this is clear for you. So notes is also given clearly. So that is what all about the clarification, easy one.
Hello students, this is your Mr. GST CA Vishnuvardhan, and in this video quickly we are going to revise composition scheme concept. As you all know, composition scheme benefit is available in section 10 in two different subsections. Subsection 1 read along with subsection 2, and next subsection 2a. Subsection 10 section 10 subsection 1 and 2 combined reading, we can understand this option is available for people dealing with goods and restaurant service providers. That means you may be a manufacturer, you may be a trader, or you may be a restaurant service provider. You can enjoy section 10 subsection 1 and subsection 2. So in composition scheme, you know, when you opt for composition scheme, you're opting for composition scheme whether you're eligible or not is purely depending on your aggregate turnover in the preceding financial year. Under section 10 subsection 1, if your aggregate turnover in the preceding financial year does not exceed 150 lakhs, and if it is special category states, it is 75 lakhs. For us to remember special category states, we have a memory code here, stunning ma'am. So stunning ma'am is the code for remembering 75 lakh limit states. So Sikkim, Tripura, Uttarakhand, Nagaland, Manipur, Arunachal Pradesh, Mizoram, Meghalaya. Just remember stunning ma'am here. In stunning ma'am, A for Arunachal Pradesh, not Assam. Remember stunning ma'am because she is watching the sunrise in Arunachal Pradesh. Okay, so stunning ma'am, remember that way. In that cases 75 lakhs, all other cases 150 lakhs. Coming back to the concept, sir, section 10 subsection 1 is available for people dealing with goods That means you may be a manufacturer or you may be a trader. And also if you are a restaurant service provider, for you also this option is available. But this option is available only based upon your aggregate turnover in the preceding financial year. If your aggregate turnover in the preceding financial year is exceeding 150 lakhs, then you are not eligible. If it is not exceeding, that means less than or equal to 150 lakhs, then you are eligible for composition scheme current financial year. I repeat, whether you are eligible for composition scheme or not in this current financial year, we will check with the aggregate turnover limit of the preceding financial year. So 150 lakhs in normal states and 75 lakhs in special category states, then you are eligible for composition scheme. So if you are eligible for composition scheme, sir, what is the advantage? The advantage is you can pay tax at composition rates, not normal rates. That means if you are selling furniture 12% GST rate, you can pay tax at composition rate 1% instead of paying 12%. So that is the benefit. So if you are a composition dealer, you can pay tax at composition rates. What is that rate now? Manufacturer means he will pay 1% of the turnover. Trader, he will pay 1% of the taxable turnover. Restaurant service provider will pay 5% on the turnover. So here if you see properly, the trader alone is having one relaxation, that is he will pay 1% tax on the taxable turnover. Remaining people will pay tax on total turnover, no matter whether it is taxable or exempt. Okay, so here when I say 1%, it is half percent CGST, half percent SGST. When I say 5%, 2.5% plus 2.5%. Okay, so if you are a special category state, if you are in special category state, then the threshold limit is 75 lakhs, not 150 lakhs. Okay, so that is the concept. Right now, sir, for other service providers or who are not eligible for section 10 subsection 1 benefit, they can go with section 10 subsection 2a. Section 10 subsection 2a, ditto same, only thing threshold limit changes, it is 50 lakhs no matter in which state you are, and tax rate is 6%, not 1% or 5%, it is 6%, 3% plus 3%. I repeat, who are not eligible for section 10 subsection 1 can go for section 10 subsection 2a, but technically speaking, subsection 2a will be mainly for the people who are going through services. People dealing with goods can go with this. Okay, but here in section 10 subsection 1, another point what we have to understand is, if you are in section 10 subsection 1, you should not provide any services other than restaurant services. But the law is giving you permission to provide marginal services. That means even though you are under section 10 subsection 1, other than restaurant services, you can provide 10% of the turnover in the state in the preceding financial year, or 5 lakhs, whichever is high, that much amount of turnover. That means, see, for example, in the preceding financial year 22-23, you have 3 states, 3 branches, 3 registrations: Andhra Pradesh, Tamil Nadu, Karnataka. Each state you are doing 70 lakhs, 60 lakh, 10 lakhs. That means 140 lakhs aggregate turnover. Aggregate turnover, you know, pan India basis we have to take the aggregate turnover, and aggregate turnover meaning is what? Nothing but, sir, it includes everything: taxable supplies, exempt supplies, even interstate supplies between people having the same pan, that is distinct persons. Okay, from Andhra to Tamil Nadu, if you do any sale here, that means supply as per schedule 1, that is also added in aggregate turnover, but only when it is interstate. Okay, so fine, coming to the point, sir, aggregate turnover, when you see, sir, 140 lakhs in preceding financial year 22-23, I am eligible for composition scheme in 23-24. So in 23-24, in Andhra Pradesh I can do, one second, in Andhra Pradesh I can do 10% of the turnover, 10% of the turnover in that state in the preceding financial year. That means 10% of 70 lakhs, 10% of 60 lakhs, or 10% of 10 lakhs, or 5 lakhs, whichever is higher. So here 7 lakhs or 6 lakhs or 5 lakhs. So this way, sir, in 23-24, I can make this much of services, this much of services, even though I am going with section 10 subsection 1 benefit. But understand, when you are providing these services, when you are going with this limit is extra than restaurant services, and in this limit we will not calculate your income by providing services of extending loans, advances, or deposits. Remember, always see, when you are allowing somebody to use your money and charging interest or some other consideration, that means you are doing service. For that you are receiving consideration, and that is exempt under GST, you know it. But that service we will ignore for anything in section 10. I repeat, maintain a thumb rule. Remember a thumb rule, that is, sir, for the purpose of section 10, you are calculating aggregate turnover, you are calculating the tax amount, or whatever it is, the threshold limits, whatever it is. Sir, ignore one fellow. That fellow is nothing but the interest income earned by way of extending loans, advances, or deposits. Clear? So that is what the point, right? So we will ignore that, and apart from that you can provide. So I repeat, here you have the benefit, you have the benefit for state wise, you have the benefit to provide some small amount of service that we are calling as marginal supply of services, okay, that you can provide. But other than that, you cannot provide anything if you are in section 10 subsection 1 option, okay. So that is what the concept. Now sir, okay fine, we have understood that two subsections are talking about composition scheme. One subsection is all about manufacturer, trader and restaurant service provider. The next one is service providers other than restaurant service providers or who are not eligible for section 10 subsection 1. Threshold limits 150 lakhs, 75 lakhs and this side 50 lakhs. Here tax rates are 1%, 1%, 5%, here 6%. But trader, you have seen one different point, sir. For trader, what is there? Trader only enjoys one benefit, that is what? He will pay tax only on the taxable turnover, not on the total turnover. Okay, so if the trader who is buying and selling is selling taxable goods as well as exempt goods, he will pay 1% tax only on the sale of taxable goods, not on the exempt goods. But for manufacturer, he is selling taxable goods as well as exempt goods. He is manufacturing and selling, so he will pay on the total turnover 1%. Okay, now so that is what the point. So I repeat, sir, when you are going for composition scheme, what is the benefit? Number one, you need not pay tax at normal rates. Number two, one thing we should remember, we cannot take ITC. We cannot take ITC and we cannot collect GST from the customer. So then this is not beneficial. If you feel like this is not beneficial for you, don't go with the composition scheme because this is optional, that is not mandatory. Nobody is forcing you. So those are the points. Okay. And I also taught you one thumb rule. Okay, fine, sir. That interest income you please ignore. Next, aggregate turnover meaning. Aggregate turnover meaning I told you, sir, aggregate turnover, taxable supplies, exempt supplies, exports, interstate supplies of persons having same PAN, all these things you please add it, sir. All these things you please add it, sir. So all these things, like as I was telling, taxable, exempt, exports and interstate supplies of persons having same PAN, you please add all those things. That means here there can be intrastate, interstate, non-taxable, everything. The exempt supply means here the definition says wholly exempt, nil rated, non-taxable, everything. In simple terms, I'm telling you, whatever the sales you are making, you take it as aggregate turnover. Simple. Only sales, not purchases. So intrastate supplies between distinct persons not considered in aggregate turnover. Number one, clarity. Next, what and all I should not include in turnover. Taxes don't add. That means CGST, SGST, UTGST, IGST, GST compensation says any other tax other than GST, you should add it to the turnover. Okay. Then, and all inward supplies covered under RCM. That means inward supplies covered under RCM, sir. Yes, you are paying GST on them. You need not add them in your turnover because it is not your sale. I told you, aggregate turnover, simple logic is it is your sale, it is not your purchase. Sir, can I add my inward supplies covered under forward charge in my aggregate turnover? Inward supply is your purchase, it will never be your turnover. Clear? So aggregate turnover means only sales, not purchases. Okay, so that way you calculate the aggregate turnover. Okay, sir. Now coming to the point, as I was telling, we have discussed tax rates, composition tax rates. Composition tax rates are 1%, 1% and 5%. But if it is section 10 subsection 2a, it is 6%. We have discussed that also. Next, the important thing, sir, who cannot go for composition scheme? Who cannot opt for composition scheme? Sir, who cannot opt for composition scheme under section 10 subsection 1 means, sir, who is providing service other than restaurant service, and marginal supply of service option is available for you. So other than marginal supply of service, you should be doing only restaurant service, any other service within the limit of marginal supply. If you are doing it more than, for example, I'm selling ACs and some small amount of servicing also I'm doing, no problem if it is within the limit. If it is beyond the limit, I cannot go with 10 subsection 1. Then what should I do? You can go with section 10 subsection 2a. Are you understanding the point? So I'm selling ACs also in equal proportion, sir. I'm servicing them also in equal proportion. For you, section 10.1 is not applicable. Go with 10.2a. Okay. So that is what we are trying to tell. Okay. Next one. What is next one? You should not provide services not liable to GST. Okay. You can supply even non-taxable goods, but you cannot provide services not leviable to GST. That is very important point for you. Please mark it important. Next, you should not be making any interstate. You should not be making any interstate outward supply of goods or service. That means interstate sales is not allowed. Interstate purchase is allowed, but you should not make interstate sales. That is another condition. You should not be supplying services through e-commerce operator attracting TCS. Okay, you can supply goods through e-commerce operator, that is possible. Okay, but if you are under composition scheme, you cannot supply services through e-commerce operator who has to collect tax at source under section 52. Okay, very another important point for you. And also, sir, you should not be a manufacturer, you should not be a manufacturer of certain notified products. What are those? The ice cream, pan masala, tobacco, manufactured tobacco, aerated waters, fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil meats or similar siliceous earths or building bricks, earthing or roofing tiles. You should not be manufacturing and selling them, sir. Trader, yes, fine, he is eligible, but manufacturer is not eligible. So please understand, here we are not targeting this Amul ice creams or any like quality walls ice cream. They are not even eligible because their aggregate turnover itself is exceeding 150 lakhs. Here we are targeting only people we will be seeing, no, near our house there will be some during summer season, etc. The local ice cream vendors will be coming, they'll manufacture and they'll bring. Or we are not talking about Coca-Cola, Pepsi, here aerated waters. We are talking about local goli soda manufacturers and sellers. So for such people who are already completely unorganized sector, for those people we don't want to give any relaxation. So manufacturing and selling them, you are not eligible for composition scheme. If you are buying and selling any these items, then you are happily eligible for composition scheme, you can enjoy the benefit. Okay, next, if you are a casual taxable person or a non-resident taxable person, you cannot go for composition scheme. And sir, I have multiple registrations. I was showing in the example Andhra, Tamil Nadu, Karnataka, all that. Sir, when you are calculating aggregate turnover, you will calculate the aggregate turnover on pan-India basis, correct? So here when you have multiple registrations, whether they are eligible or not for composition scheme. See here, guys, in the soft copy I have given various examples. Please go through the examples clearly, no issues at all. Now, see, for example, when we are going with this particular example, sir, I have a company where Telangana I am doing 58 lakhs, Karnataka I am doing 76 lakhs, Andhra Pradesh I am doing 10 lakhs turnover. In that case, whether I am eligible for composition scheme or not, we will see aggregate turnover. That means all the states, whatever the turnover is there, that together we will take and see whether it is exceeding 150 lakhs or not. Here, if it is not exceeding 150 lakhs, then all the branches having all the multiple registrations, they are eligible for composition scheme. They are eligible for composition scheme. So what they should do, every branch should go for composition scheme if they want, or every branch should follow normal scheme. It is not like here in Telangana I will go for composition scheme, in Andhra I will go for normal scheme, or in Karnataka I will go for composition scheme. Like that you cannot do. Either all branches go for composition scheme or all the branches go for normal scheme. That is very important for you. And one more interesting catch here is, please understand that if at all you have any one branch in a special category state and one outside special category state, then the threshold limit will fall down from 150 lakhs to 75 lakhs. For example, here if I have branch not in Andhra Pradesh but in Manipur, then the aggregate turnover, the threshold limit is not 150 lakhs, for everybody it is 75 lakhs. So please remember that. So those questions, answers, everything has been given here, you can just go through. Okay, I have given very good number of examples. Please go through all the examples. Let us focus in this video only on the conceptual clarity. Okay, so as I told you, sir, all registered persons with the same PAN number must opt for composition scheme, or all should follow normal scheme. It is not like one fellow is going composition, one fellow is going for normal scheme. And one more important thing is, if one branch doesn't want to opt for composition scheme or wants to go for normal scheme, or one branch contravenes the provisions under composition scheme, then all the remaining branches will become ineligible for composition scheme. That is what I have told you. Marginal supply of services, I told you, sir, under section 10 subsection 1, if you are opting for composition scheme, you can still provide some services other than restaurant services, other than interest income. You can still provide some services, extra services. 10% of the turnover in the state, not aggregate turnover. Always remember, aggregate turnover is different, turnover is different. So aggregate turnover we are not talking here, sir. For marginal supply of services, 10% of the turnover in that state, okay, or 5 lakhs, whichever is higher, you can provide. So that marginal supply, along with example also I have given here, you can just go through that. And next, there are some procedural things which you can just take care of it. And here one another point I just wanted to share with you is, as I was telling, sir, if you are going for composition scheme, once your entire turnover, aggregate turnover, exceeds the threshold limit of 150 lakh or 75 lakhs as the case may be, or 50 lakhs, once that aggregate turnover in the current financial year, that means composition scheme benefit is not lifelong. Sir, when your aggregate turnover in the preceding financial year does not exceed the specified limit, current financial year you can go for composition scheme. When you are going with composition scheme in the current financial year, please understand, you can enjoy that till the aggregate turnover touching the threshold limit. That means till my aggregate turnover in the current financial year touches 150 lakhs, I can enjoy composition scheme. Preceding financial year not exceeding 150 lakhs, current financial year up to 150 lakhs, I can enjoy composition scheme. Once the aggregate turnover touches the 150 lakhs threshold limit, now I should come out of composition scheme. I should start paying tax at normal rates. Now I can collect tax from the customer and I can avail ITC on the inward supplies also. Just like a normal taxpayer, sir, everything will be there. Sir, I will be coming out of composition scheme and I should pay tax at normal scheme. Clear? When my aggregate turnover in the current financial year exceeds the threshold limit. Here one more interesting thing is, sir, one more interesting thing is, see, let me show in this example. Okay. Or you just go through the examples. I will just teach you the concept here. See now, sir, what is happening now? Normally when we talk about aggregate turnover, sir, generally understand whenever we talk about aggregate turnover, we will take on pan India basis whatever the sales we have made from 1st April, let us assume 2025, till 31st March 2026. Whatever you do, sir, whatever the sales you have done on pan India basis, that will be treated as your aggregate turnover. Sir, in pan India basis, let us assume certain period, for example, for 2 months, you are not registered, and balance 10 months you are registered. Then, sir, no matter whether you are unregistered for some period or not, all these things, that means from 1st April whether you are registered or not, that we will see. We will not see. Sir, we will just see what and all sales you made from 1st April till 31st March. That's all. That fully will be taken as aggregate turnover. During that period, how long you have been taxable person, how long you have been non-taxable person, whether you are registered or not, we will see aggregate turnover. Means we will see from 1st April to 31st March whatever we have done. Sir, whatever the turnover you have done as a not registered person will be added to what? Will be added to aggregate turnover. Whether you will pay tax on that, whether you should pay tax on that, but no tax payable. Am I clear? So I repeat, aggregate turnover means from 1st April to 31st March, whatever you do, that will be the aggregate turnover. And during that period, during that financial year, you may be unregistered also initially for 2-3 months. During that period, whatever turnover you have done also, that will be added to the aggregate turnover, but no tax is needed to be paid. Okay, on that we have some questions also, examples also. Please make sure you are going through that. I have given good number of questions and examples here for you to solve, so please go through that. So with this, we have completed composition scheme, the provisions point, and obviously there are certain procedural things, sir. Composition scheme, every year you have to keep on selecting whether you want it or you don't want it. If you want to opt for composition scheme, if you are eligible, if you want to opt it, electronically intimate to the proper officer. Simple. While first time when you are applying for registration, sir, every time when you are applying for registration first time, see, you are applying for registration now this year, means what does it mean? Preceding financial year your aggregate turnover is not exceeding the threshold limits, or you don't have business, etc. So preceding financial year your aggregate turnover will be definitely less than or equal to 150 lakhs. That is why you are applying for composition scheme. So every time when you are applying for registration, in the registration application itself there will be one point: do you want to opt for composition scheme? If you are eligible and if you want to opt, and you can opt there itself. So first year like that you can decide. From next subsequent year, what you have to do, before the commencement of the financial year, you check whether you are eligible for composition scheme or not, and intimate it to the proper officer electronically only. Nothing to worry. You need not call him or go and meet him and say, sir, I want composition scheme. All these things not required. So intimate him electronically so that you will get composition scheme in the subsequent years. So that is what the concept. So with this, we are done with composition scheme. So this video is helpful for both CA Inter Final and CS CMA, all the levels, whoever is reading composition scheme under GST. The relevant material is uploaded in the Telegram channels. The Telegram channel link is given in the description below. So please do share this video with your friends. See you all in another video. This is your Mr. GST signing off. Jai Hind. Hello CA Final students, this is your Mr. GST CA Vishnuvardhan. So in this video, we are going to quickly revise place of supply chapter, and we are going to revise section 7, 8, 9, 10, 11, 12, 13 of IGST Act 2017 in this video quickly. So let us quickly move into the lecture. So before going into this chapter, we should know the basic meanings of export and import of goods and services. If you understand properly, sir, export or import with respect to goods, sir, it is dealt under customs law. Services, exports and imports, they are dealt under GST law. So export and import of goods, if you see, when we can call it as export, when we can call it as import. So export means technically it should be like taking the goods physically to a place outside India, then only we call it as export. And import means obviously bringing the goods into India, just like whatever the customs laws are saying, the same thing we are following here. So that is what the meaning of export and import of goods. Export means taking the goods physically out of India, or imports means bringing the goods into India. So that is what we call as export and import. Okay, so fine. Now what about services? Services, if you see, export and import, export service definition, if you see, important one, sir, there are 5 conditions here. What are the 5 conditions to call the service, the transaction, as export of service? Number 1, supplier is in India. Number 2, recipient is outside India. Number 3, place of supply should be outside India. Next, the payment, fourth one, is like payment should be received in convertible foreign exchange, and wherever permitted it can be received in Indian rupees also. Fifth one, very important point, supplier and recipient should not be merely establishments of the distinct persons who are located inside India and outside India. For example, Infosys Bengaluru, Infosys New York. Sir, they are belonging to Infosys company only. Infosys branch is there in New York. So whether we can call them as like Infosys Bengaluru and sending something to services, giving some services to Infosys New York, can we say that it is export of service? Absolutely no, absolutely no. So please understand, it should not be a transaction merely between the distinct persons, Suppose, the important thing is, suppose Infosys in New York has been registered separately and has been formed as a separate company as per the laws applicable in US. Then Infosys Bengaluru is providing services to a different person altogether in Infosys New York. They cannot be called as distinct persons. Then it will be called as export. A very important point. Okay. Now coming to the next one, import. Import means what? Obviously supplier is outside India, recipient is located inside India, and place of supply is also falling in India. And here the interesting thing is, supplier and recipient can be distinct persons. Okay, for calling import of service, supplier and recipient can be distinct persons, but for export only, sir, we cannot call it as an export of service if it is transaction happening between merely distinct persons. Okay, so that is the interesting point which we have to know before going into the discussion. So section 7 and 8 are talking about interstate supply and interstate supply. Simple thing, sir, what is interstate supply? Interstate supply means, sir, first of all, for place of supply, 2 things are important. One is location of supplier of service and place of supply. Sir, if these 2, location of supplier of service and place of supply, are falling in 2 different states or 2 different union territories, or 1 different state and 1 different union territory, then we call it as interstate supply. Simple. Sir, when we call it as interstate supply, location of supplier and place of supply are falling in 2 different states, Karnataka, Tamil Nadu, or 2 different union territories, or 1 different state and 1 different union territory, then we will call it as interstate supply. And imports, sir, of course, imports are called as interstate supplies. Other cases, we can call it as interstate supply, where supplier is located in India and place of supply is outside India. That means nothing but exports. Supplies made to or by SEZ unit or developer, this is important one. Remember always, any supply made by an SEZ unit or to an SEZ unit, made by an SEZ developer or to SEZ developer, is interstate supply. That means, sir, even though there are 2 units located in same SEZ next to door, they are making some supplies between them. That is also called as interstate supply. Sir, one unit is in DTA, sir, the other unit is in special, both are in Chennai. Let us assume, for example, there is a company in Tamil Nadu. Sir, a company in Tamil Nadu in Chennai outside DTA providing services to another company in Tamil Nadu in Chennai, same city, but which is in SEZ. Sir, then the supply happening between them is interstate supply. Leave about that. What I am trying to tell is, in the same SEZ, there are 2 different companies located next to door. One fellow is providing supply to another fellow. still we call it as interstate supply. Clear? So supply made to SEZ unit or developer or made by SEZ unit or developer, we call it as interstate supply. Okay, that is another point. Next, suppose nowhere in the law if you are able to classify it as intrastate supply, then classify it as interstate supply. So these are what the meanings of interstate supply. In this, the important thing is that supply to SEZ, all that we have seen. Okay, so hope you are clear with section 7, interstate supply. Next, section 8 is all about intrastate supply. What section 8 is talking about? Na intrastate supply. First of all, please understand, you ignore about the page numbers etc here, because concepts whatever common for the inter material will be different, final material will be different, so concepts are common, so I am recording it in a common way, so ignore about the page numbers. Concept and content will be same in your materials. Okay, don't worry. Now, so coming to the point, what is the meaning of intrastate supply? Intrastate supply is nothing but whatever is not interstate supply, that means location of supplier and place of supply is falling in the same state or same union territory, then we call it as intrastate supply. What and all cannot be called as intrastate supply, sir? As I already told you, what and all cannot be called as intrastate supply. Supply is made to SEZ or SEZ units or developers, no. Import of goods, no. And supply of goods made to a foreign tourist referred in section 15. In these cases, please understand, even the location of supplier and place of supply falling in the same state, still we call it as interstate supply. One second. So in these cases, even though these people are located in the same state, the location of supplier and place of supplier falling in the same state, still we call it as interstate supply. Sorry, there was some technical issue. Okay, so hope it is clear. So generally, intrastate supply means location of supplier and place of supply falling in the same state or same union territory. But even though the location of supplier and place of supply are falling in the same state, if it is made to SEZ unit or developer, it is interstate supply. If it is import of goods till they cross the customs frontiers, it is interstate supply. Then supply of goods made to a tourist referred to in section 15, interstate supply. So these cannot be called, it can never be called as interstate supply. Simple. Next, as I told you already, mere establishments of the same person. As I told you in the meaning of export and import, sir, mere establishments of same person, if they are interacting, we cannot call them as export. Okay, so that point we have already discussed. The explanation related to only CA final, so already discussed. Explanation relevant only for CA final. Okay, already discussed. Next, supply in territorial waters. See, first of all, we have understood what is section 7 and 8. Section 7 and 8 is what is intrastate supply, what is interstate supply. So we have understood location of supplier and place of supply falling in the same state or union territory, then we call it as intrastate supply, otherwise we call it as interstate supply. In certain cases, there are specific transactions which we call as interstate supply, that also we have seen. Okay, fine. Now coming to section 9. What section 9 says? Section 9 says simple one, sir. When the location of supplier or place of supply is, suppose if it is falling in territorial waters, for example, you go to Goa to just for this casinos will be there in the ships will be placed in the territorial waters. Location of supplier and place of supply is falling in territorial waters, then which state or union territory we should take? So the state or union territory which is located to the nearest point of that appropriate baseline we will consider. So suppose here the location of supplier is falling or place of supply is falling, so we will take the state or union territory which is closest to this appropriate baselines or closest to point. Okay, so that way section 9, simple one, let us not worry about that. Now let us move on to section 10. Sir, what is section 10? Section 10, see, first of all, we have seen section 7, 8, 9, correct? Section 7, 8, 9 talking about what is interstate supply, all that. Here, to call it as interstate supply or interstate supply, first of all, we should be clear with what is the location of supplier and what is place of supply. Location of supplier, okay sir, fine, I will understand. But what is the meaning of place of supply? Here, please understand, place of supply chapter itself is like, it is a mathematics formula. Already they have derived the formula. You should just remember the formula now. Let us not worry about the derivation. Okay. Now, so in section 10, 11, 12, 13. I repeat, section 10, 11, 12, 13. In section 10, 11, 12, 13, the IGST Act clearly mentioned what is place of supply in different occasions. 10 and 11 talks about goods, 12 and 13 talks about services. Section 10 is purely for goods other than export and imports, 11 and 12 exclusively for imports and exports, 12 services where both supplier and recipient are located in India, and 13 where any one fellow supplier or recipient are located outside India, then 13 is applicable. Section 10, 11, 12, 13, all the 4 sections are there in CA final. So in CA Inter, you have only section 10 and section 12 in the syllabus. 11 and 13 is there in CA final. So I repeat, in CA Inter there are only 2 sections, section 10 and 12. Section in CA final, all the 4 sections 10, 11, 12, 13 are there. Sir, place of supply, 4 sections are dealing with this. Section 10, place of supply for goods other than exports and imports, a small section. Section 11 also, place of supply for goods, imports and exports, small section again. 12 and 13 are little bit lengthy sections, that's all. Okay, so section 12 is place of supply for services where both the supplier and recipient are located in India. 13 is where recipient or supplier, any one fellow, not both. If both are located outside India, why will we study about them in GST? Let us not worry about them. So section 13 talks about any one person, either the supplier or recipient is located outside India. Okay, so let us move on to section 10 first. So section 10 talks about place of supply with respect to goods. I'll explain this to you in a very simple way. First of all, see, understand. You have the notes properly and examples all that properly. Sir, section 10, if you see, place of supply for goods. Place of supply for goods. The place of supply for goods here, first of all, what it will say now? Sir, there is clause A, clause C, and clause CA. Now, clause A says when you are selling the goods, whether movement in goods involved or not. Yes, sir, involved. If movement is there, then what is the destination of the goods? That will be treated as place of supply. No, sir, movement is not involved. For example, you are going to a mobile showroom and buying the mobile. Is the movement of goods involved? Moving the mobile from one place to another place? No. So then what is the place of supply? Location of goods at the time of delivery. Okay, that will be the place of supply. Movement is involved, I repeat, movement is involved. At the movement is involved, then whatever is the destination, that will be the place of supply. Movement is not involved now, where the goods are handed over to the customer, where the goods are located at the time of supply, that will be the place of supply. Okay, so for example, sir, I am selling raw material to you. I am in Tirupati, you are in Chennai. I am sending 10,000 kg raw material to you from Tirupati to Chennai. Movement of goods is involved from Tirupati to Chennai. So what is the place of supply? Chennai will be the place of supply because that is the destination. Or imagine you are going to a mobile showroom buying a mobile, and in that case, whether they are moving mobile from one place to another place, no, movement is not involved. Don't say, sir, they are moving it from the almara or the shelf. No, that is not that way. So movement is not involved. In that case, sir, where these goods are handed over to you, that will be the place of supply. Chennai, you are going to a mobile showroom buying the mobile. Chennai will be the place of supply. Okay, so that is the case. Movement involved, not involved. Now, here the interesting thing is, I'll tell you. Let us see. Clause B is the next one. Clause B is all about bill to ship to model. Sir, bill to ship to model cases. In bill to ship to model cases, what happens is billing will be done to one person, shipping will be done to another person. Billing will be done to one person, shipping will be done to another person. In such cases, sir, what will be the place of supply? The place of supply is who gave you the direction. For example, sir, Vishnu is in Chennai. Vamsi is in Hyderabad. Vishwanath is in Bengaluru. Okay. Vishnu is making a sale to Vamsi. So I am making bill to Vamsi. Hey Vamsi, this is the bill, like that. What Vamsi is doing? Vamsi is making a sale to Vishwanath. So what Vamsi is asking to me now, Vishnu sir, you made a sale to me, no? Don't do shipping to me. Do shipping to Vishwanath. So what I will do now? Billing to Vamsi, shipping to Vishwanath. This is what I will do. Bill to ship to model. In such cases, what is the place of supply? See, Vishnu has to determine place of supply now. Okay. So when Vishnu is determining the place of supply, sir, he will see because of whose direction I am moving the goods to Bengaluru, on the directions of Vamsi. Okay. what is the place of business of the person who has given the direction? That will be the place of supply. That means, please understand, in case of build to ship to model, simple, to whom you are billing, that fellow's place of business will be the place of supply. Simple. Okay, that is what the concept. Now, sir, there is one more new clause they have added, clause CA. In clause CA, what they are saying now, listen carefully, listen carefully. In clause CA, what they are saying now, if the recipient is unregistered, that means the buyer is an unregistered fellow. If the buyer is an unregistered fellow, then in such case, sir, what is the place of supply? What is the place of supply? Whatever the address of the recipient you have recorded in the invoice, recorded in the invoice. But sir, if recipient has not given his address, not given his address, if he has given his address, then that will be the place of supply. If he has not given the address, then location of supplier of that goods itself will be the location of supplier of goods itself will be the place of supply. That means that I am selling something to an unregistered person. So what is the place of supply in that case? I will not check now clause A or clause C, because clause CA has not a non-obstante clause. You need not verify clause A and C, movement is involved or not involved. You should see only, sir, what is the address of that recipient, what is that he is giving, what is that you are recording in the invoice. That address will be the place of supply. Okay, if address is not given, if address is not given, if he is not giving the address, then location of the supplier itself will be the place of supply. And one interesting point here is, sir, when we are asking the address of the recipient, detailed address like his door number, landmark, street name, all these things not required. Just the state name, if he is giving, the recipient is giving, that is also more than sufficient. That you record in the invoice, that is more than sufficient. That will be taken as place of supply. Now, for example, you are going to Goa, you are an unregistered person going to Goa and buying a mobile there. And in the mobile shop, they are asking your address. You are saying, sir, I am from Tamil Nadu. They are recording in the invoice Tamil Nadu. That is more than sufficient. That will be the place of supply. If you say, sir, my address and all I will not give you, you please sell the mobile to me, I will give money and get lost, then in that case, location of supplier, he is in Goa, he will take place of supply as also Goa itself. Am I clear? That is what the concept. And one more interesting clarification here, the new one which has been given is, I am not just going through the material, I am just trying to put it in a simple way. I am presenting it so that you can just have a quick revision. Okay, now ignore my handwriting, please. Sir, there is a new clarification here. New clarification here. What is that clarification? Now, when unregistered person is buying the goods through e-commerce operator, they are giving billing address separately, shipping address separately. In that case, what is the place of supply? Then they said place of supply will be the shipping address. Am I clear? That will be the shipping address. I repeat, when unregistered person is buying something through e-commerce operator, they'll give billing address separately, shipping address separately. Mostly like during Valentine's week, all that stuff. So you might be buying, so billing address is given yours, shipping address maybe somebody else, you only know. So in that case, what will be the place of supply? Place of supply will be the shipping address. Clear? So that is what the point. So that is the clarification. Now, so I repeat, 10(1) CA, when unregistered person is buying something, register like whatever the address is recorded in the invoice, that will be the place of supply. If the recipient is giving state name, that is also sufficient. If the recipient doesn't give anything, then the supplier location itself will be the place of supply. And if at all unregistered person is buying through e-commerce operator, billing address and shipping address are given separately, then shipping address itself will be taken as place of supply. So this is clause CA. Now finally, clause D and E. D. What is clause D? Sir, I am buying some goods, sir, and those goods needs some installation, sir, some assembly, sir. Then such type of goods if I am buying, what is the place of supply? Place of supply, for example, you are buying an AC. Sir, what is the place of supply? Where the AC is installed. Okay, so place of supply is where the goods are installed or assembled. Okay, that will be the place of supply. Simple provision. Next, the last case in section 10 subsection 1 is clause E. What is this clause E? Suppose you are traveling from Chennai to Bangalore in Vande Bharat train. Somewhere you are purchasing some Haldiram chips or something, moong dal, etc. in the train. Or you are traveling from SpiceJet Airlines from Hyderabad to Delhi. Sir, you are buying something like fried cashews or kajus, whatever it is they are selling, salted or roasted peanuts, all that they are selling. Then in such case, what is the place of supply for that? Sir, when the goods are supplied on board of a conveyance. Then what is the place of supply for that? Sir, the place of supply for that is what? The place of supply is where these goods are taken on board, not where you are boarded, where the goods are taken on board. You are traveling from Hyderabad to Delhi, but these goods, whatever you are buying during the flight journey, they are taken on board in Bengaluru. Imagine, then the place of supply will be Bengaluru for all these things. Okay, so that is what section 10 all about. So what is section 10 all about here? Sir, there are 6 cases: clause A, B, C, CA, D and E. Movement involved, movement not involved, sale to unregistered person, bill to ship to model, goods where needs installation and assembly, and finally goods which are supplied on board of a conveyance. Clear? So those are the things. So we have discussed place of supply for all the occasions. For you, the proper notes and the examples for all these things have been given here. You can happily go through this. So just to show all the differences, etc., for quick revision purpose, I have used the flow chart. Okay, section 10 is applicable for supply of all goods other than exports and imports. Hope it is clear. So the next one is section 11. You know, the very easy one. Section 11, import and export of goods. What is the place of supply? So if it is import of goods, the location of the importer will be the place of supply. If it is export of the goods, where the goods are destined to, the destination of the goods will be taken as place of supply. Sir, what if both the location and supplier and the recipient both are outside India? See, we have already discussed in schedule 3 about high sea sales or sale of warehouse goods, merchant trading, all that stuff. So technically GST itself will not come into picture. Let us not worry about that. Okay, so section 11 is only when supplier or recipient, anyone, that is export and import of goods. So what is the place of supply? Import, location of importer; export, where the goods are destined to. Okay, so that is what section 11 all about. Now let us move on to section 12. Section 12 is nothing but place of supply for services, where location of supplier and location of recipient both are in India. Okay, section 12. In section 12, if you see, the interesting part is, in section 12 there are 14 subsections, but subsection 1 says go and refer the following subsections to identify place of supply. Subsection 2 says from 3 to 14, if it is not applicable for you, come to me, I will tell you what is your place of supply. That means subsection 2 is general rule. From subsection 3, sir, it is specific rules. So that means, what is the situation, what is the place of supply, what is the situation, what is the place of supply. So you have to remember the situation, and for that situation, what is the place of supply. Here your memory has to be like little bit more careful. Here you are with respect to memorizing the things. There is no other option. So coming to first subsection, section 12 subsection 2. So as I told, it is a general rule. It is applicable when 3 to 14 is not applicable. Okay, subsection 2 says, sir, what is the place of supply? Subsection 2 says place of supply is, if it is a B2B supply, then the location of that recipient where he is registered, that will be the place of supply. If it is a B2C supply, then if the address of the recipient is available, then the address of the recipient. If address of the available is not available, then supplier address. So I repeat, section 12 subsection 2 general rule is all about that if the recipient is registered, his address will be the place of supply where he is registered. If he is unregistered, then if you have his address, then take his address as place of supply. If you don't have his address, then your address will be the place of supply. Clear? I repeat, subsection 2 comes into picture when all other subsections are not applicable. Next, there are examples which you can go through. Now, as I told, subsection 3 to 14, we know this is the scenario, this is the place of supply. So what is the scenario? Sir, subsection 3. Subsection 3 deals with anything you do, anything which is directly related to immovable property. Anything which is related to immovable property. So, sir, services relating to immovable property, lodging, accommodation in a hotel or a boat or a vessel, or accommodation in any immovable property for social, business or religious or cultural functions, and any incidental or ancillary things related to above. So first of all, sir, anything which is related to immovable property, lodging and boarding. Here one interesting thing is lodging and boarding not only in the hotels, guest house, etc., but also houseboat and vessel. Even though it is movable, it is covered here. Next, for conducting the functions, we are renting out the property. Okay, and finally anything incidental for all these above activities. For these cases, the place of supply will be the location of immovable property. The location of immovable property. For example, you are an architect, you are designing the hotel plan. Then the place of supply will be where the hotel is going to be constructed. So let us assume you are a real estate agent giving advisory services for selling or buying the land. Sir, what is the place of supply? Where the immobile property is located. Or you are going to a hotel, booking the accommodation. What is the place of supply? Where the hotel is located. So like this, with respect to these things, the location of the immobile property itself will be the place of supply. And if that immobile property is located outside India, if the immobile property is located outside India, then the place of supply will be the location of the recipient, the location of the recipient. Hope it is clear for you. I repeat, section 12 subsection 3 comes into picture with respect to immobile properties, all that stuff. But in such cases where the immobile property is located or intended to be located will be the place of supply. And if the immobile property is located outside India, then the place of supply will be the location of the recipient. Okay, now the interesting part is, as I told you, the examples can be the architects, interior decorators, surveyors, engineers, or other related experts like real estate agents, etc., etc. So for these things, sir, place of supply will be the location of immobile property. Now the interesting thing is, sir, what if this immobile property is going to be located in more than one state? That means, for example, I'm an architect. Taj hotels are coming and asking and entering into a contract with me. Vishnu sir will pay you 10 crores. You design a hotel plan for us. For the hotel we want to construct in Lakshadweep also, the hotel we want to construct in Delhi also. In the single contract, I am going to provide service with respect to two immobile properties which are going to be located in two different states. Then place of supply will be that if the immobile property is located in more than one state, each state will be treated as place of supply. Each state will be treated as place of supply. So for me, Lakshadweep is also place of supply, Delhi is also place of supply in the example I gave. Sir, how do you proportionately allocate the amount here? See, that is there in the contract. For Lakshadweep property, I'll give you 3 crores. For Delhi property, I'll give you 7 crores. Like that, it is given in the contract. Then you allocate the funds in the same way. 3 crores place of supply will be Lakshadweep, and for 7 crores place of supply will be Delhi. But sir, if there is nothing mentioned in the agreement like that, then what should I do? For unprofessional people like you only, I made the rules. That means the law says if the agreement is there, based on agreement you do the allocation. But if the agreement is not there, please proceed as per the rules. Please proceed as per the rules. Rule 4 says, if it is, that means immobile property located in more than one state. Please understand, immobile property located in more than one state, each state will become place of supply. The only problem here is how do you allocate the fund, and for how much value place of supply will be Tamil Nadu, for how much value place of supply will be Karnataka, for how much value place of supply will be Andhra Pradesh, like that. On how much value place of supply should be applied, because on that value, if you identify this is place of supply Tamil Nadu, place of supply Karnataka, place of supply Delhi, like that, you will understand whether it is intrastate supply or interstate supply. Then you will charge CGST, SGST, or IGST. Okay, yes, coming back to the point. So nature of service, sir, if that service is provided with respect to accommodation in more than one states. For example, I am going to Delhi and also Agra, staying in hotels in Delhi and Agra belonging to same company. Then what is the place of supply? Delhi is also place of supply. For Agra, Uttar Pradesh is also place of supply. How do I apportion that? Based on agreement, sir. Agreement is not there. Based upon the number of nights you are staying in that property. Sir, if it is related to accommodation in houseboat or a vessel, in such cases, what is the time spent? What is the time spent in each state by that houseboat or vessel based on that ratio? Sir, any other cases? For example, I am a contractor. Government has given me to construct a highway crossing Tamil Nadu and Andhra Pradesh border, 100 kilometers. Road, constructing the road is related to immobile property. So immobile property is a road which is located in Tamil Nadu also, Andhra also. So in such case, what is the place of supply? Tamil Nadu is also place of supply, Andhra is also a place of supply. How do you apportion that? Is it each state is a place of supply, but how do you apportion that? Sir, if it is related to accommodation, number of nights, if it is related to houseboat, time spent in the day, this is any other case. How do I do this? You have to, based on the area of the immobile property. So let us assume 100 kilometers the highway is, 75 kilometers in Tamil Nadu and 25 kilometers in Andhra Pradesh. So based on that proportion, you just allocate that. So the examples also properly given. I repeat, if it is place of supply related to immobile property, location of immobile property will be treated as place of supply. If the immobile property is located in more than one state, each state will be taken as place of supply. Okay, and how do you apportion the value? Sir, based on the agreement, sir. Agreement is not there now. Rule 4 says if it is accommodation, number of nights. If it is houseboat, time spent in the day based on the hours. And if it is any other case, area of the immobile property in each state. Based on that, you have to ascertain the place of supply. Okay, apportion the place of supply. That is 12 subsection 3 for you.
So the next amendment is regarding some clarification with respect to place of supply for online services supplied to unregistered recipients. Here the problem arising is, please understand, mainly for any services which are supplied through online, through e-commerce operators, etc., or OIDR services or online money gaming. Let me see, for example, any services like AstroTalk or online consultancy or OIDR services means you can take Netflix example, or online money gaming you can take Dream 11, Rummy Circle, etc. So for these type of people, you can understand the nature of services they are providing, because they are providing the services using technology to people living across various states, all that stuff. When they are doing their billing, what is happening is, in their bills, in their invoices, they are not recording the name of the state from which the customer is coming from. Because of this, what is happening now, sir, we are not able to determine the place of supply properly, and we are not able to share the revenue to those respective states properly. So now what has happened now? The department has clarified, as per section 12 subsection 2, if you see, any services supplied to an unregistered person, the place of supply shall be, if at all you have his address, the recipient address in your records, that address itself will be the place of supply. If you don't have his address in the records, then your address, that is the supplier address, will be the place of supply. Now what the department has clarified now, if you are providing any services through e-commerce operator, this online or digital services, or any OIDR services like online information data access and retrieval services, okay, and online money gaming services, these people, what you have to do now, it is mandatory for you. What is it mandatory for you now? To take the address of the recipient. Address of the recipient is not door number, all these things required. At least make sure you are taking the name of his state. Okay, so the state name is mandatory. So for you, take the state name of the recipient. That is what? Mandatory. That is mandatory for you. Okay, so this itself will become what? The place of supply, and that you have to file when you are filing your GSTR 1 or 1A, as the case may be. Give the details of place of supply of your recipients and pay the taxes accordingly. So I repeat, place of supply will be the name of the state recorded in the invoice. For the customers who are unregistered under GST, for them, if you are providing online digital services either through e-commerce operator, etc., or you are providing OIDR services where it is purely technology driven, online information data access and retrieval services, or even online money gaming like Dream 11, all these things, if these people are providing services to, and you can understand, these people are providing services across India to various people unregistered under GST. Okay, so now for these services, they are supposed to record the name of the state of the customer in their invoice, so that place of supply we will determine accordingly and will give share to the respective states. So simple, these people record the address of the recipient in the invoice, mandatory, no matter what is the value of supply. That is very, very important, sir. Irrespective of the value, it is like more than 50,000 only I am supposed to record all these things. No, not for you, sir. For you, no matter what is the value, even Netflix 149 rupees subscription per month we are paying, no, on that also the invoice, the name of the state should be recorded. Okay, and that should be filed in GSTR 1 and 1A, as the case may be. Okay, that is what the clarification given by the department here.
So 12 subsection 4 is all about, some performance based services. Please understand 12 subsection 4, they have specifically mentioned certain services here. Restaurant services, catering services, beauty treatment services, personal grooming services, fitness services, and cosmetic and plastic surgery services. These services, if are performed, then the place of supply will be where they are actually performed. So to remember these services, actually see, only these services are covered. It is not something general, it is specific. So to remember these services, I'll give you a code here. Remember that RCB girlfriend needs plastic and cosmetic surgery. RCB girlfriend needs cosmetic and plastic surgery. R means restaurant service, C means catering service, B means beauty treatment, G for personal grooming, F for fitness services, cosmetic and plastic surgery. If you feel it cringe, no problem. If you can remember, otherwise leave it. Okay, so 12 subsection 4, sir, where the services are actually performed, that will be the place of supply. Okay, next 12 subsection 5. 12 subsection is based on a training and performance appraisal services. Sir, training and performance appraisal services, if at all provided. For example, sir, in your auditor office, sir, which is registered under GST, they asked me to come and give training to the staff with respect to the GST audit or GSTR 9C, etc., anything. I'm coming and providing my services of training you or appraising your performance, all that. In such cases, if the recipient is B2B, then the location of such registered person. If the recipient is B2C, then where the services are actually performed. Hope it is clear for you, right? So examples are given, you can go through. Next, 12 subsection 6. 12 subsection 6 and 7, if you see the difference, 12 subsection 6 is entry to an event. That means the ticket, whatever you buy, any event, it can be sporting event, musical event, or any drama, etc., etc. The ticket, whatever you purchase. So admission to an event. Sir, what is the place of supply? Where the event is actually held. But subsection 7 is all about organizing such event. For organizing the event, if I am taking consideration. Now, sir, subsection 7 I have given in a flowchart here. If you see, subsection 7, sir, what is the place of supply for organizing the event? Here the interesting point what we have to see is whether the event is organized in one state or it is being happening in more than one state. Sir, if it is happening in one state, if the recipient is registered, that is B2B case, the place of supply will be location of the recipient where he got registered, no matter whether the event is happening inside India or outside India. Very important thing. So I repeat, if the recipient is registered, I am the event organizer providing services for conducting some event for your company, all that stuff. Then if you are registered, sir, B2B transaction, then that will be, sir, where the event where the recipient is registered, that will be the place of supply. Even though event is held inside India or outside India, it does not matter. But if the recipient is unregistered, then please understand, the place of supply will be where the event is actually held. If the event is held outside India, then the location of recipient will be taken as place of supply. So that is very important here. So please be careful. There might be chances like you are doing mistake. Or if it is like happening, the event is happening in more than one state, sir. If the event is happening in more than one state, sir, if the event is happening in more than one state, if the recipient is registered, same story again, where the location of recipient, that will be the place of supply. If the recipient is unregistered, sir, each state will be what? Treated as one place of supply. How do you apportion the value? You know the same story based upon the agreement. Sir, we are unprofessional fellows, we did not make any agreement. Then the law says follow rule 5. What rule 5 says? Rule 5 says follow gap. That means generally accepted accounting principles. You do somehow or the other. Please make sure you are following some gap. Okay, so that is what the point. So I will summarize again. 12 subsection 7. So this is regarding place of supply for organizing the event. If the event is organized in only one state, if the recipient is registered, then location of such recipient will be the place of supply. If the recipient is unregistered, then the location of event held. If the location is happening outside India, if the recipient is unregistered, in such cases, the location of recipient itself will be taken as place of supply. But if the event organizing is happening, for the event to be happened like in more than one states, each like if the recipient is registered, then again same story, location of recipient. If the recipient is unregistered, then each state where the event is being happening, that will be taken as place of supply, and we will apportion the value as per the agreement. If the agreement is not there, then we will apportion it as per the rule 5. Rule 5 says do whatever you want but follow gap. Okay, so that is what 12 subsection 7. Coming to 12 subsection 8. 12 subsection 8, place of supply for transportation of goods including through mail and courier. Okay, so in that case, if the recipient is registered, where the location of the recipient is there, that will be the place of supply. If the recipient is unregistered, where the goods are handed over for transportation, that will be taken as place of supply. In this case, when the recipient is unregistered, no matter whether the goods are transported within India or outside India, the place of supply will be the location where the goods are handed over to the supplier for transportation. So that is what 12 subsection 8. Clear? Now, 12 subsection 9. So, 12 subsection 9 is with respect to transportation of passengers. Transportation of passengers, what is the place of supply? Transportation of passengers, see, understand, if it is just a transportation of passengers, for example, you are buying a ticket, a flight ticket you are booking, your recipient registered, then the place of supply will be where you are registered, that will be the place of supply. If you are unregistered, where is the embarking point in that journey? Okay, so for example, you are an unregistered person from Chennai traveling from Delhi to Mumbai. So what is the place of supply? Delhi will be the place of supply because your embarking point is Delhi. So the point is, sir, recipient is registered. Now where he is registered, that will be the place of supply. If the recipient is unregistered, then the place of supply will be where the embarking point, that will be the place of supply. Hope it is clear. Next, sir, this is not transportation of passengers straight away, sir. It is regarding issue of the right to passage, where we'll be giving some passes or coupons kind of thing where you can redeem them or use them to travel, sir. And in that cases where the boarding point is not known, in that case, if the boarding point is not known, the law says follow section 12 subsection 2. So what 12 subsection 2 says? If the recipient is registered, where he is registered, that will be the place of supply. If the recipient is unregistered, look, recipient address, if you have his address in your books, if you don't have, your recipient address in books, then supplier address. Simple. So in case of issue of right to passages, all that the passes, etc., where the boarding point is not known, I repeat, we should follow section 12 subsection 2, where the recipient is registered, where he is registered, that will be the place of supply. If the recipient is unregistered, then address of the recipient, if you have the address. If you don't have the address of the recipient, then your address, that is the supplier address, will be taken as place of supply. That is 12 subsection 9. Now coming to the next one, 12 subsection 10. If you see 12 subsection 10, sir, if you are going through 12 subsection 10, it says, what about the services provided in board of a conveyance? Board a conveyance. Suppose you are entering into an aircraft and you are taking a movie on rent. Okay, so they are providing the services on board a conveyance. Just like we have seen goods supplied on board a conveyance, now we are seeing services supplied on board a conveyance. Same logic. Their goods are like where it has loaded into the conveyance. Now here or taken on to board. Okay, here the same way, the first scheduled point of departure of that conveyance will be the place of supply. Any service provided on board a conveyance, I repeat, the place of supply will be the first scheduled point of departure of that conveyance, not your journey. Where your journey is starting, that is not relevant. See, now for example, you are traveling from Delhi to Chennai via Hyderabad. Sorry, the flight is being operated from Delhi to Chennai via Hyderabad. You are boarding in Hyderabad and you are taking some music on demand, or you are taking a movie on demand, taking some services in the aircraft. Further, place of supply will be Delhi, not Hyderabad. That means where you are boarding, that is irrelevant. What is the first scheduled point of departure of that particular conveyance? That will be the place of supply. So that is 12 subsection 10. Okay. Now moving on to 12 subsection 11. So telecom services. If you see telecom services, here we are talking about this fixed lines or antennas, postpaid, prepaid, internet bills, telephone bills, all that stuff. Here if you see, sir, if it is involving fixed lines, please understand, if it is involving fixed lines, then where that fixed lines or equipments are installed, that will be the place of supply. Okay, no sir, it is related to postpaid mobile or internet services. In such cases, what is the place of supply? Sir, if it is a postpaid thing, you know the billing address of the recipient, that will be the place of supply. No sir, it is a prepaid mobile internet DTH services. Then in such case, we will see, are you selling this through some selling agents or distributors, etc.? Yes sir, then place of supply will be the address of such a selling agent or distributor. No sir, I am selling it to directly final subscriber, sir. Then sir, where that payment is received, that will be the place of supply. Okay. Or sir, I am making the sale through any electronic mode or any other cases also. If the recipient address is available in the records, that will be the place of supply. Otherwise, the supplier address will be taken. Okay. So location of recipient in the records of supplier, that will be taken. Otherwise, if it is not available, location of the supplier. Okay, so simple, sir. Through electronic mode or any other payments, if you are taking, sir, in such case, if the address of the recipient is available, then location of the recipient. If the address of the recipient is not available, then location of the supplier will be taken as place of supply. Simple. So I repeat, 12 subsection 11, sir, telecom services, all that stuff, through fixed lines, location where it is installed. Postpaid connections, the billing address. Prepaid connections, if it is through the selling agent or distributor, then the address of the selling agent or distributor. Or if it is directly to final subscriber, sir, where the payment is actually received, that place will be the place of supply. Sir, through electronic mode or any other cases, if you have the address of the recipient, take it as place of supply. If you don't have the address of the recipient, your address, that is supplier address, will be taken as place of supply. That is what 12 subsection 11. Next, I have given the examples also below. You can just go through. Please understand, this is quickly to revise the concept for you. Only when you read some questions, examples, all that on your own, then you will be able to remember them for a longer period. This is purely a revision video. Please remember that. Sir, now if these telecom services are provided in more than one state, where they are installing this leased circuits in more than one state, each state will be like place of supply, where there is a point installed in each state. There will be some starting point, ending point, or some intermediary point from which they will be extracting the benefits of this leased circuit. So in such case, wherever the state there is like starting point, ending point, and intermediate points, all those points you count, are based on how many points are located in each state. In that proportion you distribute. Every state is a place of supply for sure. How do you apportion that value? As per the agreement, sir. Agreement is not there, then you go with rule 6. What rule 6 is? See how many points are located in each state, and in that proportion or in that ratio, please split the amount and calculate place of supply. Each state will fall as place of supply. Next, 12 subsection 12. What 12 subsection 12 says? 12 subsection 12 says, sir, for banking or financial services including stock broking. In such cases, what is the place of supply? Please understand the interesting part here is, if the recipient address is available, okay, then that recipient address will be taken. If the recipient address is not available, then the supplier address will be taken. Simple. I repeat, for financial services, banking services, including stock broking, address of the recipient is available, take that as place of supply. Address of the recipient not available, supplier address only will be taken as place of supply. Okay. Next, 12 subsection 13, insurance services. Subsection 12 and 13, please be careful, not same. That is banking, this is insurance, purely insurance. In case of insurance service, see, banking services, we don't segregate whether the recipient is registered or not. We just see whether we have his address or not. But in subsection 13, we will see whether he is registered or not. If he is registered, recipient is registered, then location of such registered person. No sir, he is unregistered, then location of the recipient, whatever is available in the records. If the address is not available in the records, without the address being available in the records, how will you give insurance? So that will be available. So nothing to worry. That situation will not arise. So I repeat, insurance services, if the recipient is registered, the location of such recipient. If the recipient is not registered, then whatever the address is recorded in the books of the supplier, that is insurance company, that will be the place of supply. Okay. So with this, we are done with 12 subsection 13. And 12 subsection 14. 12 subsection 14 is nothing but advertising services provided to central government, state government, or statutory bodies or local authorities. Mostly they will not ask you, nothing to worry, but just remember, sir, here what is happening is, you go to cinema halls or you see any hoardings, etc., you see everywhere this government advertisements. No, for that, what is the place of supply? That they are doing it in multiple states, so each state is a place of supply. Wherever they are doing, that is a place of supply. Sir, in such case, sir, how do we apportion the value? Apportion the value as per the agreement. But agreement is not there, sir. You know, we are unprofessional fellows. So for that, we have rule 3. Don't worry. Rule 3 says what? Sir, if at all you are advertising through newspapers or publications, you're advertising through newspapers or publications, based upon the amount payable for all the editions in each state. So state wise, for all the editions, how much amount is payable? Based upon the amount payable for all the editions in each state, in that ratio you split. Sir, if it is advertisement through printed material like pamphlets, leaflets, diaries or calendars, t-shirts, etc., again amount payable for each state in the distribution in that ratio. Sir, what about advertising in hoardings? You see, like everywhere central government is advertising their Swachh Bharat mission hoardings, etc., then how much amount is payable? How much amount is payable for the hoardings in each state in that ratio? You are advertising on trains. Sorry. You're advertising on trains. Then based upon the length of the railway track in each state, you should apportion the value. Sir, you are advertising on the back of utility bills, some electricity bills, etc., then number of consumers in each state with respect to that utility bills. Sir, you are advertising on railway tickets, number of railway stations in the state. Okay, you're advertising in radio stations, amount payable to such radio stations in each state, for how much radio stations, how much you will pay. In that ratio you should split. Sir, you are advertising in televisions, internet or SMS. Now, if it is television, go through viewership. If it is internet, through internet subscribers. If it is SMS, telecom subscribers. In that proportion, how many of them are there in that particular state? Sir, in that ratio, you should apportion them. Here, one interesting thing for all these three things, the common point is, sir, understand, if you are going through TV viewership, sir, TV viewership is published by Bark. Internet, try internet subscribers. SMS, telecom subscribers, try again. Sir, how they will do this? Now, see, all the three cases, the information is published on weekly basis. On weekly basis, you are calculating place of supply for any particular transaction falling in this particular period. You should see preceding quarter. For example, something is happening in Jan to March. Sir, between Jan to March, some transaction has happened. You are calculating place of supply for that, and you should see preceding quarter, that is October to December. In December last quarter, whatever the information has been published, that you should take and you should use. Okay, I repeat, viewership data published by Bark in the preceding quarter last week. in that ratio for all the states. For example, I'm advertising in Andhra, Telangana, Tamil Nadu, Karnataka, Kerala. So in those cases, for a particular news channel, for these 5 states, in that news channel, in the preceding quarter last week, what is the viewership for all these 5 states? In that ratio, you will apportion that. Now see, for example, sir, in internet, let me take internet subscribers. Who will publish? Try will publish. Try is saying in Tamil Nadu 1 lakh, Karnataka 1 lakh 50,000, Telangana, Andhra put together. Sometimes 2 or more states they will publish a single figure. They will not give separate figure. For Telangana, Andhra, let us assume they have given same number 3 lakhs. Kerala 50,000. This is the figure. Okay, the internet subscribers. Now what we should do, sir? First of all, where the numbers are published together, first we should split them. So we should split them in what ratio? Sir, we should split them in the ratio of the population. Just for our calculation to be easy, I am splitting them in the ratio of 2:1, assuming the population is that way. Okay, so state wise you segregate them. So 120 lakhs we are spending in the internet to advertise in all these 5 states. So for this 120 lakhs, 5 states will be place of supply. 5 states will be place of supply. Sir, this 5 states, how do I apportion? Apportion that based on the internet subscribers in the state. So internet subscribers data, how I will get? You will get it from Troy. Which week data I should take? Preceding quarter last week data you should take. So preceding quarter last week data we have taken for all the 5 states. But Telangana, Andhra Pradesh, they give consolidated figure. So what we will do, first Telangana and Andhra, we will split them based on what ratio? Population ratio. Based on what ratio? Population ratio. And then we will proceed. So here, for our calculation to be more easy, I have just taken the round figures, all that. So I have taken them. So now we will calculate the ratio like this. So 1 lakh in Tamil Nadu, the internet subscribers, 1 lakh 50 in Karnataka, 2 lakh in Telangana, 1 lakh in AP, and 50,000 in Kerala. So we will get the ratio 1:1.5 is to 2:1 is to 0.5. In this ratio, we will split this 120 lakhs, and for 20 lakhs, place of supply will be Tamil Nadu, 30 lakhs place of supply will be Karnataka, 40 lakhs Telangana, 20 lakhs AP, and 10 lakhs Kerala. For those amounts, the place of supply will be those states. That is how you do even for telecom subscribers or even TV viewership. Only difference is that TV viewership is published by BARC, Broadcast Audience Research Council. Internet subscribers published by Troy. Telecom subscribers published by Troy. Publishing authority is different. Remaining everything, the procedure, everything is same to same, nothing to worry. Okay, so highly very less chances of being tested in your exam, nothing to worry. Okay, so that is what with respect to 12 subsection 14 also. So with this we are done with section 12. So coming to the next section, section number 13. So where we know that place of supply for services where either supplier or the recipient is located outside India. In such cases, what is the place of supply? Just like in 12 subsection 2, 13 subsection 2 also we are having a general rule. So 13 subsection 2 says the place of supply will be, the general rule is nothing but, sir, if you have the recipient address location with you, then the place of supply will be the location of recipient. If you don't have that, then the location of the supplier will be the place of supply. So that is 13 subsection 2, simple one. So 13 subsection 2 is applicable only when other subsections are not applicable, as we have discussed 12 subsection 2, same thing, general rule here. Okay, now so the specified services, the specified cases, very important one, 13 subsection 3. Sir, when 13 subsection 3 is applicable? So 13 subsection 3, if you see, important one, where you are providing services, and these services we can say performance based services also. See, please understand, you are providing services on a goods, and for providing services on such goods, the physical presence of that goods should be there. In such case, what is the place of supply? The place of supply is where nothing but services are actually performed. That will be the place of supply. See, for example, we are importing a machinery. We are importing a machinery from Germany, and for installing that machinery, we need a technical person who is also traveling along with the machinery from Germany. All the way he is coming to India and installing the machinery and leaving. So for the person from Germany to provide services of that installation or something setup of that particular machinery, he needs the physical presence of that good. So now in such case, he is providing services. The supplier is located outside India, recipient is in India. So this is with respect to goods which are to be made physically available for providing the services. In that case, what is the place of supply? Where the services are actually performed, that will be the place of supply. But here there are exceptions. So what is the exception here now? What is the exception now? Sir, if the goods are brought to India temporarily, that means they are imported to India temporarily for doing some repairs, some treatment or any process, and after that that will be exported. See, for example, somebody from abroad sending diamonds to India to cut the diamonds and polish the diamonds in India. So we are getting the diamonds to India, we are importing the diamonds to India for cutting or polishing them. And after that process is over, we are exporting them back. In such cases, what is the place of supply? Na? In that case, it is not where the services are actually performed. Sir, in that case, the location of the recipient, if it is available with the supplier, or if the location of the recipient is not available, then the location of supplier itself will be the place of supply, just like general rule. Okay, so the concept is what, that when the services are to be performed on the goods which needs the physical presence of the goods, the location where the services are actually performed is the place of supply. But if the goods are imported to India temporarily for carrying out some repairs, treatment or some process, and after the treatment process etc is over, then it will be exported back. In such cases, the place of supply is not where the services are actually performed. So the place of supply is location of the recipient, if we know that. If we don't know the location of the recipient, then location of the supplier will be taken as place of supply. So that is the concept. Okay, so fine. Now, sir, there is one more twist in the tail here. That is, if at all we are providing any service on the goods from a remote location, then the place of supply will be the location of the goods where they are situated at the time of providing this service. See, for example, we are a software company in India. Some mobile manufacturing company in US is asking for us to provide some installing a software. Let us assume there is some software we have designed regarding any women's security etc etc. We have made an in-house software which they are asking to install in their mobiles. So for that purpose, we need not travel all the way to USA, or we need not bring the mobiles to India. Sir, we are operating through remote location and we are installing the software from Bangalore itself, from India itself, in the mobiles situated in USA. So in that case, what is the place of supply? The place of supply is where the goods are situated, that is USA. So I repeat, if any service is provided on the goods through from a remote location, then the place of supply will be where the goods are situated at the time of providing such service. Clear? So that is what the point. Clear? So hope that is clear for you. Now, sir, where services are provided and physical presence of the recipient is required, sir. That means we are not providing service on the goods, now we are providing service on the person, because understand, physical presence of the recipient is required. In such cases, what is the place of supply? Sir, where the services are actually performed. For example, this personal grooming services etc. Sir, you are a hairstylist traveling across and going to Singapore to do a haircut to a client. Sir, physical presence of the person is required to provide some services. In such cases, what is the place of supply there? The place of supply is where the services are actually performed. That will be the concept here. So we have seen physical presence of the goods is required and its exception, and then we have seen the physical presence of the recipient is required, and the place of supply is where the services are actually performed. Okay, now what if this physical presence of the goods or recipient is required? We told no. In such cases, sir, what if we are providing these services in a place more than one location, including a location in taxable territory? That means you are providing it outside taxable territory also, inside taxable territory also. Okay, sir, you are providing this in more than one location, and let us assume you are a hairstylist or a makeup artist. Some Hollywood actor needs your services. Okay, so you are going abroad and also providing, the movie shooting is happening somewhere in Hollywood, all this stuff, you are providing the services, and some part of the shooting is also happening in India and you are providing your services in India also. In such cases, sir, what is the place of supply? The place of supply will be location of taxable territory. In such cases, place of supply will be location of taxable territory. Clear? So that is what the point. Here another interesting part is, sir, if this is happening in more than one state or union territory, if this is happening in more than one state or union territory, in such case, as we have seen so many cases in section 12, sir, place of supply will be each state will be taken as place of supply. And you know, sir, when each state is taken as place of supply, how do you apportion the value? Sir, we apportion the value based upon the agreement. Sir, what if agreement is not there? In the absence of agreement, sir, there is rule 7. What rule 7 is saying? Rule 7 is saying, sir, apportion the value if it is on the same goods you are providing the services, equally divide them, equally dividing the value of service with respect to such all the states. Suppose if 1 lakh is the value you are providing in two states, divide that half of 50-50 ratio. But this is on same goods if you are working on. No sir, it is on different goods. If it is on different goods, then consider the ratio of invoice value of such goods with respect to states. So based on value of invoice, in that ratio you split the value. No sir, this is supplied to individuals, then follow gap. Okay, I repeat, sir, if at all you are providing services where physical presence of goods or physical presence of recipient is required, in that case if you are providing it outside taxable territory and also inside taxable territory, place of supply will be inside taxable territory. But inside taxable territory, sir, if you are providing it in more than one state, we have seen the logic, every state will be a place of supply and you will apportion that based on the agreement. But if agreement is not there, here what we are saying now, sir, we are saying, are you providing services on the same goods? Now see, for example, a mechanic who is located in USA, a mechanic who is located in USA is providing services of testing a dredging machine, and the testing service on the machine is carried out in Orissa also, Andhra Pradesh also. Then the place of supply is Orissa also, Andhra Pradesh also. Now please understand, he is providing the testing of the dredging machine in two different locations, but goods is same, location is different. In Orissa also he is testing, in Andhra Pradesh site also, maybe they are having factories in two locations. In two locations also he is testing, but the same goods. In that case, sir, whatever he is charging will be divided equally. On that, Orissa will be like, let us assume he is charging 10 lakh rupees. 5 lakh place of supply will be Orissa, for 5 lakh place of supply will be Andhra Pradesh. No sir, see, for example, if it is on different goods, there is a mechanic who is located in USA providing servicing of two cars belonging to Mr. X. Let us assume Mr. Vishnu that way. One car is manufactured by Jaguar located in Delhi and serviced by its Delhi workshop. The other car is manufacturing like by, let us assume, Audi, and is located in Gurgaon and is serviced in Gurgaon workshop. The value of service is attributable to what? Both Delhi as well as Haryana respectively. How do you split this? Sir, we will split this based on the ratio of the invoice value of the car, okay, to the total value of the service. So let us assume if they are charging for the service 10 lakh rupees, that 10 lakh rupees, how do we split? We will split that. When I purchased Jaguar and when I purchased, let us assume, Audi, I purchased Jaguar for 1 crore and Audi for 1.5 crores. So now this 10 lakhs we will split in 1:1.5 ratio. Clear? So whatever the value they are charging for the service, that we have to split. In what ratio we will split? We will split in the ratio of the invoice value of the cars. Okay, so that way, and for some portion the place of supply will be Delhi, some portion the place of supply will be Haryana. That is what the concept. Hope it is clear for you. Okay. No sir, it is supplied to individuals. It is supplied to individuals. As I told to you, sir, there is a makeup artist, sir, he is traveling all across and providing services to an actor. Let us assume for Mr. Allu Arjun, sir, he is providing the services of doing makeup. Sir, some scenes are done in Mumbai. A makeup artist all the way from Hollywood came and providing services. Some scenes are shot in Goa, some scenes are shot in Andhra Pradesh, all that. So in that case, sir, Mumbai, Goa, Andhra Pradesh, whatever it is, sir, every state is a place of supply. How do you apportion the value? As we have already said, sir, there is no standard formula here they are giving. Follow generally accepted accounting principles and you just sort it out this. So that is what they are trying to tell. Let me just quickly summarize. Sir, 13 subsection 3, what we have understood. Sir, 13 subsection 3, physical presence of goods is needed. Sir, that, physical presence of goods is needed now, where the services are actually performed, that will be the place of supply. If the goods are being physically made available by importing them to India, and after doing some repairs or process, etc., we will export them back, then in such case, sir, place of supply is location of the recipient. If you know that, if you don't know that, location of supplier itself will be the place of supply. Next, if you are providing some services to goods located at a remote location, through remote location, then where the goods are situated at the time of providing that supply, so that will be the place of supply. Next, finally, sir, if the services are provided where physical presence of the recipient is needed, in such case, what is the place of supply? Sir, in such case, the place of supply will be where the services are actually performed, just like again the first point what we have discussed. Now, sir, physical presence of goods, physical presence of recipient, where it is required, and if it is provided in outside taxable territory also, inside taxable territory also, in such cases, what is the place of supply? Taxable territory will be taken as place of supply. No, sir, inside taxable territory itself, we are providing it in more than one state. Each state will be a place of supply and you will apportion the value as per the agreement. If you don't have the agreement, then you will follow Rule 7. What Rule 7 says? Rule 7 says, sir, if it is on same goods, divide that equal proportions. Sir, if it is on different goods, based upon the invoice value, yes, based upon the invoice value, that Jaguar car example we have discussed, based on the invoice value of the goods. And if it is to the recipient, then follow generally accepted accounting principles. That is what the concept we have seen, right? So with this we are done with 13 subsection 3. So next 13 subsection 4. 13 subsection 4 is ditto same like 12 subsection 3, where place of supply is with respect to immovable property. Here what we are seeing, sir, supplier or recipient, any one fellow is outside India, service is in relation to immovable property. What is the place of supply? Place of supply will be where the immovable property is located or intended to be located. Here the interesting part is, sir, if at all the services are to be provided for immovable property located in more than one location, one is in outside taxable territory, the other is inside taxable territory. So outside taxable territory as well as inside taxable territory. In such case, just like we have seen in the previous subsection, the location of taxable territory will be the place of supply. Okay, sir, if it is located in more than one state and we are providing the service, in such case every state is a place of supply. And how do you apportion the value? Based on the agreement. If agreement is not there, then follow Rule 4. Okay, actually you should follow Rule 8. Rule 8 says, Rule 4 is mutatis mutandis applicable. That means equally applicable. So nothing but exact 12 subsection 3 provision, nothing to worry. Okay, same story. So that is what 13 subsection 4, place of supply with respect to immovable property. Next 13 subsection 5. Sir, if you see 13 subsection 5, 13 subsection 5 is with respect to what? Both entry as well as organizing the event. Sir, either admission to or organizing the events, simple, where the event is actually held, that will be the place of supply. I repeat, sir, we are discussing where supplier and recipient, any one of them is located outside India, and if the event is with respect to conducting the event, organizing the event, the service, or we are going for entering into an event. So in such cases, both the cases, what in 12 section 12 we had a separate subsections, subsection 6 and 7 for admission to event and for organizing the event. Here we are having same subsection 13 subsection 5. Okay, and if the services are done at more than one location, including a non-taxable territory, same story, inside taxable territory as well as outside taxable territory. You're asking me to organize your business exhibition both outside India, inside India. So I am an event organizer from abroad, you are from India. Sir, we are doing it in both USA also, India also. What is the place of supply? Place of supply will be India. The location will be the taxable territory. Okay, so that is what. Sir, if it is happening in more than one state, just like what we have seen, Rule 5, we have to follow Rule 9, but Rule 9 says go with Rule 5. Ditto same, guys, nothing to worry, just like what we have seen in section 12. Okay, so that is what the concept. Okay, next 13 subsection 8. So what is 13 subsection 8? So in 13 subsection 8, what we are seeing three things here. Number one, the banking services, financial institution services, or this NBFCs providing to their account holders, for their services. What is the place of supply? The location of supplier of services will be the place of supply. Not only that, intermediary services. Sir, intermediary services also, like what? The place of supply will be location of the supplier. Here location of supplier is the intermediary, the person who is providing intermediary services, connecting two people who are buying and selling, etc., or arranging the transaction, all that stuff. If you are like selling goods from one person to another person, I am arranging the transaction, I am the intermediary, then my location will be treated as place of supply. Location of supplier here means, sir, with respect to intermediary services, location of the intermediary. Please be careful here. Next, sir, the next another point within 13 subsection 8 is renting of conveyances. We can take renting of conveyances including yachts, but not aircrafts, but not vessels. If you are renting any conveyance, it can be anything. Conveyance means any vehicles, all that stuff. Sir, including yachts but excluding aircraft and vessel, and this is also for a period of less than or equal to 1 month, not exceeding 1 month, up to a period of 1 month. So for that period, if you are renting, then also 13 subsection 8 will come into picture. Location of supplier itself will be the place of supply. Here one interesting point is, sir, I am an intermediary providing services, intermediary services. So either here either supplier is providing some goods to another recipient or providing some services to another recipient, and I am connecting both of them, all the stuff. So I am acting as an intermediary, all that. So in such cases, so please understand, here there is one interesting point. There is an exemption with respect to where services are provided by an intermediary when location of both the supplier and recipient of goods, they are dealing with goods, both supplier and recipient of goods is outside the taxable territory, then this intermediary services are exempt under GST. The intermediary services are exempt under GST. Okay, subject to conditions given in the said notifications. Okay, fine. Now, so that is what 13 subsection 8 for you. Hope it is clear. Okay, so there are three things covered here in 13 subsection 8. One is banking services, financial institution services, NBFCs to account holders, then intermediary services, then renting of conveyances, including yacht, but other than aircraft and vessel. In all these cases, place of supply will be the location of the supplier of service. Next, 13 subsection 9. 13 subsection 9 been actually omitted. Earlier there was a place of supply provision separately for transportation of goods, but later on that has got omitted. Now if it is transportation of goods, you should refer general rule itself. 13 subsection 10, sorry, transportation of passengers, further there is a place of supply. The place of supply will be nothing but where the passenger embarks on his conveyance for a continuous journey, where he embarks on a conveyance for his continuous journey. For this I have a small notes for you here. See, so here now the interesting point is, sir, what do you mean by continuous journey? What do you mean by continuous journey? Continuous journey means, see here the definition says where the journey which either a single invoice or more than a single invoice or ticket, whatever it is, that means one ticket or more than one tickets issued at the same time, issued at the same time, either by the single supplier or multiple, it doesn't matter. The important thing is which involves no stopover. That means, sir, you are traveling from one place to another place on a same ticket, on different tickets, maybe same supplier or different suppliers, but issued at the same time, and the journey should not have a stopover. Sir, what do you mean by stopover? Stopover means nothing but where the passenger can disembark for transferring to another conveyance or breaks his journey for a certain period in order to resume it at a later point of time. That means in simple terms, this no stopover means you should not disembark from the conveyance. So you are traveling from Chennai to London via Dubai. Chennai to Dubai they gave one ticket, Dubai to London they gave another ticket. But sir, the aircraft is same. You are not at all disembarking from the aircraft. So the aircraft went from Chennai to Dubai. Those who are traveling to Dubai, they got down, and those who are getting in Dubai, getting into the aircraft, you are just sitting in the aircraft. So it was like a halt for half an hour or 1 hour or 2 hours, but you are in the same aircraft. Now you are just, the aircraft is again taking off to London. So that means this is a continuous journey. Clear? So that is what the point. In such cases, sir, what is the place of supply? Where the passenger is embarking onto the conveyance for the continuous journey. So the place of supply will be Chennai in this example. Okay. So here again, sir, a foreign tourist mystery, another example, if you see, sir, a foreign tourist mystery booked the ticket from New Delhi to Sri Lanka flight from an airline registered in New Delhi for a continuous journey without any stopover. Then what is the place of supply? Place of supply will be New Delhi, of course. Okay, so where the passenger is embarking onto the conveyance, for his continuous journey. Hope it is clear for you. Okay, so that is what the point. Next, so this is 13 subsection 10. What about the next one, 13 subsection 11? Sir, what is 13 subsection 11? 13 subsection 11 is nothing but, sir, we have seen services supplied on board of a conveyance. The services supplied on board of a conveyance, what is the place of supply? Place of supply will be the first scheduled point of departure of that conveyance for that journey. Just like we have seen in section 12 also the same concept. Here also the same ditto, same concept. Hope it is clear for you. Okay, that is 13 subsection 11. So the next one is 13 subsection 12, OIDR services. In case of OIDR services, what is the place of supply? The place of supply will be the location of recipient of service. First, before going to the place of supply, sir, what do you mean by OIDR services? Sir, the definition says online information and database access or retrieval services means services whose delivery is mediated through information technology over the internet or any electronic platform, and it becomes impossible to deliver that without information technology. So simple, this mediated through information technology, impossible without information technology, then this is called OIDR service. Okay, now we have some examples like advertising, all the stuff in the definition itself. So all this stuff, but here the interesting part is, sir, it is not advertising on the internet, providing cloud services, all that fine, they are OIDR services, ebooks, movie, music, providing data through computer network, digital content like Netflix, Amazon Prime, etc., etc., all these things. The interesting part, The important part is and includes online gaming other than online money gaming. Online gaming is also OIDR service, but other than online money gaming. Sir, what do you mean by online money gaming? Online money gaming means online gaming where players will pay or deposit some money or money's worth, including virtual digital assets, maybe cryptocurrency, bitcoins, etc. etc. Simple. You are doing gambling in the games. Okay, let us assume Rummy Circle or Dream 11, etc. etc. Sir, such type of online money gaming is not OIDR service. But online gaming like PUBG, Ludo, all that. That means the interesting thing is if you are playing PUBG or Ludo, that is OIDR service, supply of service. But if you are going through Dream 11 or Rummy Circle, that is online money gaming, it is not OIDR service, it is specified actionable claims. It will be treated as supply of goods and will be taxed accordingly. Okay, so that is what the concept. Now, yes, sir, we have understood what is OIDR service. In OIDR services, sir, recipient location will be the place of supply. Here, in OIDR services, because this is driven by information technology, it becomes difficult to track the recipient address, recipient location. So what we are saying here now, sir, in the 7 conditions given here below, any 2 conditions if you match, then it will be treated as recipient is located in India. The place of supply will become India. Okay, sir, what are the 7 conditions? 7 conditions are, see, either his address given in the internet should be Indian address, or the credit card, debit card, or any other card which he is using for making payments is an Indian card, or his billing address again is Indian address, or the computer or any other device which he has used should be with Indian IP address, or the recipient, whatever the bank account is using for payment, should be a Indian bank account, or the country code through which he is operating all the stuff, the subscriber identity module code, etc. etc. The country code of the subscriber should be Indian code, or the recipient is receiving the services through Indian fixed landline. Out of these 7 conditions, if any 2 conditions are satisfied, then it will be treated as the recipient is located in India and the place of supply will become India. So that is what 13 subsection 12 with respect to place of supply of OIDR services. So the next one is with respect to section 13 subsection 13, the notified services. Here that there are some research and development services related to pharma industry has been notified here, and for these services like integrated discovery and development and integrated development, or evaluation of the efficacy of new chemical or biological entities in animal bodies or diseases, evaluation of biological activity of novel chemical or biological entities in vitro assays. So like this, drug metabolism, safety assessment or toxicology, stability studies, all these things are related to pharma sector. For these things, what is the place of supply now? Sir, if the supplier is in taxable territory, recipient is located in non-taxable territory, the place of supply will be taken as location of the recipient himself, provided these services are provided as per the contract between supplier and recipient, and this is satisfying all the other conditions with respect to definition of export of service. Then the place of supply will be the location of the recipient. I repeat, section 13 subsection 13, simple, notified services related to pharma sector. For these services, the place of supply will be nothing but the location of the recipient itself, provided the supplier is in India and the recipient is in non-taxable territory. Okay, provided they are also satisfying all the conditions with respect to export of services. So with respect to a clarification here regarding advertising sector, where the hoardings are being used for advertisement, please understand, generally the companies wants to advertise their products in the hoardings, etc. etc. They will approach the advertising agencies. So advertising agencies will provide services of advertising to the companies. So there is no doubt with respect to here. So this is advertising service, place of supply shall be determined as per section 12 subsection 2 only. Now the point is that these advertising agencies will approach the hoarding owners, and now the hoarding owners are providing services to advertising agencies. In such cases, how the place of supply will be determined? See, there can be 2 possibilities. I am the hoarding owner, your advertising agency coming to me and asking, Vishnu sir, we want this hoarding, we want to advertise various products. I told, you don't touch the hoarding, you tell me what should be advertised, what banner should be changed, all that stuff, I will take care. I will provide you complete service, you pay me 1 lakh. Okay, like that I'm asking. So here hoarding will be completely under my control. You want me to advertise MRF tire, I will advertise MRF tire. You want me to advertise Santur soap, you tell me, I will advertise Santur soap. Like that, I will take care of that. That means the hoarding owner, we are calling as vendor here, that is providing what? Advertising services to advertising agency. So how do you determine place of supply? As per section 12 subsection 2. Okay, general rule. But if I am the hoarding owner, I am telling you, you pay me 1 lakh, you do whatever you want with that hoarding for the entire month. So complete hoarding will be in your control. Complete hoarding will be under the control of advertising agency. So what the vendor, the hoarding owner is doing here, the hoarding owner is renting the hoarding, which is nothing but an immovable property. So the place of supply will be determined as per section 12 subsection 3. So that is what the concept, that is what the clarification here with respect to the place of supply in case of advertising sector. Okay, especially with respect to hoardings. So the next clarification is with respect to the intermediary services. We have seen intermediary services, the place of supply is as per section 13 subsection 8. Here, when this 13 subsection 8 can be invoked actually, please understand, here for intermediary services, definitely there should be 3 parties where 2 parties are entering into the main supply, one party is acting as an intermediary. So 2 parties are transacting actually the main supply of goods or services, and one fellow is an intermediary who is facilitating or arranging the transaction. And please understand, the intermediary will never supply the main supply. Intermediary will just arrange the main activity or main supply. And intermediary is never a subcontractor. That means you got a contract to provide some goods or services and you are subcontracting it to somebody, that person cannot be called as your intermediary. And sir, when intermediary services are provided, either the supplier or the recipient is located outside India, then place of supply shall be determined as per section 13 subsection 8. That is what a simple form of this clarification. The next clarification is with respect to the custodial services provided by banks to the foreign portfolio investors. We have seen in section 13 subsection 8 that the place of supply is determined when the banks are providing services to their accounting holders. You go to place of supply section 13 subsection 8. But sir, here these custodial services are provided by banks to foreign portfolio investors who are not account holders of the banks. So these are not the services provided by banks to the account holders. So in this case, section 13 subsection 8 will not be applicable. Sir, we have to follow for determining place of supply section 13 subsection 2, the general rule. That is the another clarification. So the next one is very important clarification with respect to, see, this is with respect to place of supply of advertising services provided to foreign clients. Sir, what is happening here? See, first of all, before going to the issue, let us understand the situation, what is happening there actually. Sir, imagine there is a foreign company, let us take Netflix. They want to advertise their brand in India. So what they are doing, they are approaching an Indian ad agency and they are giving full responsibility to that ad agency. You design the ad, you decide in which media platforms we should advertise, you decide upon the budget, you decide upon the investments, whatever it is completely your headache. Indian ad agency should make sure the advertisement of Netflix is spreading across India like anything. So Netflix is a foreign client coming to Indian ad agency asking to take up the responsibility of advertising its brand in India. Now what Indian ad agency will do, they will create the ad, all that stuff, and they are publishing all the stuff. So let us assume there are some TV channels who are telecasting this, the media. So here we can say this Netflix is a foreign client. Foreign client. Indian ad agency, you have understood. And TV channels are nothing but media. Okay, so they are advertising it. Now please understand, Indian ad agency, what they will do, they will ask the media channels or media to advertise this ad. For that, media will raise invoice on the directly ad agency. Ad agency also will make the payment for that, no issues. Now what Indian ad agency will do, for their entire contract, for creating the content, for planning the budget, or all these things, identifying the media houses, etc., etc., for all their entire services, for that they will raise invoice to the foreign client, that is Netflix. In this case, Netflix will make directly payment to Indian ad agency. This is the story happening here. The first doubt with respect to this transaction is, sir, the issue is whether these services of advertising agency, Indian advertising agency, ad agency, can be considered as intermediary services. The answer is straight away we can understand no, because intermediary, sorry, the Indian ad agency, the advertising agency here is acting in its independent capacity, doing all the ad designing, content development, etc., etc., sir, investment planning, everything, and finally giving the desired result what Netflix needs. They are not acting as intermediary here. So the advertising company is not acting as an agent but providing services on its own account. So that cannot be called as intermediary. Clear? This is number one clarity. Okay. Another issue. What is the another issue? Sir, the another issue is here for the services provided by the advertising company. Who is the recipient? Is the recipient the representative of the foreign client in India, who like Netflix representative in India with whom this ad agency is regularly coordinating, or the target audience is there no, are there no in India? Are those target audience recipient of this advertising company services? Now please understand, sir, recipient, who is the recipient is the doubt. The recipient definition says clearly refers to a person who is liable to pay consideration for the supply of goods or services. Now for the ad agency services, whatever they are providing, for that who is the person liable to make payment to the ad agency? Netflix is liable to make payment for this. That means here, sir, it is clearly visible, sir, invoice is being raised to Netflix, invoice is raised to foreign client, and they are making payment. So who is the recipient here? The foreign client is nothing but the recipient for the advertising company. So foreign client is responsible for advertising company's payment, not the customers or target audience. So even if the representative is interacting with the company regularly, he cannot be considered as a recipient because the invoice is directly issued to the foreign client. Okay, so that is what another issue. Okay, fine. So we have understood recipient is the foreign client, not the representative of that foreign client in India or targeted audience. They cannot be called as recipients. Right away, foreign client will be called as recipient. That is another clarity. Next, sir, with respect to next one, sir, whether advertising company, whatever the services they are providing, the advertising company to the foreign clients, whether it can be considered as performance based services under section 13 subsection 3, accordingly can we determine place of supply. Please understand 13 subsection 3 will come into picture when, but 13 subsection 3 will come into picture when physical presence of goods is needed or when physical presence of services is needed. Sir, here physical presence of goods is not needed, physical presence of services also not needed. Then how can you call as performance based services? How can you invoke 13 subsection 3 here? Absolutely 13 subsection 3 will not come, sir. It is straight away will go with the general rule 13 subsection 2, place of supply will be determined accordingly. Clear? Not 13 subsection 3, right? That is another issue. Next, the fourth issue is, sir, here what if the advertising company is merely acting as an agent of the foreign client? That means, sir, here directly the contract is between Netflix and the media channels, the TV channels, the media house. Just Indian ad agency is coordinating and facilitating the transaction. Sir, media will directly raise invoice to the foreign client Netflix, and Netflix will directly make payment to the media. In that case, what will happen? Sir, the Indian agency is actually acting as an intermediary there, facilitating the transaction. Yes or no? So obviously, place of supply will be determined as per section 13 subsection 8. Clear? So that is what the issue here. So that is what the clarification with respect to advertising services provided to foreign clients, right? So the next clarification, another important clarification, is with respect to data hosting service providers in India are providing certain services like storage space and technical infrastructure to CCSP, that is cloud computing service providers of foreign countries. So these foreign countries, cloud computing service providers who are providing services to their clients. So these people will be providing to their clients regarding storing the data in clouds, all that stuff. Okay. So for these people, what Indian data hosting service providers will be providing now, sir, the storage space and technical infrastructure. See, for doing all these things, actually these people, I mean the CCSPs, sir, what they will do, sir, for providing their cloud computing services, etc., cloud storage services, etc., to the clients, these people are purely dependent on the data centers operated in India. And the Indian data hosting service providers, what they will do, sir, they will either own or operate data centers independently. They procure the infrastructure and they procure the human resources, and they will make sure the data center is being operated properly with comprehensive services like uninterrupted power supplies will be taken care, backup generators will be provided, network connectivity will be provided, firewall services will be provided, monitoring and surveillance, all these things as a package, as a whole, they will be providing to this foreign cloud computing service providers. Okay, now the doubt is, sir, what is the place of supply? How do we determine, I mean, under which section we will determine place of supply for these services, was the doubt. Then the department has clarified, see, this is not something where the services are provided with respect to a goods where physical presence is needed, services where physical presence is needed, or you cannot take it like a completely something service in relation to immovable property also. So you cannot bring all those sections. So they said you have to determine place of supply as per general rule 13 subsection 2. That is what the clarification, right? So in short, sir, data hosting service providers of India are providing services to foreign cloud computing service providers by way of providing storage space as well as technical infrastructure by in terms of human resources, etc., all that stuff, making sure the power backup is there, firewalls are provided, all that stuff. So for operating the data centers on their own, so these people are providing services to these foreign people. So in that case, what is the place of supply? Place of supply, just go with general rule. This is not something directly in relation to immovable property. So here they are doing something various other things, so it should be determined as per general rule itself 13 subsection 2. That is what the clarification. So next, the simple clarification is nothing but, see, sir, B2B services, B2B services, B2B actually supply, sorry, B2B supplies with respect to MRO services. MRO services, MRO, M means maintenance, repair, overall services provided to aircrafts or aircraft engines or components or parts. Or same way, sir, if they are provided to ships or other vessels or their engines and other components. So MRO services, maintenance, repair or overall services provided to aircraft, ships, vessels and their engines, etc., etc. What is the place of supply for that? So the place of supply for that is nothing but the location of the recipient of service will be taken as place of supply. A small simple clarification. So the next clarification is with respect to cargo handling services provided by ports to the clients. See, whenever you are taking your like wagons to the port, sir, with respect to your goods export, all that stuff. See, sir, what the port will do, what the port authorities will do, they will provide you. The port authorities will provide you various services with respect to your cargo handling, like haulage of your wagons inside the sorry haulage of your wagons inside the port area, sliding the wagons inside the port, unloading the goods from your wagons, movement of unloaded cargo to the plot and staking thereof, movement of unloaded cargo to berth, shipment, etc., etc. Like that, they will provide you various services, the port authorities, with respect to unloading your cargo from your wagons, all that. Sir, for these things, what is the place of supply? See, here there was a doubt. Sir, these services are not related to immovable property. There was a doubt, are these belonging to immovable property? Should we go with the section 12 subsection 3 or 13 subsection 4? Then the department has clarified these are not somewhere related to, these are ancillary to cargo handling and not related to immovable property. So determine the place of supply based on 12 subsection 2 or 13 subsection 2 as the case may be. That means follow general rule itself. Simple terms, port authorities providing any auxiliary activities with respect to cargo handling, place of supply will be general rule as per the general rule 12 subsection 2 or 13 subsection 2. So in simple terms, you can say port authorities providing various support services with respect to cargo handling, place of supply shall be determined as per the general rule 13 subsection 2 or 12 subsection 2, whatever as the case may be. The next clarification with respect to designing this electronic semiconductor design and manufacturing industry. To understand this place of supply, I will just make sure you are understanding it in a proper way. So first, what Indian companies will do? Sir, Indian companies, they will develop the software and design the integrated circuits for the electronic semiconductors. So they will develop the software and design the integrated circuits for manufacturing the electronic semiconductors. So this Indian companies will do. Now this will be done for the customer. The customer is nothing but the foreign company. Sir, so they will send the design, they will send the software, all that stuff. Now what that foreign company will do, that foreign company will build a prototype. You can see the events 1, 2, 3 have written here properly for your understanding. Sir, what that foreign companies will do, which are located outside India, they will manufacture the electronic semiconductor, a prototype based upon the design and the development given, whatever the format or whatever the formula given by the Indian companies. This foreign companies, they will develop a prototype, that means a demo piece kind of thing, will develop that and send to India to the person who has designed this for testing, see whether it is working properly or not, is it as per your design plan or not, like that. So the Indian company will test it and validate it and send the prototype back to the foreign company. Okay, this is what happening. In this case, what is the place of supply? The place of supply, you cannot say I am doing something related to goods where the physical presence is there, 13 subsection 3 I will invoke. Those things cannot be done, because testing and validating that is nothing but part and parcel of the main activity. Main activity for Indian companies is to design that software, to develop that software, or to design the integrated circuits and give to the foreign company. So here the general rule 13 subsection 2 will come into picture for determining the place of supply, not 13 subsection 3 clause A. So I repeat, sir, here the Indian companies are providing services of designing and developing the integrated circuits for manufacturing electronic semiconductors. So they are designing and giving to foreign companies. Foreign companies are sending a prototype to test and validate that. We are just testing and validating. Yes, this is what I have designed, this is what I have developed. Don't worry, now you can go for production. So this testing is nothing but bringing the goods to India, and testing is nothing but part and parcel of this developing that design or software services. So here we will be providing with 13 subsection 2 itself, place of supply, the general rule, not 13 subsection 3. Okay, so that is what the clarification. Hello students, welcome to the quick revision video of exemptions. This is your Mr. GST CA Vishnuvardhan. In this video, quickly we are going to revise all the important exemptions for your exam, and the exemptions which you can manage on your own, that you can just go through that, but where certain detailings need to be discussed, that I will be discussing here in this video. First, understand exemptions. All the exemptions are whatever there in your chapter. For both inter and final, they are common, except some small extra points, all that stuff. So for inter students, when I'm uploading this, I'll just delete all the exemptions for whatever related to final, and whatever is related only for you, that will be there in the video. And for final students, whatever, of course, everything will be there for you in the video, so nothing to worry. Now coming to the point, sir, first of all, exemptions, what I am doing is I am just splitting them into different categories. Sir, first let us assume the category is related to charitable and religious services, or the other category may be health related services, or next agriculture, and next education. Like this, the category wise I have segregated the exemptions, and of course the same thing has been done in ICAI study material also. That is what I have followed. Nothing of my own sort, creativity, etc. Now coming to only thing, the presentation, all that stuff is my creativity, right? Now first of all, in exemptions, you understand exemptions are RCM entries, whatever it is. Here, three things are very important. You should be careful with who is the supplier, who is the recipient, what is the nature of supply happening between them. If you are thorough with these 3 points, then only you can answer whether it is exempt or not, or whether it is taxable under RCM or not. So these 3 points very crucial, and we are splitting the entire entry in basis of these 3 things: who is the supplier, who is the recipient, what is the nature of supply. Now first, coming to the first category, charitable and religious activities. Sir, charitable and religious activities, if you see, if Section 12AA entity is what I call in our discussion. What do you mean by Section 12AA entity? The entity which is registered under Section 12AA of Income Tax or 12AB of Income Tax Act 1961. Sir, if these Section 12AA entities are providing specified charitable activities, if they are providing specified charitable activities, then to any person who is the recipient, it doesn't matter. So generally, if they are providing specified charitable activities, again in the entry in detailings, recipient will change. Let us see that. So they should be providing specified charitable activities. Sir, what do you mean by specified charitable activities? Sir, number one, it is related to public health. Related to public health, please understand, charitable activity institutions, this Section 12A entities, if they are doing something without taking consideration, it is exempt under GST, there is no doubt. But if they are doing it by taking consideration related to public health, related to public health, what they are doing, they are taking care or counseling for terminally ill persons with suffering with severe physical and mental disability, or persons affected with HIV or AIDS, person addicted to dependence forming substance such as narcotic drugs, alcohol, Instagram, PUBG, all that stuff. So for these people, if they are taking care or counseling, that is a specified charitable activity. Or sir, we are not taking care or counseling, sir, we are creating public awareness regarding preventive health, family planning, prevention of HIV infection, all these things. Further, they are doing what? Public awareness programs, all that stuff, for which they are getting consideration, that is exempt under GST. No sir, they are providing an activity of advancement of religion, spirituality, yoga, like Isha Foundation or ISKCON temples, etc. or they are providing advancement of educational or skill development programs related to abandoned, orphaned, homeless children. This is important here. Physically, mentally abused and traumatized persons or prisoners or persons over the age of 65 years. That means greater than 65 years and sorry greater than 65 years residing in rural area. If they are residing in urban area, it will become taxable. So for these people, the third point, please be careful who are the recipients. The third point, sir, educational or skill development programs we are doing for the following people, that is abandoned, orphaned, homeless children, physically or mentally abused or traumatized persons or prisoners, or even persons over the age of 65, that is greater than 65 years, residing in rural area. For these people you are providing any educational or skill development programs for which you are charging a consideration. Next one, with respect to preservation of environment. With respect to preservation of environment, the watersheds, forests, wildlife, all these things that they are providing, then it is exempt under GST. But not all services provided by this section 12A entity are exempt. Only the specified charitable activities, whatever we have discussed, they are only exempt. Anything else is taxable. For example, in their trust or etc., they are allowing somebody to advertise, put up SBI credit card advertisement, LIC advertisement, all these things, sir, they will become taxable. I repeat, not all the activities are exempt. Only specified charitable activities are exempt. Now there is one small clarification also here, sir. There are some residential camps conducted by this people who are providing advancement of yoga, all that stuff. Sir, for yoga training, they are conducting some residential programs. Let us assume they are charging for 30 days winter yoga camp, some winter yoga residential program they are conducting. For that, they are charging 30,000. In that, they will provide you training in yoga and they will provide you food and accommodation, all these things. Sir, what is the taxability of this? Sir, providing yoga is the principal activity and accommodation and food are nothing but incidental for that. So, fully it will be exempt. No, sir, they are purely providing accommodation services separately, then it becomes taxable. So, if it is part and parcel of providing any advancement of yoga, spirituality, religion, then it is exempt. You know, composite supply. Otherwise, if they are providing it separately, then it is exclusively accommodation services, all that if they are providing, then it is taxable. Hope it is clear. Next, any person. Here, any person means we are talking about religious heads conducting any religious ceremony like marriage or any other housewarming ceremonies, or there will be naming ceremonies like that. Any religious rituals are conducted by religious rituals, further they are getting consideration, it is exempt under GST. Next, sir, not only that, sir, as I told, paying the professional fees to priest for conducting a marriage, 10 lakhs, all that, it is exempt under GST. So not only that, sir, here this people who are registered under section 12A or 12AB or 1023C, 1023BB, all these things, as a religious or charitable trust, what they are doing, they are providing the religious presence on rent. If they are providing religious presence on rent, please understand, if it is rooms per day less than 1000 rupees, it is exempt. Greater than or equal to 1000, it is taxable. So I have given here the table if you see properly. So for this, what if they are providing, what is the service? Renting the rooms. Renting the rooms means less than 1000 per day, exempt. Greater than or equal to 10,000, taxable. Sir, kalyana mandaps or community halls per day less than 10,000, exempt. Greater than or equal to 10,000, taxable. Sir, shops, sir, they are providing it on monthly basis rental, then less than 10,000 per month, exempt. Greater than or equal to 10,000, taxable. So that is another one. Next, sir, there are companies like Kuman Mandal Vikas Nigam Limited and Hajj committees and state Hajj committees, sir. Sir, these people are conducting religious pilgrimage, which is facilitated by Government of India under bilateral agreement. Kuman Mandal Vikas Nigam Limited, they will conduct this pilgrimage to Kailash, Manas Sarovar, all that, and this, you know, Hajj committees will be providing this religious pilgrimage to Makkah, all that. Further, they are charging consideration that will be exempt under GST. Clear? That is what the concept. Next. Sir, the next category is regarding, sir, I am an individual, sir, I am providing training or coaching. This is important here. We are not talking about performance. We are not talking about performance. We are talking about training. So, I am a singer training you how to sing, and I am charging 1 lakh rupees fees per month. So, for each student per month, I am charging 1 lakh rupees. Is it taxable or exempt? Exempt under GST, provided it is provided by, supplied by individual. So, any individual providing training or coaching in recreational activities relating to arts or culture. Relating to arts or culture. Arts or culture means what? So, it can be dance, music, painting, sculpture making, literary activities, theater of any school, any tradition, any language. That is important. Okay. So, further they are providing training. Now, whatever the fees they are taking is exempt under GST. I repeat, here we are talking about training or coaching. We are not talking about performance. If I go and sing in a concert and if I am getting 10 lakh rupees for that, that is taxable. We are not talking about that. We are talking about, we are training or coaching people in this recreational activities. And one interesting thing is, sir, it can be in any school, any tradition, any language. Okay. Coming to section 12A entities, sir, section 12A entities are also training, sir, coaching, sir, but they are training or coaching in sports to any person, that is also exempt. Here the difference is, please understand, sir, first one, training or coaching in arts or culture should be provided by individual. Second one, training or coaching in sports should be provided by section 12A entity only, not by individuals. Okay, next. The services provided by specified charitable activities, section 12A entities in the form of specified charitable activities, we have seen exemption. That means provided by this section 12A entity, we have seen exemption. There is no exemptions provided to religious trust or charitable institutions. Nothing but simple, as we are discussing. Stay focused on who is the supplier, who is the recipient, and what is the nature of supply, and we are done with that. Okay, so category 1, specified charitable activities, over. Next one, we are going with category 2, agriculture related services. The agriculture related services, you can understand, any person to any person. So they are providing loading, unloading, packing and warehousing of rice, that is exempt under GST. Next, the loading, unloading, packing, warehousing of minor forest produce like agriculture, turmeric, honey, etc. to any person is also exempt under GST. Not only that, sir, storage or warehousing of cereals, pulses, fruits and vegetables, this is also exempt under GST. Now, the interesting point, you know already, sir, agricultural produce, sir, first of all, agriculture related activities means, sir, what is the meaning of agricultural produce? We should understand. Sir, the meaning of agricultural produce is, first of all, understand, sir, agri produce means something produced by cultivating the land, something which is produced by cultivating the land. So, by the cultivator, and there should not be any other process done on that. If that is done also, only the cultivator should do, nobody else should do. Even if cultivator is doing also, he should not make anything which makes it lose its essential or alter its essential characteristic, or making it marketable in the primary market only. He should make that process, otherwise it is not an agricultural produce. That means simple, sir. First of all, agricultural produce means should be cultivated out of land, no other person should touch it. That means nobody else should carry out any process on that. Till that, it is called as an agricultural produce. If anybody is touching or processing it also, that should be a cultivator. Cultivator also should process it in such a way to call it as still agricultural produce. First, it will not alter the essential characteristic. Number two, it is only, that process is only carried out to do that for primary market. Sell that product in primary market. That is what the concept. No, sir, for example, you are having paddy, you have cultivated paddy. Now you are taking it to the rice mill. In the rice mill, they are processing it. Who is processing? A person other than cultivator is processing. So rice cannot be called as an agriculture produce. Please understand that. That means that as long as nobody else other than cultivator is touching it, it is an agricultural produce. Even if cultivator touches and it loses the essential characteristic, for example, the farmer itself is doing tomato sauce in the farmland, then he has extracted tomatoes and he's making tomato sauce in the farmland. He's making potato chips in the farmland, or he's making some jaggery in the farmland. Can you call it as an agricultural produce? Or in the farmland by the cultivator only? No, no, no. Even if the cultivator is doing, it should not lose its essential characteristic. That is the key point here. Okay. So if anything is done, that means something is produced from farmland. If somebody else does some process, it is not an agricultural produce anymore. For example, if you take vegetables, sir, vegetables are harvested. After harvesting the vegetables, some other persons other than cultivator will do some waxing or pre-ripening, pre-cooling, all these type of activities. Now I cannot call this anymore as an agricultural produce, because somebody else has carried out some process on that. Okay, so that is what the point. Fine, coming to the point, sir, coming to the point. Sir, agriculture related activities. So here, you know, cultivation of plants, rearing of all life forms of animals, except horses. Horses will not be treated as agricultural activity. So except horses, anything you do, pisciculture, sericulture, floriculture, horticulture, forestry, rearing of pigs, cows, cattle, buffaloes, sheep, even fishes, silkworms, all that stuff, every life form except horse, okay, that will be treated as agricultural activity. And now all the agricultural operations which are directly related to production of any agricultural produce, example, cultivation, harvesting, threshing, plant protection, testing means soil testing, seed testing, all that stuff, supplying farm labor is also exempt under GST. Any process, as I already told you, carried at an agricultural farm which do not alter the essential characteristics of agricultural produce, but makes it marketable only in the primary market, like tending, pruning, cutting, harvesting, drying, cleaning, trimming, sun drying, fumigating, curing, sorting, grading, cooling, bulk packing, all these things are agriculture related activities, and they are carried out at farmland, and they will not alter any essential characteristic of the agricultural produce. Please understand. So all these things are what exempt under GST, right? Coming to fumigation, here one small point, sir. Fumigation earlier, if you see, fumigation will be carried out at farmland also, at warehouse also. Earlier, if it is carried out in warehouse, there was exemption, but now there is no exemption. So fumigation in farmland is exempt, and in warehouse it is taxable. Remember that. Next, not only that, sir, if you are renting or leasing any agriculture related machinery, like along with vacant land or whatever it is, that is also exempt under GST. Not only that, sir, loading, unloading, packing, storage, warehousing of agricultural produce. That is why, see here, already there is an exemption for loading, unloading, packing, storage or warehousing of agricultural produce, but rice is not an agricultural produce, so they have given separate exemption entry. Okay, cereals, pulses, fruits and vegetables also they have given separate entry. Why? Because that is the reason, sir. If somebody else is doing something on that, it will lose the, it will not fall within the definition of agricultural producer. That is the reason. Okay, next, sir, as I was telling, agricultural extension services like scientific research, farmer education or training, all these things are exempt under GST. Or any process, see, it is taxable when, sir, if it is altering the essential characteristics or making it marketable in the retail market. For that purpose, if you are doing the process, then it is taxable, sir. Okay, so that is what we have discussed here. So agricultural extension services, like, see, where it will be focusing on farmer education or training courses with Kisan centers, farm visits on farm trails, Kisan melas, Kisan clubs, advisory bulletins. Like this, there will be providing various activities and services provided by the agricultural produce marketing board or committee. Services provided by agricultural produce marketing committee or board, whose main agenda, APMCs, are set up by state governments to make sure the farmers are getting various facilities for selling their agricultural produce and also getting the minimum support price whatever is needed. So for all these things, this board has been set up. Okay, so they are providing services. So these services like facilities, amenities like sheds, water, light, electricity, grading facilities provided to farmers, all these things, sir, this is exempt under GST. But understand, guys, if any other service they are providing which are not directly related to cultivation of plants, all that stuff, and rearing of animals, will be liable to GST. That means, see, for example, here they will be renting out some shops or other properties for commercial purpose. They might be having some properties, so that they will be renting out all that stuff, sir. That is taxable, sir. That is taxable. Next, if these bodies are providing something directly related to this agricultural produce, all that stuff, then it is fine. But anything else, any commercial properties for commercial purpose, if at all anything they are renting out, that will become taxable. Next, as we have seen, processed products like tea, that is black tea, white tea also. See, if you have drank that white tea, tell me please in the comment box. Coffee beans, coffee powder, pulses, jaggery, processed spices, processed dry fruits, processed cashew nuts, all these things will fall outside the ambit of agriculture produce definition. So all these things are taxable. But sir, there are certain things like whole pulse grains, whole gram, rajma, etc. These are covered in the definition of agricultural produce. So relating to that, it is exempt. Next, not only that, sir, if any person is providing intermediate production process as job work related to cultivation of plants or rearing of animals, that is also exempt under GST. And as we have already discussed, sir, there is a clarification here. There is clarification we have already discussed, sir. Milling of paddy into rice is not an intermediate production process related to agricultural produce or cultivation of plants, all that stuff. So milling of paddy is taxable. That is what the clarification given by the department. I repeat, milling of paddy into rice as an intermediate process cannot be taken as intermediate production process related to agricultural produce, because rice is not an agricultural produce. So milling of paddy into rice is taxable. Next, artificial insemination of livestock other than horses, that is also exempt under GST. I repeat, artificial insemination of livestock is also exempt under GST other than horses. Okay, so that is what the concept. So with this, we are done with agriculture related services. So the next one, if you see educational related services, before going to educational related services, we should understand the definition of educational institution. Educational institution definition has 3 points, guys. Number one is nothing but the preschool education up to higher secondary school or equivalent. So we can say play school, preschool, all the stuff up to 12th, we can say that way. So I am calling this as EI1. EI2 is nothing but who are providing education as a part of their curriculum for obtaining a qualification recognized by any law. That means Indian law. Okay. So for timing in force, UGPG colleges, engineering colleges, MBA colleges, all that stuff. So we can take that way. I am calling this as EI2. Next, education as a part of any approved vocational educational courses. So I am calling this as EA3. You know, there will be like ITI colleges, etc., which are providing vocational educational courses. Sir, these are three educational institutions: EI1, EI2, EI3. For our clarity, please remember that way. Educational institution definition has 3 points. So one is preschool up to higher secondary school. Next, any educational qualification for recognized by Indian law. Next, number 3, as a part of their curriculum. Okay, that means all these CA coaching institutions or these IIT exam coaching institutions, NEET exam coaching institutions, IAS coaching institutions, all these things cannot be called as educational institution. Please understand that. Okay, so that is what the concept. Okay, fine. Now, sir, here not only that, one interesting point is, sir, they have also told generally central and state educational boards are also treated as education institution only for the limited. That means your CBSE, state boards, etc. will be there. No, those boards are treated as educational institution only for limited purpose of providing services by way of conducting examination to students. Apart from that, it cannot be treated as educational institution. That is why exam fees paid to the central or state boards are exempt under GST. Okay. Now coming to the point. So first we are done with education institution definition. Let us come to the exemption here. Sir, when you see the exemption, sir, what the exemption says? Sir, exemption says, sir, I can divide the exemption into here two things. One is sales by the education institution, the other is purchase by the educational institution. If you see, there are two cases where educational institution is the supplier. Sir, where education institution is the supplier, they are providing any service to their students, faculty, staff exempt under GST. I repeat, any service provided by education institution to their students, to faculty and to staff is exempt under GST. Same way, these education institutions are conducting entrance exams for the people who wants to become their students. They are not actually their students, they want to become their students. For such people, they are conducting the entrance exam, that is also exempt under GST. So these are the two cases where education institution is the supplier. Okay, if they are providing their services, then it is exempt under GST. So that is why I told you central and state educational boards are also treated as what? Education institutions for conducting, for the limited purpose of conducting examination to students. So they are charging fees, exam fees from the students, that is also exempt under GST. Okay. Now coming to next category where educational institution is the recipient. Education institution is the recipient. Sir, education institution is the recipient here. If you see, sir, when education institution is buying the services of transporting their students, faculty, staff from any person, is exempt under GST. But this exemption is only for education institution 1, EI1, who is providing education as a preschool or up to higher secondary school or equivalent. For them only this exemption, transportation of students, catering services, security, cleaning, housekeeping performed in such education institutions. Sir, these are what? These things, sir, these things are what? Exempt only for EI1, sir. If it is provided to EI2, that means UG, PG colleges or any ITI colleges, vocational educational courses, for those people, if they are provided, it is very much taxable. Please understand that. So here, transportation of students, faculty, staff, important point, this please focus here. The transportation of students, faculty, staff, it is exempt under GST. And not only that, catering provided, including midday meal scheme program, all that stuff, that is also exempt. And if you remember, sir, school spelling, you just remember, sir, school spelling, S for security, C for cleaning, H for housekeeping. These should be provided in such education institution. For example, there is any function, annual day program of school happening outside the college or outside the school, somewhere in the auditorium, there they are providing security, cleaning, housekeeping services. It is very much taxable. But please understand, these exemptions are available only for EI1, only for EI1. If at all they are provided to EI2, EI3, that is very much taxable. Please understand that. Fine. Next one, what is the next one? Sir, any service related to any service. This one is again important. Please be careful here. Sir, services relating to admission or conduct of examination. If education institutions, all EI1, EI2, EI3, if they are buying any service which is in relation to admission or conduct of examination. See here, for example, sir, for providing the admission or conduct of examinations, sir, there are input services like online test service or result publication or printing the exam notification, printing the admit cards, all that stuff, sir. Even the boards, educational boards or some institutions, EA1, EA2, EA3, anybody are paying to professors for setting the question papers, are paying to professors for valuing the question paper, answer sheets, all that stuff. So any service which they have taken, they are taking the education institutions on rent, they are paying rent for the exam halls, all that. Sir, any service which we buy for what purpose? For conducting the exam. Sir, I am an education institution, I am EA1, EA2, EA3. What is that I am doing? I am taking services. What are the services I am taking? Any service which is in relation to admission or conduct of examination, those services are exempt under GST. So please be careful there. Okay, so that is another point. Next, coming to the next one, sir, another purchase is, sir, online periodical journals, online educational journals, all these things, sir. That one is exempt only for EA2. For EA1, EA3 it is not relevant. So that is only for EA2, that is where you are providing education as a part of curriculum to obtain a recognized qualification. Engineering colleges, UG, PG colleges, they are buying online periodical journals, online educational journals, all that stuff, then obviously it is exempt. But for schools and this ITA colleges, it is taxable. Next, so here I have mixed up all the clarifications, also given everything related to education sector. And now, sir, normally these educational boards we have discussed, no sir, these boards will provide accreditation to any institution or professional, sir. So for an accreditation fees or registration fees, what they are doing for providing that, that is not something provided to students, faculty, staff, all that stuff, so that is very much taxable under GST. That is another clarification. I repeat, boards are giving accreditation. You will be seeing on schools or any college buses and all affiliated to so and so university, accredited by so and so university or so and so board, like that. Such type of things, whatever provided, will be taxable under GST. And next, there was one more doubt here, sir, with respect to only government ITA colleges are exempt. That means providing vocational educational course approved, you told. No, that will be provided by government and that will be provided by private ITA colleges also. When it is exempt, sir, when it is provided by only government or also private. Sir, if you get this doubt, you should also get the doubt when only government schools fees is exempt, like private schools fees is taxable, like that you should get the doubt. Sir, it is not like that. Both government and private ITA colleges will enjoy the exemption. Okay, hope I am clear with this. Shall we continue? I repeat, we are done with the entry. We are going with the clarifications here and there. Next, sir, there are residential schools, sir. There we are providing lodging and boarding, sir. That means we are charging hostel fees, everything. As I told you, any service provided to students, faculty, staff is exempt. Sir, this hostel fees is also what part and parcel of their education service only. So lodging and boarding provided is a composite supply. So principal supply is education and hence it is exempt under GST. That is one clarification. Another clarification is, there is this one. Next, sir, the next clarification here, if you see, sir, it is with respect to, sir, some education institutions are providing bundled supplies, sir. That means they are providing two dual qualifications. When they are providing dual qualifications, what is the tax treatment, sir? Please understand, when they are providing dual qualification, it is nothing but, sir, for single fees they are charging. If dual qualification, dual fees, like separate invoices, separate receipts they are giving, then you will tax them accordingly. If it is exempt, it is exempt, recognized by law, all that stuff exempt. If it is not recognized by law, it is taxable. So now, for example, if you see, sir, you are joining a degree college where they are providing BCom plus ACCA course or BCom plus CA coaching, or in schools you will be seeing nowadays school fees, and they will also providing from LKG itself they will train in IIT coaching or NEET coaching, correct? Do you remember that? So that way, sir, school fees is separate, IIT coaching, NEET coaching is separate. Okay, but they are clubbing that, then we have to go with composite supply or mixed supply concept. Sir, if they are charging separately, it will be taxed accordingly. But if they are, as I told, if they are charged separately, then will be assessed separately. But if they are mixing them both, they are charging one fees for both school fees and IIT coaching both together, they are saying 10 lakhs per annum. Then, sir, this is bundle but not naturally bundled, correct? So this will be treated as mixed supply. So entire package will become taxable because school fees is generally exempt, but these coaching classes fees are taxable. So this becomes mixed supply, which attracts highest rate of tax. So it will be fully taxable. Next, sir, in schools they are providing any extracurricular activities, sir, like for well-being of the students, etc., etc. For example, some small music or dance classes within the school timings or college timings itself. They are nothing but treated as naturally bundled and will be treated as composite supply and hence exempt under GST. So that is another point. Next, sir, IIMs are providing some programs, sir, where they are giving certification, etc., etc., some short duration courses, all that stuff, whether we can enjoy the exemption. Then they have clarified here, if it is a long duration program, that means 1 year or more, greater than or equal to 1 year, if you are providing that, then that will be exempt. But if you are doing short duration programs where it is less than 1 year, then it will be taxable. Okay, that is another point. Next, sir, canteen or mess facility provided by education institution to students. Sir, if it is provided by education institution to students, faculty, staff, obviously we have seen any service by educational institutions to student, faculty, staff is exempt under GST. So this is also exempt under GST. But sir, if they are outsourcing it to a different person and that fellow is running a canteen and that fellow is paying consideration to schools, then it is taxable. Or sorry, then we have to see catering services. We have seen, no, in purchases, if it is up to education institution 1, then it is exempt, otherwise it is taxable. No sir, that canteen fellow, whoever is taking the contract, he is providing catering services and he is charging full bill to the students only, then it is taxable. That means the catering service school only providing to students, canteen, all that, exempt. School is outsourcing it to somebody, so they are directly selling to students, then it is taxable. Now the school is providing food, further they are buying catering services from outside fellow. So when they are buying catering services from outside fellow, sir, we have seen catering services purchased by EI1 is exempt under GST. So if it is purchased by EI2, EI3, it is taxable. Am I clear? Next, the education institutions will be charging this for campus placements. This IITs, IIMs, what they will do, they will charge from the companies placement fees to come and do campus interview in their colleges, all that stuff. So for that, these companies will pay placement charges and enter into the campus for doing campus recruitment or drive, whatever it is. So such charges are taxable. They are not services provided to students, faculty, staff. Okay, companies are paying consideration for the educational institution to do the campus recruitments. Next, the maritime training institutes and their training courses are approved by DG, Director General of Shipping. So all these things are exempt under GST. Okay, because they are also educational courses only. Fine. Next, a small point. I think I have this doubt somewhere. Fine. So listen, and one more thing, I have given for purchases by education institutions, I have given a comprehensive example here. So once pause the video and just go through this example, a very good example where I have covered all the possible scenarios, all that. So mostly, so just check this, pause the video and go with this. Next, see, there is one more point here regarding catering services, sir. For Anganwadi schools, if you remember, Anganwadi schools are also what, educational institutions. Sir, Anganwadi schools are also education institutions. So please understand, Anganwadi schools are covered as education institution because they are providing preschool education, number one. And one more thing, remember, sir, these catering services taken by education institutions, EI1 is exempt under GST. No, sir, that is exempt under GST. No matter that is funded by any private NGOs or it is given by government, all these things, it doesn't matter. That means who has paid the consideration, it doesn't matter. Okay. So here, please understand, number one. So yes, as I was telling, so Anganwadi schools are covered under education institution definition EI1 because they are providing preschool education. Next one, sir, for the catering services provided to Anganwadi schools, all that, sir, under midday meal scheme program, it is funded by government. Yes, it is exempt under GST. Or it is funded by NGOs, then also it is exempt under GST. So please understand, catering services provided to EI1 is exempt under GST, even including midday meal scheme programs, okay, where the funding is done by government. Not only that, sir, if any funding is done by NGOs, that is also covered, that is also exempt under GST, because the main thing is it is catering service. Okay, so with this we are done with services related to educational sector, and of course there are small amendments that will be added, so you can just finish it off. The next one is related to healthcare services. The next category is all about, sir, healthcare services. If you see first one, sir, veterinary clinic providing services to animals or birds is exempt under GST. I gave here the star mark, the important, to all the healthcare services, not that veterinary clinic point. So don't misunderstand. Now coming to the healthcare services, sir, who should be providing healthcare services, sir? Sir, clinical establishments, authorized medical practitioner, paramedics. So clinical establishments like Apollo hospitals, doctors, nurse, like lab technicians or physiotherapists, all these people, sir, they are providing their uh, services. Which service they should be providing? Healthcare service, then it is exempt under GST. Sir, what do you mean by healthcare service? Please understand, healthcare service means diagnosis, treatment or care for any illness, injury, deformity, abnormality or pregnancy in recognized system of medicine in India, then only it is exempt under GST. Please understand that. That means, sir, if you are providing anything else apart from that, then it cannot be. For example, like Anything beyond this, if they are providing, it is taxable. So these are just healthcare services, and also it includes what? Services by way of transporting the patient to or from the clinical establishment. Okay, so that is what the point. And one interesting thing is, sir, it does not include hair transplantation, cosmetic and plastic surgery, except when undertaken to restore or reconstruct the anatomy or the functions of the body infected or affected due to congenital defects or development abnormalities, injury or trauma. That means, sir, because of a CA student or a CA getting hair transplantation services will be taxable. But if any cosmetic plastic surgery done by actor or actresses, all that stuff, that is also taxable. But if any cosmetic surgery, hair transplantation, plastic surgery, all these things are done due to, sir, because of any developmental abnormalities, injury, trauma, all that stuff, so for restoring or reconstructing the anatomy of the body, if they are doing this, then it will be exempt under GST. Okay, so CA getting a hair transplantation, actor getting cosmetic surgery, all these things are taxable. But if you see in um, for example, Vikram in iMovie, or let us assume Vikram, a person who suffered injuries in fire accident, because of that they are doing some cosmetic plastic surgery, then it is exempt under GST. Please understand that. Fine. Sir, you said that treatment should be done in recognized system of medicine. No, sir. What do you mean by recognized system of medicine, sir, in India? Sir, what are recognized system of medicine in India? Sir, in India, recognized system of medicine means N-Ayush. That means naturopathy, allopathy, Ayurveda, yoga, Unani, Siddha, and homeopathy. So these are the recognized system of medicines. Apart from that, anything you provide, then it is taxable. Okay, and not only that, sir, what we are understanding here is regarding renting of rooms in the hospitals. Renting of rooms in the hospital, if you see the renting of rooms in the hospital, for that they have given a point there. Sir, exemption, if at all, if the rent is paid, the room charges are paid for ICU, CCU, or ICCU, or NICU, intensive care unit, cardiac care unit, or intensive cardiac care unit, or neonatal intensive care unit, for all these things, no matter how much ever room charges you charge, it is exempt under GST. But sir, other charges, normal room charges charged to the patients, if it is less than or equal to 5,000 per day, it is exempt, sir. But if it is greater than 5,000 per day, fully it is taxable. That means you are charging 5,050 rupees also, it will become fully taxable. If it is 5,000 or less than 5,000, that means less than or equal to 5,000 per day, then only it is exempt under GST. Okay, so that is with respect to providing rooms in clinical establishments. And next, the senior doctors or consultants are coming and providing various services to the hospitals. That means they are not employees of the hospital, but they are coming as a senior doctor, as a consultant, etc., providing some VVIP cases, etc., they are handling, or complicated cases they are handling. They are providing services to hospitals. That is also exempt under GST, because they are also providing healthcare services. Next, sir, food supplied to inpatients, that means who are admitted in the hospitals, for them whatever the food supplied, that is also forming part of healthcare service, exempt under GST. But who are not admitted, just going to the hospital to see the doctor, to see the nurse, and eat their idli sambar in the canteen and come, for them it is taxable. Okay, next, the food supplied in the canteens which are run by outsourced agencies to outsiders, all that stuff, that will be obviously taxable. Next, as I was telling, food supplied to patients not admitted or their attendants, visitors, that will be taxable. Next, sir, ambulance services are exempt. Next, transportation of patients in ambulance, as I told you already, it is exempt. Okay, no matter under what scheme, that is 108, 102, whatever it is, that ambulance service exempt, sir. Remember that, that's all. Who is providing, private or public person, government, all that stuff, it doesn't matter. Ambulance service is ambulance service, exemption is exemption. Am I clear? So that is with respect to that. And next, sir, rehabilitation professionals, sir. Rehabilitation professionals providing their services by way of rehabilitation, therapy, counseling, all that. But these things, they should be provided in medical establishments or educational institutions or rehabilitation centers set up by central government or state government or union territory or section 12 entity. It is not like I am a rehabilitation professional setting up some rehabilitation center separately in my own office or in my own street or town, whatever it is, and doing this rehabilitation counseling therapy, that will be taxable. But this rehabilitation center should be located, so this rehabilitation center should be located where? In educational institution or medical establishments or rehabilitation centers which are set up by this central government, state government, or union territory or section 12 entities, then it is exempt under GST. Okay, so these are with respect to healthcare services. So the next category, if you see government services, In government services, what has happened, we have already discussed in RCM while discussing about RCM entries of government services. We have discussed this entry number 6, 7, 8, 9. Okay, you can just go through that RCM video and again go through that. So we have already discussed government services provided to general public, everything is exempt other than A, B, C, and they are always taxable under forward charge. And for business entities, everything is taxable including ABC. And if it is a small business entity, that means whose aggregate turnover is not exceeding the threshold limit, for them any service provided by government is exempt other than this ABC. For other business entities, sir, if the consideration is less than or equal to 5,000 rupees, then it is exempt. Otherwise, all other services are taxable. Like that we have discussed. So all these 6, 7, 8, 9 we have already discussed there. Now coming to the next one, sir, here the functions related to article 243W and 243G, if they are provided by governmental authority to any person, that is exempt under GST. Now please understand, here before going into the discussion, government authority and government entity, I give the meaning here, where governmental authority is nothing but set up by act in parliament or assembly or established by any government, where 90% or more, greater than or equal to 90% of stake is with government. Okay, and their main agenda is to carry out the functions entrusted to municipalities and panchayat under 243 and 243W, 243W and 243G. If it is government entity, the only difference is everything is same, but this is started to make sure to carry out any function entrusted to central government, state government, union territory or local authority. That is what governmental authority and government entity. Okay, now coming to that point, see, first of all, regarding 243G and 243W, we have already seen in schedule 3, if you remember. So I'm just putting all the things related to this article 243W and 243G here. See, central government, state government, union territory, local authority undertaking the activities given, services given in 243W and 243G, it is neither SOG nor SOS. So these people are the supplier and general public are the recipient. It is neither SOG nor SOS. We have already seen in schedule 3 the notification. Next, if governmental authority is providing this to general public, so we are talking about this. That is what we are seeing exemption now. Am I clear? So governmental authority providing services which are entrusted under article 243W or 243G directly to general public, for which they are getting some minimum nominal consideration, is exempt under GST. This is one side of the story. To provide this to general public, these people are taking the help of private service providers. So these private service providers may be directly providing services to government or may be directly providing services to governmental authority. Okay, in that case also, sir, this is exempt under GST. Their services are exempt under GST. Entry 3 and 3A, sir, whether it is 100% supply of service, it is exempt. One second. So sorry, listen here again. Sir, as I was telling, sir, government is providing services directly to general public or governmental authority is providing services to general public with respect to functions entrusted in article 243W or G. This concept we have already seen in schedule 3. Okay, this concept already we have seen in schedule 3. Sir, government directly to general public is neither SOG nor SOS. Okay, through notification, not schedule 3, sorry. Next, sir, governmental authority directly to general public. Governmental authority directly to general public. That is what we are seeing the entry now. Entry 4 and 5. For some nominal consideration, exempt under GST. Next, sir, any private service providers. Sir, let us assume we will be seeing some government will be outsourcing the activity of cleaning and maintaining the roads to some private entities, all that. Sir, they are providing services directly to government or governmental authority. Then also it is exempt under GST. Here, there can be a possibility where they will be providing purely services. 100% supply of services. That is also exempt. No, sir. 25% worth of goods is also involved. That is also exempt. That means the composite supply of 75% service and 25% goods. That is also exempt under GST. So 100% service is exempt and 75-25 mix is also there. That is also exempt. So you should be careful with this limit. Important. Please remember. Okay. So this is with respect to 243W and 243G fully. Okay. Next. Sir, government entity providing any services, sir, government entity providing any services where they are receiving consideration in the form of grants, as we have already discussed just now. Government entity is set up for mainly what purpose? To carry out something which is entrusted to central government, state government, union territory or local authority. So they are doing that functions, whatever this government is telling, they are doing this. For that, government is giving them the consideration in the form of grant. That is also exempt under GST. Next, old age homes. Old age homes, if they are operated by central government, state government or section 12A entity for the people, who are aged over 60 years or equal to 60 years, 60 or more, where consideration is 25,000 or less than or equal to 25,000 per month per member, that will be exempt under GST. Otherwise, if it is greater than 25,000, fully taxable. I repeat, old age homes run by central government, state government, section 12A entity, not any private person. Less than or equal to 25,000 per month should be the consideration. If it is greater than 25,000, it is fully taxable. Next, government giving guarantee to the banks or financial institutions for the loans taken by their public sector undertakings, all that is exempt. Next, this one is normal, providing registration or testing, calibration, safety check, exempt under GST. Issuing passport, visa, driving license, birth or death certificates to business entities is exempt under GST. Next, sir, assigning natural resources to individual farmers, that is exempt under GST. Next, sir, appointing the officers after the working hours and collecting merchant overtime charges for loading and unloading after office hours or during even holidays charged by the government, that is exempt under GST. So these are related to government services. Sir, with respect to government services, all that, there is an example also here which I have given. So just you can pause the video and go through this example. So one is postal department services, and then the government of India, other side it is providing services to Vivad Private Limited, TCS Limited, Reliance, like this. Different combinations I have given, taxable or exempt, forward charge, reverse charge, all this stuff. This one also we have discussed all these things in RCM. Okay, so with this we are done with this government services. So if you see the next one, construction related services. Construction related services, there are 3 points actually. First, let us finish this fellow, the odd man out here. Electricity distribution utilities like Tamil Nadu Electricity Board or SPDCL, Southern Power Distribution Corporation Limited, something that way. Sir, what they are doing, they are constructing the electricity infrastructure, up to the tube well of the farmer in his farmland. So that services they are providing to that farmer or agriculturist, it is exempt under GST. Okay, this is something different here. Coming to construction services, actually the construction what we know, please understand here that in construction services there are two things. First entry is related to, first the exemption is only for pure labor contract, not for works contract. You know, pure labor contract means only labor, works contract means both material and labor they will be providing to you. Sir, pure labor contract they are providing with respect to construction, that can be original works or non-original works. That means repairs also covered here. To any beneficiary of Pradhan Mantri Awas Yojana scheme. Sir, there is a person beneficiary under Pradhan Mantri Awas Yojana scheme. For his house, we are doing brand new construction, erection, commissioning, installation, completion, fitting out, repair, maintenance, renovation, alteration, all these things. Sir, that is exempt under GST. Here, both actual construction is also there, repairs and renovation, that is also there. So please understand. So beneficiary of Pradhan Mantri Awas Yojana, both original works, non-original works, both are covered. I repeat, that means brand new construction is also there, repairs and maintenance is also there. Okay, so that is what the point. Next, sir, here another one is, sir, it is not, so that point is related to focusing on the person beneficiary Pradhan Mantri Awas Yojana, both original works, non-original works, only pure labor contract, works contract is taxable. So coming to next one is focusing on single residential unit. Any person getting his single residential unit which is meant for his single family getting constructed, here only original works, that means brand new constructions, we are not talking about repairs, renovation, alteration, all that stuff. Then if they are providing pure labor contract services to any person to any person, contractor can be any person, recipient can be any person. You are constructing my villa for 10 crores, exempt under GST, only pure labor contract, because villa is my single residential unit. Okay, that is exempt. Suppose it is in residential complex apartments, taxable, sir. If it is works contract, taxable, sir. If it is alteration, repairs or renovation, taxable, sir. Only original works, that is brand new construction, only pure labor contract, only related to single residential unit, then only exemption is there. Okay, so that is what the concept. So that is with respect to construction services. Here there is a small example, you can just pause the video and go through this. So with this we are done with this particular category. Next category is, if you see, passenger transportation services. Sir, what are passenger transportation services? If you see here, sir, passenger transportation service, first we are going through, sir, if you are transporting the passengers through air in economy class, that is important. Business class is taxable, but this journey should be either starting or ending from the airports located in these states. So here just remember the standing ma'am at Bagdogra. Standing ma'am at Bagdogra is nothing but just our standing ma'am code itself, what we have used in composition scheme. There in the place of Uttarakhand, here we are bringing Assam into picture. If your journey is starting either in Sikkim, Tripura, Assam, Nagaland, Manipur, Arunachal Pradesh, Mizoram, Meghalaya, and of course Bagdogra. Bagdogra is a place located in West Bengal. In these states or in these places, if your journey is your journey is either starting or ending through airways, that too in economy class, that is exempt under GST. So Chennai to Delhi is taxable. Chennai to Delhi via Assam is also taxable. Only Chennai to Assam is exempt, or Assam to Delhi is exempt. So either starting point or ending point should be located there, and that too only economy class. Business class is taxable. Okay, now coming to here, stage carriage, contract carriage, all that stuff. So here the transportation of goods, contract carriage means you are taking entire contract on a entire carriage on a contract, or sorry, entire carriage you are booking. Stage carriage means simple, you are traveling, your ticket you are buying, how much ever distance you are traveling, that much you are, for that distance you are paying the consideration. Because of revision video I am not going into details. Okay, now coming to contract carriage, for example, your friend wedding is there, that fellow is booking a full bus to transport all the passengers. Sir, if it is AC, contract carriage or stage carriage, AC means taxable, simple. If it is non-AC, we should see the purpose. Why you are transporting? Why you are transporting the passengers? For any conducted tour, or for I am taking that contract carriage to give it on rent, charter or hire, or tourism purpose it is being operated, then it is taxable. Any other purpose, as we have discussed about the wedding. So for the wedding we are booking the bus through e-commerce operator under 9 subsection 5 means again it is taxable. No sir, directly we are going to the bus owner and we are booking the bus, sir, then it is exempt under GST. Am I clear? Contract carriage, non-AC, non-AC, what we should see, we should see the purpose. Conducted tour, charter or hire, tourism, taxable. Other purpose, sir, if it is through e-commerce operator under section 9 subsection 5, taxable. Other cases, exempt. Okay, so that is what the concept. Next, radio taxi, always taxable. Remember that radio taxi means where the taxi is connected with the central office through GPS or GPRS system. So stage carriage, sir, coming to stage carriage, AC, taxable as I already told you. Sir, non-AC, through e-commerce operator under 9 subsection 5, it is taxable. Or directly, sir, we are going to the bus operator and booking the ticket, then it is exempt. So you are traveling from Chennai to Hyderabad, non-AC bus, but you are booking that through GoAvivo, then it is taxable. No sir, directly we are going to Orange Travels, buying a ticket directly in the bus stand and traveling, non-AC, then it is exempt. That is what the concept. Okay, next, sir, same way transportation of passengers by metered cabs or auto rickshaws through e-commerce. Generally metered cabs, auto rickshaws exempt, sir, but if it is through e-commerce operator under 9 subsection 5, it is taxable. That is with respect to stage carriage, contract carriage. Next, airline operators, they are operating their aircraft from a regional connectivity scheme airport, where the consideration is paid by the central government in the form of viability gap funding, that is exempt under GST. Next, sir, as we were discussing, transportation of passenger, any person to any person, if it is through railways, only first class and AC is taxable, remaining everything is exempt, like general class, sleeper class, monorail, metro, tramway, all these things are what? Exempt. But sir, if it is waterways, inland waterways is exempt, sir, and places between India, let us assume Chennai to Andaman, for any purpose other than tourism is exempt, sir. If it is for tourism purpose, then it is taxable, sir. So imagine from one place in India to another place in India through a vessel, but if it is tourism purpose, it is taxable. If it is not for tourism, it is exempt. Hope it is clear for you. Next, sir, if it is through roadways, as I was discussing, the roadways, metered cabs, auto rickshaws are exempt, sir, including e-rickshaws, but they are done through e-commerce operator 9 subsection 5, then it is taxable. Next, sir, if you see in government services, we have seen transportation of goods and passengers exempt under GST, that was taxable if it is provided by government. But in this entry now what happens, even though whether government is providing or private entities are providing the stage carriage, contract carriage, all these things, sir, this exemption is applicable for everybody. That means whether the supplier is government or non-government, it does not matter. I repeat, we have seen transportation of goods and passengers taxable in government related services. Here in this entry specifically we are giving exemption for everybody, whether you are a government or a private person. These conditions, if you are satisfying, it is exempt for you. Next, and why are you traveling in that vessel, for tourism purpose or not, that doesn't matter. Why that is being operated is what important, guys. So normal public ships or vessels Sale between places located in India, that is exempt, even if some passengers are going for tourism purpose, because predominantly the service is not for tourism purpose. However, services provided by some leisure charter vessels or cruise ships, predominantly the purpose is tourism, that is taxable. Okay, so that is what the point. Next, contract carriage, stage carriage, metered cab, all the definitions I have given, that's all. So that is what the concept of transportation of passengers. So the next one is with respect to goods transportation services. See, for goods transportation services, if you see here, uh, goods transportation services, two things. One, how you are transporting based on that exemption is given, and next, what you are transporting based on that exemption is given. Sir, how you are transporting, sir? Sir, I am transporting through roadways. Sir, if you are transporting through roadways, it is exempt under GST, except it is provided by GTA and courier agency. That means GTA and courier agency is taxable. Individual truck drivers, all that stuff, it is exempt. Majority cases, GTA courier agency only will do so. That is why it is taxable. Okay, other cases it is exempt. Sir, no, sir, I am transporting through inland waterways, sir. Then also it is exempt. So this is how the exemption is there. That means you are transporting through airways, they have not spoken anything. That means it is taxable. You are transporting the goods through railways, nothing given here. So it is taxable. Okay. Now, sir, the point is, even though you are transporting through rail, vessel or goods, okay, sir, if you are transporting agricultural produce, milk, salt, food grains, flours, pulses, rice, organic manure, relief materials for natural or man-made disasters, or defense or military equipments, newspapers and magazines, these things if you are carrying, then it is exempt. So generally, if you are transporting goods through railways, vessels or GTA, goods carriages or courier agency, it is taxable. But these goods, if you are transporting, sir, these goods, it is exempt under GST. That is what the point I told you, how you are transporting and what you are transporting. Okay, fine. So here, what do you mean by GTA? Sir, GTA means, here they have given a definition, we have discussed in RCM also. Services in relation to transporting the goods, any person providing by road and issuing consignment note. Here the word they have used is services in relation to transporting the goods. That means not only just transporting the goods, sir, but also various intermediary services, and auxiliary services which are provided, like what, if you see here, here there should be given somewhere, loading, unloading, packing, unpacking, transshipment, temporary warehousing, all these things are forming part of like in relation to services. So these services are also provided by GTA, still it is called as GTA because these are provided in connection with transporting the goods. Okay, next 21A, 21B regarding GTA, we have already discussed in RCM. GTA is having three types of customers. One is who are specified recipients, who are other than specified recipients, and section 51 entities. If you remember, there, sir, these two people who are not specified in RCM, exempt under GST, for them GTA is providing services. No, sir, GTA is providing services to people who are registered under GST just to comply with the section 51 provisions. Okay, then also it is exempt under GST. The same discussion we have already done in RCM entry also. Right, the next one is banking and financial services. With excitement, I forgot to give entry only here in the book. So please understand what is the entry all about now here. The services by way of extending loans or advances or deposits where consideration is charged in the form of interest or discount other than credit card interest. First of all, if you remember, we have already discussed about interest. Sir, interest is given in charged in two circumstances. One is I give you loan and charge interest, and the other is I give you time for making late payment and I charge interest. Sir, if I give you loan and charge interest, that is exempt under GST, sir. But if I give you time, that means I am allowing you to make late payment, and for that I am charging interest, that is taxable, sir. That is what the concept, correct? Now, sir, we are talking about I gave you loan and I am charging interest. I gave you advance or deposit and I am charging interest. That is what we are discussing under this entry. So here, every interest, whatever is charged, whether it is home loan, gold loan, car loan, personal loan, house loan, anything, it is exempt under GST except credit card interest. That means if credit card interest is charged, that is taxable. And understand, here we are talking about only interest is being exempt, not the loan processing fees or documentation charges. All this becomes taxable. Sir, here it is not like home loan, car loan, all that I told you, deposits, advance, everything, whatever it is, you are allowing them to use your money. And this is not only just restricted to banks, etc., but mostly they are involved in this business. We are talking about them, that's all. Sir, anybody extending loans or extending advances, extending deposits, for which they are getting, you are getting savings bank account, fixed deposit account interest, correct? You are also allowing banks to use your money. You are providing services to banks. The interest you are charging is exempt under GST. So that is the concept here, fine. Now coming to the point, sir, minimum balance charges. If you see, minimum balance charges, service charges, documentation charges, as I told you already, they are taxable. Next, anything, sir, they are charging interest on delayed payment charges, settlement obligations, margin trade facility, all these things are exempt. So simple, the point is they are charging interest for allowing you to use the money, that's all. That is exempt under GST. Okay, so with that knowledge, you just go through the points there. So for final students, if you see, sir, there are actually the points like collateralized borrowing, lending obligation transactions for which they are charging interest or something like that, exempt under GST. Repo rates, reverse repo rates, all these are exempt under GST. Transactions in commercial paper or certificate of deposits, they are also treated as money and they are not chargeable to GST itself if you are dealing with commercial paper. All that stuff we have discussed in supply chapter also, that point. Next, income from commercial papers and CDs, that is nothing but, sir, commercial paper and the certificate of deposits, when they are treated as money, then obviously the income generated from them is nothing but interest or discount, correct, for allowing them to use that. So that is exempt under GST. But sir, service charges or service fees or documentation fees, brokerage charges, I told you already, they are liable for GST. Sale or transfer or assignment of debts are nothing but actionable claims and would not be subject to GST. Schedule 3 will come into picture. Next, any charges collected in the course of such transfer or assignment, then it is chargeable to GST. Debt instruments like debentures and bonds are in the nature of loans and interest only, that is exempt under GST. Financial lease is a method of borrowing the assets. Sir, what about the interest which is representing in the financial lease? Sir, financial lease is where the ownership of the asset is with the bank, in essence purchase of the asset and lend it further. Okay, therefore neither the services are purely in the nature of extending loans, nor the consideration is financial lease is purely in the nature of interest. Thus, interest on the financial loan transactions would be taxable. Mark it important, sir. Financial lease, simple financial lease, the interest is taxable. Remember that much enough. Next, loan of one bank is taken over by another bank, then GST will be liable on the processing fees, all that stuff. Next, interchange fees on card settlements, all that stuff, sir, whatever is paid, that is liable to GST. Mark it important. Next is our securitization transactions by banks, where securitized assets are in the nature of securities, not subjected to GST. But for that, they will be collecting some service charges or service fees or documentation charges, that is chargeable to GST. Next, this point I told you, interest will come in two cases. One is for extending loan and the other is for giving you time for making the payment. Okay, so if I'm allowing you to make payment late, that is added to value of supply and taxable. If at all it is for allowing you to use my money and charging interest, then it is exempt under GST. Next, sale or purchase of foreign currency between banks and forex dealers, that is also exempt under GST. But if the same people are doing to general public, then it is taxable. Okay, so between banks and forex dealers, that is exempt, sale or purchase of foreign currency. But it is provided to general public, it is taxable. Next, banking companies providing services to the account holders of Pradhan Mantri Jan Dhan Yojana, exempt under GST. Next, one last point here is, sir, related to acquiring bank. Please understand, sir, acquiring banks, sir, when you're going and swiping the cards, the amount will be settled by a bank and they will charge some commission from the seller. That means you are coming to my shop and swiping the card for 100 rupees. I will not get 100 rupees, I will get only 98 rupees. So 2 rupees, let us assume the acquiring bank is charging commission. So here what they are talking is, commission will be there. On that commission, GST also should be there. But if the transaction amount, the settlement amount is greater than 2000 only, the commission is taxable. If it is less than or equal to 2000, commission is exempt. So I repeat, commission will be there anytime. But if the settlement amount is greater than 2000, commission will be taxable. If it is less than or equal to 2000, the commission is exempt. And if you see here, some cases like, sir, RuPay cards and BIM UPI cases, commission will be there, but that commission is not deducted from supplier account. That means the vendor account they will not charge. The banks will not charge from the vendor account. For the banks, government will make payment. So that is nothing but treated as subsidy. Simple. RuPay cards, BIM UPIs you are using. Sir, in such cases, what will happen? Sir, in such cases, when you are swiping the card, amount will not be deducted by the bank from the supplier's account. That means if you swipe for 100 rupees, customer, the seller, the vendor will get 100 rupees only. The 2 rupees commission, whatever the acquiring bank needs, that will be paid by the government, central government. So BIM UPIs and RuPay cards, if you are using that commission is paid by the government. So that is in the nature of what? Subsidy given by the government. Subsidy given by the government, not added to the value of supply, not taxable, correct? No, sir, that commission we are charging from the vendor only directly, sir, 2 rupees. Then settlement amount greater than 2000, it is taxable. Less than or equal to 2000, it is exempt. Everywhere commission is there. One case commission is provided by government, so it is not taxable. Other cases commission is charged from the vendor. So on that commission, sir, if the settlement amount is less than or equal to 2000, it is exempt. Sir, if the settlement amount is greater than 2000, commission is there, taxable. Everywhere commission is there. Please remember that. Don't misunderstand. That's also, with this we are done with financial services as well. This life insurance services, you can just take it as homework, you can just go through that once, that's all you do that. This category 11 also, specified bodies, ESI, CEPFOs, all these things, and general insurance services also, you just remember this here, these points. Okay, next pension services, all that, so not that greatly relevant. Now coming to the next one. One second guys. Okay, let us move on to the next one. Sir, business facilitator and business correspondent. Sir, business facilitator and business correspondent, if you see, sir, if these people are providing services to any banking company located in rural area, it is exempt, sir. I repeat, banking company located in rural area. If it is located in urban area, it is taxable. Sir, for these people, if anybody is providing services as an intermediary, okay, then that is also exempt. Next, again, business facilitator and correspondent providing any services to insurance company in rural area, then it is exempt. So look at this. Sir, agent providing service to business facilitator or correspondent who is providing his services to banks. Everything is exempt here. Here, sir, this is only exempt, sir, but this is taxable. That means agent to business facilitator or business correspondent is taxable. Business facilitator to business of insurance company in rural area. My insurance company in rural area itself is rare. They are having business facilitator correspondent is rarest, and they are having agent, of course not possible. Just for your clarity, I have written there, so you should not get confused in the exam. So this is the exemption entry with respect to business facilitator and business correspondent, and I hope you remember we have discussed about the same fellow even in RCM. Next category, services provided to government. Sir, we have already discussed this entry number 3 and 3. If you remember that pure 100% services or 75-25 ratio also we have discussed. Next, sir, any person providing his services as a ration shop dealer and for which he is getting commission, that is exempt under GST. Any insurer who is providing services of insurance where premium is fully charged to central government, state government, union territory, that is exempt under GST. Next, any person who is providing some training programs conducted on which 75% of the cost, the expenditure is borne by central government, state government, and union territory. So let us assume 10,000 I am charging for providing you some certification course on GST training, all that stuff, for which consideration 75% or more is contributed by central government, state government, union territory, then it is exempt. If it is less than 75% they are contributing, then it will be taxable. Okay, so this is important, please remember it, the limits 75-25. Greater than or equal to 75 should be contributed by government. So those are with respect to government services provided to government. Next one, leasing services, sir. State Industrial Development Corporation, sir, we call it SIDCO. The state government industrial development corporations or undertakings where the entity, in that entity 50% or more ownership, greater than or equal to 50% ownership is with the central government or state government or union territory, and they are providing this industrial estates, industrial plots on rent to obviously industrial units or developers in that industrial area, where they are charging the consideration upfront amount for long-term lease. Long-term lease means, you know, sir, it is 30 years or more, greater than or equal to 30 years. Further, they are charging upfront lease payment, that is exempt under GST. If they are charging monthly rentals, then it is taxable, sir. They are charging monthly rentals, now then it is taxable. For example, 100 crores lease upfront payment, 100 crores they are paying, it is exempt. To pay that 100 crores, I am giving you 10 installments. That is also exempt. So upfront amount is the way the consideration is charged, then it is exempt, sir. That upfront amount can be paid even in installments also, not a problem. But monthly rental comes, then it is taxable. 30 years or more long-term lease, that is important here. Okay, so that is what the point. And here one more thing is like preferential location charges charged here. For example, in that industrial estate, sir, for me I need that particular area of 10 acres. For that they are charging something extra, preferential location charges. Same long-term lease amount, but because the area is different, I'm charging more lease amount, that's all. So it is also exempt under GST. Okay, so that is with respect to this leasing services category. So the next one is legal services. If you see, sir, arbitral tribunal or senior advocate or individual advocate or firm of advocates providing their legal services to any person other than a business entity, like individuals, all that exempt under GST, or to a business entity whose aggregate turnover is not exceeding the threshold limit for registration. That means small business entities, as we are discussing, small bet, sir, they are not even liable for registration, sir. That much less turnover they are doing, not exceeding 10, 20, 40 lakhs. Next, sir, if they are providing their services to central government, state government, union territory, local authority, governmental entity or government entity, sorry, governmental authority or government entity. So there should be here governmental authority. Okay, yes. So then that is exempt under GST. For that purpose, I have given a comprehensive example here. And one more thing here, sir, individual advocates or firm of advocates providing legal services to another advocate or firm of advocates, that is exempt under GST. I will show you the example here. So look at this. So here, first of all, let us see this. You just focus on this first. Pause the video and just understand here. Sir Jolly LLB, an individual advocate providing legal services to Imran Hashmi and same Sonu Sudan Co charitable organization registered under GST. Aggregate turnover in preceding financial year is exceeding the threshold limit. Pushparaj exports and imports, sole proprietor not liable for registration. Aggregate turnover in preceding financial year not exceeding the threshold limit. To central government, to another form of advocates, or see here the only thing what I want to highlight is senior advocate providing services to another advocate or form of advocates, they cannot enjoy the exemption. But the only thing is we can see, sir, whether this other individual advocate or firm of advocates, what is their aggregate turnover? Their aggregate turnover is exceeding the threshold limit. Now automatically it is taxable and coming under RCM. Okay, hope you understand that. I repeat, advocate to advocate is generally exempt, but that exemption is not available if senior advocate is providing those services. Okay, for senior advocate, even advocates and firm of advocates are nothing but another business entity only. So if their aggregate turnover is exceeding the threshold limit, that will be taxable, otherwise it will be exempt under GST. Okay, so this is important for you, right? Hope it is clear. So this is what all about legal services. Next, sponsorship of sporting events. The sponsorship of sporting events, if you see, sir, if it is for specified sports bodies, as we have given here, National Sports Federation and affiliations, All India Sports Council for Deaf, Paralympic Committee of India, Special Olympics Bharat, Association of Indian University, Inter University Sports Board, Central Civil Services, Cultural and Sports Board, Indian Olympic Association. So Pradhan Mantri, sorry, Panchayat Yuva Kreda or Khel Abhiyan scheme. Sir, under these schemes, if you are conducting any sporting event, for that if the sponsorship services are provided, that is exempt under GST. Next, so that is with respect to sponsorship services. Next, skill development programs, please remember this important. Okay, you can just go through that National Skill Development Corporation, all these people, the training agency or assessment agencies, all this, these people are providing services of conducting the training programs, all that, it is exempt under GST. Next, anybody assessing the training programs conducted who are enrolled with the Director General of Training under Ministry of Skill Development and Entrepreneurship. So under this, anybody are doing the services of assessing the competencies of the people trained under those programs, especially the skill development initiative scheme, and training providers. If you are training the students, or if you are providing training services on skill and vocational training and education under Deen Dayal Upadhyaya Gramina Kaushalya Yojana, that is exempt under GST. So these are related to skill development services. Please go through this once and just finish it off. Next one, a very important entry is performance by an artist. Sir, any artist in folk or classical, of music, dance, theater, that means here western, all this stuff are not covered. Sir, here only see western music or dance or modern theaters performances or actors in films and television serials, all these things are not involved. Only in folk or classical form of music, dance and theater. Okay, so painting, sculpture making, all these things again will become taxable. Exemption is only for what? Exemption is only for music, dance and theater, that too only in the form of folk or classical, not anything else. Sir, here you should be an artist. For example, you are a Bharatanatyam dancer, classical dancer, you are going and performing on stage. For that you are charging a consideration, we are talking about that. So that consideration, if it is less than or equal to 1,50,000 per performance, it is exempt under GST. Hope it is clear for you. Sir, if it is greater than 1,50,000, it is fully taxable, simple. Okay, next, sir, if you are acting as a brand ambassador, sir, you are a Bharatanatyam dancer coming and advertising him like Fortune Sunflower Oil or Freedom Sunflower Oil, all that stuff, that will be taxable. Brand ambassador services are taxable no matter whatever is the consideration. But if you are performing, for that you are taking consideration less than or equal to 1,50,000, then it is exempt under GST. So a very, very important entry, please remember. Next category is about Entry tickets, sir. Entry ticket when you are going to museum or national park or wildlife sanctuary, tiger reserve or zoo, for that, no matter whatever is the ticket, whatever is the cost, sir, that will be exempt under GST. Even admission to protected monuments, all these things, sir, it is exempt under GST. I repeat, without any monetary limit. Whatever the ticket you are paying, that is exempt. Because in the next one, if you see next point, sir, you are going to any circus or a dance or theatrical performance, including drama, ballets, award functions, concerts, pageants, and musical performances, sporting events, recognized or unrecognized, and planetarium. For these places, if you are going and you are paying the entry ticket, please understand, then it is less than or equal to 500, then only it is exempt. If it is greater than 500, it is fully taxable. Okay, so that is what the concept. Now next, sir, recognized sporting event, all that they have given just for your general knowledge, you can go through that. So that is with respect to that category, admission to any events. The next one, services provided by an unincorporated body. Please understand, this is all about whether you are an unincorporated body or an incorporated body, you are providing some services to your members. Sir, I repeat, whether you are incorporated or unincorporated, it does not matter. You are providing services to your member. What services? Sir, as a trade union, you are providing any service to your members exempt under GST, sir. As a body, I am providing to my members a service which is already exempt under GST. For example, I am a Rotary Club. I am providing to my members some healthcare services, arranging some doctors, doing their blood checkup, etc., blood pressure or sugar, diabetics, etc., eye checkup, etc. So these services I am providing to my members, getting 100 rupees consideration from them. So I am providing healthcare services to them, which is already exempt under GST. So even if I provide also, it is exempt under GST. Next, sir, resident welfare associations, you see in apartments and all, the flat maintenance fees you pay, no, that flat maintenance, if it is less than or equal to 7,500 per month, okay, then it is exempt. If it is greater than 7,500, it will be taxable. Okay, now sir, this 7,500 whatever is it does not include any statutory dues, sir. Any property tax, electricity charges, all that stuff that is paid, that will not be added in that 7,500. Okay, next. We understand these associations are charging some sinking fund, repairs and maintenance fund, car parking charges, non-occupancy charges, simple interest, all that stuff, late payment, etc., etc. So all these things are services provided by them, and it will be taxable in that 7,500. We have to consider them. But sir, if at all they are charging anything like property tax, water tax, all the stuff, if that is collected by Resident Welfare Association on behalf of the members, then the GST is not leviable. Okay. Next, GST is also not leviable on non-agriculture tax, electricity charges, which are collected under the statutes from individual flat owners, all the stuff. Next, if these charges are collected by society for generation of electricity by society's generator or to provide drinking water facility or any other services, then it will be liable to GST. That means government is government is providing electricity, water, all that stuff. For that, their government is collecting charges. Now that is collected by Resident Welfare Association from the members, it is not liable to GST because they are statutory dues. But sir, if they are providing the electricity from their own generators, or they are providing their own drinking water facility, all that stuff, then for that they are collecting consideration from their members, then it is liable to GST. So statutory due, not liable for GST, but this association itself is generating electricity or supplying water, collecting consideration, then it is taxable. Now there is a small clarification kind of thing here with respect to Resident Welfare Association, whether their services are exempt. As we have already discussed, sir, 7,500 per month per member is exempt. We have discussed. Sir, what if Resident Welfare Association is aggregate turnover is not exceeding the threshold limit? Then it will be like a non-taxable person, even though the maintenance charges are greater than 7,500 per person. Automatically, it will be what? Not liable for GST. Even though it is greater than 7,500 per month, no GST is there because Resident Welfare Association is not liable for registration. Okay, next, sir, whether they are entitled for ITC? Yes, obviously, any capital goods or input services, whatever they procure, they can take ITC if they are registered and they are liable to pay GST. Now they can take happily ITC, no issues. Sir, where a person is owning 2 flats or more than that, sir, then what is the limit, sir? No, sir, if he is holding 2 flats, each flat is a member in the association. So each flat wise, we have to see 7,500 limit, not put together. Okay. So the ceiling of 7,500 per month is applied separately for each residential apartment, not for entire how much he is paying. So these are related to that unincorporated body. Next, in continuation to that, again, unincorporated body or any non-profit entities which are registered, sir, if they are providing any activities relating to their welfare of the industrial or agriculture labor or farmers, or they are doing anything which is related to promotion of trade, commerce, industry, agriculture, arts, science, literature, culture, sports, education, social welfare, charitable activities, protection of environment. Just like we'll be seeing, no, there is Tamil Nadu Society of Auditors, Hindustan Chamber of Commerce. Like that, there are so many organizations and entities where they are providing their services to their own members, either in sharing the knowledge or protecting the environment or for social welfare or literature, etc. Whatever it is, there will be charging like membership fees. Sir, if that membership fees is less than or equal to 1000 per member per annum, then it is exempt. That means like very small organizations, small bodies or unions, associations they are talking about, where the consideration is less than or equal to 1000 per member per annum, then only exempt. If it is greater than 1000, fully taxable. That is what we are discussing here. Now if you see other services like tour operator services, the tour operator services where any person is providing services to a foreign tourist for the tour wholly conducted outside India, then it is exempt under GST. Sir, here the same way, if you see, sir, he is providing, the tour operator is providing services to a foreign tourist for the tour partly conducted in India, partly outside India, then proportionately we will give exemption. So what is the concept here, sir? For example, sir, 10 lakhs we are charging, sir, 6 days and 12 hours in India, Sri Lanka 3 days and 8 hours. Anywhere you are staying, if you understand, sir, anywhere you are staying greater than or equal to 12 hours, it will be treated as one full day. Greater than or equal to 12 hours, otherwise it will be treated as half day. So now as a tour operator I am charging 10 lakh rupees for in India 6 days and 12 hours. That means can I take 6.5 days? Sri Lanka 3 days and 8 hours they are staying, so 3.5 days. So total how many days? 10 days. For 10 days tour it is, sorry, 7 yes, it is 6 days and 12 hours. That means it is 7 days. This is 3.5 days. So total it is 10.5 days. Okay. So for 10.5 days you are charging 10 lakhs means, sir, what we should do? How much is the stay in Sri Lanka? That much you take exemption. 10 lakhs into 3.5 divided by 10.5. 3,33,333 rupees, or 50% of the total consideration, whichever is less, that will be the exemption amount. So I repeat, sir, if the tour operator is providing services to foreign tourists for a tour wholly conducted outside India, then for wholly conducted outside India, it is exempt. Partly in India, partly in outside India means proportionately to outside India stay, we have to take the exemption and compare it with 50% of the total consideration. Whichever is less, that will be exempt under GST. Okay. So the next one, you see small entries, all that. Here I'll just focus on important points. Taking national permit for the vehicles is exempt under GST. Next, transportation of goods by air from a place outside India to within India, first place of India, first customs airport of India, that is exempt under GST. Next, postal department services of postcard, inland letter, book post, ordinary post where the weight is less than 10 grams is exempt under GST. But speed post, express parcel post, all these things are taxable. Next, services by way of transferring the business as a going concern as a whole is exempt under GST. Next, any person renting the residential dwellings, we have already discussed it under RCM, is exempt under GST. There is one thing related to hostels also, we'll discuss in the next amendments point. Next, ISRO and Anthrax Corporation Limited and New Space India Limited providing satellite launch services are exempt under GST. Next, any person renting the vehicles to one second ma. Renting the vehicles which are meant to carry more than 12 passengers to state road transport undertaking. That means renting a bus to SCTC or APSRTC, like that, any state road transport undertaking, for them you are renting a bus, it is exempt under GST. Or you are renting any electrically operated vehicles which is meant to carry more than 12 passengers to local authorities, it is exempt under GST. Anything for transportation of goods, if you are renting it to GTA, that means renting a lorry to GTA is exempt under GST. Next, you are renting the vehicle to a person who is transporting the students, faculty, staff of a EI1, that is also exempt under GST. Okay, see here, for that we have an example for this point D, example 76. You can just look at this. This we have seen actually in RCM, renting residential property, all that stuff. So, and renting the residential property for commercial purpose is taxable, and renting the residential property for residential purpose is exempt. So here you can just pause the video and go through this example. Renting residential property to JK Shah classes to use it as a guest house or faculty, that is like a business purpose, taxable under RCM. But renting the residential property to CA Kapadia registered under GST to be used for his family residence exempt. The renting residential property to JK Shah classes registered under GST to be used as an admin office. That is also taxable under RCM. Okay, so that way. Next, coming to renting the vehicles. So renting the vehicles, as I told you, sir, we are talking about renting the bus. Renting the bus to whom you are renting? Sir, I'm renting the bus to a person who is transporting the students of EI1. Okay, then it is exempt under GST. That means imagine Rohit is transporting the students of EI1 Mumbai Indians English Medium High School. You know, this school is EI1 is purchasing transportation services, catering services. Do you remember security, cleaning, housekeeping services? All are exempt for EI1. So this is actually exempt under entry 66, which we have already discussed under educational services category. Now we are talking about for that fellow, whoever is transporting the students of EI1, for that fellow, if you are renting the bus, it is also exempt. Sir, no, sir, to any other person we are renting bus. For example, see, Dhoni is transporting the students of CSK, UG and PG college. Dhoni is not a person who is transporting the students of EI1. So, Dhoni cannot enjoy exemption here as per entry 66. To Dhoni, Mr. Pandya is providing bus on rent. Then also exemption is not there, it is taxable. So, just I am connecting the exemption here because this is exempt. They gave exemption here because this is taxable. They are saying this is also taxable. Okay, hope you are clear with this. 1 second, just I'll make the example clear for you. You can just pause the video and go through that for a second. So just go through this example. Hope it is clear for you. Now coming back. The toll charges are exempt under GST. Sir, not only toll charges, without FASTag you are traveling, they are collecting extra amount. That is also exempt under GST. Overloaded vehicles, we are charging some extra amount. That is also exempt under GST. Transmission of electricity or distribution of electricity, that is exempt under GST. Here there is a small amendment actually. So these services are now exempt under entry 25A. These are also exempt now. So not only transmission or distribution of electricity, but also the application fees or releasing connection of electricity, rental charges or metering equipment, testing equipment, labor charges for shifting the meter, service lines, are giving duplicate bills. For all these things, they are collecting consideration. That is now exempt under GST with the new entry 25A. Okay. Next, incubators providing their services. Incubators who are located in entrepreneurs located in the premises of a technology business incubator and science and technology entrepreneurship parks set up by National Science and Technology Entrepreneurship Development Board or the Department of Science and Technology, Government of India. There, the incubators who are doing their business there from that particular centers and providing services, sir, their services are exempt up to the turnover of any service whatever they provide up to the turnover of 50 lakhs is exempt. But there are two conditions. What are the two conditions, sir? The two conditions are the total turnover should not be exceeding 50 lakhs in the previous financial year, and 3 years should have not been lapsed. That means you can get this exemption only up to turnover of 50 lakhs and maximum that too for 3 years. After that you cannot claim that exemption. That means till your business picks up, they'll give you exemption. After that you are supposed to pay GST on your outward supplies. Next, you can go through this are bio incubators recognized by BERAC technology business incubators providing any service to any person, all that stuff exempt under GST. Independent journalist or press trust of India, United News of India providing and collecting news to any person is exempt under GST. Public libraries providing services of lending books and publications are exempt under GST. Event organizer for the business exhibition held fully outside India. If it is in inside India, taxable. So business exhibition fully held outside India, for that event organizer is providing services, that is exempt under GST. Next, the services of pre-conditioning, pre-cooling, ripening, waxing and retail packing and labeling of fruits and vegetables is also exempt under GST. Next, National Center for Cold Chain Development. So cold chain knowledge dissemination. So NCCD is providing services, that is exempt under GST. Foreign diplomatic mission in India providing services in their capacity. Example, US Embassy, exempt under GST. Next, providing information under RTA Act is exempt under GST. Next, individuals, the sports persons, they are providing their services as player, coach, referee, coach, umpire, team manager, all that stuff. So remember, retweet the cup is the code. Retweet the cup. So RT cup is the code. R for referee, team manager, coach, umpire, and player. In those capacities, if you are providing services to your recognized sporting body, then it is exempt. No, sir, I am providing services as a selector or a pitch curator, commentator, cheerleader, all these things. Then they are taxable. Then they are very much taxable. Hope it is clear for you. Sir, and one more thing is one recognized sporting body to another recognized sporting body, like Tamil Nadu Cricket Association to Hyderabad Cricket Association, Hyderabad Cricket Association to BCCI. All these things are taxable. Next, services by way of like providing these facilities of bathrooms, washrooms, lavatories, urinals, toilets. Also, we will be seeing no in bus stands or railway stations, etc. They are exempt under GST. And next, any person providing services to a governmental authority by way of water supply, public health, sanitation, conservancy, solid waste management, some improvement and upgradation, all these things are exempt under GST. So the new exemptions added and whatever there, the clarifications will be discussing. Right, continuing with the next chapter, exemptions. See, the amendments, see, there are some exemptions which are newly added, some exemptions which are clarified or modified, all the stuff. So we'll see first new entries under CGST Act, whatever the entries have been added. First of all, certain small things are there, not that greatly what difficult, etc., etc. Of course, you know, even if it is difficult, I will make it easy for you. The Ministry of Railways, that is Indian Railways, they are providing services by way of selling the platform tickets, facility of providing retiring rooms or waiting rooms in the stations, clock room services, or battery operated car services to travel in the platform. All that stuff you will be seeing. Sir, all these things. Further, they are charging some consideration, nominal consideration from the passengers, that is exempt under GST. So this is the first entry. Next, one zone or division of Indian Railways to another zone or division of Indian Railways. See, for example, there is South Central Railway. This is a zone. They are providing services to Southern Railways. This is another zone, exempt under GST. And again, in railways, there will be in this zone, within the zone, again, there will be divisions. For example, there is a division called Guntakal Division in Andhra Pradesh. They are providing services to Nanded Division in Maharashtra somewhere, I guess. So there is another division in railways. So one division to another division, one zone to another zone. For that, if they are providing any services, Indian Railways, it is exempt under GST. There is another one. Next, special purpose vehicles. Now please understand here, I will just tell you, I will simplify this for you. So special purpose vehicles, certain people, certain entities will get a contract from Indian Railways where they construct the infrastructure for Indian Railways. So for constructing the infrastructure, they will not get any consideration. They will maintain the infrastructure. From that, they will just generate a revenue, all the stuff by way of selling the platform tickets, etc., etc., whatever it is. So they will construct the railway stations or any infrastructure for that matter. During the concessionary period, that means maybe 15 years, 17 years kind of thing. So during that period, that infrastructure will be owned by that special purpose vehicle itself. Now, during that period, please understand, special purpose vehicle is the owner of that infrastructure. Indian Railways is using that infrastructure, right? So, for using the infrastructure, Indian Railways should pay consideration to special purpose vehicles. That means, I repeat, sir, special purpose vehicles are constructing infrastructure for railways. But during the concessionary period, that means for 15 to 17 years, the property will be in the name of special purpose vehicle only. So, special purpose vehicles are allowing Indian Railways to use that infrastructure. In return, as consideration, what they are paying some monetary consideration, as well as they are paying consideration in the form of maintenance of that particular railway station, as an example, or that infrastructure, whatever has been constructed by that SPV. So now please understand, special purpose vehicles are constructing infrastructure, allowing Indian Railways to use that infrastructure. But that in return, Indian Railways is paying some consideration, as well as taking care of the maintenance of that infrastructure, cleaning, etc., etc., whatever the maintenance they are taking care. Indian Railways. So Indian Railways is paying consideration in the form of consideration of like maybe monetary consideration, as well as maintenance of that infrastructure. This service is exempt under GS. Okay. So simple. What is that service here? Allowing Indian Railways to use the infrastructure built and owned by special purpose vehicles during the concession period, against the consideration of what? Against the consideration and services of maintenance supplied by Indian Railways to special purpose vehicles in relation to the said infrastructure, which is built and owned by SPVs during the concession period. Okay, so that is what the concept, that is exempt under GS. Now another interesting one, this is for you people, for students mainly. Okay, sir, any person providing accommodation services to any person, but here the point is the value of supply should be less than or equal to 20,000 per person, and very important thing is that the stay period should be minimum 90 days. That means it should be greater than or equal to 90 days stay, continuous stay of 90 days. For that, if you are paying the rent, then it is exempt under GST. That means we are talking about mainly here hostels or any PGs, whatever you call, paying guest houses, etc., etc. So to just bring a clarity in law with respect to this entry, in entry number 12 regarding renting of residential property for residential purpose is exempt under GST. In that, they have added a point saying that renting of residential properties exemption is not available to students in student residences or hostels, camps, paying guests, and the like areas. So you should come to 12A only, this entry only. Okay, hence exemption under 12A comes into play. So renting of residential premises for residential purpose is exempt, but that is not applicable for any places where students or working professionals, etc., etc., staying. So for you people, come to entry 12A, where I am giving exemption where you are paying your hostel fees, etc., etc., PG fees less than or equal to 20,000 per month na exempt under GST, but only condition is you should be staying there for minimum 90 days. That means your stay should be greater than or equal to 90 days and rent should be less than or equal to 20,000 per person per month. Then you can enjoy the exemption. So this is a good news for students and the benefit for students. That is what the next point. But the interesting part here is hostels, what they did, even though GST is exempted, they have compensated with by increasing the hostel rent so that students are not getting benefit. If you are not getting that benefit, you can just complain to GST department also by March 31st, taking anti-profiteering clause into picture. Okay, so fine, coming to the next one, sir. 25A. So if you see 25A, this is nothing but electricity transmission and distribution utilities. Sir, electricity transmission and distribution utilities, they are providing services by way of transmitting or distribution of electricity. If you see, there is an exemption for that. And earlier, if they are providing any metering equipments on rent, or if they are coming and testing the meters, transformers, capacitors, releasing electricity connection, if that has been kept on hold because you have not made the payment, all that stuff, and later on you made the payment and they are releasing the connection, labor charges for shifting the meters, service lines, or issuing the duplicate bills. Point number 5, issuing the duplicate bills, etc. All these things were earlier taxable. Now they made a new entry giving exemption to these things. So these are also exempt now. So please remember it. So electricity distribution, transmission and distribution utilities providing these services are now exempt under GST. Okay. So there is next entry. Coming to another entry. See, the next entry is generally any person, generally this will be seeing in PG colleges or PhD colleges where students are doing research, etc., etc. Sir, for the research and development, what they are doing, they will get consideration in the form of grants. Government entities or research association in the university, college, or other notified institutions, they will be providing grants to people for carrying out research and development services. Those grants are exempt under GST. Am I clear? That is what the point. So you are doing research and development for what? For the purpose of research and development. Yes, the government entity or any universities or colleges are providing you grants which are notified under section 35 subsection 1 clause 2 and 3 of Income Tax Act. Sir, the consideration is paid in the form of grants, that is exempt under GST because you are doing research and development. So that is what the case. Here recipient is technically speaking not applicable, that situation will not come. Next, entry 66A, a new one. If you see in educational services, they have added central and state educational boards or councils or any other similar bodies providing services by way of affiliation. Understand here, this is only for the schools, not for colleges. So services of providing any affiliation for any schools which are established or owned or controlled by central government, state government, union territory, local authority, or governmental authority or government entity, not even for private people. For government, simple words, for government schools, if we are providing any affiliation services, who are providing this CBSE or state boards, if they are providing any affiliation services, then it is exempt under GST, for which they are charging a consideration. It is exempt under GST. And there are various clarifications also added in this educational sector where I am discussing them here itself. Okay, see, EGCA is approving flying training organizations and flying training courses, and after course is completed, the certificates are successfully granted to the students in accordance with the Aircraft Act 1934. Of course, now they are replacing this act with a new act. That's a different story, let us not worry about that. So this flying training courses, whatever are provided, if you understand, by FTOs, that is flying training organizations, are nothing but the educational services which are provided as part of curriculum which is to obtain a recognized qualification by Indian law. So they have clarified that the services provided by these people are exempt under GST. Okay. So if they are provided by the education institution, yes, because as they are provided by the education institution for obtaining a qualification recognized by the law. So as we have discussed this. Next, it is clarified by CBIC that affiliation services by central government, state government educational boards are not covered within the ambit of exemptions provided to educational institutions, hence they are taxable. Same services to government schools are exempt. Just now we have discussed, sir, affiliation services provided by CBSE, state boards, etc., to schools are not covered within the ambit of exemption provided to educational institutions, hence taxable. Same service. See, that means I can say this affiliation services provided to government schools, they are exempt, but if they are provided to others, obviously taxable. That's all simple. Okay, so that is what the concept. Next, again, the affiliation services provided by universities to their constituent colleges are also not covered within the ambit of these exemptions, hence that is also taxable. Sometimes like you will be seeing on college buses, etc., affiliated to so and so university, like that. So for that, affiliation provided by universities, here it is not CBSE or state boards, and it is not government schools. Affiliation services provided by central or state boards or the related things to government schools only exempt, not any other things. Government schools in the sense, as I told you, that the school should be owned or established or controlled by central government, state government, union territory, local authority, governmental authority, or government entity. Hope it is clear for you. So, sir, you are talking about affiliation here. See, now the point is the affiliation activity monitors institutions' infrastructure, technical prowess, financial liquidity, faculty strength to ensure it can conduct courses for students enrolled in a university degree or title. However, these services are not related to student admission or examination conducted by the institution, hence they are not enjoying the exemption. Simple. They give just what through affiliation universities or these boards will do. They will monitor the infrastructure or the faculty strength, etc., how the college is, whether they are able to deliver the they are able to deliver the courses or not. All that stuff they will be monitoring. Okay, fine. So we have understood affiliation exempt only if it is by central board or state board or other similar boards to government schools. That's all. Any all other cases it is taxable. Okay, so that is what with respect to new entries under PGST Act. Now the changes in existing entries, if you see earlier in this entry number 69, sir, there was NSDC and Sector Skill Council SSC, but here now they have just brought in place of Sector Skill Council, they have brought in this National Council for Vocational Education and Training. So apart from that, everything the entry is same. So is the services of any service in relation to national skill development programs or any vocational skill development programs which are implemented by NSDC or here which are under National Skill Certification and Monetary Reward Scheme. So just government scheme names, just remember that. So that's all those schemes. Next, National Skill Qualification Framework aligned with qualification or skill in respect of NCVET has approved the qualification program, all these things. So here the new thing is NCVET has been added. And next one, sir, any awarding body recognized by NCVET, the assessment agency services which are recognized by NCVET, training bodies accredited with an awarding body that is recognized by NCVET. So all these things are nothing but related to some skill development or training programs where National Skill Development Corporation or National Council Vocational Educational Training is coming into picture, or the awarding bodies which are granting the awards are assessing the performance of the people who got trained, or the training bodies which are approved. These people providing services are nothing but exempt under GST. So that is the change here. In place of Sector Skill Council, they have added this NCVET, they brought into picture. Okay. Next, what is the next one? The another small change is nothing but there is an entry where the training providers, if at all I am providing training to any students, for that I am getting consideration. Okay, under Deen Dayal Upadhyaya Gramina Kaushalya Yojana under Ministry of Rural Development. So for this scheme earlier there was a skill or occasional courses, like that it was there. Now they have just added the word education and training programs. So skill or occasional educational training programs are exempt under GST but provided under that particular scheme, Deen Dayal Upadhyaya Gramina Kaushalya Yojana. Okay, so that is exempt. So these are the changes in existing entries. Sir, now with respect to IGST related entries, this is the only entry which is important, and there are some amended entries also there that we will see. So now first, sir, what is this exemption all about, sir? What is this clumsy way you have written so much here, all that stuff? So listen, sir, this is all about importing a service. Importing a service. Please understand, if you are importing any service, and you are a central government, state government, union territory, local authority, or an even government authority, government entity, sir, or an individual for any purpose other than commerce, industry, or business or profession, then any service is exempt. I repeat, so simple. Look at this. Look at this. A person outside India is providing services to central government, state government, union territory, local authority, or a governmental authority, or an individual. Any service for any purpose other than business, then it is exempt under GST. Okay. Now, other than OIDR, other than first, and one more thing, sir, for section 12A entity, sir, any service what they are provided for providing charitable activities, then it is exempt. For government, government authority, for individuals, for other than business purpose, exempt. But for section 12A entities, for charitable activities purpose they are importing service, then it is exempt. Next, sir, person located outside India providing services to another person located outside India, then any service is exempt. Person located outside India to any person located outside India is exempt under GST. Next, sir, this exemption is there no here? This exemption we have discussed. This exemption, like any service exempt for these people, is exempt. We have discussed no any service, but OIDR services are taxable. It means Netflix is located outside India. Imagine providing services to a person in India. He is not taking Netflix for business purpose, but he cannot enjoy exemption. It is taxable. So, other than business purpose and for specified charitable activities, we have discussed for charitable activities, we have discussed exemption is there. But even though for charitable activities or even though for other than business, if it is OIDR service, it is taxable. Okay, fine. So that is the point. Next, sir, supplying online periodicals or journals to educational institution, E82, do you remember? For them from a person located outside India, that is also exempt under GST. For this, I have given a comprehensive example here. Look at this. They're covering all the scenarios. Captain America from USA providing some OIDR services to Mr. Hanuman, India, registered. But this is OIDR service, so it is taxable. And if you see taxable under RCM, if you remember RCM, actually, whatever we have discussed. Next, Captain America USA providing designing the new parliament building to central government, India. This is not business purpose for India, so exempt. Sir, Captain America from USA providing technical support services for an IT project to Infosys Bengaluru, registered, taxable. Sir, Captain America providing design of his residential villa for Mr. Vishnu. This is other than business purpose, so exempt. Sir, Captain America is providing online data storage to Mr. Tony Stark, a person in India, unregistered person. This is also taxable. We just now discussed no online OIDR services are taxable. That's all, for whatever the purpose. So that is what the concept with respect to that entry. Okay. So the new entry under IGST is nothing but if a foreign airline company is located in India and if it is importing services from its related person or other establishment located outside India without consideration. You know section 7 subsection 1 clause C read along with schedule 1 para 3, there it is a point like importation of services without consideration from related person or own establishment located outside India is supply, even though it is done without consideration. But if it is a foreign airline company importing services from their related person located outside India, then that is exempt under GST provided certain conditions are being fulfilled. What is the first condition? So the first condition is that foreign airline company should be there in India providing some services of transporting the goods and passengers and paying GST. So that means in India this foreign airline company is a taxpayer. Simple. Next, number 2, the Ministry of Civil Aviation is also confirming that yes, this is a foreign airline company which has come to India under bilateral air service agreement with that foreign company. Like that, Ministry of Civil Aviation also should confirm. Okay, so that is the next one. And what is the next condition? The last condition is nothing but, sir, Ministry of Civil Aviation is also confirming that Indian Airlines in that particular foreign company is also not being subjected to taxes for the similar transactions. That means nothing but, for example, sir, any UK airline company is in India operating and getting this benefit. In UK, Indian airline company also should be getting the same benefit. That means it is like give and take policy between the governments. Like you also give relaxation for our airlines in your country, we will also will give relaxation to your airlines in our country. Okay, so that is what the concept. So this is the new entry added under IGST Act. So now if you see, there are important clarifications, sir. If you look at the important clarifications here, sir, important clarifications regarding Anganwadi schools we have already discussed. So we have seen this Anganwadi service already. Anganwadi is a preschool, and catering services provided to them is also exempt under GST, no matter the grants are given by corporates or NGOs, all that we have discussed. Next, sir, is there any GST applicable on the eligibility certificate or migration certificates charged by education institutions to their students? These certificates are provided by education institutions to their students. You know, any student, any service provided to student is exempt under GST by the education institutions. Next, transporting the minerals within a mining area. So from mining area to this one not relevant, that we just you go through once, not worth enough discussing. GST honorarium paid to guest tankers, we have discussed, it is taxable only. Next, sir, IVF treatment, sir. Yes, in healthcare services we see IVF treatment is taxable or exempt, was a doubt. IVF treatment is also treatment related to pregnancy, which is covered within the definition of healthcare service, so that is exempt under GST. Next, selling the land after leveling the land, that also we have already discussed in supply chapter. After leveling the land, also land is a land, immovable property, it is neither SOG nor SOS, but services like leveling the land or laying the drainage lines, all that stuff, that will attract GST. Next, this non-AC contract carriages by firms for transportation of their employees to and fro from the work, is it exempt under GST, is the doubt. Sir, there they have clarified, it is like, suppose if it is transportation done in predetermined route and predetermined schedule, then it is transportation service, it is exempt under GST. No sir, the vehicle is completely will be at the disposal of the company, they can use whenever they want, all the stuff. That means you are renting the vehicle there, exemption is not available. Exemption is available only when you transport the passengers, but transporting the passengers means it will be done at predetermined route and predetermined schedule, correct? So if that is the case, it is exempt, otherwise is taxable. Next, sir, we have seen between places located in India through waterways, vessel, all that stuff. So it is exempt under GST. There they have used the word public transport. So public transport between places located in India in a vessel, excluding tourism purpose, we discussed no Chennai to Andaman, all that example. So there the doubt was, public transport means is it operated by government? Private ferry operators, can we take exemption or not? A public transport means something which is predominantly for the purpose of general public, which is open to general public. It doesn't mean that public transport means operated by government, so it is not that way, so it is exempt, no matter it is operated by private people, all that. Next, accommodation services provided by Air Force mess to their personnel. Sir, Air Force mess, Navy mess, paramilitary mess, all these people are providing services to their personnel. Sir, they are not any business entities, so they can enjoy exemption. Only services provided by government to business entities we have seen taxable, correct? So these are the clarifications. Some other clarifications through amendments, all that stuff happened, that we will finish off in this video. Next one is with respect to clarification of statutory dues collected by RERA. Please understand, actually in entry number 4, any governmental authority providing services which are in relation to Article 243 W and G entrusted to Panchayat and municipality, all that, so that is exempt under GST as per entry 4. Now the doubt was whether this RERA is a governmental authority, because they are also collecting some statutory dues and further they are getting some consideration. Is that exempt under GST? Then the department has clarified, RERA is very much within the meaning of governmental authority, and hence the services provided by them by way of collecting the statutory dues is exempt under GST, as it is falling within the entry number 4. So the next one is related to the clarification, the loan granted by related person or overseas affiliates to an Indian entity. See, generally when banks or financial institutions or NBFCs are giving loans to any lenders, the borrowers, okay, to the borrowers, sorry, right? So when they are granting the loan, just to understand the credit capacity, the repayment capacity of the borrower, what they'll do, they will just process the application, all that stuff, etc, etc. So they will charge, after issuing the loan, they will charge loan processing fees, documentation charges, etc, etc, and generally they are taxable. You know, interest on loan is exempt except credit card interest, but the loan processing fees, documentation charges, all these things are taxable. So here the doubt is, sir, when related person or overseas affiliate is providing loan to the Indian entities, sir, because they know each other, they are related person, or my own foreign affiliate is there or foreign entity is there in abroad, and they are granting loan to me, and I will be repaying to them. We understand whether there will be a situation where they will assess my repayment capacity or my credit analysis, all that stuff they will do. So all these documentation charges, loan processing, etc., will not come into picture here, so they will not charge it. Now the doubt is, sir, should it be considered as supply without consideration? Loan processing fees is not charged. That means it is free. So supply without consideration. So schedule 1, para 2 and 4, can I trigger and can I charge GST on this? Like that the doubt was there. So please understand, these related persons will not charge processing fees from the other fellow because they know about them everything. So there won't be such processing activity or administration things which makes them to charge consideration. So you cannot treat both the transactions as same. They are not standing on equal footing, and the department has clarified. So this is not something same like other financial institution lending loans to the borrowers, all the stuff. So processing fees will not be charged, and it need not be charged also. Here you cannot bring schedule 1 into picture. You cannot call it as supply. It cannot be treated as supply. So not treated as a supply. So this is not a supply. So hence no GST. That is what the concept, right? So this is the next clarification. So the notes is clearly given here. You can just go through this. The next one is regarding a small one, reinsurance. See, actually, reinsurance services provided with respect to life and health insurance services, which are, sorry, not life and health insurance, life and general insurance services with specified schemes in entry number 35, 36 and 40. If you see, there is an entry where entry 36A, reinsurance is also covered. So reinsurance, if you provide also, that is exempt with respect to the specified life insurance and other general insurances. So here reinsurance word includes retrocession. So that is what the one clarification, nothing that greatly relevant. Yes, you can just remember that word, reinsurance includes retrocession, that is more than sufficient. Now if you see there is a department, government department called Central Public Works Department, which will be developing and maintaining the public parks in government residential colonies, government offices and other public areas. And they are also regarding maintaining their duties also, like regarding this community assets, urban forestry and protection of environment, promotion of ecological aspects, all these things. These are generally functions entrusted under Article 243G and 243W. So regarding this activity, see, this is nothing but an activity which is covered under Article 243G or W. So for this, government is providing various services. Sir, not only government providing services here, for government to government. That means, for example, sir, maintenance of parks, etc., etc., or see the horticulture works, etc. These things are outsourced by this CPWD, the department, to outsiders, the private people. So they are providing either pure service or composite supply, where you know that 75-25 ratio, 75% service and 25% worth goods can be supplied, all that. So in such way, if anybody is providing services by way of even horticulture and horticulture works to CPWD, sir, these are also nothing but covered under very much entry number 3 and 3A. So it is exempt under GST. So in short, any private person, sir, what they are doing, they are providing services to CPWD. What is the service? Services with respect to horticulture and the other works, horticulture and related works. So there, because it is covered under 243W and 243G, such activities, if you are providing to government departments, all that stuff, so government is exempt under GST. So this is exempt. So simple. If you remember, we have discussed in exemptions also maintenance of street lights, all that, such type of services we are providing to government, all that. So here the clarification is regarding, sir, Central Public Works Department is outsourcing a work where people are providing services by way of doing this horticulture or horticulture related works to CPWD, is exempt under GST. Okay, right. So that is what next clarification. The another clarification is with respect to DMFT. So DMFT is nothing but District Mineral Foundation Trust. So this trust generally is for the purpose of, sir, this is set up normally because of the mining, etc., etc., the people who are living in the surrounding areas, for their welfare. So for the benefit of persons and the areas affected due to mining related operations, so DMFT has been set up. Their main responsibility is to take care of providing drinking water, and environment protection, healthcare facilities, education, welfare of women and children over there, and supply of medical equipment. Sir, this has been set up by state governments. These are being set up by state governments, hence they are called as governmental authorities. Okay. So whatever the exemptions available for every governmental authority, the same things are also available to these people also. The same eligible for same exemptions which are available to any other governmental authority. Okay. So any services or supplies made normally through this DMF fund, see, they are providing this without consideration. They have the funds. The funds may be provided by the government, all that stuff. So they have the funds and they are providing services from those funds, or they are providing some supplies out of those funds. For that, they are not charging any consideration from the beneficiaries. So they are not at all supply. Okay, so that is another point. So whatever the supplies they are providing is not for any consideration from the beneficiaries. So whatever they are supplying is not a supply. Second thing, sir, they should be treated as governmental authority for the purpose of this GST. Whatever exemptions available, wherever the exemptions available for governmental authority, the same exemptions are also available for this particular people. Okay, so that is what the next clarification all about. So guys, I hope you have enjoyed this lecture, and exemptions very easy and important chapter. Questions also will be easy only. So go through this video and hope this video was helpful for you. See you all in another video with another chapter. Enjoy your reading and enjoy your preparation. Wishing you all the best. So see you all in another video. This is your Mr. GST signing off. Jai Hind.
Next, if you see, the amendments are in exemptions, not that major amendments, nothing to worry. See, entry 25A and entry 16A, small change in that. So nothing but, supply of services by providing metering equipments on rent, testing the meters or transformers or capacities, all these things are provided by this electricity distribution utilities. So they said provided by electricity transmission, instead of and they have made the word or, distribution utilities to their consumers. Okay, instead of just using the words and, here they are using the word or. Okay, that is the only difference. Apart from that, nothing else. So a small change there, because I have to show the change that I have given here in the amendments. Apart from that, a very small change. So this is nothing but services provided by electricity transmission or distribution utilities to their consumers. What type of services they are providing, sir? They are providing metering equipments on rent, or they are providing testing for meters or transformers or capacitors, or releasing the electricity connection, or shifting the meters or service lines, or issuing the duplicate bills. All these things are what? Nothing but incidental services these electricity transmission or distribution utilities will do to their customers. So earlier they were using the word and, now they have made it or. That's all. Apart from that, nothing major change. So nothing to worry. And one more thing, if you see entry number 69 here also, sir, earlier the services provided by National Skill Development Corporation, NSDC, or National Skill Vocational Educational Training, NCVET, NSDC. Sir, these people providing the training, all these things, sir, this were already the previous entries. The new word added here, the new line added here. Sorry, a training partner approved by NSDC in relation to National Skill Development Program or other schemes implemented by National Skill Development Corporation, NSD, or vocational skill development courses, all these things. That means training partner, simple training partner approved by NSDC providing these services of training, okay, is exempt under GST. Only this one is the newly added one line. Apart from that, the entry remains the same. And one more thing, new exemption is there, entry 36B. So what is this entry 36B? If you see, so the next one, if you see the clarification regarding this, what is this clarification all about? Now this is all about, sir, Municipal Corporation of Delhi. Municipal Corporation of Delhi, what it is doing? Now, it is receiving various services such as housekeeping, civil maintenance, furniture maintenance, and horticulture from Facility Management Agency. Now, the point is that there is something called entry 3A in exemptions, which says any person providing services which are entrusted to panchayat or municipalities under Article 243G or 243W provided to central government, state government, union territory, local authority, government authority, or government department, it is exempt under GST. Any person providing services entrusted to panchayat municipality under 243W, 243G to government or governmental authority, government department, local authority, all that exempt under GST. Now the doubt is, can this municipal corporation of Delhi can claim this exemption? What's the doubt? Can claim exemption of the services provided by this facility management agency? Was the doubt? Understand, this municipal corporation of Delhi is taking the services of housekeeping, civil maintenance, furniture maintenance, horticulture, all these things. These services are not something which are entrusted to municipality or panchayats. They will not come under entry 3A. So it is very much taxable. That is what the clarification here. So the services provided by this facility management, such as housekeeping, civil maintenance, furniture maintenance, all are not supplied in relation to performing any functions entrusted to municipality. Okay. So they cannot claim exemption under entry 3A. So they are very much taxable under GST. That is what the clarification. Right. The next one is nothing but a clarification actually. This clarification is based on, if you remember in exemptions, we have seen something like acquiring bank settling the amount where the transaction value like settlement is less than or equal to 2000 rupees up to 2000 rupees in single transaction routed through credit card, debit card, charge card, all these things, where the acquiring bank is charging commission, all that exempt under GST, all this you have seen if you remember. So simple here, when you are swiping the card, your acquiring bank is settling amount up to 2000 rupees in single transaction. For that, the acquiring bank will charge commission from the merchant. That means whatever you are swiping the card and you are settling, the merchant will get the amount only after getting the commission deducted. So this acquiring banks will charge commission. When the acquiring bank is charging commission, see, even if it is up to 2000 rupees also commission is there, even if it is greater than 2000 also commission is there. The only thing is, if the settlement each transaction is less than or equal to 2000 rupees, that commission will not attract GST. That means commission is there, but GST is not there. If it is greater than 2000, commission is there and GST also is there on the commission. Okay, that is the exemption entry. Hope you remember that. Now, the doubt is, sir, whether this exemption is available only for acquiring banks or even payment aggregators. So, whether this exemption under 34 is available to RBI regulated payment aggregators? The answer is yes. The exemption is limited to payment settlement function only. So, this is available to payment aggregators, but this is not available to payment gateway services. First of all, sir, what do you mean by payment aggregators, payment gateway? Please understand. First, let us understand the technical differences here. See, there are two things. One is payment gateway, the other is payment aggregator. Payment aggregator means, sir, payment aggregator, what he will do now, from the merchants, sir, he will collect and settles payments for the merchants. So the unique feature of payment aggregator is, payment aggregators, first of all, understand they are regulated and you need RBI license to be a payment aggregator. So for example, you are doing some shopping. So when you are doing some shopping, when you are making the payment to that particular merchant, payment aggregator who is in middle between you and the merchant will collect that payment and keep it in a separate account. So that is nothing but escrow account which is approved by RBI. So he will maintain that in a separate account. So the funds are maintained in a separate account. Here merchant onboarding, settlement. Okay. So here payment aggregator, the important thing is funds are kept in a separate account, in a separate account, separate escrow account approved by the RBI. And later on, from that account, they will settle the amount to the merchant. That means these people, payment aggregators, will not collect the consideration from the customers to their own accounts. They will take it to a separate account and they will settle that in T plus 1 or T plus 2, T plus 3 days, whatever it is. So they will settle accordingly. But payment gateway, the difference with payment gateway is, payment gateway, they will purely, what they will do, they will give tech related support to the merchant and the customer. Not only to the merchant and customer, sir, they will do their service to the acquiring bank or any payment aggregator in middle and the merchants. So they will make sure the payment is routed securely. So whatever the data flowing, the card details, the OTP, pins, everything, all these details are flowing smoothly and securely. That responsibility is with payment gateway. That means payment gateway, who is operating payment gateway, that fellow will not collect your money. Please understand that that fellow will not collect the money of the merchant and keep it in a separate account and settle later. That will be like immediately, instantly going on. But the point is, sir, he will take care of only the data transmission securely. Okay, so that way payment gateways. So payment aggregators means what? Payment aggregators is nothing but who collects the money for the merchants and keep that in a separate account, and they will settle that on periodical basis, the T1 or T3 basis, whatever it is. Okay, that is what payment aggregators. So payment aggregators are very much within the meaning of acquiring banks, very much within the meaning of acquiring banks. So for these people, payment aggregators, please understand, as I told, maintains merchants money in a separate escrow account. So payment aggregators are equal to nothing but acquiring bank, so they can enjoy exemption. So exemption available, that 2000 rupees limit exemption is there, no, that exemption available. Okay, but whereas payment gateways, they are not like that, sir. For them this exemption is not available. Okay, that is what the point. If you take example in India, sir, what are the payment gateways? There is Razor payment gateway API, Razor Pay. Sir, Razor Pay payment gateway is also there. Razor Pay payment aggregator is also there. Same way, PayU India is a payment aggregator. PayU gateway is there. PayU, some gateway is there, that name also I forgot. For PayU also, PayU settlements, there is a gateway. BillDesk is a gateway. Okay, like this. So payment gateways are there, payment aggregators are there. Some payment aggregators are also maintaining the payment gateways. Okay, so there is difference between payment aggregators and payment gateways. This exemption of 2000 rupees settlement and on that commission is there, but GST is not there. That exemption is available only for payment aggregators. Hope you are clear with this. Okay, so this is the another clarification.
Hello CA Final students, this is your Mr. GST CA Vishnuvardhan, and this is a quick revision video about the chapter time of supply. So quickly let us finish this chapter. So you know the overview of this chapter is nothing but, so we are going to see time of supply in 3 sections, section 12, 13 and 14 of CGST Act 2017. So to understand better section 12, 13, 14, see, first of all we should understand section 31, that is nothing but time limit to issue the invoice. So section 12 deals with time of supply for goods, section 13 deals with time of supply for services, and section 14 deals with time of supply if there is change in effective rate of tax. So we'll be discussing section 31, 12, 13 and 14 in this particular video. Coming to section 31. So coming to section 31, time limit to raise tax invoice. See, we are dividing that into two parts, goods and services. First we'll discuss time limit to raise tax invoice for goods as per section 31, and then we'll go with section 12, time of supply for goods, right? So as per section 31, time limit to raise tax invoice for goods. See, there are three situations here. First thing is, we should check, actually speaking, four situations. Sir, first what we have to see, whether movement of goods is involved or not. Sir, if the movement of goods is involved, first of all, don't worry about this material. You can download this from the Telegram channel, the soft copy of the classroom. So of the class note, sorry. So that is available in the description in the video, right? Coming to the discussion, supply. Supply is involving movement of goods, that we have to check. If the movement of goods is involved in the supply, then what we have to do, we should raise the invoice on or before removal of such goods. No sir, movement is not involved. Movement is not involved in any other case, on or before making the goods available to the customer or the delivery to the customer, you should raise the tax invoice. That means, see, for example, I am selling 10,000 kg raw material to you, and that 10,000 kg raw material I am sending it from Tirupati to Chennai. Then the movement of goods is involved. Sir, in such cases, what I have to do? Simple, on or before removal. On or before removal from my godown, I should raise the tax invoice to you. And if there is movement not involved, for example, you are going to a mobile shop purchasing a mobile, sir, at the time of making the goods available to you, that shopkeeper has to raise the invoice for you. So on or before making the goods available to the customer or delivery. Okay, so that is the time limit to raise invoice. Now the different case is, sir, what if it is a continuous supply of goods? Sir, continuous supply of goods is nothing but a recurring transactions where you take the periodical transactions. It is not like a one-time transaction. So as per the contract, there are periodical transactions involved. In such case, see, for example, now I am going to supply to you particular goods for 6 months, and every month on first Monday I will be delivering you 10,000 kg raw material at 50 rupees rate. So that is a contract between you and me. Now in this case, when there is continuous supply of goods, please understand, when there is continuous supply of goods, sir, what is the time limit to raise tax invoice? On or before issuance of periodical statement, or on or before receipt of periodical payments. That means I will issue, there can be a case where I am issuing periodical statements to you, and based on that statements you will release the payment, or you know the details of what and all the goods are received at what time, and you keep on making the periodical payments, whatever the case may be, as per our agreed terms. If at all I am issuing the periodical statement and you are making the payment, then sir, on or before issue of periodical statement, I should also raise the invoice. Otherwise, sir, if our situation is like you are settling the periodical payments, sir, on or before me receiving periodical payment from you, I should make the payment, I should raise the invoice for you. So simple here, if it is continuous supply of goods, sir, if it is continuous supply of goods, on or before issuance of periodical statement by the supplier, or receipt of periodical payments from the recipient, supplier has to raise the invoice. So that is what the concept. As the case may be here, it is not whichever is earlier in the law. So it is not whichever is earlier. But here next case, if you see goods sent for sale on approval basis, goods sent for sale on approval basis. If you send goods to anybody for sale on approval basis, please understand the law says, please bring back the goods within 6 months or raise the invoice. Sir, within 1 week only has accepted the goods, sir. Then at the time of acceptance, please raise the invoice. So what is the time limit to raise invoice for goods sent for sale on approval basis? Na? Sir, on at the time of acceptance, at the time of supply. At the time of supply means at the time of acceptance, or within 6 months from the date of removal from the godown, whichever is earlier. Okay, so within that time I should raise the invoice. This is section 31 part 1 related to goods. Section 31 part 2 will discuss after section 12 is discussed. Now coming to section 12. Coming to section 12. So section 12 says the time of supply of goods. Please understand section 12 and 13. You know already. So section 12 and 13 both are talking about time of supply of goods, time of supply of service, and both the sections has six subsections. Subsection 1 in both the cases says go with the following subsections. Subsection 2 talks about general rules. Subsection 3 talk about RCM goods and RCM services. What is the time of supply? Subsection 4 talks about time of supply for vouchers. Subsection 5 residual case. Subsection 6 interest or late fee for delay in payment of consideration. So here the interesting thing is, sir, subsection 3, 4, 5, 6. All these three subsections are ditto same in 12 and subsection 3. Section 12 subsection 3 and 13 subsection 3, except for the words goods and services. Clear? So if you know 12 subsection 4, 5, 6, same provisions are for 13 subsection 4, 5, 6. Whatever are applicable for goods, same thing are applicable for subsection 13 services also. So now first let us go with 12 subsection 2. 12 subsection 2 general rule, time of supply for goods. Sir, what is 12 subsection 2 says? 12 subsection 2 I will tell you a very simplified way, please understand. The 12 subsection 2 says, after taking into consideration a notification also, notification number 66/2017, sir, actually time of supply provisions as per section 12 subsection 2 is actual date of invoice or due date of invoice, that is date of invoice as per section 31, whatever you have to raise, or date of payment, whichever is earlier. Later on, government through notification number 66/2017, they have exempted that. So taking all these things into consideration, you just remember 12 subsection 2, sir, it is time of supply is actually when you are raising the invoice, or at what time you should have raised the invoice under section 31. In simple terms, I call it as actual date of invoice or date of invoice. That means ADOI or DDOI, whichever is earlier. Just remember that way. 12 subsection 2 says ADOI or DDOI, whichever is earlier. Actual date of invoice or due date of invoice. Clear? Now another interesting thing is, recently because of this specified actionable claims concept what we have seen, sir, you know specified actionable claims also nothing but goods. And for specified actionable claims, GST is applicable, and the time of supply for that is not ADOI or DDOI, whichever is earlier, sir, it is date of payment. That means immediately taxable. That means, you know, specified actionable claims actually we have discussed in supply chapter also: lottery, betting, gambling, casinos, online money gaming, and horse racing. For these cases, so in simple words, I can say that section 12 subsection 2 task for goods. Sir, I will divide that into two cases. If it is specified actionable claims, straight away date of payment. If it is other goods, ADOI or DDOI, whichever is earlier. Okay, so that is 12 subsection 2. Here the interesting part, you should know, advances received in case of supply of goods are not taxable, unlike in 13 subsection 2. For services, advances received are immediately taxable, but for goods it is not that case. Hope you remember that provision. Okay, again in 13 subsection 2 also we'll see that. So if you go through this example, sir, there is 10 lakh consideration for the machine to be assembled, all that stuff. So we have given all the details. You can just go through a simple one only, nothing to discuss here. So what I am just stressing here in this point is nothing but even though advance received, it is not immediately taxable. So that point we have to keep in mind. So for advance also ADOI or DDI whichever is earlier. For the balance payment also you have to apply ADOI or DDI whichever is earlier. So ADOI they will give in the question, sir, what is the actual date of invoice? 11th October, like that. But what is the due date of raising the invoice? That you will understand only by referring section 31. Okay. So here this is a machine which has to be assembled at site and accepted by buyer. So in that case, sir, the movement of goods is not involved. Sir, the goods are being handed over to the customer on 5th October. So that is the date of invoice on that is the date on which invoice should have been raised under section 31. So that is due date and actual date is 11th October. So which is earlier? 5th October is earlier. So that will be the time of supply. That will be time of supply for the 55,000 advance also, as well as 9,45,000 balance payment also. Clear? So that is 12 subsection 2 for you. Next one, coming to 12 subsection 3. Simple. 12 subsection 3 is with respect to time of supply for goods covered under reverse charge mechanism. 12 subsection 3, remember 3 dates. See, the 3 dates will be time of supply for goods covered under RCM. 3 dates will be date of receipt of goods, date of payment, 31st day from actual date of invoice, not due date of invoice, actual date of invoice. Clear? So here, first of all, before going into this provision, I will tell you one thing. See, whenever you are talking about in time of supply, a concept called date of payment. Remember, date of payment we should see from two different angles. Whether date of payment, if the time of supply provision you are seeing, who is liable to pay GST? Sir, if supplier is liable to pay GST, date of payment meaning you should see from supplier point of view. Sir, if recipient is liable to pay GST, you should see date of payment meaning from recipient point of view. Hope it is clear for you. See, sir, okay, sir, I will see that from their point of view. But what is date of payment meaning? Date of payment meaning is, sir, if you see from supplier point of view or recipient point of view, I repeat, date of payment is nothing but date of entry in books, date of debit or credit in the bank account. Suppose if you are seeing it from supplier's viewpoint, date of payment meaning. Date of payment means date of entry in the books of supplier's books of accounts, date of entry in the supplier's books of accounts, or date of credit in the supplier's bank account, whichever is earlier. But if you are seeing from recipient point of view, date of payment means date of entry in the recipient books of accounts or date of debit in the recipient bank account, whichever is earlier, as the case may be. So recipient's view, it will be useful for you in section 12 subsection 3 and 13 subsection 3, because in those cases recipient is liable to pay GST. So time of supply provisions will be seeing from recipient's point of view, not from the supplier's point of view. Okay, now hope it is clear for you. Coming to 12 subsection 3 again, sir, what is the provision? What is the provision? 12 subsection 3 says, time of supply for goods covered under RCM, date of receipt of goods, date of payment, and 31st day from actual date of invoice. I repeat again, it is not due date of invoice. And here, sir, when we are talking about date of payment, sometimes in the question they'll give you date of entry also, date of credit or debit, whatever it is. Sometimes they'll just give date of payment. So if they give date of entry as well as date of debit or credit, compare those dates with these dates also and see whichever is earlier. Otherwise, date of payment alone might be given. So please take care of that. That's all. Okay. So that is 12 subsection 3. Okay. One is the relief of not paying tax on the time of receipt of advance for goods is there in only 12 subsection 2. Here in 12 subsection 3, that relaxation is not there. That means if the goods are covered under reverse charge mechanism, sir, GST will be payable by the recipient. That means when the recipient is giving advance to the supplier, at the same time he should also pay GST to the government. And of course he can take ITC, that's a different story. Okay. So now the point is, I am repeating, sir, this is important point. What it is? The relaxation to not pay GST on advances of goods is only under section 12 subsection 2, not under 12 subsection 3. Okay, so in 12 subsection 3, if the goods are covered under RCM, if advance is paid to the supplier, then recipient will pay advance to the supplier and will pay GST to the government, because date of payment will be earlier here. Okay, so please keep that in mind. And next, by any chance, if you see, this is a similar provision which you will find even under section 13 subsection 2 and subsection 3 also. Sir, by any chance, if you are not able to identify time of supply as per the provisions given in 12 subsection 3, then the time of supply will be the date of entry of receipt of goods in the books of the recipient. So when the recipient has recorded in his books about the entry of the goods, that will be about the receipt of the goods, that will be the time of supply. In any circumstance, by any chance, to cover the exceptional cases here, sir, If time of supply cannot be identified because of the 12 subsection 3 provisions, then what will be the time of supply? Time of supply will be nothing but when the recipient has entered in his books of accounts regarding the receipt of goods, that will be the time of supply. Okay, so that is 12 subsection 3 for you. So 12 subsection 4 nothing but time of supply in case of vouchers. So whenever the vouchers are given, sir, vouchers, please understand the time of supply is nothing but if the supply is identifiable, then the time of supply will be the date of issue of the voucher. If supply is not identifiable, date of redemption of the voucher. Of course, through the recent budget, this has been removed, and of course will be removed from the upcoming attempts. Nothing to worry. Next, 12 subsection 5. 12 subsection 5 is a residual case, guys. Sir, residual case in that if 12 subsection 2, 3, 4 is not applicable, in that case, what is the time of supply? Sir, we have to see whether first the fundamental question what we have to ask is whether a person is required to file periodical return or not. If he is required to file periodical return, then the date of filing such periodical return will be the due date for filing. The due date for filing such periodical return will be the time of supply. No, sir, he is not required to file periodical return. Then the date of payment of tax itself will be the time of supply. So here, see, there is an example given. Investigation reveals clandestine removal of goods by a supplier who is not registered under GST. So without paying taxes, he has removed the goods. That means he has supplied the goods, and the evidence is in the form of noting of an undated and some corroborative material, all that. So the department has identified all the information, gathered the information, and identified that this fellow has removed the goods without actually getting registered, even though he is liable for registration. The supplier voluntarily pays tax during the investigation to close the case. That's a different story. The time of supply for this will be the date on which the tax is paid as being unregistered. Supplier is not required to file periodical return. So as I was telling here, sir, a person has cleared the goods from his business premises without being registered. Actually here the problem is he is liable for registration, and he did not register and clear the goods without paying tax, even though he is liable for taxes. So during the investigation process itself, he has paid the taxes to avoid the penalties, etc., etc., and all. Now in that case, sir, what is the time of supply for that amount? That amount will not come under section 12 subsection 2 or subsection 3 or subsection 4. You cannot take time of supply in those cases. So what we have to do, you should never feel like, sir, I don't have time of supply for my case, I will not pay GST. Sir, when subsection 2, 3, 4 is not helping for you, subsection 5 is designed specially for you people. So come here, and it says if you are required to file periodical return, this fellow is not registered here, so he is not required to file periodical return. So if at all anybody is required to file periodical return and they are caught in this way or something other where subsection 2, 3, 4 is not applicable, then they can go with due date for filing return if they are already registered, and if the periodical return is not required to be filed, then the date of payment of GST itself will be taken as time of supply. Simple. Don't feel like you don't have time of supply for your case, and don't feel like I am not able to pay GST. 12 subsection 5 is waiting for you. Okay, that is 12 subsection 5. Next, finally 12 subsection 6. 12 subsection 6, 12 subsection is nothing but time of supply for late fee, penalty, or interest. Guys, please understand, whenever we talk about late fee, interest, penalty, all that stuff, especially when you hear the word interest, in GST, interest comes in two circumstances. One is, please understand, one is, so interest will be dealt in two cases. See, interest, first of all, one is we are allowing to use money to somebody and charging interest. That means you are giving loan, advance, deposit, something, and they are paying interest. This, it is exempt under GST. Sir, the next one is, sir, we are selling goods or services to somebody, and for late payment, we are charging interest. You call it interest, somebody will call late fee, somebody will call it penalty. That's a different story. But why you are charging it? Because there is delay in payment of tax. So please understand, interest is dealt in two cases. One is you extend the loans, advances, deposits. For that, if you get interest, it is exempt under GST. Here we are going to talk about, that when we allow somebody, the customers, to make late payment, the supplier allows the customers to make late payment because of supply of goods and services. For that, the consideration is being paid late. That interest will form part of value of supply, and it will be subjected to GST. For that, what is the time of supply? The time of supply is the date of receipt of such payment. Here, if you see, if you observe the interesting point, here the time of supply under 12 subsection 6 for this is date of receipt of payment. That means if the recipient doesn't pay, if at all I am selling some goods to you and I am asking you to make payment within this particular time, within 30 days, etc. If you don't pay within 30 days, you should pay 5,000 penalty like that I told, or 5,000 interest you should pay like that I told. Wording can be anything. It can be interest, late fee, penalty, whatever you want you call. Sir, if you are not paying, I am asking 5,000 penalty, please pay, but you are not paying. then time of supply will not come into picture, then there is no GST applicability. So understand, this is the only case in GST where if the customer doesn't make payment of tax, the supplier need not pay GST to the government. Isn't it interesting? So that is what all about section 12. Okay, with this we are done with time of supply for goods. So the next one with respect to part 2 of section 31, so time limit for raising invoice for services. So the time limit for raising invoice for services, if you see the general rule is nothing but on or before completion of on or before provision of service you can raise the invoice, no issues. And sir, from the date of completion of service also within 30 days you can raise the invoice. That means simple, within 30 days from the provision of service you can raise the invoice. That is what the law. That means at the time of completion or even after the completion within 30 days, yes, you can raise the invoice, no issues. If at all you are a banking company, financial institution, insurance company, including NBFC, then the time limit is 45 days. You have to raise the invoice within 45 days. So that is the general rule. I repeat, general rule for raising invoices within the completion of service, within 30 days you should raise the invoice. Okay. And if at all you are a insurance company, banking company, financial institution or NBFC, you can raise the invoice within 45 days instead of 30 days. But sir, if the service ceases, the supply ceases before completion, that means even before completing the service, for example, you are doing audit for the books of accounts of my company. Sir, after 4 days of doing audit, you fell sick or there is some emergency, you are cancelling the contract, you are just leaving. For the 4 days work you have done, whatever it is, sir, you are supposed to raise the invoice. That means you should raise the invoice at the time of cessation. That is what the law says. So any service, if it gets ended before completion, then for whatever the portion of the work you have done, if you are raising the invoice for that, then you should raise the invoice at the time of cessation itself. That is next case. And the third case, the important case, sir, continuous supply of service. See, I have been discussing in this revision lecture purely the theoretical concepts, the provisions, etc. I am elaborating. In the soft copies, notes, everything, the questions, examples, problems, everything has been properly given. If you use the resource properly, that is more than sufficient. So hope you are understanding this is a revision lecture. Okay, that is why I am not able to discuss every example point by point or every concept with examples. I am not able to discuss. Hope you understand that. Now, in case of continuous supply of service, sir, if it is continuous supply of service, we have seen for goods, sir, the time of supply will be on or the time limit to raise invoice will be on or before issue of periodical statement or receipt of periodical payments, as the case may be. Here what we have to see is, sir, if it is a continuous supply of service, sir, if it is a continuous supply of service, the contract which has been entered between supplier and recipient, are you able to determine the due date of payment from that contract? If due date is ascertainable, on or before due date, of payment. If due date is not ascertainable from the contract, then on or before the supplier receives the payment, he should raise the invoice. For example, I am supplying some construction activities for you. So continuous supply of service, please understand, the continuous supply of service means it is defined that where the service is provided or agreed to be provided continuously on recurrent basis under a contract for a period of exceeding 3 months with periodic payment obligation, and of course includes supply of such services as the government may notify. So for this purpose, if you see construction, you are doing construction of my house and we are entering into a contract where due date is ascertainable in the contract, then contractor should raise the invoice, the supplier should raise the invoice on or before the due date. No sir, due date is not ascertainable from the contract, then when the contractor, the supplier should raise the invoice. So the contractor will raise the invoice on or before receiving the payment. No sir, the interesting point is, sir, if the payment in the contract is linked to completion of an event, sir, in such case, please understand, on or before completion of that event, such event, the supplier, that is the contractor, has to raise the invoice. For example, we are constructing the house. I told, if you finish the foundation, I'll give you 5 lakhs. If you finish the first floor slab, I'll give you 5 lakhs. Like that, we have kept some milestones for some events. Only after completion of that, supplier can raise the invoice. So at the time of completion of that milestone, he can raise the invoice. Clear? That is what the point. So I repeat, continuous supply of services, what is the time limit to raise invoice? Number 1, sir, the time limit to raise invoice is if due date is ascertainable, on or before the due date, not ascertainable, on or before receiving the payment. If the payment is linked to completion of an event, then on or before completion of such event, invoice has to be raised. So that is what the concept. Okay. Now, finally, so regarding that, there is an example also. You can just go through a question. Sir, finally, sir, if at all you are an insurance company, banking company, financial institution, including NBFCs and telecom companies, they are making supplies among themselves, that is among their distinct persons under section 25. Sir, when they are making supplies among their distinct persons under section 25, sir, invoice may be issued before or at the time of recording such supply in the supplier's books of accounts, or even before the expiry of the quarter during which the supply was made. There is no concept of whichever is earlier here. So, if at all HDFC Mumbai is making a supply to HDFC Chennai, sir, in such cases, sir, invoice can be raised when the supplier is recording this in his books of accounts in this transaction, or even it can be raised by the end of the quarter in which this supply was made. That means you have the entire quarter to enjoy. Okay. So that within the end of the quarter you raise the invoice. That is what they are trying to tell here. So this is section 31, time limit to raise tax invoice. Now guys, please understand, you should be very careful with the question when they are asking regarding time of supply, because sometimes you will calculate time limit to raise tax invoice and then you will feel like that itself is time of supply. Time limit to raise tax invoice is different, time of supply is different. So please understand that when you are calculating, be careful. Whenever you calculate and you get some date as an answer, you feel like that is time of supply. Actually, you might have calculated time limit to raise tax invoice. So please be careful with that. Okay. So let us move on to section 13. So what is the time of supply for services? So in 13 subsection 2, if you see time of supply for services general rule, what we have to see is, as per section 13 subsection 2, we should first see the fundamental question whether tax invoice is raised within section 31 time limit or not. So what is the question we have to ask? Whether invoice is raised within section 31 time limit or not. Answer can be yes, answer can be no. Sir, if the answer is yes, okay, then what is the time limit to raise invoice? Date of invoice or date of receipt of payment, whichever is earlier. You know the meaning of date of payment. Date of payment is nothing but date of entry in the books of accounts of the supplier or date of credit in the bank account of the supplier, whichever is earlier. So that will be the time of supply. No sir, invoice is not raised. Invoice is not raised within section 31 time limit. If invoice is not raised within section 31 time limit, date of provision of service, that is completion of service, or date of receipt of payment, whichever is earlier. So please understand, section 13 subsection 2 general rule is simple. Okay. Whether invoice is raised within section 31 time limit or not, that we should check. Answer can be yes or answer can be no. Sir, if the answer is yes, you will compare actual date of invoice and date of payment, whichever is earlier. No sir, answer is no. Then date of supply of service or date of provision of service, whatever it is, or date of payment, whichever is earlier, that will be the time of supply. So that is section 13 subsection 2. Here, as I told you already, the interesting part is the advance. Sir, because of this, if you see, both the cases date of payment is being compared. So hence it implies what? Whenever the advance is received, so automatically what? It will become taxable. So in 12 subsection 2 there is a relaxation, but in 13 subsection 2 there is no relaxation. So here what I am trying to tell you is, sir, with respect to section 13, sir, except 12 subsection 2, sir, every case time of supply, it is better to go with calculating time of supply for each and every payment. So for every payment, apply time of supply provisions and calculate. So sometimes for all the payments, you will get same time of supply. Sometimes for different payments, you will get different time of supply. Okay. So that is what the concept. Fine. So now, if you are not able to, as I already told you under 12 subsection 3, as we have discussed, if you are not able to identify time of supply as per the provisions given here, in this case, sir, what you can do, the time of supply will be nothing but the date of receipt, the date on which the receipt of supply has been entered in the books of accounts of the recipient will be taken as time of supply. Clear? So I repeat, if at all in any circumstances, as I told you already, here there is one example, fragrance and co, that you can just go through. Yes. So here there is an example, you can just go through this. Okay. Now that is 13 subsection 2 for you. Next, so I have given examples also here. So as I told you already, for each and every payment, better calculate time of supply. So here for advance received, for services, you are taking a function hall on rent. The advances received for services, it will become immediately taxable. But for the balance amount, again you have to apply the provision. So whether invoice is raised within section 31 time limit or not, you check that, and if it is raised within section 31 time limit, then date of invoice or date of payment, whichever is earlier. If not raised, date of provision of service or date of payment, whichever is earlier. Okay, so that is what 13 subsection 2 for you. You can just go with this example. You can pause the video and go with the example. So with this we are done with section 13 subsection 2, and you can just go with ICAI study material book back questions of from time of supply chapter. That is more than sufficient, and this is what all about this. Next, 13 subsection 3. Let us move on to 13 subsection 3. And above this there is something related to 1000 rupees that you just ignore, not an issue right now. Next, time of supply for services covered under reverse charge mechanism, 13 subsection 3. So just like 12 subsection 3, here we are seeing 13 subsection 3, time of supply for services covered under RCM. So the provision is simple. Here what you will do is you will compare just date of payment or 61st day from the date of invoice, actual date of invoice, whichever is earlier, that will be the time of supply. Simple provision. So 13 subsection 3, sir, actual date of payment you check, and 61st day from actual date of invoice, whichever is earlier, that will be the time of supply. So as I told you already, the meaning of date of payment, sir, will be seeing date of entry in the recipient's books of accounts or date of debit from recipient's bank account, whichever is earlier. Suppose if it is not possible to identify time of supply as per these provisions, you know, sir, date of the entry in the recipient books of accounts regarding the receipt of service, just like we have seen in 12 subsection 3, 13 subsection 2, here also we are seeing the same point. Okay, here one more interesting thing is regarding, sir, suppose if you are importing services from your associated enterprise which is located outside India, then the time of supply will be date of payment for the service or date of entry of the service recorded in the books of the recipient, whichever is earlier. Associated enterprise has the same meaning which is given in Income Tax Act 1961 section 92A. Not that greatly relevant for you, don't worry. So simple, just remember, if from associated enterprise you are importing the service, then the time of supply provisions is nothing but, sir, date of payment for such service or date of entry in the books of the recipient, that is the person in India, whichever is earlier. So that is what 13 subsection 3. So here we have an example also for that. You can just go through 13 subsection 3 examples. Okay, so this is the example. You can just solve this. Right, you can just pause the video and go through this. With this we are done with section 13 subsection 3. So I can also tell you that, sir, we are done with section 13 because 13 subsection 4, 5, 6 are nothing but ditto, same like 12 subsection 3, 4, 5 and 6, except for the words goods. Here there is services, the provisions are same, that vouchers, residual case and interest payments. So with this we are done with section 13 as well.
Now if you see the next one interesting amendment in section 13 subsection 3. So what is section 13 subsection 3, sir? Time of supply for services covered under RCM. So tasks for services, tasks for SOS covered under RCM. Okay, time of supply for services covered under RCM. You know, generally time of supply for services covered under RCM are nothing but date of payment next 61st day from the actual date of invoice, not due date, actual date of invoice. So date of payment means maybe entry in the books of the recipient or debit in the books of the bank account of the recipient, as the case may be. So this was the time of supply before. Now what the department has did now, see, understand, you are comparing 61st day from the actual date of invoice. Okay, but if invoice is issued by the supplier, that is the case. But in case of reverse charge mechanism, there is a concept of self invoice also, where supplier is unregistered, recipient has to generate invoice on himself. Self invoice concept we have seen. So now what is the concept here now? Sir, supplier is issuing the invoice, na, no problem, sir, this time of supply is useful. But there was a scenario where, sir, supplier is unregistered and recipient has to raise invoice on his own, then what will be the time of supply? So the section 13 subsection 3 was not addressing this. Please understand, I repeat, this amendment is only in section 13 subsection 3, but not in section 12 subsection 3. So 12 subsection 3, you know, time of supply for goods covered under RCM. So time of supply for goods covered under RCM is nothing but what? Date of receipt of goods, date of payment, or 31st day from actual date of invoice. But 13 subsection 3 alone got amended. 12 subsection 3, they did not touch anything regarding this. So 13 subsection 3 says, what is time of supply means? Date of payment 61st day from the actual date of invoice. That is very important. Actual date of invoice if the invoice is raised by the supplier. No, sir, supplier did not raise the invoice. Then you don't take this one, take date of payment and actual date of issue of invoice. Date of issuance of invoice means we are talking about the actual date of issuance of invoice, whichever is earlier. If the invoice is to be issued by the supplier 61st day, you will compare from the actual date of invoice. But if the invoice is raised by the recipient, you will take actual date of invoice itself. That will be the time of supply. Okay, so date of payment, if invoice is raised by the supplier, time of supply will be 61st day from the actual date of invoice, whichever is earlier. No sir, if the invoice is raised by the recipient, date of payment and actual date of invoice of the recipient when the invoice has been raised by the recipient, whichever is earlier. So if it is FCM, you will compare, sorry, if it is supplier raised the invoice, you will compare point 1 and 2. If the invoice is raised by the recipient, you will compare point 1 and 3, whichever is earlier. Okay, hope it is clear. I repeat again, section 13 subsection 3 alone got amended, section 12 subsection 3 doesn't have any such amendment. So 13 subsection 3 says, sir, invoice is raised by the recipient, now time of supply is simple. Invoice is raised by the supplier. What is the time of supply? Time of supply will be date of payment or 61st day from actual date of invoice, ADOI, whichever is earlier. No sir, invoice is raised by the recipient himself. So recipient himself. Then what is the time of supply? The time of supply will be date of payment or actual date of invoice by recipient, whichever is earlier. Simple. So this will be the time of supply. Okay, hope it is clear for you. Please be careful with this. Okay, so this is one interesting amendment here. And yes, anything else in this I just wanted to discuss? So no, that's all. So this is what the simplified version of that section 13 subsection 3. Hope it is clear for you. So this is what the amendment in 13 subsection 3, time of supply. So now if you see the another next one, the amendment is regarding vouchers. One very interesting clarification here. And you know, recently through Finance Act 2025, the government has removed this time of supply on voucher section 12 subsection 4, 13 subsection 4. But that is not applicable for your September exams. But this clarification regarding vouchers is applicable. What is this clarification all about? Now, see, now basically, I'll tell you an example here. Generally, the vouchers, what we are seeing is nothing but, imagine Lifestyle is issuing vouchers along with HDFC doing some co-branding, etc. Let us assume they are giving Lifestyle HDFC gift card, something like that. Some vouchers they are giving, they are selling it to customers for 5,000 rupees. So later on, customers can redeem that while shopping in Lifestyle or anywhere else. Like let us assume it is a HDFC Visa co-branded one. Any Visa payments, etc., they can use this voucher. So like these vouchers are being sold. Now the issue was taken up actually in one of the judgments or case laws. Karnataka High Court has delivered a judgment that these vouchers are nothing but money and hence there should not be GST. So now CBIC has issued a clarification saying that the vouchers are nothing but, first of all, there are two possibilities. These vouchers can be used as a prepaid instruments by the people who are redeeming it or who are accepting it as consideration. As you all know, vouchers, what we are doing, instead of making payment to the seller, we are giving the vouchers or part of the consideration is paid through voucher. So voucher can be defined as a prepaid instrument as per RBI, can be recognized as a prepaid instrument by the RBI. If it is a prepaid instrument, automatically that is called money. Money includes prepaid instruments. And you know, money is not a good, not a service under GST. So vouchers are not subjected to GST. Sir, what if that voucher cannot be treated as prepaid instrument, cannot be recognized as prepaid instrument by RBI? Na? That means it is not money, but it is actionable claim. It is actionable claim. So actionable claims, if you see, actionable claims has been given in Schedule 3, neither supply of good nor supply of service, except specified actionable claims, lottery, betting, gambling, casinos, horse racing, and online money gaming. Except this, any other actionable claim is neither SOG nor SOS. You know that. So anyway you take, whether voucher is a prepaid instrument recognized by RBI or whether it is not a recognized prepaid instrument by RBI, both the cases it is not subjected to GST because of the technicalities what we have discussed. Now, what is the clarification all about now? Please understand. Vouchers, when you are buying and selling, that is not a supply because as we have seen, it may be treated as money or it may be treated as actionable claim. But using that voucher, tomorrow in future, some goods or some services are being supplied. In that case, that goods or services, whenever they have been supplied, that will be treated as supply and will be subjected to GST. So as such, when we are transacting in vouchers, that is not a supply. Please understand that. Now going it even deeper, sir, where as I told, dealing with these vouchers is not a supply. Sir, I am selling these vouchers on principal to principal basis. Sir, I sell the voucher. Let us assume lifestyle HDFC cards are sold to Google company. Google company is selling to their employees. Like this, one person to another person on principal to principal basis if they are selling. Sir, vouchers are money, no GST. Or lifestyle company is giving it to some people. Go and sell this gift cards or go and sell these vouchers. We will pay you commission 50 rupees, 100 rupees per voucher, like that. So still they are selling it. I repeat, sale of this voucher is not a supply as we have seen the technical things. But if they are sold through some agents, agents will get commission. That commission is supply. That commission is subjected to GST. Clear? So that is what the point. Now, sir, as I was telling, lifestyle giving that gift card to customer, all that. See, first of all, here in the amendment material I have given 2 pages proper simplified discussion of the issue and clarification, all that. But even further I have simplified that, and entire discussion is nothing but just these 5 points. Okay, entire the 2 pages, whatever the concept we have discussed. So as we have discussed, lifestyle is selling the vouchers to the customers for 5,000. As we have already discussed, sale of these cards or nothing but transaction in money, no GST, or it can be treated as actionable claim also, still no GST. Sale of goods or services using that vouchers are the underlying products. So in that case, that goods and service will be subjected to GST. Now, sir, HDFC will pay some amount to lifestyle for co-branding. That means these vouchers can also be used for some sales promotion, for co-branding, marketing, all these things. This marketing, co-branding, all these services are taxable under GST. So that amount is taxable. So HDFC is paying some consideration for doing the co-branding, for issuing this lifestyle HDFC card. Okay, such co-brandings. For example, so not only that, sir, if they are providing any advertisement services, for example, if you see BPCL, SBI credit card, like that, sir, BPCL with SBI, they are coming up with some petrol vouchers. Imagine, just imagine. Or Amazon Pay is coming with ICAI, some vouchers, gift vouchers, etc. So like that, advertisement or co-branding, marketing and promotion, customization services, technology support services, customer support services, etc. are provided in addition. So in that case, whether that is subjected to GST means, yes, it is subjected to GST for sure. Okay, using the vouchers, what people are doing co-branding, extra consideration, promotion, extra consideration, marketing, extra consideration. All these things are taxable. As I already discussed, agents are selling these cards for commission. That commission is taxable. Finally, the last twist in the story. If customer is going and buying something using that voucher, then it is supply, we have discussed. Sir, what if the customer is a memory loss patient, sir, forgot to redeem the voucher? Okay, then customers are not redeeming the vouchers. Then when the customers are not redeeming the vouchers, then if the voucher remains unused or unredeemed, these companies which are issuing the vouchers have sold the voucher and received money, but nobody came to redeem anything from that voucher. So they will book this as an income called breakage. So these companies which are issuing the vouchers will recognize this as an income called breakage, and there is income called breakage. But for this, they did not supply any goods or services. So under GST, I can say no supply is made. Hence, no GST is payable. So this is what the concept regarding voucher. Okay, see 2 pages concept entirely, just these 5 points. Hope this is very much clear for you.
So now coming to the clarification with respect to the services provided by people, that is the concessionaries we are talking about, who have entered into contract with the National Highway Authority of India. Okay, so where they are entering into contract to construct the roads and operate them and maintain them over a period of 15 to 17 years. In such cases, the payments are spread across the years. In such case, what is the time of supply we should consider? That is what the doubt. Here the department has clarified that these services are nothing but, see, should be seen as continuous supply of service, where it is a single contract to construct, operate and maintain those roads over a period of 15-17 years, and because of the payment terms are spread wide across, you cannot treat it as different contracts. So here, sir, it should be treated as a continuous supply of service, and accordingly you should determine time of supply. So if the invoice is raised within the time limit, so first you should raise the invoice as per the time limit section 31, considering it as continuous supply of service. Number 2, while identifying time of supply, you should see whether the invoice is raised within section 31 time limit. If it is raised within section 31 time limit, then the date of invoice or date of payment, whichever is earlier, will become the time of supply. If the invoice is not raised within the due date, then the date of provision of service or date of payment, whichever is earlier, will become the time of supply. So that is what the clarification all about. So the next one is regarding time of supply for services of spectrum usage and other similar services like usage of any natural resources which government is allotting to successful bidders. Here the problem is, sir, the Department of Telecom is allowing the people to use the spectrum, that is the spectrum allocation is provided, and for the spectrum license people are paying the amount. Now first of all, the point is here government is providing services to business entities, and you know GST will be charged on RCM basis. Okay, so this is first clarity for you. So GST is payable on RCM basis by the telecom companies which are taking the spectrum license. Here there was a small confusion. Actually here what the point is, suppose if at all Jio is getting a telecom license of 4G or 5G, whatever you say, and imagine if it is for 100 crores. There can be two possibilities: 100 crore one time upfront payment, or it may be paid in installments. When 100 crore is paid one time upfront payment, full upfront payment, that means straight away before the spectrum license, the service starts itself, they are making the payment. In such cases, the time of supply is obviously when the upfront amount is made or due, whichever is earlier. Okay, so there was no problem here. But actually, if at all it was paid in installments, for example, imagine that 100 crore was allowed to be paid in 10 installments over a period of 5 years. Just imagine, over a period of 5 years. Now, there was a problem, there was some small sort of confusion with respect to department officers with respect to this. Hence, they have issued some notices and asked the telecom companies there is a delay in payment of tax, all that, so you pay interest also, all that, like that. That is not relevant for us. So now department is clarifying here. So to the field officers, see, if at all this spectrum license whatever they have taken, or even any other natural resources what they have taken, if they are paying the consideration in installments, please understand the time of supply will be, these are nothing but similar to continuous supply of service because it is exceeding 3 months. So it is continuous supply of service. So the time of supply for this is, please understand, when the payments are due or made, because in these cases please understand that the due date to make payment will be fixed in the contracts. For example, 100 crore you should pay in 10 installment 5 years, na? The due date is fixed actually. So these people will make the payments as and when the amount is due. So the department has clarified that GST will be payable here in these cases as and when the payments are due or made, whichever is earlier, not when the contract was allocated or when the license was allocated. The same treatment, the similar treatment we are also will be treating to all other natural resources which are allocated to successful bidders. So hope it is clear. Why they gave this clarification, all that irrelevant for us. Simple. What is that they are trying to tell? If any resources, natural resources or spectrum license, etc., allocated by government to business entities, are simple. First of all, GST liability will come under RCM. Number 2, if at all, how the payment is made? The payment is made upfront payment, no problem. As and when the upfront payment is made or due, whichever is earlier, that will be the time of supply. That will be the time of supply. No sir, if the payment is made in installments, here the installment dates are fixed, due dates are fixed. So in that case, what the department is saying, hey, whenever the amount is due or made, whichever is earlier, you take it as time of supply and tax it accordingly. That is what they are telling us. So that is what the clarification here with respect to spectrum license, and also the same clarification is applicable to all other natural resources which the government is allocating to successful bidders. So the next one, section 14, when there is a change in rate of tax, change in effective rate of tax, what is the time of supply? See here, section 14 talks about this. First of all, what is this all about? Now see, for example, you are making a supply, and by the time you raise the invoice or by the time you get the payment, see, supply has started, you have finished the supply, and now further supply you have to raise invoice, and for that you should get payment. So these three are the main events here. When these events are not yet completed fully, somewhere in middle there is change in rate of tax. In such case, what is the time of supply? In such case, what is the time of supply? That is what we are going to see. So there is change in rate of tax somewhere in the middle, where supply is not completely done, invoice has to be raised or payment is to be done. So all these three events, any one thing is pending, then there is change in rate of tax. In such case, what is the time of supply? Very simple way I'll tell you so that you can remember it easily. Many of you might have mugged up like by heart are the things like this is happening, then this is time of supply. A very simple way. See, first of all, assume time of supply as a hero. Time of supply as a hero. So now there are three people: date of supply of service, that is date of completion of service, whatever you take, provision of service, date of supply of service, actual date of invoice, date of payment. Out of these three, one should become hero, that is time of supply. Out of these three, one should become time of supply. But understand, date of supply of service is playing a role of heroine already. So this will never become time of supply. This will never become time of supply. So who will become time of supply? Either ADOI or ADOI or DOP, actual date of invoice or date of payment. Now, to become a hero, one primary criteria is you should be with heroine, correct? So what you should check now, sir, when there is change in rate of tax, you should see where is date of supply of service. If date of supply of service is after or before the change, after the change or before the change. If after the change, see, understand, if whoever is there with date of supply of service, that is actual date of invoice, if it is there, then that fellow will be the time of supply. No sir, this fellow is not there, date of payment is there, then that will be the place of time of supply. No sir, both of them are not there, both of them are happening after, before, then ADOI or DOP, whichever is earlier. ADOI or DOI, it has fixed in my memory, sorry, excuse me for that, whichever is earlier. Same story here also. See, simple. First, for that, what I should do now, sir, date of supply of service, date of invoice, date of payment. What you should check? First, you should check when this is happening. So this is happening after the change. Now you see, ADOI is happening after the changer, DOP is happening after the changer. All the three will not happen after the change. If that is happening, then you will not come to section 14. Any one fellow will be present along with date of supply of service. Whoever is present, that fellow will be the time of supply. Sir, both of them are before the change, sir. Before the change. Both are happening before the change. Then whichever is earlier. Now see, for example, here I will show you. I will prove you my theory here. Just listen carefully. Sir, what we should see, when the supply is happening before the change, sir. Then if any one fellow is there along with that supply, date of supply of service, that means ADOI or DOP, whoever is there before the change, that fellow will become place of time of supply, sorry. If both of them are not there, that means both of them are fighting outside, whichever is earlier, that will become the time of supply. Okay, so here if you see, actual date of invoice and date of payment, both are happening after the change. Date of supply of service is before the change, but actual date of invoice and date of payment are after the change. So whichever is earlier will come into picture. Okay, one more try. Sir, supply is happening before the change and actual date of invoice is after the change, but date of payment is before the change. So whoever is there along with date of supply of service, that fellow will be the time of supply. So here date of payment will be the time of supply. See, one more test we can do here. So this is happening before, actual date is also happening before, but date of payment is after. So we should see who is there along with the supply. Before the change, supply has happened. So before the change, actual date of invoice is there. So actual date of invoice will be the time of supply. Same story here also. Sir, after the change, supply is finished, but both invoice and payment are before the change. So you see, whichever is earlier will be the provision, whichever is earlier. Sir, after the change, supply is happening, and after the change only you are raising the invoice, and before payment is there. I told you, whoever is there with the date of supply of service, that fellow will become the hero, the time of supply, actual date of invoice. Here it is after, it is before, it is after. So this is time of supply. Clear? So that way you can easily calculate. Clear? So now that is what section 14 all about. Simple. Time of supply. So just see, always remember, date of supply of service will never be the time of supply as per section 14 when there is change in rate of tax. So what you should see, you should first select date of supply of service where it is there, before the change or after the change, you just check and mark it, and then you see the other fellows, actual date of invoice or date of payment. Out of these two fellows, any one fellow will be along with date of supply of service, then that will be the place of supply. If both of them are not there, then both of them are fighting outside for the heroine, whichever is earlier will be the time of supply. So that is how you identify. Simple. Here one interesting part is, sir, the meaning of date of payment. What is the meaning of date of payment? You know, date of entry in the supplier's books of accounts or date of credit in the supplier bank account, whichever is earlier. But please understand here, this provision will hold good because there is change in rate of tax. The date of payment meaning has some extra proviso also here. That is, that if there is change in rate of tax and there is date of entry in books, date of credit in the bank account of supplier, where you should check, sir, when the change is happening. From the change within 4 days, within 4 working days, within 4 working days, if it got credited, no problem, you will follow this provision. If it is not getting credited within 4 working days, if it is getting credited after 4 working days, then you should straight away take date of credit into the bank account as date of payment. Okay, you know, for example, check date is 27th May. Entry in the supplier's books of accounts is also 27th May. Change in rate of tax 1st June. Now, if the amount is getting credited on 3rd June, 1st June there is change in rate of tax. 3rd June means within 4 working days only. So you will take 27th May or 1st June, whichever is earlier. 27th May is earlier. So you will take that as time of supply. Sorry, date of payment. You will take it as, you will take it as date of payment. Again, you should compare it with all the 3 things, the provision what we have discussed. Okay, we are just seeing the meaning of date of payment. Okay. Now, sir, if at all it is credited in 7th in the bank account on 7th, sir, change is 1st June. It is getting credited in the bank account after 4 working days. So automatically what will be the date of payment? Date of payment you should take as the date when it got credited into the bank account. Am I clear? So that is what the meaning of date of payment here. Hope it is clear for you. Okay. Now another interesting point here is the very important point. The section 14 applicability. If you see, if at all you are dealing with goods, if at all it is a specified actionable claim or you are a composition dealer. Sir, either you are dealing with specified actionable claims or you are a composition dealer. For both the cases, in those cases, if there is change in rate of tax, you will follow section 14. If there is no change in rate of tax, you will go with section 12 only. But if in case of other goods or other cases, in case of other goods and other cases, you will always follow ADOI or DDOI, whichever is earlier, section 12, subsection 2, the general rule. Clear? And if it is service, so straight away, if there is change in rate of tax, you will go with section 14. If there is no change in rate of tax, you will go with section 13. Okay, so that is what the concept. Hope it is clear for you. So this is very important thing for us. So please keep this in mind. Okay. Next. So here I have given some small problems here. Just you can just go through that, a small example. You can pause the video, those who are watching the recording, and just solve this. Okay. Next, I have given the answers next itself, so you can just go through that, and also you can pause the video and just go through this. This is another past exam question. Hope it is clear for you. So with this we are done with section 14, time of supply in case of change in rate of tax. Right. Hello students, this is your Mr. GST CA Vishnuvardhan. In this video we are going to quickly revise value of supply chapter in no time. Right, a very small chapter but very important chapter for us for the exam, for our exams. So let us go with this chapter. So in this chapter, if you see first value of supply, you know, like it is dealt in section number 15, and section 15 has 5 subsections, 1, 2, 3, 4 and 5. So 1, 2, 3 mainly is talking about value of supply, inclusions and exclusions. Subsection 4 and subsection 5, subsection 4 and subsection 5 purely in CA final only. In CA intermediate it is not there. That is the structure of this particular section and chapter in your CA course. Now coming to the value of supply, you know sir, GST is a rate and that rate should be imposed on a value. So for that, what should be taken as value of supply? Simple, the law says value of supply nothing but transaction value you should take as value of supply. The transaction value means what? Transaction value means whatever the price is paid by the recipient to the supplier. Sir, will you believe that price whatever they are dealing with? Yes, provided they are not related and they are paying only monetary consideration, that is price is the sole consideration. So transaction value will be taken as value of supply. That means price actually paid or payable will be taken as value of supply, where supplier and recipient are not related and price is the sole consideration, that is monetary consideration only, then only transaction value will be taken. Okay, in the law, if at all these conditions are violated, then we should go with valuation rules. Okay, right. In the law itself, they have given some inclusions and exclusions. See, I have given a small notes here. Okay, here, if you see, one second, if you want, you can take a screenshot of this also, right? One second. For the transaction value, you can take some inclusions and exclusions which are given in the law itself, Hope you have taken the screenshot, right? Let us go forward without wasting the time. First of all, sir, understand, in the law they have given 5 inclusions, 1 exclusion. Just remember, like Pandavas and Draupadi. Okay, 5 inclusions and 1 exclusion will finish the 15 subsection 1, 2 and 3. Okay, now coming to inclusions, what and all should be added to value of supply? Sir, what and all should be added to value of supply? All taxes and cess whatever you see other than GST and TCS under income tax, not GST. Okay, so all taxes like municipal tax, entertainment tax, customs duty, whatever it is, sir, everything you add it to value of supply other than GST, that is other than CGST, SGST, UTGST, AGST and GST compensation cess, and also TCS under income tax, you don't add it to the value of supply. That is what the concept. Okay, right, that is number 1 addition. Next, number 2, payment made by the recipient which is to be incurred by the supplier. That means in simple words I'll tell you, obligation of the supplier discharged by the recipient. If the obligation of the supplier is discharged by the recipient, then that should be added to the value of supply. Here, see, for example, see, you are coming to me to purchase some furniture. Let us assume furniture in the example. Okay, let us assume furniture. You are coming to buy some red sandalwood furniture with me. Sir, for that I am charging 10 lakhs plus GST. What you are saying, Vishnu sir, out of the 10 lakhs, we will pay you only 6 lakhs. You are buying the goods, the red sandalwood, from your friend Mr. Pushpa, unregistered fellow, no? To him we will pay that 4 lakhs directly, and to you we will pay only 6 lakhs. You charge GST only on 6 lakhs, sir. Like that you are asking. I said, okay, fine. But what the law says, that 4 lakhs is obligation of Vishnu and discharged by the students. That should also be added to the value of supply. So it will be total 10 lakhs on which I should charge GST. This is what the concept. Okay, so just go through this example. So I repeat, obligation of the supplier discharged by the recipient, obligation of the supplier discharged by the recipient, then it will be added to the value of supply. That means you don't try to cheat the government by playing this tricks. Okay, so that is what the point. Next, what is the next one? The incidental expenses. The third inclusion is incidental expenses. Whatever incidental expenses supplier is incurring and recovering from the recipient. Okay, that means let us assume packing charges, transportation charges, weighing charges, whatever it is incurred by the supplier, recovered from the recipient, then it will be added to the value of supply. That is what the concept. Okay, fine. Next, interest, late fee, penalty for delay in payment of consideration. This is something interesting here. Now please understand, in GST, whenever you go through interest, understand, whenever you go through interest in GST, the interest will come in 2 circumstances. Number 1, you are taking loan from somebody, or you are taking advance or deposit for which you are paying interest. So I say that interest by way of extending loans, advances or deposits, that is exempt under GST. Okay, sir, for you, hint is, for this type of situations there will be 3 parties. You are selling, buying and lender. Sir, you are buying some goods, for that you don't have money, you are going to some third person and asking some loan, and that fellow is giving, for that you are paying interest. So here he is giving you money and for that he is charging interest. Okay, that is exempt under GST if you remember the exemptions. Second situation is, sir, I am selling some goods to you. You are saying, Vishnu sir, I don't have money, I'll pay after 30 days. I said, no problem, pay 1000 rupees interest, pay 1000 rupees interest. So you are paying me 1000 rupees interest. That will be added to the value of supply, and whatever the treatment for the principal supply, the main thing what I am selling to you, on that whatever tax is applicable, the same will be applicable on this interest also. That means, understand, interest will come in 2 circumstances. One is for extending loans, advances or deposits, where I am giving you loan or allowing you to use my money and I am charging interest, exempt under GST. The second scenario is where I am only supplying some goods or services to you for which you are making payment to me but paying late, interest or late fee or penalty for delay in payment of consideration. So that will be added to value of supply and will be subjected to GST. Okay, so that is what the point. So here that is regarding interest. And one mistake what you do in the problems with respect to interest, sir, interest, should I assume it as inclusive of GST or exclusive of GST? Please understand, question there can be two types. One is they will just say in the question interest paid, late fees paid. I repeat, this interest we are talking for delay in payment of consideration, that only should be added to the value of supply. So in that case, question you have two things. One is they'll give just interest paid 10,000. They will not talk about whether extra GST you have received, etc., etc., nothing. That means what? You have got 10,000 rupees interest. You assume it as inclusive of GST and proceed with the problem. Or they will clearly mention in the question somewhere in a corner, all that amounts mentioned above are excluding taxes. Interest somewhere in the table above they would have given 10,000, 20,000 like that, 15,000 like that, and somewhere bottom of the question they would have mentioned all the amounts given above are excluding taxes. Then you should take it as exclusive. Okay, so I repeat, if the question says just interest paid, then treat it as inclusive. Or if the question clearly mentions these are excluding taxes, all that stuff, then please treat it as exclusive of taxes. Clear? So I repeat, interest paid for delay in payment of consideration only will be added to the value of supply. Interest for giving loan is exempt under GST, that will not have any tax implication. Hope it is clear. That is with respect to interest. Next one, with respect to subsidy. If you are following, we are discussing 5 inclusions. Number 1, all the taxes paid other than GST and TCS under income tax. Next, obligation of supplier discharged by the recipient. Next, incidental expenses incurred by the supplier is recovered from the recipient. Interest or late fee or penalty for delay in payment of consideration. That is what we have discussed now. So hope it is clear for you. Last one, final one, subsidies. Subsidies will be added to the value of supply. Subsidies will be added to the value of supply when it is directly linked to the price. That is first key point. It should be first directly linked to the price. Then you should check who has given that. Sir, if government has given that, ignore it. If anybody else has given, please add it to the value of supply. Clear? Right. So that is what the point, guys. And one more thing here for interest late fee. First of all, let me finish that. For interest and late fee, I have given one small problem also in the notes here, so you can just check this. This is November 2022, somewhere CA inter question actually, but a nice question, delivery agent like that. So you can just go with this question. They have just asked in the question gross GST liability and ITC available. That's all. They did not ask anything extra. Okay, so that is what the point. So hope it is clear for you. Just take a screenshot of it and just try it. Just go through the question enough. But nice question. Right. So coming back to the subsidy, as we were talking, so subsidies other than central government and state government subsidies, if it is directly linked to the price of the goods or service, whatever it is we have supplied, then it should be added to the value of supply. Okay, see now for example, I have given in the example also here for that, and example, yes, you can understand, simple small one, you can just go through. I want to talk about the treatment in problems, actually that is the main thing. So here there is an example, you can just understand, where I am selling notebooks for 50 rupees and I'm entering into an MOU with government, where government is saying we will give you 20 rupees subsidy, sell the notebooks for 30 rupees only. I am selling the notebooks for 30 rupees, so I am getting from customer 30 rupees, from government I am getting subsidy 20 rupees. The value of supply is 30 rupees. But same MOU, if I'm entering with Infosys Foundation or some other private NGOs, whatever it is, other than central government, state government, then the same MOU I'm entering, 30 rupees I'm getting from customer, 20 rupees I'm getting from the NGOs, all that, then the value of supply will be 50 rupees, not 30 rupees. Hope it is clear. And I repeat, the subsidies like given for buying the plant and machinery or setting up the factory, purchasing the land, all these things will not have any direct link to the price. So those subsidies will not be considered while calculating the value of supply. Hope it is clear for you. Right, so that is the example. Now as I was talking about the tax treatment, the treatment in problems, see in problems mainly you will find these 3 type of wordings. Subsidy, sir, whenever you see in problem, they may use the word like price after considering subsidy. Please understand, price after considering subsidy or after including subsidiary are different. If that says if it says, please understand, price after considering subsidy, that means what? we know that we will receive the subsidy. We know that we will receive the subsidy, and we are fixing this price. Let us assume price after considering subsidy is 10,000 rupees. That means I want this 10,000 rupees and I know that I will get subsidy also of 500. That means it will become 10,500. It doesn't mean that in the 10,500 subsidy is included. No, it is not like that. Only if they say subsidy is included there in the price, then only you should take it as included. Subsidy is like after considering subsidy means I know that I will get subsidy. It doesn't mean that the subsidy amount is included in the price. Please don't misunderstand that. This is one mistake you might be doing. Next, the next one is net of subsidies. When they say net of subsidies, subsidies are removed from that amount. So whatever the amount, the list price or whatever the value have been given there, it is excluding subsidies. It is not including subsidies. So please understand, net of subsidies means subsidies are removed from that value. It is not included in the price. So please remember this carefully. Okay. So this is what the concept all about. So with respect to subsidies. So with this, we are done with the inclusions part. Hope you are clear with this inclusions. So 5 inclusions we have discussed. So the next, if you see exclusions, sir, exclusions, only one exclusion, discount. But the point is, when this discount is given, simple, sir, discount may be given at the time of supply or after the supply. If it is given at the time of supply, simple treatment, just show that separately in the invoice, exclude it from the value of supply, enjoy. Am I clear? So I repeat, if the discount is given at the time of supply, exclude it from the value of supply and enjoy. Sir, if the discount is given after the supply, then don't think, sir, who will give discount after the supply? In case of B2B scenarios, there might be a situation where discount is given after the supply. You don't worry about who will give that. Just remember, sir, if the discount is given after the supply is over, then you can exclude the discount from the value of supply provided 3 conditions are satisfied. Number 1, it should be as per the terms of the agreement which we have already entered into. Next, terms of the agreement means need not be in writing, always remember that. Number 2, so number 2, the discount should be linked to a particular invoice. And number 3, sir, proportionate ITC should be reversed by the recipient. Okay, then the discount will be excluded. Suppose if you are not satisfying these conditions, it doesn't mean that law is prohibiting you from giving discount. You give discount to your customer, we are not stopping you, and show that in your books of accounts. We are not worried about that. Only thing, I will not give you benefit under GST if you don't follow these 3 conditions. If you follow all these 3 conditions, enjoy the benefit from GST also. Your GST liability will be reduced, and opposite fellows, of course, ITC will be reduced. That's a different story. But if you are giving discount and you are not following these conditions after the value of supply, after the supply is over, then that discount will remain only in your books. In GST, we don't have an impact. That means imagine 10 lakhs is the value of supply, you give 1 lakh discount, but you have not satisfied these conditions. For the purpose of GST, you should be paying GST on 10 lakhs only. But in your books, you might have shown 9 lakhs, all that nonsense, whatever it is. But for us in GST, you should pay GST on 10 lakhs. Am I clear? So hope it is clear for you. Okay, so there is an example also here with respect to that. So you can just go through this example as I already explained. Sir, for example, I'm making a supply to MSD on 25th June, credit period 90 days. And if you pay within 30 days, I will give you 10% discount like that I told. He is paying within 30 days. So he is claiming discount. Now, whether this discount can be excluded from value of supply? Yes, it can be excluded from value of supply, because first of all, I told it at the time of supply only. If you make payment within 30 days, I will give you 10% discount as per the terms, and this is linked to invoice. And the only condition is the MSD should reverse proportionate ITC on that discount. 1,12,000 GST will be there. Proportionate ITC he has to reduce. So that way I have given a comprehensive example here. You can just check that. One second. So this is the example. So you can just go through this and take a screenshot if you want, or the notes is however available, nothing to worry. So this is the example, and with this we are done with exclusion part. The discount part also we have discussed. What if the discount is given at the time of supply or after the supply is over? And there is a clarification with respect to no claim bonus actually. So what is this no claim bonus? Nothing but, sir, when I am purchasing a car, first year I am taking insurance. Of course, every year we will be renewing the insurance. Now, when we are going for the renewal of the insurance, if you have not taken any claim in the last year, then to appreciate your driving skills, what the insurance company will do? Insurance company will say, sir, last year you did not claim anything from us, so we are happy, we have saved so much of money because of your great driving. So this year we'll give you something called no claim bonus. And I'm asking, like, please give me that bonus. Then the insurance company says, we will not give it in actual physical form, sir, but in the renewal insurance premium, we will give it in the form of discount. So now the doubt was, what is the tax treatment for this no claim bonus? And as I already told you, sir, this is just like a discount. They are giving it to you in the next premium payment. So it is excluded from the value of supply. So that is what the concept here. There is a small example also for that. You can just go through this, right? So this is with respect to the clarification on no claim bonus. So the next one is regarding, the next clarification is regarding the salvage or wreck value earmarked in claim assessment of damage caused to motor vehicle. See now here, what is this actually now? Please understand. Let us assume there is a car and insurance has been taken on the car by the owner. Now this car has been subjected to accident. You can understand this is accident car, that is why it is like that. Otherwise it would have been even neat. You know, you don't know my artistic skills actually. Right? So this is a car which was subjected to accident. Now imagine while taking insurance on the car, that fellow has declared the value of car as 8 lakhs rupees, on that he has taken insurance. So now this car is now subjected to accident, completely gone, all that stuff. Now there is total loss, and if you sell that now, you will get 1 lakh. That is the salvage value or wreckage value of that car. Now insurance company is paying to the customer what? Based on that, the tax treatment for this salvage value will determine. Now the doubt is whether insurance company has to discharge GST liability when this salvage or wreckage has been sold for 1 lakh. Now the point is, see, if the insurance company is paying only 7 lakhs to the insured person, the person who has taken insurance on this, that means this salvage will become the property of that fellow. That means, Ray, however you sell that, you will get 1 lakh. Balance 7 lakhs I am giving, keep it with you. So salvage and wreckage is the property of the insured person. So GST liability will not come on the insurance company. GST, like, insurance company doesn't have any right over that salvage or wreckage, that will not sell that. So no GST liability on that 1 lakh for insurance company, in the hands of insurance company. Now if the insurance company pays full 8 lakhs to the customer, that is full amount 8 lakhs. That means they are buying that salvage amount, the entire thing also is with the insurance company only. So insurance company is the owner of this property now, the salvage or wreckage. Now when insurance company is disposing this salvage or wreckage for 1 lakh rupees, GST liability comes into picture. Insurance company has to pay GST on that. That is what the concept. Hope it is clear for you. So if the insurance company pays full amount, the salvage or wreckage will become the property of insurance company. So when it is getting disposed, insurance company will pay GST. No sir, we are deducting the salvage amount and paying only the balance amount to the customer. That means the salvage or wreckage will be the property of the customer only. So if that is disposed of, GST liability will be on him based on other conditions being fulfilled, but not on the insurance company. So that is what the concept, right? So with this, we are done with this particular clarification also, and hence we are done with value of supply amendments. So now we are moving into 15 subsection 4 and subsection 5. See, 15 subsection 4, when 15 subsection 4 is applicable, 15 subsection 4 is applicable when 15 subsection 1 is not applicable. That is, when there is no transaction value, or it is between related person, etc., or if it is like price is not the sole consideration, there may be some extra non-monetary consideration, etc., etc., then you will go with 15 subsection 4, right? And 15 subsection 5 we will proceed when it is with respect to notified supplies by the government. So when the government is notifying these supplies, this should be the value of supply, then we will go with those valuation rules. So for these things we have to go through valuation rules, and before going into valuation rules, let us understand the definition of two important points. The two important definitions we need to understand before going into the discussion of valuation rules are nothing but, first one, open market value. The second one is supply of goods or services of both of like kind and quality. So one is open market value, the other is like kind and quality. This is what we have to understand. Sir, open market value means what? With respect to any supply, that can be goods or services, with respect to any supply. Open market value means exactly same supply. That means exactly same goods or services provided to the customer who is not a related person for monetary consideration. Now see, for example, I am a mobile dealer and I am gifting a mobile to my wife, iPhone 16 Pro Max. Okay, sir, when I am gifting iPhone 16 Pro Max to my wife, sir, I am charging 999 rupees only. Okay, to make sure it is not free. Okay, so here what should be the value of supply? You cannot go with transaction value 999 rupees only, I will charge GST on 999. Please understand, here we have to consider open market value. What is open market value? Same iPhone 16 Pro Max, if I sell to a customer who is not my related person and I am taking purely monetary consideration, no other non-monetary consideration, etc. In such case, I will charge from the customer 1,50,000 rupees. So here open market value will be 1,50,000 rupees. One thing you should remember here, sir, I am mobile dealer. I am not selling iPhone 16 Pro Max in my shop. I am just selling iPhone 16 Pro Max. I am not selling. Pro Max variety I am not selling. Then what should be the open market value? Same iPhone 16 Pro Max in the market during the same time. Somebody might be selling to some customers who are not their related person. Price is the sole consideration that you take. That means supply should be exactly same, but supplier need not be same. That you will take as open market value. Hope I am clear with this here. So I repeat, open market value means, sir, exactly same supply to non-related person, that is to unrelated person, price should be the sole consideration, and supplier may be the same person or a different person. Supplier may change, but we are getting only the open market value here. So this is open market value. The example, everything, hope I think it is clear for you. Next, supply of goods or services or both of like kind and quality. If at all you are talking about like kind and quality, understand, best example we can take Vivo and Oppo mobiles. What is this Vivo and Oppo mobiles, sir? Example, sir, exactly may not be same, but it is having similar characteristics, quality, quantity, functional components, materials, and reputation. Same or closely or substantially resembles the same supply. Okay, so this is similar supply, not exactly same supply. Hope it is clear. This is similar supply, not exactly same supply. Here also supplier and supplier may be the same person or a different person. It doesn't matter. So this is what the meaning of goods or services of like kind and quality. Okay, so that is what the concept. So hope you are clear with this two definitions, right? So let us go with the valuation rules now. So when we are going through valuation rules, the first rule we have to come across is rule 27. Understand, rule 27 is mainly applicable when, sir, rule 27 is mainly applicable when there is consideration actually. Okay, consideration is there, but it is not fully in terms of money, then only rule 27 will come into picture. That means for schedule 1 transactions, rule 27 is not applicable. Clear? So rule 27 is applicable only when there is consideration present, but it is not fully in money. That means it can be some non-monetary considerations also involved. So schedule 1 transactions, I repeat, rule 27 will not come into picture. So just to summarize rule 27, what it is all about, sir, rule 27 says, simple. Rule 27 says, first go with open market value. If open market value is not available, the monetary consideration plus non-monetary consideration given, that's monetary value of non-monetary consideration, that also you take as value of supply. Sir, that is also not possible, sir. Then go with the value of like kind and quality of the goods what you have purchased or services you have procured. That is also not possible. Then go with rule 30 and then rule 31. This concept is same for all rule 27, 28, 29, this discussion. That means you go with rule 30 and 31. First rule 30, rule 31. Okay. But if it is goods, please understand, sir, straight away follow rule 31st and then rule 31. No, sir, if it is services, you have an option. First go with rule 30 and then rule 31. Or straight away go with rule 31 and then go with rule 30. This discussion is same for all the rules 27, 28, 29. Okay. Sir, please give me an example, sir, for this. Understand? Now, for example. Okay. Now, for example, you are buying a mobile by exchanging an old mobile. Let us assume you are buying a mobile by paying 20,000 and old mobile value is 4,000. Now, what is the value of supply? Sir, the value of supply is open market value of the new mobile is 30,000. Then value of the supply will be 30,000 because open market value available. Sir, open market value not available, sir. Then the value of supply will be 24,000. Money plus money value of the non-monetary consideration. I gave 20,000 rupees and I gave a mobile which worth 4,000. So now 20,000 plus 4,000 will be the value of supply. That means 24,000. No, sir, open market value not available. This money value, non-money value also I am not able to identify. Then like kind and quality. The like kind and quality with the similar characteristics, close to the same reputation, all that stuff. Sir, the product available somewhere in the market, somewhere will be 27,000. Then that will be the value of supply. Okay. Otherwise, go with rule 30 and rule 31. That is what the concept. Okay. So simple. Rule 27. This is what rule 27 all about. Hope it is clear for you. Yes, now rule 28, very important rule. See, rule 28 is all about value of supply between distinct persons or related person other than through an agent. Other than through agent, very important, because through agent rule 29 will come into picture. So rule 28 is applicable when there is supply of goods or services between related person or distinct persons. Okay, whether or not for consideration, please remember this. Straight away you have to apply rule 28. Right, that is what the concept. Now, if you see the summary of rule 28, I have prepared a flow chart for you, and there are lot of examples also to understand. Rule 28 says that value of supply, if the supply is happening between related persons or distinct persons, value of supply you please take as open market value. Value of supply you please take as open market value. If it is not available, take like, kind and quality straight away. Okay, so simple. For rule 27, if you see, this is the flow chart, and rule 28, this point will not come. Okay, then automatically it becomes rule 28. Okay, so if you see rule 28, value of supply open market value, if that is not available, like, kind and quality. If that is not available, rule 30 and 31 as we have discussed. If it is goods, first go with rule 30 and then 31. If it is services, it is your choice, rule 30 and 31 or rule 31 and 30 as per your will and wish. That is absolutely fine. But here there are two provisos below rule 28. That is what crucial for us. First proviso says, and understand, first proviso is applicable only for goods and second proviso is applicable for both goods and services. Rule 28 first proviso says, sir, only goods if you are dealing. See, value of supply, as we have seen, open market value, like, kind and quality, all that stuff. But you also have an option to take value of supply if these goods are sent to that related person or distinct person for further supply from such place. Okay, in such cases, what you can do, sir, value of supply instead of open market value, all that, like, kind and quality, you can take from that other related person or other branch they are selling it. No. So, what is that value of like, kind and quality of goods they sell from their place? Okay, on that 90% you take as value of supply. So whatever the goods you are sending to your related person or distinct persons, if it is intended for further supply by that related person or distinct person, then value of supply at your option, you can take open market value if you want, no problem. Otherwise also you can take 90% of the sale price to unrelated buyer by that related person or distinct person. Okay, of like, kind and quality, that will be taken as value of supply. So either open market value you take, no problem, or 90% of the sale price from your related person, that branch, that you take as your will and wish. Okay. Second proviso says both goods and services. I will show you the examples also. Second proviso says both goods and services. Sir, if related person or distinct person transaction, we said open market value will be the value of supply or like, kind and quality, all that. But the interesting point is, very important point, if at all the recipient is eligible for 100% ITC. If the recipient is eligible for 100% ITC. Yes, I just did not write here. If recipient is eligible for 100% ITC. Okay, then whatever the value declared in the invoice is deemed to be open market value, and hence you can take that itself as value of supply. So I repeat, if at all recipient is eligible for 100% ITC, whatever the value of supply declared in the invoice, that will be treated as value open market value, that you can take as happily value of supply. That is what interesting proviso here. Hope it is clear for you. So let me show you an example also. Now see, for example, see, there is a company called Vivarth Private Limited registered in Tamil Nadu. Now this Vivarth Private Limited is sending the stock without consideration to its Tirupati branch, which is there in Andhra Pradesh. Now when they are sending this raw material, let us assume 40,000 kgs raw material, let us assume from Chennai branch to Tirupati. That means Tamil Nadu to Andhra Pradesh, they are sending the goods. In that case, the open market value of that goods is, let us assume, 5 lakhs. Then value of supply will be taken as 5 lakhs. Sir, open market value not available, sir, but like, kind and quality we have, sir, 5,20,000. Then value of supply will be 5,20,000. Sir, that is also not available, sir. Then what should I do? See, if this is available or not available, please understand, if from Tirupati branch we are selling these goods of like, kind and quality for 6 lakhs, then we can also take, see whether open market value is available, like, kind and quality available, all that stuff, keep it aside. Sir, if at all from Tirupati branch I am selling it, the company is selling it for unrelated buyer, the like, kind and quality goods 6 lakhs. the entire information for you in the question. It will be available, nothing to worry like how I will identify all these things. In reality, in practice, you should go and identify all that, but in exam they will give you all the details in question. You need to understand the question and pick the information, that's all. So if at all from Tirupati branch they are selling this raw material, like kind and quality raw material, whatever the price they are selling to the unrelated person, on that you take 90% as value of supply. This is also available for you. If you want, you choose that. Okay, if open market value is not available, you come to like kind and quality. Sir, open market value is available, you take market value, open market value. Even if open market value or like kind and quality, whatever is there as the situation, if at all from that branch you are making a further supply, you can see the sale price on that 90% also you can happily take by avoiding these two people. By avoiding these two people, actually you can take this as value of supply. Hope it is clear for you. Okay, and as per the second proviso, there is one more interesting point. As you know, if Tirupati branch is eligible for 100% ITC, then they have given in the invoice, imagine they have given in the invoice 100 rupees as value. That 100 rupees itself will take as open market value, and that itself will be treated as value of supply. On that only they should pay GST. Am I clear? So if Tirupati branch is eligible for 100% ITC, whatever the value is declared in invoice, that shall be treated as open market value. That itself will be treated as open market value. Imagine in the invoice they have given 100 rupees, that itself will be taken as open market value. Hope it is clear for you, right? So that is what with respect to that example. Fine. So you can just take the screenshot of the example also if you want. I'll just make it full screen. Wait 1 second. See this 91 example, you can just take a screenshot also. Next there is 92 example also, 92 and 93 similar stories. You can take screenshot. One is between related person, the other is between distinct persons. Same concept, just the same concept. I've just given the examples. You can go through them. You can pause the video and go through the examples, or you can take the screenshots also, or we have the material in the Telegram channel in the description. Please check. Okay, this is one part of rule 28. Now the next one. So the next one is rule 28 sub rule 2 is got amended actually. So you will be seeing rule 28 and sub rule 2. I am attaching the amendment video here, so don't worry about the change in costume. Right guys, the next clarification is regarding the guarantee given by the directors or the corporate guarantee, where see I given here the notes for you to read all that for your better understanding. Yes, I have given notes here separately and an example also. You can just go with that. So here first of all, one situation is where company is taking the loan, director is giving the guarantee for that. Next situation, company is taking the loan, another related person, another company is giving the guarantee. So we are calling it as corporate guarantee. In such cases, because they are related persons, whatever is happening between them is supply, and there should be GST on that. For charging the GST, there should be value of supply. Value of supply, you know, when there is related person situation coming into picture, rule 28 will come into picture. So rule 28 is being amended here, and there is a clarification, all that stuff also. So let us see that. Sir, nothing but when director is giving guarantee to the company, I mean guarantee to the banks for the loans taken by the company, in such cases, sir, what is the value of supply? The value of supply is, see, as per rule 28, the open market value should be the value of supply, because transaction between related person. Now the RBI guideline says any director giving corporate guarantee, the guarantee to the loans taken by the company, he should not receive any consideration. That is what RBI guideline says. That means for this transaction there is no open market value going to be available. Then here what is the value of supply? Nothing. So nil and no GST. But RBI guidelines also says that in exceptional circumstances, you can pay remuneration to the director for giving this guarantee. If that is the case, whatever the remuneration has been given, that itself will be taken as value of supply, right? So that is first part of this particular discussion. Now coming to the next part. The next part is, sir, if a company is giving guarantee to another company which is nothing but a related person, right? In such cases, sir, here please understand, guarantee is to be given to a company which is located in India. Okay, the company should be located in India, then only this one. If the company is located outside India and you are giving guarantee, then this will not come into picture. Okay, so now, sir, what is the value of supply? What is the value of supply? The value of supply is 1% of the guarantee given or actual consideration. So 1% of the guarantee given per annum and of the amount of such guarantee given per annum or actual consideration, whichever is higher will be taken. Now here one another interesting thing is, if the recipient who is taking the guarantee is eligible for 100% ITC, whatever the consideration they are charging, that itself will be taken as value of supply. I will simplify it even further with an example. So here there is an example given. If you see, sir, there is HDFC Bank which is giving loan of 100 crores to Vaikunth Limited, which is a subsidiary of Mahavishnu Limited. For this 100 crores, somebody should give guarantee to HDFC Bank. Imagine if HDFC Bank is getting guarantee from the director of the company called Vishnuvardhan, Mr. Vishnuvardhan. Then the law says, for these type of things, actually as per RBI guidelines, Mr. Vishnuvardhan is doing it without consideration, and value of supply is nothing but open market value, and we have understood already there is no open market value for this. So because there is no open market value, value of supply will be nil. So that is first thing. Suppose if Mr. Vishnuvardhan is charging a consideration of 20 lakh rupees for giving this guarantee, then the 20 lakhs will be taken as value of supply. On that there will be GST. Hope it is clear for you, right? Next, sir, suppose if the guarantee is given by, this is what the second part of discussion actually. If the guarantee is given by Mahavishnu Limited, the holding company of Vaikunth Limited, and here the guarantee is given for 5 years, and each year the renewal will happen. And Vaikunth Limited pays 25 lakhs to Mahavishnu Limited as a consideration for this every year. Now, please understand what is the value of supply. The value of supply will be 1% of 100 crore, the guarantee for which you have given, or 25 lakhs, whichever is higher. So, obviously 1 crore will be higher, and Mahavishnu Limited has to pay GST on 1 crore because being the supplier. If Vaikunth Limited, the recipient, can take ITC fully 100%, then sir, whatever is charged in the invoice, whatever is the amount charged in the invoice, that is nothing but the actual consideration, that itself will be taken as value of supply. We will not compare it with 1% of the amount on which guarantee is given. Clear? So that is what the second scenario. Hope it is clear for you, right? So I request you to just download the material here, like the amendment material is available in the description. You can just go through the Telegram channel, you will download it. If you have the time, please write that also, so that once it will be better stored in your memory. So otherwise you can just take a screenshot of this also, it is covering everything. My suggestion is, better if you write it once, you will have even better clarity, or you can remember it for a longer period. That is what this clarification. And one more thing, some small part of discussion is also left here in this. Sir, there are various other possibilities also with respect to this clarification. Here, sir, what they are telling now, see, loan, you give guarantee, no sir, you give corporate guarantee. Here the problem is, loan is partly availed. Out of 100 crore, they have just availed 30 crores, or they did not even utilize that. Imagine it is a bank overdraft or whatever it is, sir, they have not yet availed it fully. Whether the GST will be charged on only loan amount availed, etc. Here, please understand, value shall be 1% on the amount guaranteed, but not on the loan disbursed. Please understand that. So how much loan disbursement happened, that doesn't matter. Here you have given guarantee for how much amount, on that 1% we will take as value of supply, right? So that is first one, right? We are done with this. Next, second one. Sir, what is the second one? Takeover of existing loans. That means, you know, normally HDFC Bank is having loan, and we are shifting it to ICAI Bank. So this takeover of existing loan is there, no? Again, we should pay GST on that. Within 1 year itself, like already I have paid GST when the loan was taken in HDFC Bank, 100 crores, director gave guarantee or another company gave guarantee. Now, sir, it is being shifted to ICAI Bank after 6 months or 7 months. Should again I pay GST on this? So not required. Please understand, merely an assignment of already issued corporate guarantee, the GST shall be applicable only if there is any fresh guarantee. Only if there is any fresh guarantee, otherwise GST will not be applicable. Am I clear? So that is what the concept. Next, so simple, takeover of existing loans, no GST again. Only one, simple, once you pay for the corporate guarantee, what you give, you pay once. Again, if there is any fresh loan, for that again you are giving any guarantee, again you pay. Just shifting of loan from one bank to another bank and all, again and again, don't pay GST. Okay, that is second one. Now the third one, the intra-group corporate guarantee. Obviously, we are group companies. One company is giving corporate guarantee to another company. Sir, if it is given by the domestic company, GST will be paid under forward charge. If the guarantee is given by the foreign company, then GST will come under reverse charge. Simple. Sir, what if the company is located outside India to whom we are giving guarantee? As I already told you, if it is export of service, if the guarantee is given to a company located outside India, the above provisions are straight away not applicable. This is only when the recipient, the company to whom you are giving guarantee is located in India, then only these provisions are applicable. Otherwise, these provisions are not applicable. Now, sir, what if guarantee is given for multiple years or less than 1 year? Then obviously what, for each year you will charge 1%. In case of less than 1 year, sir, you will go proportionate calculation. You know, for example, loan amount is 100 crores, guarantee given, we have given guarantee for loan of 100 crores and it is for 4 months, and we got a consideration for giving guarantee 2 lakhs. This another company got a consideration of 2 lakhs. What is the value of supply? 1% of 100 crores, sorry, 100 lakhs into, this is not for 1 year, this is for 4 months, so 4 divided by 12, compare, you will get 4 lakhs, or compare it with 2 lakhs, whichever is higher. 4 lakhs is higher, value of supply will be 4 lakhs. That way proportionately you should do the calculation. Hope it is clear for you. Right, next. So, sir, suppose what if the corporate guarantee is given by multiple related entities? GST shall be paid by each such co-guarantor on proportionate basis. For example, this is Vivard Limited. Sir, 100 crore I am taking loan, and for that guarantee A Limited is giving, B Limited is giving. A Limited is giving for 60 crores, B Limited is giving for 40 crores. In such case, for 60 crores, A Limited will pay GST, for 40 crores, B Limited will pay GST on proportionate basis. Simple. Okay. So that is what all about this clarification and the amendment in rule 28 sub rule 2. So let us move on to the next clarification. So the next one, if you see, the clarification regarding the services provided by head office to branch officers. See, where head office is providing some services to branch officers for which full ITC is available to the concerned branch officers. There are internally generated services, and for that there are invoices issued. Here the problem is, see, the head office is raising the invoice for the services provided to branch office. In that branch office, whether in that invoice to the branch office, whether the cost of all components including the salary cost of the head office employees who are involved in providing the service, this also should be included in the invoice. That is the doubt. Is it to be included? Then the department has clarified, sir, if the ITC is available, please understand, if 100% ITC is available, whatever is declared as an value in the invoice, that itself will be taken as open market value. So you need not worry about adding the cost of the head office employees into this, all the stuff. So not required. And if invoice itself is not raised, then the open market value itself will be treated as what? Nil. That means, understand, sir, head office is providing services to branch office, and in such cases, value of supply, if 100% ITC is eligible for the recipient, the branch office, then invoice is raised, that itself will be taken as open market value. Not raised, open market value will be taken as nil. On that, GST will be paid. Clear? So whether the cost of employees is included or not of the head office, it doesn't matter. Not only here, one interesting part is that even if the branch office is not eligible for 100% ITC, in that cases also, it is not mandatory to add the value or cost of the employees of head office in the taxable value of supply. So whether simple ITC eligible or not eligible, cost of employees, all this stuff of head office need not be added, not an issue. Okay, so that is what the another part of this clarification. Okay, 100% ITC available, 100% ITC not available. Clear? So with this we are done with that clarification. Let us move to the next one. So the next, rule 30. Sir, when rule 30 is applicable? When rule 27, 28, 29 are not able to help you, then rule 30 is applicable. Rule 30 says, see, what is your cost of production or cost of acquisition or cost of provision of such services or goods, whatever it is. See, in that case, 110% of that cost will be taken as value of supply. That is rule 30. Now, rule 31 says, sir, if rule 30 is also not able to help you, that means 27, 28, 29, 30 are not able to help you, then rule 31 says, follow the provisions or the spirit of the law as per section 15, and in consistent with those provisions, you determine the value. That is what rule 31 is saying. And one more interesting thing, as you already know, if at all you are dealing with services, before following rule 30, you can straight away come to rule 31. Okay, that is what rule 31 and 30 all about. Small points. So we are done with 15 subsection 4 and related rules, all that. Now 15 subsection 5, you know, on notified supplies, the valuation will be done as per the rules here. So rule 31A, 31B, 31C and 32 will be going through. So what is rule 31A? First of all, rule 31A is applicable for when it is in case of lottery, betting, gambling, horse racing, all that stuff. And please understand, rule 31B is given for online gaming, including online money gaming. Rule 31B is available, and for casinos, rule 31C is available. So that we'll be discussing rule 31A. Now lottery, betting, gambling and horse racing. For that, what is the value of supply? The value of supply is nothing but simple, sir. If at all it is a lottery, sir, whatever the value is nothing but 100 by 128 of the face value or the price notified in official gazette, whichever is higher. So it is nothing but, see, what you will do in case of lottery or this betting, gambling, all that, horse racing and all. See, if at all you are buying a lottery ticket worth 250 rupees, if it is the 250 rupees worth, then face value or whatever, what we will do, sir, we will take 250 into 100 divided by 128, that will be the value of supply. That means 195.313. Or we will check, sir, whatever is the notified value, in the official gazette, 240 rupees. 240 into 100 divided by 128, that we will check, whichever is higher. Okay, obviously 250, 240, whichever is higher, 250 on that into 100 divided by 128 will give you the value. Hope it is clear for you. Okay, so this is next part, simple one, rule 31A. Sir, if it is lottery, that is for lottery, yes. And if it is for actionable claims such as betting, gambling and horse racing, 100% of the face value of the bet, how much you are putting, or 100 or amount whatever paid into the totalizator, that is with respect to horse racing. So if it is betting and gambling, 100% of the face value of the bet. For example, you are betting 1 lakh rupees, 1 lakh will be the value of supply after deducting the charges and any statutory taxes, all that stuff. So how much ever bet you are placing, that much will be the value of supply. If it is horse racing, you know the totalizator device, all the stuff. So how much ever the amount is paid into the totalizator, that will be the value of supply. Okay, so that is rule 31A. 31B and 31C, I am attaching the video of amendment, so that again there will be change in costume, don't misunderstand. So the next one, if you see, rule 31B and 31C, the new rules. See, this is with respect to online money gaming, online gaming. With respect to this, what will be the value of supply? So you know, online rummy or online PUBG, etc. For online gaming and online money gaming, all these things, sir, what is the value of supply? And not only that, sir, the same logic, same provisions are applicable even for casinos also. Okay, in casinos you might be going and playing various games. For that you might be purchasing some tokens, chips, coins or tickets, all that stuff, right? So for that, what is the value of supply? So I repeat, rule 31B, 31C, different situations, but conceptually both are same. So what is the value of supply here when you're going through online money gaming or online gaming, all the stuff? Sir, imagine for playing that game, you have deposited 10,000. That 10,000 will be value of supply. Sir, I have used only 8,000. And 2,000 they have refunded to me. Now, what will be the value of supply? The value of supply still will be 10,000. That means once you have deposited the amount, whatever you have deposited, that amount will become the value of supply, because they have refunded it or returned it to you, whatever reasons, sir, that will not be considered. So any amount returned or refunded by supplier to the player for any reasons whatsoever, including player not using the amount paid or deposited. If you say like, sir, I have not used that money, so that I am taking it back, still we will not ignore that. We will take GST on full amount, and that is not only on the normal currency money whatever you have paid, but also money's worth including virtual digital asset. So I can say, like, if you put up even cryptocurrency also, then it will be taken as consideration and it will be subjected to GST. So even in casinos also, if you are going to play any this games where you are buying the tokens, chips, coins, tickets, all that stuff, how much ever you have deposited, that much will be taken as value of supply. I repeat, if anything is returned because you have not played the game, all the stuff, then also we will not leave you, we will charge full GST on full value. Okay. Now another interesting point for both this rule 31 and 31B and 31C is this one. Sir, this is applicable for both 31B and 31C. If you have won, let us assume your investment, I mean you have put up 10 lakhs, won 20 lakhs, you continue playing that 20 lakhs. 20 lakhs became 100 lakhs, 100 lakhs became 200 lakhs. You continue paying, there won't be any GST. But if you withdraw and again put it back, then only we will charge GST. So out of the 10 lakhs, you made it 100 lakhs. Out of 100 lakhs, you are withdrawing 40 lakhs. And then you are playing. So after playing entire balance 60 lakhs, you lost. Now again you are depositing 40 lakhs to play. That 40 lakhs will be again subjected to GST. Okay. So that is what the concept. So I repeat, sir, you have taken 10 lakhs to the casino or for online gaming or online money gaming. That 10 lakhs you kept on winning. It became 100 lakhs. After becoming 100 lakhs, what? You are withdrawing 40 lakhs for safer side. Okay, let me just close all my loans and become debt free like that. So let me play with this 60 lakhs. You are playing. And that 60 lakhs became zero now. Now you are putting back again that 40 lakhs. Then that will be subjected to GST again. So that is what the concept. So here I just give you the meaning of online money gaming and online gaming. You can just pause the video and go through that. So online money gaming, we can say Rummy Circle, online gaming, you can say PUBG. Okay, so this is what the concept. Okay, there is a small example here: casinos and online gaming, including online money gaming. Sir, Mr. Gambler is visiting Big Daddy Casino in Goa, participating in a gamble by buying chips, paid 10,000 in cash and 20,000 using Bitcoin. Refund, he has taken 5,000 for not using the chips. He won 60,000 and played using 40,000, withdraw 20,000 and invested back 15,000. What is the value of supply? So the value of supply is, first he has deposited 10,000 and 20,000. Later on he took refund, all that, it will not be considered. So 30,000 will be value of supply. And later on again, whatever the winnings etc story happened, again how much amount he has invested? So he has invested 15,000. So value of supply will be 15,000 again. So that is the story. Okay. So a simple example to clarify every adjustment, right? So this is what all about this particular rule 31B and 31C. So let us move on to the next amendment. So the next one is rule 32. So rule 32, you know, sir, for certain specific supplies here, they are talking about the value. And please understand, the first one here is with respect to sale or purchase of foreign currency, including money changing. Here with respect to sale or purchase of foreign currency, there are two options available. First option is C. First of all, understand one mistake you might be doing here is, using these rules we are calculating only value of supply, not the GST payable, because the values, the amounts are being smaller. You should not misunderstand this is GST amount. No, we are calculating here value of supply, not the GST amount. So when you are buying and selling foreign currency, the first option for you available is, what is the transaction you are undertaking? See, the option one is, see, one is standard flat rate based upon the amount of transaction happening. The next one is different. The next one, first option is nothing but is not flat rate. Second option is flat rate. Here first let us go with the transaction based on that, all that stuff. So first option is nothing but, sir, I am buying and selling foreign currency, sir. In that, Indian rupees may be involved, may not be involved. If Indian rupees is involved, the buying or selling rate, whatever it is, and RBI reference rate for that currency, whatever is there, into number of units. For example, here, sir, I am exchanging $100 into rupees, where 74 rupees is the currency rate. Now here RBI reference rate is 75 rupees. So what is the value of supply? 1 rupee is the value of supply. How many dollars you are changing? $100. So 100 rupees is the yes, 100 rupees is the value of supply. Okay. So this will be the value of supply, on that you should pay GST. Sir, suppose this RBI reference rate of 75 rupees is not involved, so then what should I do? Then here $100 you are converting into rupees, 74 rupees. So how much Indian rupees are involved? 7,400 rupees is involved, sir. In that 1% will be the value, that is 74 rupees will be the value. So I repeat, when Indian currency is involved in exchanging, you see the RBI reference rate and the actual buying or selling rate, whatever is the difference into number of units. of foreign currency. That will be the value of supply. If RBI reference rate is not available, then if RBI reference rate is not available, sir, if RBI reference rate is available, buying rate or selling rate minus RBI reference rate into total number of units of foreign currency. Okay, if RBI reference rate is not available, then what we should do, 1% of the gross amount of Indian rupees involved in that transaction, that will be the value of supply. Hope it is clear for you. Sir, suppose I am buying and selling foreign currency where Indian rupees are not involved. For example, I am giving UK pounds and getting dollars. Imagine I am getting giving UK pounds and getting dollars, something like that. That means dollars are given, pounds are taken, or pounds are given, dollars are taken. Indian rupee is not involved. Then what should be the value of supply? In that case, what you have to see now? See, for example, $9,000 you are converting into 4,500 pounds. Both dollars, $9,000 also you convert into rupees. 4,500 also you convert into rupees using RBI reference rate. Okay. Whichever the amount you get out of the two currencies. Okay, sir. So out of the two currencies, you see how much ever less amount you got, which got less amount. For example, $9,000, if I am converting it into rupees, I am getting the RBI reference rate is 74 rupees. I am getting 4,41,000. If I am converting 4,500 pounds into rupees RBI reference rate is 98 per pound, then I am getting 6,66,000. Whichever is less, that amount will be the amount on that I should take 1%. That will be the value of supply. Okay, so if neither of the currencies involved is Indian rupees, what we should do, we should nothing but convert both the currencies into Indian rupees using the RBI reference rate, and whichever is less, on that 1% you charge, that will be the value of supply, right? So that will be the value of supply. This is first option. So as I told, there is a second option. Whichever you want to follow, you follow. But the second option is based on the slab rates. Simple. Sir, what they are saying in the second option, simple. You see what is the transaction involved, what is the value of currencies exchange in that. Sir, if it is up to 1 lakh, that means 0 to 1 lakh rupees, whatever the currency you are exchanging value is, 0 to 1 lakh rupees. In that, what you should do, 1% of the gross amount of currency exchange, or 250 rupees, whichever is higher. That means minimum 250 rupees. That means if it is 0 to 1 lakh, 250 or 1%, whichever is higher. Okay, next 1 lakh to 10 lakhs, sir, it is 1000 rupees plus 0.5%. Sir, if it is greater than 10 lakhs, 5,500 plus 0.1%, or 6,000, 60,000. 60,000, whichever is less. That means understand, sir, this is the slab rate. That means understand, minimum amount should be 250. The value here we are talking, again we are not talking about GST, and maximum amount of value will be 60,000. On that they will charge GST. This is another option which they can go with. Okay, so there is an example here. You can just go with the example, pause the video and just quickly go through the example. With this, we are done with this particular forex dealers option to go with the valuation here. 1 second. So if you want, just pause the video and just go with the example. Hope it is clear for you. Right. So let us move on now. Please understand here. See, these things, whatever are given in Rule 32, sir, these are nothing but optional. These are option to the supplier. Sir, if he wants to follow these rules, he can follow that. Otherwise, whatever the consideration he is getting, on that they can straight away pay GST. That is what the concept. Okay, so we are done with this forex dealers. Next one is with respect to air travel agents. They can pay GST on the commission what they are earning, or straight away, or they have an option here. What is that option? Sir, they have the option to pay GST on the value. What is the value now? If it is domestic booking, 5% of the basic fare they can take it as value, or if it is international booking, 10% of the basic fare they can take it as value. On that they can pay GST. Sir, what do you mean by basic fare? So the basic fare is nothing but generally on the amount on which they get commission, the air travel agents. So here, if you see, Dagan & Sons air travel agent, sir, they are computing the value of supply. So they are getting this particular, see, domestic bookings basic fare is 1,900,000 and other charges 9,510, taxes 4,990. Total value of tickets is 1,15,400. But what is the value of supply as per GST? Sir, on this domestic booking, they can pay 5% as value of supply. So 5,045 rupees is the value of supply. On that, if they are paying GST, more than sufficient. Same logic with respect to international bookings. Sir, basic fare is 3,16,880. On that 10%, 31,688, they can take as value of supply. On that, they can pay GST. So that is what the concept. Clear? So with this is with respect to air travel agent and his commission. So he can straight away pay GST on the commission whatever he is earning, or he can go with this option, whichever is beneficial to him. So the next one, the next business is life insurance business, the premium paid. See, the premium paid generally will be the value of supply, on that you will pay GST. But here the interesting part is, in the premium whatever you are paying, sir, there is also some portion which is related to investment. That means portion of the premium is towards the risk coverage and part of the amount will be towards investment on behalf of the customer. If that is known to the customer, sir, the value will be total premium whatever has been paid minus the investment which is known to the customer. No sir, customer doesn't know about the investment. So in that case, first year whatever the premium is there, out of that 25% will be taken as value, and subsequent years 12.5% will be taken as value. I repeat, if the investment portion is there in the premium and that is not known to the customer. Okay, that is first and second case. Now there is another case, sir. If it is a policy with single annuity premium, sir, in that case, sir, if it is a single premium annuity policy, 10% of that premium amount will be taken as value of supply. And sir, as I told you, if the premium doesn't involve any investment towards the risk coverage, then straight away the total premium paid will be taken as value of supply. So for that, I have an example here. So the question, you can just pause the video and go through this, and you will be done with this concept. So hope it is clear for you. So let us move on to the next one. Right. So the next one is with respect to the special provisions related to value of goods by a person who is buying and selling second-hand goods. Now see, when you are a dealer of second-hand goods, I will just make it simple here. See, look at this. So first of all, if you have taken ITC, okay, normal valuation is applicable for you. You proceed, no problem. We are not talking with you, sir. We are talking about people who have not availed ITC. In that case, margin scheme will come into picture. What margin scheme says? Now you are buying and selling second-hand goods. Whatever the sale price is there now, minus whatever the purchase price, that you take as value. So if it is negative, ignore it. Simple. So value of supply is sale price minus purchase price. If you have not taken ITC on the second-hand goods purchased, when you are selling, sale price minus purchase price will be the value that will be taken as value of supply, the difference amount, if it is positive. If the difference amount is negative, then you will ignore it. Okay, this is what the margin scheme about which our Nirmala Sitharaman madam was talking about, and there were some controversies because of her explanation skills. Otherwise this is okay, fine. There is nothing negative here actually, I mean bad thing, all that stuff. So it is good only, right? So that is one. And next here, one interesting thing is, sir, when you are calculating the purchase price here, what if, sir, I have recovered the goods from a person who is defaulting my loan. I have given loan and that fellow has defaulted. So from the defaulting borrower, I have recovered some goods and now I am selling that. In that case, sale price minus purchase price. Purchase price, when you are calculating, you should see whatever is the actual price for which he has purchased on the date of purchase, and till the date of disposal by me, I have possessed that, no, I have recovered it from the defaulting borrower, no, that I am selling, no, till the date of disposal. How many quarters are there, or part thereof? For everything, minus 5%. So actual price minus 5% per quarter or part thereof. Okay, from the date of purchase till the date of disposal by the company who has recovered that. Okay, the lender. So that will be taken as purchase price, and compare it with sale price, whatever is the difference that you take. Here there is a small question also from my end. See, look at this properly. Sir, Vishnu has taken a car, unregistered fellow taken a car from Sundaram Finance for 10 lakhs. He has taken a loan, and 5th February he has done that, and he has defaulted the loan repayment from Sundaram Finance, has repossessed the car and sold it on 7th July. Now, what is the value of supply of the car by Sundaram Finance when they are selling, if at all sale price is 9 lakhs or 8 lakhs as the case may be? Sir, you know the sale price and you know the sale price 9 lakh or 8 lakhs, two different scenarios. But first thing we should know is the purchase price, correct? What is the purchase price? As I told you here, defaulting borrower, you are repossessing the goods, then what should be the purchase price? Means the purchase price is nothing but actual sale price by Vishnu, 10 lakhs minus 5% into how many quarters he has used. He has used it in the quarter of Jan to March. Feb is falling in Jan to March quarter, and of course I have used it in April to June quarter, and of course I have used it in July to September quarter. So I have used for 3 quarters. Please understand, part thereof also you should take as full quarter. So I have used it for 3 quarters. So 10 lakh minus 15%, 8 lakh 50,000 will be taken as purchase price by Sundaram Finance. Now they are selling it for 9 lakhs, means 9 lakhs minus 8 lakh 50,000, 50,000 will be the value of supply. If they are selling it for 8 lakhs, 8 lakh minus 8 lakh 50,000 minus 50,000, so the value of supply will be nil. So that is what the concept. For your clarity, if you want, you just pause the video and one more time just go through this example carefully. For you, if you felt like it is fast, I have discussed, you just try to understand this, pause the video and go through the example. Now continuing the discussion here, so suppose if at all we are purchasing cars, we are using them and selling vehicles, cars or anything, vehicles, sir, we are buying the vehicles and we are selling, we are using them and then we are selling. No, we are not second hand car dealers. We are buying the cars, using for our personal purpose or business purpose, whatever it is, and we are selling the cars. In such cases, what is that we have to see? You have taken ITC, for you this is not the place, please get lost. Normal valuation, okay? If you have not taken ITC, then the value of that supply will be sale price minus depreciated price if you have taken depreciation, if you have availed depreciation benefit under income tax. No sir, I have not taken any depreciation benefit, then sale price minus purchase price, that will be the value. If it is negative, you will ignore it, okay? If it is negative, you will ignore it. No sir, I have availed depreciation benefits, sir, then sale price minus depreciated value, that will be the value of supply. I will show you one small example here. See, Vivarth Private Limited is registered in Tamil Nadu, buying the car and using it for business and selling the car to Mr. Vishnu, okay? Now sir, what is happening? The car when they have purchased, the value is 10 lakhs, GST paid 1 lakh 80,000. You know, car purchase, it is blocked under 17 subsection 5. We are not taking ITC. So we have capitalized the entire amount for 11 lakh 80,000. Now on that, if you see, we have availed already depreciation 8 lakh 20,000. That means 11 lakh 80,000 minus 8 lakh 20,000, 3 lakh 60,000. 3 lakh 60,000 will be the depreciated value, okay? Now for what price I am selling this car? I am selling this car for 4 lakh rupees. So sale price minus depreciated value, 4 lakhs minus 3 lakh 60,000 will give me 40,000. So 40,000 will be the value of supply. I repeat, sir, because I am buying the car, using for my business purpose, all the stuff, and I am selling, sir, ITC not taken. ITC taken means normal valuation only, transaction value, all that nonsense. No sir, I have not taken ITC. Then see whether you have taken depreciation. Yes sir, I have taken depreciation. Then sale price minus depreciated value. How do you get depreciated value, sir? You see, when you have purchased, for how much you have capitalized and minus depreciation now. So balance value, whatever is there now, WDV value, right? Just take it that way. So WDV value, sir, 3 lakh 60,000. For how much you are selling? 4 lakhs, sir. 4 lakhs minus WDV value 3 lakh 60,000. 40,000 will be the value of supply. Simple. So that will be the value of supply. Suppose, sir, Happy Tours and Travels registered in Gujarat. They are selling this car to Mr. Vishnu. Sir, they are selling the car for 4 lakhs. And the cost of car is 10 lakhs and GST availed 1 lakh 80,000, but paid 1 lakh 80,000. ITC availed, sir. Depreciation, same story. Now, what is the value of supply? You know, these valuation rules are not applicable. Straight away, transaction value will be taken as value of supply. What is the transaction value? 4 lakhs. So that 4 lakhs will be taken as value of supply because you have taken ITC benefit. So that is what the concept. Hope it is clear for you. Okay. So this is the example. So with this, we are done with that particular point of buying and selling second hand goods and connected used vehicles also. So the next one is value of supply of services which are provided in case of a pure agent. Please understand, any expenditure which you are incurring as a pure agent will be excluded from the value of supply, but there are certain conditions here. What are the conditions? So the pure agent, when he is making the payment, he is making the payment as a pure agent to the the supplier, when he's making the payment to third parties, so he's making the payment as a pure agent of the recipient, and he's making the payment on behalf of the recipient, and it is separately indicated in the invoice by the supplier when he's giving invoice to the recipient. And one more thing, these supplies, whatever he has procured as a pure agent, they are purely in addition to what he is providing on his own account. Okay, so that should be the case. For example, I am a chartered accountant incorporating a company on behalf of the client, and for that, whatever the government charges I paid, sir, I am paying from my pocket and later on recovering from the client. So that is pure agent. Okay, so they are in addition to the services what I am providing in my own account. I charge some consideration, let us assume 1 lakh rupees for company incorporation. In that case, sir, whatever the amount I have collected for stamp duty, etc., the government challan payments, 200, 400, all that stuff, sir, that is not included in the value of supply because I am acting there as a pure agent. Okay, so that is what the point. Here, pure agent means what, sir? Sir, pure agent means the meaning says pure agent means, first of all, there should be a contractual agreement between recipient and supplier, as the supplier is acting as a pure agent, incurring the cost on behalf of him, and the supplier neither intends to hold or holds any title on them, whatever he is procuring. He doesn't have any own interest on the goods or services what he has procured, and he receives only actual amount incurred in addition to the amount what he has received on his own account. As I told, I am charging 1 lakh rupees for company incorporation, I am receiving that, and also they are paying me that 1200, 1300, 400 rupees, 500 rupees, which I have paid to the government as a stamp duty, etc. Okay, so then that will be excluded from the value of supply. That is with respect to pure agent. And this airlines acting as a pure agent, collecting this passenger development fees and user development fees and giving it to airport authorities or airport operator, will be excluded from the value of supply of the airline operator, that we have already discussed in supply chapter. Okay, so here airlines are acting as a pure agent of airport operators. So this PDF, passenger development fees or user development fees, what they are charging from the customer on behalf of the airport operators and giving it to the airport operators, will not be included in the value of supply of airlines. So that is the point here. So with this, we are done with this pure agent also. So the next one, if you see normally in this big malls or airports, etc., sir, these real estate companies or malls or airport operators are renting the premises, as well as they are providing electricity to the tenants, and they are collecting the consideration as well as electricity charges, all that stuff. What is the GST treatment for that? That was the doubt, and for that it has been clarified, sir. This is a bundled supply where renting of immovable property is done, and that is principal supply, and incidental or auxiliary to that, electricity is also provided, and no matter whether it is billed separately or not, it will be treated along with the principal supply. So renting of immovable property itself will be taken into account. Suppose if they are paying this real estate companies or the resident welfare associations or anybody for that matter, airport operators, etc., they are paying the electricity charges on behalf of the tenants as a pure agent, then it will be excluded from the value of supply and will be taxed accordingly. Clear? So the balance portion only will be charged to tax. So that is what the clarification. So hope you have enjoyed this lecture. Please understand value of supply, very important chapter. We have just quickly revised all the concepts with the relevant examples here and there, and your revision will be complete only when you do problems on this. So my strong recommendation is take ICAI study material, book back questions, finish them off, and model test papers, all the model test papers, value of supply questions, please finish them at the earliest so that your revision will be effective. Hope you have enjoyed this lecture. See you all in another video. This is your Mr. GST signing off. Jai Hind.
Hello students, hope your preparation is going good, and this is your Mr. GST CA Vishnuvardhan coming up with a quick revision video about input tax credit chapter, the very important chapter for your exams, you know that. So this chapter we are going to quickly revise in no time, which will be definitely helpful for your revision purpose. So let us go into the video. So input tax credit, you know, everybody, see, first of all, just to correct your basics, see, when we are making outward supplies, sir, our outward supplies may be covered under forward charge or may be covered under reverse charge. If they are covered under forward charge, what we will do, we will collect tax from the customer and we have to pay it to the government. While paying it to the government, we will use our ITC balance, and if it is not sufficient, we will go with cash. Sir, no sir, whatever the outward supplies we are making, that is sales, if it is covered under reverse charge, we will raise the invoice, we will supply the goods or services, our customer will directly go and pay the GST to the government. We don't have to do anything. So what is the only duty we have? Eat 5-star, do nothing. So that is the scenario. But sir, Here one important thing, yes, one important thing is because we are making outward RCM supplies, we cannot take ITC on our inward supplies. Hope you remember that. Right. Now coming to the next one, sir, if I'm making purchases, if we are making purchases, whether it is covered under forward charge or reverse charge, sir, if it is covered under forward charge, what we will do? We will pay GST to the supplier, supplier will pay to the government, and government will give it to us as ITC. Same way, if the purchases are covered under reverse charge, what we will do? We will directly go and pay GST to the government. Government will give that amount as ITC to us. Simple. So here the only thing which we have to remember is, sir, whether the purchase is covered under forward charge or reverse charge, you can happily take ITC. So please remember that it is your purchase. Your purchases, if you are buying it for business purpose, you can happily take ITC. So whether it is covered under forward charge or reverse charge, the only condition is, sir, when we are buying something, we should use it for making taxable outward supplies, then only we can take ITC. If we are making it, like using it for making exempt outward supplies, we cannot take ITC. But we are using it for taxable supplies, we can take ITC. That we will discuss in section 17, nothing to worry. So this is the overview of GST liability. So what is that we have to understand? See, sir, whenever there is GST payable to government, GST payable to government can come in two circumstances. One is on your sales, the other is on your purchases. If at all GST liability comes on your sales, then, sir, if you are going and paying GST, you can use your ITC balance. If it is not sufficient, use cash balance. Because to pay output tax, you can use input tax. If it is not sufficient, pay cash. Right. Sir, no, sir, I am going to pay GST under reverse charge mechanism on my purchases. Then again, simple. See, if at all you are purchasing something and paying GST under RCM, this is your input tax. So you cannot use input tax to pay this. So you should pay this only in cash. So simple. When you have GST liability in hand, that is directly to pay to the government. If you sell something, you have to pay directly something to the government. So that output tax, you can use input tax or cash. Sir, I am purchasing something covered under reverse charge. So that is your input tax. So to pay input tax, you cannot use input tax. So you should use cash only. So that is what the concept here. With this overview in mind, let us proceed into the chapter. So before proceeding into the chapter, you should remember or you should understand, sir, whenever we are buying something under GST, that may be goods or that may be services. Goods, if we are buying, if we capitalize that, then it is called capital goods. If we don't capitalize that, then it is normal inputs. Hope you are clear with this. If we buy some goods and we capitalize it, it is called capital goods. And if we buy something and we don't capitalize it, if it is goods, we call it as inputs. But sir, for services, there is no such differentiation. We call it as input service. Whether you capitalize or don't capitalize, all that nonsense. Okay. Goods, capitalize, capital goods. Not capitalized, inputs. Services, straight away input services. Hope you are thorough with that. Right. So with this, let us proceed with first point, section 16. Section 16 has 4 subsections. Earlier, now they have added subsection 5 and 6 also. 5 is not relevant for you. Subsection 6 we will be discussing. Okay, so first going to 16 subsection 1, simple sir. 16 subsection 1 says every person who wants ITC, he should be registered under GST, sir. Without registration, how will I give you ITC? So you should be first registered, and of course, whatever you are buying, you should be using it for business, or you should have intention to use it for business. That means not only the goods or services, whatever you procured, the goods, whatever lying in the godown are also liable for, are also eligible for ITC. Not only the goods which you have used in manufacture, but also the goods lying in stock, lying in godown are also eligible for ITC. That is what 16 subsection 1 says, sorry. So that is 16 subsection 1, simple eligibility for ITC. Let us move on to 16 subsection 2. So coming to 16 subsection 2, what are the conditions for availing ITC? 16 subsection 2 number also you should remember properly. So please make sure you remember 16 subsection 2. What is 16 subsection 2? Conditions for availing ITC. Sir, what are the conditions for availing ITC? Number 1, simple sir, you should be possessing some or the other documentary evidence, sir. Then only I can give you ITC. Without that, sorry, I cannot give you ITC. So please have some documentary evidence. What is that documentary evidence, sir? That can be a tax invoice, that can be a debit note, that can be a revised tax invoice, that can be bill of entry, that can be document issued by input service distributor, or that can be a self invoice also. Sir, please give some documentary evidence so that I can give you ITC. Okay, so please have that. And one more thing is what, sir, if at all coming with this documentary details, if you see any demand that is raised, sir, any demand that is raised on account of fraud or willful misstatement or suppression of facts cannot be availed as ITC. So if this is done on account of fraud or willful misstatement, suppression of facts, all the stuff under section 74, okay, then also you cannot avail ITC on that. That is what another point. Next, no ITC will be given to a registered person in respect of invoices or debit notes which have been furnished by the supplier in GSTR1 or IFF, and the details are reflected in GSTR2B for the recipient. That means simple, what we are trying to tell here, sir, for you, if you want ITC, your supplier should have filed his GSTR1 and it should have been reflected in your GSTR2B. Then only we will give you ITC. Otherwise, you are sorry, go and fight with your supplier. We will not give you ITC because it is not reflected in your 2B. So simple, if it is reflected in your 2B, then only you can take ITC. If it is not reflected in 2B, go and fight with your supplier. Don't come and fight with department. That is what they are saying, right? Next, what is the next condition, sir? The next condition is what? If you are buying some goods or services, if you have actually received the goods or services, then only you can take ITC. Sir, goods are in transit, or I will receive the goods tomorrow, day after tomorrow, like that. If you keep on telling stories, we will not give you ITC. Please understand that, okay? Only if you actually received the goods, then you can take ITC. Sir, on behalf of me, my job worker has received, sir, the goods. Who will be working on behalf of me, sir? Will you give me ITC? No problem, we will give you, don't worry. So goods can be received even by the job worker, even by some third person on the directions given by you. Still you can take ITC. Sir, what if the goods are coming in lots or installments? Sir, 10 lorries the goods are coming, sir. 8 lorries came, sir. 2 lorries are still in transit. Then only after the receipt of last lorry you take ITC. Okay, don't come and disturb in middle. Okay, so that is what the concept. So I repeat, actually goods or services should have been received by the recipient to claim ITC, even if this job worker or any other third person for that matter has received it on the directions of the recipient. Still recipient is eligible for ITC. Another additional point here is, sir, if at all goods are received in lots or installments, only after the receipt of last lot or installment you can take ITC, but all that lots or installments should be covered under single invoice. That means one single invoice, 10 lorries are coming to transport the goods. Then after the receipt or after the delivery of 10th lorry only you can take ITC. No, sir, 10 lorries, 10 different invoices. Then how many lorries deliver the goods? That will be the last lot, so that you can take ITC. I repeat, if it is single invoice, 10 lorries, then after the receipt of last lot only you can take ITC. You should be careful in the questions, where in the questions they will say goods, the last lot will be received in the next month or that next month. This month can you take ITC? No, sir, this month you cannot take ITC. I am extremely sorry. Clear? So that is what the concept. Okay, next. Sir, whatever is reflected in 2B, will you give me ITC? Yes, I will give you ITC, but it should not be restricted by the government. Okay, so that means government has the power to restrict the ITC, whatever has been reflected in 2B. So you cannot take ITC. Okay, so using section 38, government has used that power, and still they have framed section 38. They have not yet fully utilized that power, where they are saying that if at all you are buying something and it is reflecting in your 2B, and that purchases are from a person who is a new registrant or who has defaulted in paying taxes, whose output tax as per GSTR1 and 3B are mismatching. So in one he is showing more liability, 3B is showing less liability. Okay, and who is availing ITC more than what is there in 2B, and sir, who is defaulting his tax liability under section 49 subsection 2, that is rule 86B, or any other specified class of persons. From these people, if you buy something and if it is reflecting in your GSTR 2B, I am extremely sorry, we will not give you ITC. And please understand, this is still in a section phase. So for this, rules has to be prescribed, and as of now there are no such rules which are talking about this, except of course here this point and this point, actually not this one. Okay, certain points have come into effect, certain points not come into effect, leave it. Okay, if these are the cases, the government in this case can deny you ITC. Okay, that means what? Whenever you are buying something, you should do background verification of the person from whom you are supplying. That means you should take the GST number of the supplier, go to the commissioner, sit in front of the commissioner and say, sir, tell me the horoscope of this fellow, whether this fellow is paying taxes correctly or not, whether this fellow is taking ITC properly or not, tell me I should buy something from him. That means do some background verification. Just like when you are getting married, you will do no background verification. The same way, do background verification of the supplier. Do background verification of the supplier before buying the goods or services from him. Otherwise, your ITC will be at risk. That is what this point all about. Okay, fine, sir, no problem. That means what? Government can deny ITC for you even though it is reflected in 2B. Simple. Next, sir, the supplier should have discharged his tax liability. That means supplier should have paid taxes. Then only recipient will get ITC. Okay, here with respect to this, we have section 41 read along with rule 37A. If you see what the law is saying. See, GSTR1 supplier is filing, recipient will get in his 2B, recipient will take ITC, but who will give money to the government? Supplier should give money to the government. How he will give? By filing GSTR 3B. That fellow supplier from whom you have purchased, he filed GSTR 1 properly, but 3B he did not file. That means he did not pay tax only to the government. But you enjoyed ITC, recipient. So what the law is saying here, the recipient, if you have taken ITC because it reflected in 2B, why it reflected in 2B? Because your supplier filed 1. But whether your supplier has filed GSTR 3B, that you please check. If that fellow has not filed his GSTR 3B, by 30th September of the succeeding financial year, whatever ITC I gave to you, please give it back to me, because I did not get money from your supplier. Like that government is asking. So before 30th September, your supplier should have filed this GSTR 3B, okay, and paid taxes to the government, which you got as ITC already. If he has not done that, by 30th November of the succeeding financial year, that means in another 2 months time, you should reverse the ITC without any interest. Without any interest. 1 second. Here I have given one example. See. But sir, if you don't pay that, within 30th November, then what should be done? You should reverse the ITC along with interest under section 50. That is the twist. Okay, sir, I will reverse the ITC along with interest or without interest, as the case may be. What if after 2-3 years my supplier becomes a good boy and file his GSTR 3B and pay tax to you? Can I re-avail ITC? Yes, you can re-avail ITC. Sir, is there any section 64, 16 subsection 4 time limit would have been over? No, sir, by that time. 16 subsection 4 is not applicable in this case. Yeah. See, understand, 16 subsection 4 is applicable only for availing ITC. Here, this is re-availing ITC. So 16 subsection 4 is like, see, only when you are getting married for the first time, they will see age. For second time marriage and all, they will not see any age. That means 16 subsection 4 time limit is applicable only when you are availing ITC. Here you have availed ITC, reversed ITC, and again now re-availing ITC. So in such cases, 16 subsection 4 time limit is not applicable. Hope it is clear for you, right? So here what we are trying to tell, sir, in short, what is that you are trying to tell, sir? See, supplier has filed his GSTR 1, because of that you got it in your GSTR 2B, but supplier did not file 3B. That means government did not get money, but recipient got ITC. So government is under loss here. So what government is saying, by 30th September, if you are 30th September of the succeeding financial year, if your supplier has not filed his GSTR 3B, then you should reverse the ITC by 30th November without any interest. I'm giving you 2 months time without interest. By 30th November also, if you have not paid that, then reverse the ITC along with interest. Tomorrow, if at any point of time that buffalo files GSTR 3B, who? Your supplier, then you re-avail ITC. Only re-avail ITC, interest you cannot re-avail. Okay, please understand that. And here for re-availing ITC, 16 subsection 4 time limit. 16 subsection 4 time limit is not applicable. Okay, so that is what the point. Okay, wonderful, super. Okay, if you want to just go with this example, see here, just go with this example. 1 second. Yes, you can take a screenshot of this if you want. Hope it is clear. You can pause the video also and you can just go through the example once. I've just given it along with the dates and numbers for your clarity. Okay, hope it is clear for you. Section 41 read with rule 37A. Okay, let us move on to the next one. The next one is the first proviso under section 16 subsection 2. So the first proviso we have already discussed. When the goods are coming in lots or installments, we can take ITC only after the receipt of last lorry or last installment, whatever it is, but they should be covered under single invoice, that we have already discussed, right? Let us move on to the important proviso, second proviso read along with rule 37. What is this rule 37, second proviso? Do you remember, my dear friends, that 180 days time limit concept? So if the supplier makes any supply to the recipient has to make payment to the supplier, both value and GST, within 180 days from your birthday or my birthday, from invoice birthday, that is from the date of invoice. Yes, he has to make the payment, not only value but also GST. If he is not doing that, he should reverse the ITC along with interest under section 50. One interesting thing here is if you have made part payment, proportionate amount will be considered. For that I will show you one example also. And tomorrow in future, if you make payment later on, maybe after 180 days you have reversed the ITC, after 200 days, 230 days, 360 days, 440 days, whatever it is, you have made payment to the supplier. Can you re-avail the ITC now? Yes, you can re-avail the ITC. You know, re-availing ITC, there is no time limit only, correct? So only for availing ITC there is time limit. 16 subsection 4 is not applicable when we are re-availing the ITC. So happily you can re-avail ITC, but interest will not come. Am I clear? So I repeat, within 180 days from the date of invoice, recipient should make payment to the supplier both value and GST. Otherwise, he has to reverse the ITC along with the interest. Later on in future, if he is making any payment, he can just re-avail the ITC. 16 subsection 4 time limit is not applicable, and he can re-avail the ITC. Interest part, he cannot take anything benefit. Okay, if at all he has made any part payment, the proportionate amount he has to reverse. Now, this 180 days reversal concept is not applicable for these three cases. Number 1, supplies covered under reverse charge mechanism. Number 2, deemed supplies without consideration, that is schedule 1 transactions, and whatever the additions we have made to the value of supply. If you remember section 15 subsection 2 inclusions, obligation of the supplier discharged by the recipient, so that is added to the value of supply because it is already discharged by the recipient. Okay, so again recipient will not pay that amount to supplier. If you remember that Pushparaj example, 10 lakhs furniture, you are paying me 6 lakhs and directly 4 lakhs to Pushpa, so that case only. Okay, so that is what the point. Okay, for that 180 days time limit is not applicable. So here if you see, sir, 1 lakh plus 18,000 is the GST, so 1 lakh 18,000 you should have paid. What if you have paid only part amount 60,000? Part amount 60,000. Okay, with ignoring interest, if you calculate what is the ITC here, sir, to be reversed, you should pay 1 lakh 18,000, but you have paid 60,000. What is the balance? 58,000. But this 1 lakh 18,000, when it is including GST, this 60,000 is also including GST. You cannot take it like excluding GST. Balance amount 58,000 is including GST, which you have to pay. So 58,000 into 18 divided by 118 will give you the reversal amount. 8847 you have to reverse. Okay, so that is the concept. So here if you see, I've given this example, you can just 1 second pause the video. iPad itself is not sufficient for the examples. Okay, so I think it is little bit okay for you. You can just manage it if you take the screenshot. So go with that. This much zooming and all we cannot do, that is a problem. Okay, 1 second guys. Yes, this one you can manage. So please pause the video and go through the example, or just take the screenshot of it and then revise. Otherwise, you know, material is available in our Telegram channel. You can just go with the soft copy, no issues at all. So that's all with respect to that particular point, and with this we are done with section 16 subsection 2. Yes, we are done with section 16 subsection 2 with respect to that. And of course there is a small clarification here with respect to molds and dies which are used. Okay, see here, nothing but a small clarification. Let me close this. So here what is happening now, normally when there is original equipment manufacturer, sir, original equipment manufacturer, what he will do, sir, he will manufacture the equipments and give to component manufacturer. For example, laptop is there, laptop battery, the laptop company will not manufacture, they will give it to original equipment manufacturer, another fellow who will manufacture them, and he will give it to the component manufacturer. Now what happens, please understand, sir, for this we are 1 second. Yes, see here one small confusion, that's all. See, this original equipment manufacturer is, let us assume, the laptop company. Laptop company will not manufacture their batteries, own batteries, so they will outsource it. So that fellow is called component manufacturer. Okay, so to manufacture that component, what this original equipment manufacturer will do, he will purchase some molds and dies and he will avail ITC. Those molds and dies he will give to component manufacturer for manufacturing the components. Whether This ITC to be reversed by original equipment manufacturer is the point. First of all, understand here that he is buying these things for business purpose and issuing it for business purpose, issuing them for business purpose. Okay, so there is no need to reverse the ITC, and of course component manufacturer also doesn't have any obligation to use his own molds and dies. So original equipment manufacturer giving the molds and dies to the component manufacturer is very much in the course of business. Very simple. I am original equipment manufacturer and I am giving, you are the component manufacturer, I am asking you to manufacture my laptop batteries. I am buying the molds and dies for that and I am giving it to you. Can I avail ITC? Yes, I can happily avail ITC because I am giving that to you in the course of furtherance of business only, for getting my products manufactured only. Now the important point here is, you don't have any obligation to buy molds and dies. I will be providing, then happily I can avail ITC of that. Okay, so now whatever the molds and dies I am giving it to you, is it added in the value of supply which you are providing to me? No, this is not obligation of the supplier discharged by the recipient. Please don't misunderstand. I'll just put it like this. Wait. Laptop manufacturer, battery manufacturer. Okay, sir, this fellow will manufacture batteries and give to laptop fellow. Now the problem is, molds and dies this fellow is buying and giving to him. Buying and giving to him. This molds and dies, will it be added to the value of supply? The answer is no, because these molds and dies are not the obligation of the component manufacturer. So laptop manufacturer is buying them and giving it to him. It is his obligation only. It is not supplier's obligation discharged by recipient. That case is not there here. So what original equipment manufacturer will do, he will take ITC of this. Okay, and this value will not be added in the value of supply of this fellow selling battery. On that battery the value will be there. No, for that value molds and dies value will not be added. This is not obligate. This, if you understand, battery manufacturer is the supplier, original equipment manufacturer is the recipient. Okay, that is the case. Fine, hope it is clear for you. Just go through that. And next, okay, so with this we are done with section 16 subsection 2 as well. Yes, sorry, here one more point, small point we have missed out is, yes sir, whatever you said is fine. If the component manufacturer doesn't have an obligation to use his own molds and dies, you are buying and giving, then no problem. What if he has an obligation and you are buying and giving to him? Then yes, we will add it to the value of supply. And original equipment manufacturer can avail ITC? No, he cannot avail ITC. So simple, supplier has an obligation, recipient is buying it and giving. Can recipient when he purchase take ITC? No. Okay, sir, supplier doesn't have any obligation, recipient only should give them. So recipient buying and giving, so recipient can take ITC, and it will not be added between the value of supply provided by supplier to the recipient. Okay, so that is what the concept here. Yes, so I repeat, original equipment manufacturer is the recipient, component manufacturer is the supplier. Okay, original equipment manufacturer is buying and giving the molds and dies. We should see whose obligation it is. If it is the obligation of the recipient or original equipment manufacturer himself, then in such case what will happen? He will take ITC, and component manufacturer giving supply to original equipment manufacturer, in that it will not be added, the value of molds and dies will not be added. Okay, that is the case. No sir, it is the responsibility of component manufacturer to buy these molds and dies. Then original equipment manufacturer buying the molds and dies cannot take ITC, and the value of molds and dies will be added in the value of supply between component manufacturer and original equipment manufacturer. That is what the case, right? So just now take a screenshot of this or pause the video and go through this, see carefully. This is first scenario and this is the next scenario. So the next one is 16 subsection 3, simple one sir. If you are purchasing capital goods, on that you have paid GST, that GST component take as ITC, that is one option for you. Or add the GST component paid on capital goods to the cost of capital goods and claim depreciation fully. That is second option for you, but don't do both. So simple, sir, you have purchased 100 lakh worth capital goods and you have paid GST 12 lakhs. Sir, this 100 lakhs, of course, you capitalize and you claim depreciation on this, no doubt about that. But sir, on this 12 lakhs, you either take ITC or you claim depreciation, but not both. Both not possible. Clear? So that is 16 subsection 3. Simple one. So the next one, very important section 16 subsection 4. You should remember the subsection number as well. You know that, sir, what is time limit for availing ITC? The time limit for availing ITC is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier with respect to any invoice. So what we should see first, we should take an invoice. We should see for which financial year this invoice belongs to, and from that financial year, next financial year, 30th November or actual date of filing the annual return of that financial year to which this invoice belongs, whichever is earlier, that will be the deadline to take ITC. So here if you see invoice number 183, sir, belonging to 23-24 financial year, 23-24 financial year received by MSD on which GST paid is 10,000. Now, sir, this invoice belongs to 23-24 financial year. What is the deadline to take ITC on this 10,000? We should see, sir, 30th November of succeeding financial year, that is 24-25 financial year. That means 30th November 2024, or this invoice belongs to 23-24 financial year. That financial year, when you are actually filing the annual return, whichever is earlier, that will be the deadline. Okay, so that will be the deadline. Hope it is clear for you. One interesting point here, what we have to consider is, sir, if at all we have given debit note for any invoice and that debit note is falling in different financial year, invoice is falling in different financial year. As I have given here example, sir, invoice belongs to Jan 2024, sir, and on that 4,15,000 GST has been paid, sir. Debit note has been given on April 2024, which is coming in 24-25 financial year. That means invoice is coming in 23-24 financial year, debit note is coming in 24-25 financial year. For invoice, yes, 16 subsection 4 time limit will be okay, 30th November of 2024 or actual date of filing annual return of 23-24 financial year. But for debit note, what is the relevant financial year we should consider? Should we consider the invoice financial year or debit note financial year? That is the concept. Sir, for invoice, relevant financial year will be the year in which invoice is raised. Same way, for debit note, the relevant financial year will be the financial year in which debit note was raised. Okay, don't link this to invoice financial year, please. That is what the concept. So I repeat, the relevant financial year for invoice will be the financial year in which invoice is raised. The relevant financial year for debit note is the financial year in which debit note was raised. So that you have to consider and calculate the time limit under section 16 subsection 4. With this we are done with 16 subsection 4.
Now let us move on to this new subsection 16 subsection 6, actually a very interesting provision, and I'm going to simplify it in such a way you'll definitely love this explanation from me, right? 16 subsection 6. What is 16 subsection 6? Time limit for taking ITC in case of revocation of cancellation of registration. Please understand, sir, what is this all about now? When your registration gets cancelled and you are asking for revocation, sir, there is a period of cancellation. From the period of cancellation till the revocation, what is the time gap is there? For this time gap, you are not able to file the returns, and because you are not able to file the returns during that period, whatever the ITC is there, that ITC you will not be able to avail. And now when you have taken the revocation, now if you see, if you look back and you want to take ITC for those periods which over during that like cancellation and revocation period, if you want to take ITC, 16 subsection 4 time limit is over. In that case, how to handle? Now see, first of all, simple. What is this provision talking all about now? The date of cancellation, at the time of cancellation of that registration. For me, during this period, I repeat, the period is between cancellation to revocation. For this period, whatever the returns you did not file, so for that period you have not taken ITC also, because you could not file your 3B. Now for that period, see, what we have to understand is, at the time of cancellation, whether 16 subsection 4 time limit was still available. Yes sir. Then in such case, please understand, avail ITC as per 16 subsection 4. Sorry, one second. So at the time of cancellation of registration, sir, whether 16 subsection 4 time limit is available? Yes sir. Now at the time of revocation, still if 16 subsection 4 time limit is available, still 16 subsection 4 time limit is available, that is 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year, whichever is earlier. So if that is available, accordingly you proceed. But sir, I'll give you example also for this, so please wait. But sir, at the time of revocation, at the time of cancellation, 16 subsection 4 time limit was available, but at the time of revocation, 16 subsection 4 time limit was not applicable, sir, not available, sir, 16 subsection 4. Then what should I do? Don't worry, for you 16 subsection 6 is coming to help. So 16 subsection 6 says you can take ITC for that period, the cancellation to revocation period, any returns, the time limit for availing ITC 16 subsection 4 time limit is over. Further, still if you can want, you can take ITC by filing those returns, the 3B, all that, by 30 days from the date of revocation order. 30 days, within 30 days from the date of revocation of cancellation, you can avail ITC. See, for example, I'll tell you, there is a company, Vivar Private Limited. They are not filing their returns continuously for 6 months. Because of that, the registration is cancelled. If you see, from 1st Feb 2024 to 31st July 2024, 6 months continuously they did not file the return. So they got the notice, all that stuff, and registration finally cancelled on 10th September 2024. Okay, 10th September 2024, with effect from retrospective effect 1st Feb 2024 itself, they have cancelled the registration. Now here what we have to see is, sir, what is the period of cancellation of registration? Sir, order of cancellation is given on 20th December, but it is cancelled from 1st Feb. So from 1st Feb, I am not able to file the returns. I am not able to file the returns. Now, sir, when I go for the revocation I got somewhere in 20th December. Sir, please understand, when I get the revocation on 20th December 2024, if you see, for me, I was not able to file returns from 1st Feb, correct? Because registration is cancelled from 1st Feb. So if you see, Feb and March 2024, the ITC belonging to those months, the time limit to avail ITC under section 16 subsection 4 was available. For me, ITC under 16 subsection 4 time limit is available at the time of cancelling my registration. So that 10th September they are cancelling the registration. During that time, I still had the chance to take ITC under 16 subsection 4. But at the time of revocation, if you see 20th December, by that time, for me, the time limit to avail ITC under 16 subsection 4 was not available. So simple, when the department was cancelled my registration, for me 16 subsection 4 time limit was applicable for Feb and March. I could have taken that if you have not cancelled my registration. But now you cancelled my registration, and at the time of revocation, if I see, after revocation time limit is over 16 subsection 4. So for Feb and March month, what should I do? You can take ITC by filing Feb and March month returns within 30 days from the date of revocation. The revocation is granted on 20th December. So from that 30 days, so 19th January 2025. So before that, by filing that return of Feb and March month, I can take ITC of Feb and March month 2024, even though 16 subsection 4 time limit is expired, I can go with 16 subsection 6. Okay, that is the point. Suppose, sir, coming to April 2024 to December 2024 returns also I have not filed. For that also I have not taken ITC still. At the time of cancellation of my registration, that 16 subsection 4 time limit is over. After revocation also, still 16 subsection 4 time limit is available for me. That is, this is coming in 24-25 financial year, no, 30th November 2025, and actual date of filing annual return of 24-25. Till that I have the time limit, no. So April to March, December 2024 returns, I can happily file accordingly, and I can take ITC. I need not see 16 subsection 6 itself. I will see 16 subsection 6, simple words, when at the time of cancellation 16 subsection 4 time limit is applicable, but at the time of revocation it is not applicable. In that case, I will go to 16 subsection 6. What 16 subsection 6 says? 16 subsection 6 says, take ITC by filing the returns, pending returns, within 30 days from the date of revocation of cancellation. So this is the notes for that. Hope it is crystal clear for you. This is the new section and very, very, very important section for you for your May 2025 exams. So please be careful. Now let us move on to next 17 subsection 5, blocked credits. You know, very, very, very important section. You should remember it.
Very well. So 17 subsection 5 blocked credits. Sir, what is this blocked credit all about? Even though you are purchasing something for business purpose, you cannot avail ITC. Yes, even though you are buying it for business, you should always understand, yes, we are buying it for business purpose only, but still we cannot take ITC because it is given in 17 subsection 5. So what are the things which are given in 17 subsection 5? Let us quickly go with them. So first of all, motor vehicles. Sir, motor vehicles with less than or equal to 13 seating capacity, if you are buying even for business purpose, you cannot take ITC. Sir, if I am buying something with greater than 13 seating capacity for my business purpose, yes, you can take ITC. That means company buying a car cannot take ITC. Company buying a bus can take ITC. Company buying a lorry, tippers, dumpers, all that, yes, they can take ITC because they are not the vehicles for transporting the persons. Okay, so goods vehicles are obviously eligible for ITC, they are not covered here. So I repeat, motor vehicles with less than or equal to 13 seating capacity, if you are buying, you cannot take ITC even though it is for business purpose. If it is greater than 13, yes, you can take ITC. If it is a goods vehicle, yes, you can take ITC. And there are certain exceptions here, sir. Even though it is less than or equal to 13 seating capacity, you can take ITC when? Sir, you can take ITC if at all you are using it for transportation of goods. That is not an exception, but that is understood by the law. Next, if you are buying them for transportation of passengers, that means you have travels and you are buying the car. Yes, you can take ITC. No, sir, for further supply of such vehicles or conveyances, that means I am dealer in Royal Enfield bike and I am buying Royal Enfield bike, I can take ITC. But a company buying Royal Enfield bike for the use of director cannot take ITC. Next, for imparting training in driving skills. So suppose if you are having a driving school and you are buying the scooties or you are buying the cars for etc etc for driving schools, then you can take ITC. That is another point. Now here, so what we have understood is, if you are buying the motor vehicle, you cannot take ITC, correct? Sir, what do you mean by motor vehicle? Motor vehicle is defined in Motor Vehicle Act 1988. 1988, and accordingly, sir, motor vehicle means what? Which is mechanically propelled vehicle adapted for the use upon the roads, whether the power of propulsion is transmitted thereto from an external or internal source, and includes chassis to which a body has been attached. All this is not that greatly relevant for us. For us, the main point is what are not motor vehicles. But sir, motor vehicle definition does not include vehicles which are running on fixed rails. That means if you are buying them, you can take ITC. Sir, vehicles which are specially adapted for use inside any factory or within the closed premises, or any vehicles which are with less than 4 wheels and fitted with an engine less than or equal to 25 cc capacity. Okay, so if it is less than 4 wheels and engine less than or equal to 25 cc, if that is the case, it is not a motor vehicle. For example, we are getting some battery cycles, no? So such type of things, these are not motor vehicles. These are not motor vehicles, and you can happily enjoy ITC if you buy them. So that is very interesting thing. So please understand that motor vehicles, if you buy less than or equal to 13 seating capacity, you cannot take ITC. But these three things are not motor vehicles. So even though you buy them for business purpose, even though if it is less than or equal to 13 seating capacity, yes, you can happily avail ITC. You can happily avail ITC. That is the interesting part here. Hope it is clear for you. Okay. No, sir, I am buying less than or equal to 13 seating capacity, but for these purposes, for transporting the goods, passengers, further supply of such conveyances, and imparting training and driving skills, then you can take ITC. In other cases, you cannot take ITC if it is less than or equal to 13 seating capacity. Hope it is clear for you. Next, sir, the same logic is equally applicable. The same provisions, whatever we have discussed just now, are equally applicable even for the vessels and aircrafts. Vessels and aircrafts. So vessels and aircrafts also, if you are buying for business purpose, you cannot take ITC. But if at all you are buying them for transportation of goods, passengers, or further supply of such vessels or aircrafts, that means you are a dealer in aircraft or vessel, or for imparting training in flying or navigating skills, then you can happily take ITC. Otherwise, you cannot take ITC. Hope I am clear with this. So this is second one. Now coming to the next one, sir, we have understood here you are buying some conveyances. That means it can be vessels, aircrafts, or even vehicles. We call them together conveyances. Common word is conveyances. Some conveyances are eligible for ITC, and majority cases it is not eligible for ITC. If it is eligible for ITC, suppose SpiceJet Airlines has purchased an aircraft and they are eligible for ITC. They are taking general insurance on that aircraft or servicing on that aircraft, repairs and maintenance on that aircraft, they can take ITC. But let us assume
Vivar the private limited is buying an aircraft, a chartered flight for its CEO, and please understand whether we can take ITC on that. Vivar private limited is buying an aircraft, chartered flight uh, for its company, and whether it is eligible for ITC? No, it is not eligible for ITC. The ITC is blocked. On that chartered flight, if the company is taking general insurance or servicing, repairs, all the stuff, it cannot take ITC. Suppose I am buying a car for my business purpose. Can I take ITC? No. For my car, I am taking insurance. I cannot take ITC. For my car, I am taking servicing. I cannot take ITC. Repairs and maintenance, I cannot take ITC. So now there are certain exceptions here. That is, if you are a manufacturer of that ineligible motor vehicles, suppose Honda company is there. Honda company is taking general insurance or servicing, repairs and maintenance on the stock Honda cars. They can take ITC. Or, sir, if at all I am an insurance company taking general insurance on these vehicles, repairs, servicing on those vehicles, yes, I can take ITC. Yes, so that is what the point. So what are the exceptions here? For manufacturers and general insurance companies, they can take ITC on these three things. Okay, but others, if they are taking them on ineligible conveyances, they cannot take ITC. So simple, ineligible conveyances, you take general insurance, repairs and service, you cannot take ITC. But if it is an eligible conveyance, you can take ITC, or you are a manufacturer, you can take ITC, or if you are a general insurance company, you can take ITC of this particular services. Hope it is clear for you. Now, another interesting thing is, sir, if you are leasing, renting, or hiring motor vehicles, vessels, or aircrafts on which ITC is not allowed, that means ineligible conveyances as per our discussion. Those ineligible conveyances, if you are giving on lease or renting them or hiring them, then opposite fellow cannot take ITC of it. Opposite fellow cannot take ITC of it. But there are two exceptions. What are the two exceptions? He is taking them on rent for providing similar category of outward supply. He is taking them on rent for providing similar category of outward supply, or he is taking them on rent to provide to his employees as a part of statutory obligation. In those cases, he can take ITC. I repeat, I am leasing the ineligible for me ineligible conveyance, my car. I purchased it and I cannot take ITC. That is ineligible conveyance for me. I am renting that out to somebody. That fellow also cannot take ITC on that. The rent plus GST I will charge. He cannot take ITC except in two cases. He is taking that on rent to give it on rent. That means to provide similar category of outward supply. Or he is taking it on rent because he is an employer to provide to his employees as a part of statutory obligation. Then he can take ITC. Except those cases, he cannot take ITC. Am I clear? So that is what the concept. Next, understand this leasing is only for that conveyances, not leasing of any other items. So if you lease out any other items, you are leasing your laptop, leasing out your any other plant and machinery, all that. In such cases, ITC is there. It is not blocked. Please be careful. So there are some set of examples here. You can just pause the video and go through them. Yes, hope it is clear for you. Now let us move on to the next one. The next one is, sir, food and beverages, outdoor catering, beauty treatment, health services, cosmetic plastic surgery services, life insurance and health insurance services. If you are buying these things, you cannot take ITC, but there are two exceptions. Again, similar category of outward supply, and if it is taken by employer to provide to his employees as a part of statutory obligations. So I am buying food and beverages for my office purpose, for my employees, etc., etc. I cannot take ITC, but I am buying that to give to employees as a statutory obligation. Remember, company policy is different, statutory obligation is different. Your company policy is something you voluntarily created. Statutory obligation, law has mandated that on you. So both are different. Please understand that. So it is not as a part of your company's policy, but it is as a part of statutory obligation. So I repeat, I am buying outdoor catering services because of there is a party happening in the office, some new year party, etc., etc. I cannot take ITC of that. But I am buying outdoor catering services to provide outdoor catering service, or I am buying food and beverages to provide food and beverages, or I am providing outdoor catering because it is a statutory obligation. So these things, sir, generally you cannot take ITC except if it is for providing to your employees as a part of statutory obligation, or you are buying them to provide the similar category of outward supply. Okay, so that is what the concept. Here I have given examples, you can just go through that. Same way, sir, membership of a club, health and a fitness center, you cannot take ITC except if it is taken by employer to provide to his employees as a part of statutory obligation. Next, leave travel benefits provided by employer to employee cannot be taken as ITC by the employer, again except if it is a part of statutory obligation. Examples are there here, you can just pause the video and just go through the examples. So going with the next one, works contract services, if at all, works contract is nothing but, see, both material and labor. So there are two things, works contract services, pure labor contract services. So works contract services, we get from the contractor both material as well as labor, and pure labor contract, you get only labor services. So here what we are trying to do, please understand this works contract services and the next one, construction on own account. One second. Yes, both 2 points. I'm just covering here both the points. Yes, in same area. Yes, right. Now, see, let us assume KGF factories wants to construct their factory building and they're appointing a contractor called Mr. Rocky. Now, what he is doing, Rocky is providing works contract services for KGF factories. Even though it is business purpose, KGF factories cannot take ITC. This is the point. Or imagine KGF factories are buying bricks on their own, cement on their own, iron and steel on their own, labor services on their own, everything, and doing construction on their own account, and they want to take ITC. Can they take ITC? No, sir, I'm sorry. Works contract services also you cannot take ITC. If you are buying the goods and services separately on your own account and you are trying to claim ITC, then also I will not give you ITC. That is what the concept. Hope it is clear for you. Now, sir, there are of course exceptions. I repeat, whether you are taking works contract service or buying everything on your own and getting the construction done, then also ITC is not available. Hope it is clear. But the exceptions are if you are taking this to provide similar category of outward supply. That means Rocky Bhai is outsourcing the part of the work to Mr. Garuda, another works contractor or another contractor, providing services to Garuda. Garuda can avail ITC. Or Garuda buying bricks, iron and steel, cement, all this stuff to provide works contract services, or construction services. Then Garuda can take ITC. Are you able to understand? So you are buying these things to provide similar category of outward supply, then you can take ITC. Or you are buying these things, that is the works contract or construction on your own account for plant and machinery, or it's even foundation, for its foundation, still you can take ITC. But understand here the important thing is that plant and machinery means any apparatus or equipment or machinery fixed to earth by foundation or structural support and that are used for making outward supply of goods or services or both, and includes such foundation and structural supports. But here the point is not inclusion, sir, the important point is exclusion, because plant and machinery you can take ITC. What are excluded from plant and machinery, on that you cannot take ITC. Are you able to understand? So what are excluded from plant and machinery definition, sir? Land and building and other civil structures, telecom towers, pipelines laid outside the factory premises, these are excluded from the definition of plant and machinery. That means you cannot avail ITC on these things. Any other thing, any machinery, equipment, etc., which is installed or used in the factory for making outward supply, for that construction, if you are taking works contract services or buying some goods and services, you can happily take ITC. Not only for plant and machinery, but also its foundation. If you are buying something, then you can take ITC, no doubt about that. And the last exception is if you are buying this sorry, if at all you are buying these things and that expenditure is not capitalized, then also you can take ITC. Sir, what do you mean by expenditure is not capitalized? Sir, the meaning is it is actually a revenue expenditure, then you cannot take, then you can take ITC. But if it is a capital expenditure, don't treat it like revenue expenditure to avail ITC. Okay, so if it is actually a revenue expenditure, there might be some rainy season, the water leakage, etc., etc. Every year it is happening. There are some cracks to the walls because of heavy temperatures and heavy rainfalls or uncertain climatic conditions. Yearly we are doing some patchwork to the office buildings or factory buildings. That is nothing but generally a revenue expenditure to us, that you can take ITC. If it is a capital expenditure, don't take ITC. That is what the concept. So works contract services and construction on own account, both the cases, sir, you cannot take ITC. But if it is for providing similar category of output supply, or if it is related to plant and machinery, or if it is revenue expenditure, you can take ITC. Plant and machinery excludes land and building, civil structures, next telecom towers, and any pipelines laid outside the factory. Then these are excluded from the definition of plant and machinery, so you can happily not to take ITC. That is what the point. Fine. So suppose if the pipelines are laid inside the factory, then it is plant and machinery, you can take ITC on that. So that is what the concept. Hope it is clear for you. Here there are examples. Just go with them. Pause the video and just go through the examples. We have already discussed the concept in detail. Next, this one. Pause the video and go through the examples. If you are confident about the topic, no need. Now coming to the next one, sir, if at all you are purchasing something from composition dealer, you cannot take ITC. When you are buying something from composition dealer, he has not at all charged any tax from you. How can you take ITC of that? So you cannot take ITC. Sir, I am a non-resident taxable person, sir. For you, all the purchases are blocked. So under 17 subsection 5, for you, no ITC at all, except the goods imported by you. So local purchases, no ITC. Any services you have imported, no ITC. Only goods imported, you can enjoy ITC. That is what the benefit for non-resident taxable person. Next, sir, I am buying some goods and services for spending them under CSR initiative, sir. Using them for CSR initiative, sir. Sorry, use them for CSR initiative, and because you are doing the social service, ITC also you just ignore, no, forgo that ITC also, so that also not available. So you are purchasing something to fulfill CSR obligations, no ITC for you, right? And not only that, sir, I am buying some goods or services for personal consumption. For example, to attend an AGM, I am purchasing a suit or a blazer, or I got an appointment to meet Ambani ji, I am purchasing a watch, which are nothing but for your personal consumption, you cannot take ITC. So simple, goods or services procured for personal consumption, you cannot take ITC. Not only that, sir, any goods lost, stolen, destroyed, or written off or disposed by way of gifts or free samples, you are giving certain things as gifts to people, or you are writing off certain things, or some goods are destroyed in the factory because of fire accident, etc., etc., those things you cannot take ITC. That is what the concept, right? So here there is one more small point regarding, sir, if at all you are paying taxes because of section 74, 129, 130, that is because of tax evasion or detention of your goods or conveyances, in such cases that amount you cannot take as ITC. So that is what blocked credit all about. Okay, here there is a small clarification. So the clarification is with respect to the time expired goods we are returning to the manufacturer, sir. In that case, what should I do? See, for example, I am a pharma manufacturer. I am sending some medicines or drugs to you. After the expiry of time, sir, after the expiry of the date, sir, you are returning those goods to me because they are unsold. So time expired goods. In that cases, when you are returning to them, if at all it is possible to raise a credit note, I will raise a credit note on you. That means the manufacturer of the medicines will raise a credit note to the distributor. Simple. Wait. Sorry. I am a manufacturer and you are my distributor. I have sent medicines to you. They have expired, time expired. Now you are returning to me. So when you are returning, what I will do? Sir, first I gave a tax invoice to you. Now what I will do? I will raise a credit note and reduce the liability. Simple. But for raising the credit note itself, the time limit is over. Then what should be done? Then you raise a tax invoice on me. Okay, you raise a tax invoice on me and charge GST from me and give it to the government. So simple. So this option is available for equally applicable this clarification to all the goods which are returned to the manufacturer because of time expiry. So what manufacturer can do, because the goods what he has sold has been returned by the customers, he will raise a credit note to the customer. If time is over, what the option is available to him, sir? Customers should raise, that is the distributor should raise invoice on the manufacturer, fresh invoice on the manufacturer, and the manufacturer should pay GST to the distributor. distributor will go and pay it to the government. That is what the concept. Okay, so with this we are done with section 17 subsection 5, blocked credits. And one more thing with respect to here, sir, samples and free gifts. Sir, whatever I'm buying for samples and free gifts, you know, ITC not available. Sir, buy one get one free, sir. Buy one get one free. See, I'm selling one 5-star and giving one 5-star free. On my purchases, should I reverse any ITC? Not required, because it is just like 10 rupees 5-star I'm selling for 5 rupees. There is output tax. So ITC shall be available. No need to reverse or nothing. The discounts given, sir, buy more save more, we have seen discounts tax treatment already in value of supply chapter, and you are eligible to avail ITC, sir. Just because you are giving discount, it doesn't mean that you are not eligible for ITC. It doesn't mean that you should reverse proportionate ITC. No, nothing like that. Secondary discounts, sir, secondary discounts will not have any impact on the availability of ITC as well, because tax liability itself will not be reduced. There will be tax and there will be ITC also. No need to worry about. So simple, samples and free gifts if you are giving, for that if you buy something, no ITC. Buy one get one free will not have any impact on your ITC. Discounts also will not have any impact on your ITC. So no reversal, nothing is required. So that is what the concept. Now if you see 17 subsection 1, 2 and 3, see nothing but it is, sir, when you are buying something for business purpose, okay, you can take ITC. But if you are buying that and using for non-business purpose, you cannot take ITC. Sir, I am buying it for business purpose, but to provide taxable outward supplies including zero rated supplies, then I can take ITC. That means, you know, zero rated supplies are nothing but exports and supplies made to special economic zones. For this purpose, if I am buying, I can take ITC. But for providing exempt supplies, if I am buying, I cannot take ITC. Please understand. For providing exempt supplies, if I am buying something, I cannot take ITC. That is what the concept. Okay. So I repeat, if you are buying something for business purpose to make taxable supplies including zero rated supplies, you can take ITC. Now you are buying something for providing exempt supplies, then you cannot take ITC. You are buying something for providing RCM supplies, you cannot take ITC. You are providing buying something for providing nil rated or wholly exempt supplies, then also you cannot take ITC. Now the problem here is, sir, if you buy that and use it exclusively for taxable supplies, exclusively for exempt supplies, exclusively for business purpose, exclusively non-business purpose, yes, we have an idea. But sir, what if we use it commonly for some taxable, some exempt supplies? I am buying a plant and machinery, using it for both taxable supplies as well as exempt supplies. I am buying some inputs, using for taxable supplies also, exempt supplies also, some goods even for non-business purpose also. What if you are doing that way? Exclusively means, yes, we can understand, take ITC or don't take ITC. But what if you are using it for both common purpose? Then what we should do? That is where rule 42 and 43 comes into picture. Okay, so apportionment of credit, if you see, as per the usage, see, you are buying some input services and capital goods, and for what purpose you are buying them. If the breakup is available, then fine. Whether to take ITC or not to take ITC, we can take a decision. What if the breakup is not available? What if the breakup is not available? Sir, with respect to inputs, input services, capital goods, we are commonly you buying them and commonly using for taxable supplies, exempt supplies, non-business purpose, all this stuff. There only rule 42 and 43 will come into picture. Rule 42 deals with common purchases, inputs and input services used for both making taxable supplies also, exempt supplies also. And rule 43 talks about buying capital goods using for both taxable purpose also, exempt purpose also. So that way, so if the breakup is available, the data, this is exclusively used for this is exclusively used for that, then fine. But if that is not available, you are using it for commonly for everything, then how much ITC you can take? That is dealt in rule 42 and 43. So let us go with rule 42 and 43. Very important rules for you, and most of the students feels this as a little bit confusing, but I am going to simplify it like anything. So let us go with rule 42 and 43. See, before going to rule 42 and 43, we should understand the meaning of exempt supplies. Sir, I am buying something using for both taxable supplies as well as exempt supplies. Then how to apportion the credit? Rule 42, 43 talks about that. But what is the meaning of exempt supply is what important here. Sir, the meaning of exempt supply is nil rated supplies we call as exempt supplies. Only exempt under GST also we call them as exempt supplies. Non-taxable supplies, RCM supplies, even sale of securities, land and building, warehoused goods are also treated as sale of warehouse goods. We have seen in schedule 3 if you remember. Sir, that is also what treated as exempt supplies. But exempt supplies does not include the interest income, okay, except if at all you are a banking company, financial institution, NBFCs, then for you this is added in your exempt supply. Schedule 3 transactions will not be added in exempt supply, except we have seen land and building and warehoused goods. Except those remaining, all Schedule 3 transactions will not be treated as exempt supplies. And value of duty credit scripts, whatever has been supplied, that also will not be treated as exempt supplies. Okay, so this is the meaning of exempt supplies. Now, here, sir, when I am selling securities, what is the value I should take? 1% of the transaction value that you take as value here. So when you are selling land and building, the stamp duty value, whatever is there, that you take as value. Warehoused goods, sale of warehoused goods, what is the value I should take? Take the value as nothing but value as nothing but the duty free shops. In the duty free shops, what is the value has been adopted that you take? Clear? So that is what the concept. Okay, fine, sir. We have understood the meaning of exempt supplies. Now let us move on to rule 42 and 43. So guys, now please understand. Rule 42 is regarding what? Regarding your purchasing inputs and input services, on that you have paid GST. How much ITC you have to take? That is what the concept all about. Listen carefully. Listen carefully. First of all, what we should do? So number one, total how much GST you have paid on that inputs and input services. Let us assume 10,000 you have paid. Okay. So this is what total GST paid. We call it as T. Okay. Ignore the numbers, all that stuff. Just I am doing also show off, but go with the concept instead of T, T1, T2, T3, all that stuff. Once you are clear with the concept, you can remember them also, no issues. Now, sir, what we have to do from this, okay, from this, we have to first eliminate. See, this is the total GST we have paid, correct? On inputs and input services. From that, what we have to understand, how much ITC we are eligible, first we should understand. Sir, remember the word pub. Here, pub spelling is not PUB, here it is PEB. So we should eliminate personal purchases, P. Next, E. For exclusively exempt purpose, what you have used? Purchases which are blocked credit, blocked credit. If you remove all those things, let us assume 1000, 1000, 1000. Sir, balance 7000. These are just imaginary numbers. Balance 7000 is the total amount which should be credited to e-credit ledger, which you are eligible for ITC actually, which you are eligible for ITC. See, now when you are eligible for this ITC, in this there are two things. One is exclusively you have used for taxable purpose, and two, common purpose, common credit. Okay, so there are two things here in this 7000. This 7000 amount should credit to e-credit ledger. I repeat, whatever the GST you have paid on inputs and input services, out of that remove something which is exclusively for personal purpose you purchased, exclusively for exempt purpose you have purchased, exclusively blocked credits. These three elements if you remove, then you will get the balance amount is nothing but the amount which you can take to e-credit ledger. From that, if you remove exclusively for exempt purpose what you have, sorry, exclusively for taxable purpose what you have used, then balance 5000 will be the common credit. Balance 5000 will be the common credit. Now, in this, sir, whatever I have used for exempt purpose, I should proportionately reverse, correct? How will I reverse? 5000 into exempt turnover by total turnover. So from this, I might also used something for non-business purpose. That how much I will do for that calculation, we don't have a proper formula. So 5% of 5000. This much we should reverse. So if anybody asks you how much is to be reversed, this much should be reversed and this much should be reversed. We call it as D1 and D2. Okay, so that is what the procedure. See, I will show you it in a even with a better handwriting. Understand what we have to do. First of all, total GST paid on all inputs and input services, treat it as T. Let us assume 10,000. This is input tax. Okay, from that remove whatever you have used for personal purpose, exempt supplies and blocked credits. We are calling them as T1, T2, T3. As I told you, pub, eliminate pub.
Pub spelling is not PUB, it is PEB, personal exempt and blocked credits. Okay, so you are eliminating. Balance amount is nothing but the eligible ITC which you should take to e-credit ledger, that we are calling as C1. From that, if you remove exclusively for taxable purpose how much ITC is belonging, if you know that data, then balance data is common credit, that is C2. So from that, how much I should reverse? D1 and D2 you should reverse. That means, sir, suppose if my exempt turnover is 60 lakhs, taxable turnover is 40 lakhs, total turnover is 100 lakhs, correct? ITC related to exempt supplies we should reverse. So common credit 1000 rupees into 60 lakhs divided by 100 lakhs will give you proportionately D1 600 rupees you have to reverse. And common credit, in some questions they won't give anything which is used for non-business purpose. If they don't give anything related to non-business purpose, that means fully we have used it for business purpose only. D2 will not come into picture. D2 will not come into picture. But if you have used something for non-business purpose also, then D2 will come into picture. Clear? How much D2? D2 we don't have any formula here. So they are going with a flat assumption that 5% of common credit. So 5% of common credit is how much? 1000 rupees. So that means how much? 50 rupees will be the reversal. So total eligible ITC is 4000 as we have seen. Here, how much amount we will take to e-credit ledger? 4000 we will take. How much we should reverse from that? D1 and D2. We should reverse 650 rupees. We have to reverse. So eligible ITC is 4000, and from that, if you reverse 650, balance amount will be the 3350. 3350 will be the ITC available for you to set off. That is what the concept of rule 42. Very simple. But understand conceptually it is very simple. How do you apply this? For this, because this is a revision video, I am not able to solve a problem, but this is one wonderful problem which I have lifted from ICAI sources only. Of course, I am not drafting all these things. Okay. So this is one wonderful problem. My suggestion is you try this so that conceptually it will be very much perfect. And of course, I will display the answer also. You just pause the video and take screenshot of this. Try this problem, or the problem is there in the soft copy also. You can just go through that. So how the problem has been solved, all the stuff. If you are comfortable with this, then it is like anything. You are completely thorough. You are completely thorough with the concept. This is the answer, part of the answer, half part of the answer. Take screenshot of this. And then this is another half of the answer. I challenge you, whether you can solve this or not, please check. See, conceptually you are thorough. That's all. The explanation what we have discussed, that much only. That's all. Okay, just people, the faculties will confuse you. T1, T2, T3, T4, all that mugging up and all not required. So you know the concept now. Now you just try to crack it. Okay. Problem is lengthy, but it covers all the adjustments. It needs your patience. That's all. Right. So all the best. Try the problem. You should get this answer. Now let us move on to rule 43. So now rule 43, very important and interesting one, and I have simplified it to the maximum possible way. And of course, let us see that. First of all, see rule 43. Understand, you are buying the capital goods and you are using it for both common purpose. Then how much ITC we should reverse? First, for that, understand, you should avail ITC and then you should reverse ITC. That is what the logic. First of all, let us see what and all ITC I can avail. See, listen carefully. You should be very clear here. You are buying something. You are buying something exclusively for taxable purpose. Yes, you take full ITC, capital goods. You are buying something exclusively for common purpose, taxable as well as exempt. Then full ITC, take full ITC, take full ITC. And now, sir, earlier in past I have purchased it for exclusively exempt purpose, sir, but I have not taken ITC that time, correct? Now that goods, that capital goods is going to be used for common purpose, sir, for both taxable purpose and exempt purpose. On that also you take full ITC. How much ever you have paid GST that time, you take full ITC. Don't worry, we will reverse also, no issues. Okay, so that is the point. Fine. So on these three things you should take full ITC. Now this month you may get a doubt. What if I have purchased earlier exclusively for taxable purpose and now I am using for common purpose? If you have purchased earlier for exclusively taxable purpose, you would have already taken ITC. Now there is no need to take ITC again. So that will not come into picture here. Okay, so this is important. Now this much, how like ITC you should definitely take. So we have understood how much ITC we should take, that we have understood. Now the interesting part, the reversal. Sir, how much ITC I should reverse? How much ITC I should reverse. How much ITC I should reverse? Sir, how much ITC I should reverse means, first of all, I should take the total GST paid on capital goods which is used for common purpose. That means I should take total GST paid on the capital goods which are being used for common purpose. See whether they may be new purchases or old purchases. All the purchase of capital goods within 60 months period, whatever you have purchased earlier or this month, everything, entire GST you take here. Earlier you have been using it for exempt purpose, now it has been used for common purpose. Such type of capital goods, on that how much GST you paid, fully take that. And earlier taxable purpose, you have purchased it, paid 1 lakh GST, used it for 3-4 years, now using for common purpose, take that 1 lakh full GST paid here. I repeat here, whether it is a new purchase or a old purchase, new conversion or a old conversion, all these things, on that how much ever GST you have paid, entirely you take here, the total GST on the new purchases, old purchases, new conversions, old conversions, on all those things, the capital goods whatever you have purchased earlier or purchased newly or earlier purchased for exempt or taxable purpose, now being used for common purpose, those all capital goods on that entire total GST paid, now you take it here. That is what we are calling it as TC, total GST paid on capital goods. Now all these capital goods are used for what? Common purpose, correct? Right now they might have purchased earlier or now, or they might have been converted earlier or in this month, but all these capital goods right now, what and all capital goods are being used for common purpose, on that whatever the total GST paid, you take it fully now. That is what we are calling as TC. Okay, now sir, this is entire GST, but this entire GST will give you for 60 months, correct? You know, useful life of the asset we assume in GST is 60 months. So this month how much we have to reverse, that is what we are calculating. So what we will do now, we will take the total ITC availed, so TC, now we will divide it by 60. So we will get a TM, this month related credit we will get credit of related to this month. Okay, am I clear till now? So after taking this for that entire month, how much we have to reverse? So we have understood. See, total GST paid on the capital goods which are used for common purpose, we have taken and we have divided it by 60. So we have understood for that month how much it is related, total common credit. So we should reverse how much ITC out of the common credit, whichever is related to exempt turnover, we should reverse, correct? So we should reverse that monthly credit into exempt turnover by total turnover. So proportionately that much amount you should reverse. That is what we are calling as TE. Okay. So I repeat again, sir, simple, nothing but very simple here. What we should do right now, whatever the capital goods are being used for common purpose, you take, no matter when they have purchased, no matter when they have been converted. Okay, take all the capital goods which right now are being used for common purpose, on that how much ever GST paid, that is common credit. Okay, because on that you should have already taken ITC, conversions, purchases, all this stuff. Now from that divided by 60, that will give you common credit for this month, common credit for this month. So when you take that, sir, common credit for this month, there is taxable purpose also, exempt purpose also. How much ever related to exempt purpose, we have to reverse that, correct? So what we will do now, sir, reversal amount will be that monthly credit into exempt turnover divided by total turnover will give you the answer how much you should reverse. That is what we are calling as TE. Clear? Now, if at all there is one more interesting point here, there will be one more extra reversal for you. What is that extra reversal now? If at all earlier you have used it for exclusively exempt purpose, purchased it for exclusively exempt purpose, now you have converted, this month you have converted, this month the conversion is happening, this month if you have converted, then immediately here you have taken full ITC. If you remember, earlier exempt, but now you are using it for common purpose. This month take full ITC, you have taken full ITC, but sir, there is a GST portion related to the period where you have used it for exempt purpose, correct? So what we have to do, we should reverse that also. The total GST paid earlier 1 lakh, now you have taken full ITC this month, because in the first point I taught you, first take full ITC, then we will do reversal, like that I told you, correct? So you have taken full GST paid as ITC, but there is a portion of it which you have used during exempt supplies, where you have exclusively used that capital good for exempt supplies. So you should see how many quarters or part thereof you have used that capital good for exclusively exempt supplies. Imagine, sir, 1 lakh I have used it for
4 quarters, sir, exclusively for making exempt supplies that capital goods I have used, sir. Then out of that 1 lakh, 4 quarters into 5%, that is 20% belongs to exempt area, exempt period. So that much you should reverse now. 1 lakh into 20%, 4 quarters into 5%, that is 20% you should reverse. That is 20,000 you should reverse. Clear? This is another reversal. So in all questions, this may not be there. Sir, there will be TE with respect to capital goods. TIE, sometimes it will be there, it will not be there based on this. Okay, so hope it is clear for you. There is a small problem also here I have attached for you to solve. So you can just solve this problem. And see, rule 42, 43 problems, whatever I have shown to you, they are nothing but ICA study material, book back questions. You can go through that also if you have ICA study material with you. Okay, so this is the point. And for this, you should try. See, simple, I repeat, what is that we have purchased, for what purpose we are using. Okay, you can avail ITC when you can avail. This month you are buying something for fully taxable purpose or fully common purpose, or earlier I have purchased it for exempt purpose, now using for common purpose. All these things will be ITC for you this month. So this month you will take ITC only on fresh purchases and one fresh conversion from exempt to common, that you will take ITC. But coming to reversal, what we will do? Coming to reversal, we will take all the capital goods right now which are being used for common purpose, maybe purchased earlier or now, maybe converted earlier or now. So all the capital goods which we are using right now for common purpose, on that whatever GST paid, we will take it as common credit, and then we will divide it by 60, and then we will proportionately go with exempt turnover and total turnover, and we will reverse. So that is what we have to see. So with that conceptual clarity, go with this problem and then check the answer. Okay, so the answer is also attached below. As I told you, ICA study material problem only, book back question, you can just go through that, you will get that, right? So just try it on your own sincerely, so that conceptually you will become very much stronger. So this is what all about rule 43. So guys, understand first of all, sir, with respect to rule 42 and 43, the reversal of ITC will be done on monthly basis. So on monthly basis, you will be doing this on the monthly term. Once the year is over, you should calculate in it entire yearly turnover, all that stuff. Any differences are there, you should deposit that. Any shortfall is there, then you can take that ITC. That means what? For example, this reversal you have made, then you can re-avail that ITC. Or you have first less amount of ITC, then you can reverse again that ITC, whatever. Okay, so that is what all about that. So please keep this in mind. This is rule 42 and 43. So the next one is 17 subsection 4. You know, 17 subsection 4 is nothing but for the banking companies, financial institutions, and NBFCs, we are coming up with an option where, sir, they are providing taxable supplies and exempt supplies. They can go with 17 subsection 2 along with rule 42 and 43 and reverse the ITCs, all that we have calculated just now. So in that way they can proceed, or we want to make their life simple, easy. So in 17 subsection 4, what we are doing, we are coming up with an option to them. What is that option? Simple. Whatever you purchase, you take full ITC. We will not question whether it is used for taxable purpose or exempt purpose. Sir, is it true? Yes, but there is a small twist in the story. What is the twist in the story? Na? You should reverse 50% again at the end of the month. That means what? Flat 50% available. So simple, remember 17 subsection 4 if you are going with that. Sir, banking companies, financial institutions, and NBFCs, for them, three things. Whatever blocked credits you purchase, no ITC, 0%. Other purchases you can take 50% ITC, and if at all you are buying from your own distinct persons, 100% ITC. So 0, 50, 100. That way you remember. That's all. That is what section 17 subsection 4. So if you want to follow this option, banking company, financial institutions, and NBFCs, you can follow this option. Or if you want to go with 17 subsection 2, you can go with 17 subsection 2 as well. But option once exercised will be valid for the entire financial year. So for entire financial year, one option only available. So that is what this 17 subsection 4 all about. There's a small question for you. You can just go through this. So with this, we are done with 17 subsection 4. Now the very important one, you know how to set off the ITC balance. Yes, the very important one, to set off the output tax with the input tax. So what are the rules for setting off that ITC balance? As you know, sir, IGST balance, ITC, CGST, ITC balance, SGST, ITC balance, we have to use them for set off of our output tax liability. Now the first agenda, you know, everybody knows that the first agenda is first
agenda is IGST ITC under 0, correct? That is what our first target. So for that, what we can do, sir, we have to use it. First of all, please understand these things. IGST, CGST, SGST, these like are your three pockets. So you have money in three pockets, so you can take money out of that and spend that money. But remember, you cannot transfer the money from one pocket to another pocket. Please understand that. I repeat, there are three pockets, sir: IGST, CGST and SGST. And from those three pockets you can take money. You can take money only for spending, but not for transferring from one pocket to another pocket. That means the ITC from this account you cannot bring to this account, from this account you cannot bring it to this account. Please understand that, sir. You can only use them. You can only use the balances in ITC, but you cannot transfer that from one ITC head to another ITC head. Please be very careful. Okay. So IGST ITC balance, sir, IGST ITC balance, first you should be using it for IGST payable. Okay. After using it for IGST payable, then what will happen, sir? If at all any balance is there, CGST and SGST in any order, in any proportion, you can use it. But here, sir, when they say any order, any proportion, you should be very careful. They may say that any order, any proportion, but in the question, in the exam, not ask you the question where net GST payable. The question they will ask is net minimum GST payable in cash. That means this step, whatever is there, is going to be very crucial. You should use this ITC balance effectively in such a way where your utilization is so effective, the cash outflow will be as less as possible. That is very important. Okay. So I repeat, IGST ITC balance, you should first make it 0. Till then you cannot touch these accounts. Till then you cannot touch these accounts. Hope I am clear. Okay. So first, IGST ITC balance. If you see IGST payable, sir, IGST payable, IGST ITC balance you can use for IGST payable. Still we have balance, anything left out, use it for CGST or SGST in any order, in any proportion. The law says any order, any proportion, but you should use it effectively. Next, finally, still any balance is there, sir, in IGST ITC, then you will carry forward. Understand, in the answer, if you are listen carefully, this is one common mistake what you do. IGST ITC balance carry forward should not come. If at all it is coming, still your answer is right, provided there are two things. One is all the liability should have become 0. IGST ITC carry forward, if you get in the answer, that means all the liabilities became 0. And you have not touched or you have not utilized CGST, SGST balances. If these two conditions are satisfied, then only your answer is correct. Because without making this 0, you cannot use these accounts, correct? So please understand, if you get IGST ITC carry forward, that means liabilities are fully over, and CGST ITC balance, SGST ITC balance, you have not placed this. Okay, that should be the case. Right. Now coming to the point. Sir, IGST ITC balance, we made it 0. Imagine that way. Then what we can do? We can start using CGST ITC balance. CGST ITC balance you can use it for what? CGST ITC balance you can use it for CGST payable. First, till any balance is there, IGST payable. Till any balance is there, then carry forward. But you cannot use it for SGST payable. Same way, SGST ITC balance for SGST payable. Till any balance is there, IGST payable. And please understand, SGST ITC can be used for IGST payable only if CGST ITC credit is not available, balance is not available. But if you follow the sequence what I am doing, that is why when you are writing the answer, in the answer the format should be particular amount, and first you should take CGST, SGST, so that you will follow all these conditions. So IGST first to make it 0, IGST ITC first to make it 0, then only come to CGST ITC. Once fully completing CGST ITC rules, then come to SGST, then automatically will be following this condition. That means simple, if there is already CGST ITC balance to help IGST payable, then why you are going to help him like that? For SGST, the question will come to picture. So SGST can help IGST payable only if CGST balance is over. Hope it is clear for you. Am I clear? Right. So that is what the point. Fine. So those are the rules here. So I'll just show you one problem how to do this. See, understand the approach, how to set off actually. Imagine these are our output tax and input tax. Clear. So what is our first target? What is our first target? So our first target is to make this IGST ITC balance 0. For making it 0, you should use it for IGST payable. But here IGST payable is just 54,000, but ITC is 79,000. So IGST payable becomes 0. IGST payable becomes 0. But ITC doesn't become 0. So 79,000 minus 54. So still it will be like 25,000. Your target is to make it 0. Now understand, you have 25,000 in hand and you can use it for CGST or SGST payable in any order, any proportion. But you should not do that. You should see who actually, see, you have 25,000 amount in your hand. You should see who actually needs your help. You should see actually who needs your help. Sir, who needs your help? If you see, CGST payable is 72,000, ITC is 75,000. That means it has 3,000 extra money. It doesn't need anybody's help. But if you see, SGST 72,000 payable but 18,000 ITC. So that means it needs the help of 54,000. Still it has a shortfall of 54,000, if you understand. That means SGST is actually waiting for somebody to help. This way if you do, you will never go wrong. Yes, IGST, ITC balance extra you have in your hand. Sir, that amount to whom you can give, to whom you can help, to whom you can set off. See whether CGST needs help or SGST needs help. If they need help, how much they need. So that way you should proceed. Sir, here 25,000 I have, but SGST needs 54,000 help. CGST doesn't need any help. So you should not use that amount for CGST payable. If you use this 25,000 for CGST payable, that means you are helping a person who actually doesn't need any help. So automatically you are increasing your cash liability. Are you understanding that point? So use that 25,000 for paying this 72,000. Fully you help. So here 47,000 payable will be still remaining. This became 0. Your first target achieved. See, till this became 0, I did not touch these people. I did not use this CGST, SGST, ITC balances. So now IGST, ITC balance became 0. Now what I am doing? Sir, I am using CGST, ITC for CGST payable. The CGST payable 72,000 is there, that becomes 0. Now this CGST, ITC still 3,000 I have. Sir, that CGST 3,000 ITC, what you can do? You can use it for IGST payable, but IGST payable is already 0. So what you can do now, sir? You cannot use it for SGST payable, you know. So it is only it can be only carried forward. That is what the concept. Okay, it can only be carried forward, right? That is the concept. Fine. Now coming to SGST. Sir, SGST ITC 18,000 is there, but liability 47,000. So if you reduce that, still 29,000 payable will be there. This became 0. So this will be the final answer if you see. Correct. So CGST carry forward 3,000, SGST payable 29,000. This will be the case. Hope it is clear for you, right? So that is what the point. Next, fine. One more small way, like I'll help you to understand the procedure, actually how to just develop the thought process. See, again same story. IGST you have 1,300 ITC but payable 1,000. Payable becomes 0, but ITC still 300 is there. Your target is to make this 300 0, IGST, ITC 0, correct? Your target is to make that 0. Now, understand, you have 300 rupees in your hand and you have two parties to help in front of you. Sir, one is CGST, the other is SGST. CGST needs how much help from you? CGST needs, see, output tax is 300, input tax is 200. It needs 100 rupees help. Same way, SGST also 300 payable is there, 200 ITC is there. It needs 100 rupees help. Are you understanding the point? So in such case, sir, what will happen? Both of them needs 100 rupees help and you have 300 rupees in your hand, correct? So when you have 300 rupees in hand and both of them needs 200 rupees help, what you should do? We should not go on fully help. CGST 300 you take it, SGST 300 you take it, any order, any proportion, like that you should not do. Please understand, you have 300 in your hand and two of them standing in front of you, both of them asking 100 enough. Then first you should help both of them 100 minimum. That means you are effectively utilizing your money. Then extra 100 rupees is there, no, you give to anybody, it will not change the answer. So please understand, here the concept is not about giving them equally. 300 you have and giving them equally is not the concept. Please don't misunderstand that way. Sir, 300 I have, I'll give both of them 150. No, that is not the concept. See how much help both of them need. That much minimum, if you are able to help, that is more than sufficient. No sir, I only have less money. then there is no problem. However, the answer will be perfect. So please understand, develop this thought process, who needs how much help. So I felt like this fellow needs 100, this fellow needs 100. So for both of them we are helping 100. So still I will be having 100 rupees. Now this full 100 rupees you help to CGST or you help to SGST, it doesn't change the answer. So I made first in queue CGST standing, I paid to him. So IGST ITC became 0. Now I can go with CGST with CGST 100 rupees carry forward, SGST both became 0. Clear? Guys, I repeat, when you have IGST ITC in your hand, you should see which fellow needs actually your help. Accordingly, you help both of them and then settle the liabilities. Okay, that is how you should develop the thought process. Hope it is clear for you. Right? But first your agenda is making IGST ITC balance 0. Till then you cannot touch CGST and SGST accounts. Clear? So that is what the concept. You can try this example. So the next section is nothing but section 18, actually all about we are going to see with. So section 18, if you see section 18, mainly first what I'll do, I'll discuss section 18 subsection 1, 4 and 6 first, then we'll go with subsection 3. Subsection 2 incidentally along with subsection 1 I'll discuss. So these are first one set of sections, then we'll go with subsection 3 separately. Now coming to the point, sir, what is section 18? Section 18 is all about, section 18 is dealing with ITC in special circumstances. I'm talking that dealing with ITC, it is not availing ITC or reversal ITC. So both are there in section 18. You can avail ITC as well as you can reverse ITC. So first of all, section 18 subsection 1 we are going through. So section 18 subsection 1 is talking about availing ITC in special cases. What are the special cases where you can avail ITC as per section 18 subsection 1? So there are 4 cases, clause A, B, C, D. A is all about you are becoming liable for registration and you are applying for registration within 30 days, or you are taking voluntary registration, or you are coming from composition scheme to normal scheme, or your exempt supply becomes taxable supply. See, so long in past you did not take ITC because of various reasons. Either you are not registered, or you are under composition scheme, or making exempt supply. Now, sir, you are coming out of that and you are going to pay output tax. Because of that, what we are doing, whatever the stock you are having, inputs or capital goods, whatever you are bringing now into taxation net, we are going to give ITC. Here I repeat, clause A and B are one category, C and D are another category. What is that category, sir, if you ask me? Sir, in clause A and B, you are becoming liable for registration and immediately preceding date, closing stock. The date of becoming liable for registration is that immediately preceding day. Yes, this is the immediately preceding date of the date of becoming liable for registration. On that date, whatever is the closing stock you're having, inputs in stock or inputs in work in progress, inputs in finished goods, on all these things they will give you ITC, but no ITC on capital goods. Please understand that the important thing is here, no ITC on capital goods. Clause A and B, where you are becoming liable for registering and where you are going for a voluntary registration, both the cases, here you will take ITC. You are eligible for ITC only on inputs, not on capital goods. So the only difference is, sir, here the effective date is like the date of becoming liable for registration, immediately preceding day, the closing stock. Voluntary registration, the date of grant of registration certificate, immediately preceding day of date of grant of registration certificate. So on that date, whatever the inputs are there with you, maybe in stock or work in progress or finished goods, on that we will give you ITC, that is clause A and A and B. So A and B one set over. Coming to clause C and D. Clause C and D, sir, so long you are under composition scheme, now you are coming under normal scheme. You are coming out of composition scheme. The date when you become ineligible for composition scheme, immediately preceding day, whatever the inputs lying in stock, work in progress, finished goods, on that you can take ITC, and also you can take ITC on capital goods. That is why I told you clause C and D are different. What is the difference in clause C and D with respect to A and B? In A and B, you are not registered, now going for registration. C and D, you are already registered, but composition scheme to normal scheme you are coming, or exempt supply is becoming taxable supply. Hope it is clear. And one more thing, and one more difference is, sir, in clause A and B you can take ITC only on inputs, A and B. In C and D you can take ITC on both inputs as well as capital goods. So that is what the difference, another difference. Now here the point is, sir, if at all it is inputs in clause A and B, you can take ITC easily, proportionately. For example, when you have purchased 10,000 kgs, you did not take ITC. But now, when you are coming out of that, like you became liable for registration, took registration, or voluntarily you took registration. Now you have 2,400 kg raw material pending with you, lying with you, maybe in stock or inputs or work in progress or finished goods, all that stuff. Now that 2,400 kgs proportionately you will take. But sir, what about capital goods? In class C and D, you are also eligible for capital goods, correct? You can take ITC on capital goods. Sir, how much ITC you can take? Now, please understand, if you purchase today, when you are under normal scheme, registered under GST, using it for taxable supply, everything, you buy a capital goods, I will give 100% ITC. But why am I giving you that 100% ITC? Because I am believing that you will use that asset for 5 years at least. That is the standard assumption in GST. The useful life of the asset is 5 years. So I will give you 100% ITC, assuming that you are going to use it for 5 years. But the problem is you have already used it in composition scheme, or you have already used it under exempt supply. In such cases, sir, how much ITC I should give you? I cannot give you 100% ITC. So what I will do is, sir, 100% GST paid, whatever you have paid, total GST paid minus, sir, I will reduce 5% of every quarter you have used in composition scheme, you have used in exempt supply. Sir, that I will reduce, and balance amount I will give you. That means what? Simple. Total GST paid minus 5% per quarter or part thereof. So every quarter or part thereof also will be treated as one full quarter. So that much we will reduce, and on balance amount we will give you as ITC. Now see, for example, here you have purchased the capital goods on December 28th and paid GST 1,80,000. But you are under composition scheme, and you have opted composition scheme for financial year 18-19 and 19-20, and on 6th October you are coming out of, because your aggregate turnover has exceeded the threshold limit, you are coming out of composition scheme and coming into normal scheme. How much ITC you can take on capital goods? Means we should see how many quarters you have used. See, if you see, this is coming in quarter 3, financial year or calendar year, whatever you take, answer will not change. So don't worry about that. So quarter 3, so October to December quarter, this is happening in 18-19. So in 18-19 Q4 also you have used, and this event is happening in October to December quarter of 19-20 financial year. That means Q1 there, Q2 there, and Q3 there. So total 5 quarters you have used. 5 quarters you have used. Are you able to understand? You have used Q3 and Q4 in 18-19, and Q1, Q2, Q3 in 19-20 financial year. So I repeat, whether you take it as calendar year or financial year, answer will not change, because the quarters are always same. Okay. So now 5 quarters you have used. So total GST paid 1,80,000 minus 5 quarters into 5%, that is 25%. If you remove, then that much amount you can take as ITC. That is what the answer. If you see, 1,80,000 minus 25%, 1,35,000 will be the ITC. Are you able to understand? Okay, so that's all. That is how you calculate. Hope it is clear for you. So for this, there is a procedure in Rule 40, whatever has been prescribed. Sir, what you are doing when you are taking ITC on capital goods, that we have already discussed how we will calculate that. And sir, form GST ITC 01 within 30 days should be filed from the date of becoming eligible for ITC under 18 subsection 1, maybe under subsection 1 clause A, B, C, D, whatever it is. You should, for taking this ITC, you should file a form here, GST ITC 01. That's all, within 30 days of becoming eligible for ITC under this particular section. And in that, you should give the details of inputs, capital goods, what and all you are eligible. And suppose if at all that amount totally, CGST, SGST, UTGST, IGST, all put together, whatever you are claiming ITC, if it is exceeding 2 lakh rupees, then you should get it certified by the chartered accountant or cost accountant who are in practice. Okay, I repeat, entire ITC, eligible ITC. Okay, if at all it is exceeding 2 lakhs, in form GST ITC 01, then you should go for the certification from practicing chartered accountant or cost accountant. That is what the concept. Okay, so now that is what Rule 40 says. So Rule 40 is this procedure for calculating all that stuff. So we have calculated. So I repeat, 18 subsection 1 is all about availing ITC in special cases, A and B one set, C and D another set. Liable for registration, voluntary registration, composition scheme to normal scheme, exempt supply becomes taxable supply. Here only inputs, here both inputs and capital goods. Here not registered, now registering. Here already registered, now paying tax. Okay, so that is the case. So here inputs, both, all the 4 cases, inputs, proportionately you can take ITC. Capital goods in the last 2 cases, clause C and D, how you will proceed? Rule 40. Rule 40 says total GST paid minus 5% per quarter or part thereof used. On that, you can take ITC. So that is what we have seen. Now,
Sir, the interesting part is if you want to take ITC under 18 subsection 1, just now as we have discussed all the four cases, clause A, B, C, D, all this stuff. If you want to take ITC under those four clauses, any of those four clauses, the time limit to avail ITC is 1 year from the date of invoice. That means the 16 subsection 4 will give you actual time limit for availing ITC, that is for normal cases. But 18 subsection 2 will give you the time limit to avail ITC if at all you are claiming ITC under 18 subsection 1, then you should definitely follow 18 subsection 2 time limit. That means in short, 18 subsection 1, if you want ITC on inputs and capital goods, you should have that purchase within 1 year. Only for within 1 year purchases of inputs or capital goods you can take ITC. More than that you cannot take ITC. Am I clear with that? If you see here in this example properly, I have made sure that the purchase date and this exit date from composition scheme are falling within 1 year if you check. Okay, because of this particular logic of 18 subsection 2. Okay, fine, that is there, and there is an example also, you can just go through that. And next, as I was talking, let's just finish 18 subsection 4 and 6. 18 subsection 4 is nothing but simple, understand. 18 subsection 4 is nothing but, see, sir, when you are coming from composition to normal scheme, I am giving you ITC. When your exempt supply becomes taxable supply, I am giving you ITC. Then, suppose if reverse situation happens, you are coming from normal scheme to composition scheme, or you are going from taxable supply to exempt supply, then you should also reverse the ITC, correct? So this is exactly opposite scenario for 18 subsection 1. Exactly opposite scenario for 18 subsection 1. So here what you can do, sir, when you are going from normal scheme to composition scheme, or your exempt supply, taxable supply becomes exempt supply, sir, whatever the inputs and capital goods you are having, please reverse the ITC. Inputs proportionately will reverse ITC. If it is capital goods, nothing but there you have taken ITC, availed ITC on quarterly basis. Here you have to reverse ITC on monthly basis. So simple, what we will do, sir, we will see how many months the capital goods is used. For example, Mr. Anil has purchased the capital goods and availed ITC 60,000. Now, the 60,000 I gave you ITC, assuming or believing that you will use this capital good for 60 months. Now, what happened after 3 years, 7 months, and 22 days? Sir, what has happened? Not told. Okay, let us assume he's coming out of composition scheme. He came out of composition scheme. So, Mr. Anil came out of composition scheme. Came out of composition scheme. So, we will take 3 years, 8 months as used. So in 5 years, 3 years, 8 months are over, means that means still 1 year and 4 months. That means 16 months is still pending. So 60,000 into 16 divided by 60. That means 16,000 should be reversed. Proportionate ITC for the life of the asset. Life of the asset is 60 months. You see how many months still is left. For that you should reverse the ITC. Okay, for that you should file a form GST ITC 03. So that is what the concept. Hope you are clear with that. Okay, so with this we are done with 18 subsection 4 also. Simple, 18 subsection 4 is nothing but exactly opposite scenario for section 18 subsection 1 clauses and D. Hope it is clear. Okay, now 18 subsection 6. Let us go with 18 subsection 6. What is 18 subsection 6? So 18 subsection 6 is nothing but if you have availed ITC on any capital goods, that capital goods is being sold, that capital goods is being supplied. In such cases, what will be the reversal of ITC? Simple, sir. The law says, you see, exactly ditto what we did in 18 subsection 1. Their total GST paid minus 5% per quarter or part thereof. There you are availing ITC for the first time. So total GST paid minus 5%. Here you have already availed ITC, you have to reverse the ITC. So total ITC availed earlier, minus 5% per quarter or part thereof of the usage. That will be the calculation. You should be technically very much clear about the wordings what you are using. Please understand that. There total GST paid minus 5% per quarter. Here total ITC availed minus 5% per quarter or part thereof. Okay, and you should compare it with sale price into GST rate, whichever is higher, that much you have to reverse. Please understand that. Okay, so now see, for example, Mr. Sanbir Kapoor has purchased a capital goods on 2nd June 2023. This is happening in Q1 23-24 financial year. Purchase price 100 lakhs, GST 18 lakhs. That means what? GST rate is 18%. Okay, now sir, he is selling this capital goods on auspicious day 14th Feb 2024. This is also falling in 23-24 financial year for 70 lakhs. Compute the reversal of ITC. So you tell me here, how many quarters we have used this? 4 quarters we have used. That means for that 4 quarters taking ITC is correct. Balance quarters you have to reverse, correct. So total ITC availed 18 lakhs minus 4 quarters into 5%, that is 20%. If you eliminate balance amount, that one you should compare with sale price 70 lakhs into GST rate 18%, whichever is higher, that much you have to reverse, that much you have to reverse. So 14 lakh 40,000 or 12 lakh 60,000, whichever is higher. Sir, which is higher? 14 lakh 40,000 is higher, so that much we have to reverse. Clear? Hope it is clear for you. So 18 subsection 6. So with this we are done with 18 subsection 6 as well. So 18 subsection 1, 4 and 6, if you see, we have discussed in them. In them, capital goods, we are, see, 18 subsection 1 we are availing ITC, subsection 4 we are reversing ITC, subsection 6 also we are reversing ITC. So that is what the concept all about. Hope it is clear for you. Fine. So with this we are done with 18 subsection 6. Let us move on to 18 subsection 3. So if you see 18 subsection 3, 18 subsection 3 is nothing but when you are selling your business, the business may be transferred because of like merger, amalgamation, demerger, etc., whatever it is. But because there is transfer of business, what the transferor can do is the transferor can transfer his unutilized e-credit ledger balance to the transferee who is buying his business. Okay, so just like how do you transfer money from your bank account to another's bank account, here when I'm selling my business to you, from my e-credit ledger, whatever unutilized balance is there, that I can transfer to you, provided there is a sale of business with a provision of transferring all the liabilities. Okay, so transferor from his e-credit ledger, he can transfer to his e-credit ledger balance the unutilized amount. And as I repeat, the condition is the sale of business should be the condition that transfer of all the liabilities. That is the condition which is very important. So what is rule 41A talking about? Please understand, in rule 41A what they are trying to tell is that in one state I have one registration but two different place of businesses. Now what I am doing for new for additional place of business, I am taking a new registration. That means in the same state I had one registration earlier, now I am taking a new registration. For the new registration, whatever you have taken the place, for that new registered unit you can transfer the ITC balance proportionately. For example, understand, see, I am in Tamil Nadu, I have one registration but two branches. One is in Chennai, the other is in Coimbatore. Okay, one is principal place of business, the other is additional place of business. Now what happened? So for Coimbatore, I took a new registration. So whatever the ITC already lying in Tamil Nadu, the earlier old registration ITC balance, that I can now pass on to even Coimbatore registration a small amount. How much amount? With respect to the proportionate value of assets the Coimbatore branch is now having. Okay, so that is the option here. And now, sir, when you are splitting the ITC, when you are distributing it in the ratio of the value of assets held by that Coimbatore branch, all the assets should be considered irrespective of the fact whether ITC has been taken on that assets or not. That is the important thing. Clear? So I repeat, whether the assets, business assets on which whether you have taken ITC or not, it doesn't matter. You can take all the assets, and in the ratio of how much assets each branches are having, in that ratio you can split and pass on the ITC balance, transfer the ITC balance to the newly registered unit in the same state. Now I repeat, newly registered unit in the same state. Now with respect to demerger, here they have given a way how do you do this. Actually, so demerge also, we are splitting the businesses and there is demerged entity coming into picture. The existing entity, let us assume Vivar Private Limited, we are dividing into PVV and VV. Okay, sorry, Vivar than VV. So that way demerged entity, so we can split the ITC balance also. Here they have given how do you do that, all that stuff, the distribution etc. of ITC. This is applicable for all form of business reorganizations, not only for demerger. So what they are trying to tell here is, sir, when you are splitting that ITC or transferring that ITC, what you should do now, when you are calculating the value of assets, value of assets should be taken state wise, not pan India wise, first of all. Okay, second one, sir, you can split this only when both the entities, the transferring entity and the transferee entity, should be in the same state. Then only you can split that. You can transfer the ITC balance. Now see, for example, Vivar Private Limited is having 1000 crore assets. When you are taking this 1000 crore assets, please understand, you should take all the assets, whether we have taken ITC on them or not, it does not matter. Okay, now sir, in two states we have the location, sir, Madhya Pradesh and Uttar Pradesh. In Madhya Pradesh we have 600 crore worth assets. In Uttar Pradesh we have 400 crore worth assets. Sir, in Madhya Pradesh, if you see, now I am splitting Vivad Private Limited into Vivad Limited and Vivad Private Limited and VV Private Limited. Now I should see within Madhya Pradesh, how much assets are split between each of them. It is Vivad and VV. 300 crores has been split. That means 1:1 ratio. Now you divide that ITC balance of Vivad Private Limited between Vivad Private Limited and VV Private Limited in 1:1 ratio within Madhya Pradesh. Sir, coming to Uttar Pradesh, we are splitting the assets in, like, Vivad Private Limited will be having 300 crores assets and VV Private Limited will have 100 crore assets. So now 3:1 ratio they are dividing the assets, correct? So ITC balance also you should divide in 3:1 ratio. Clear? So that is what the concept. Fine. Till now it is okay, sir. There are some other conditions also. What are the conditions? Now if you see, sir, when you are applying this ratio 1:1, 3:1, we have calculated, no? So that ratio 75%, 25% or 50%, 50%, that way, this ratio should be applied on the total ITC balance, not for each CGST, SGST, IGST, not required. For total balance, if you apply the ratio, that is more than sufficient. And how much ever is there in each head, for example, in CGST you have 10 lakhs, you can transfer maximum 10 lakhs only to the new entity, not more than that. But total, if you see, total percentage should match. Okay, that is the point. Now, sir, if you see a small example here for explaining that concepts. Sir, we have branches in Delhi and Madhya Pradesh, sir. And in Delhi and Madhya Pradesh, we are splitting the entity, so demerger is happening. And if you see, the new entity is going to get 70% of the assets. That means old entity will get 30% and new entity will get 70%. If you see, total ITC balance already we are having is 10 lakhs, 10 lakhs, 30 lakhs. Totally 50 lakhs we are having. In this, 70% will go to the new entity, 35 lakhs. So here the percentage of 70% should be applied on total ITC balance. Individually we need not check 70%, 70%, 70%. Totally out of 50 lakhs, I should transfer 35 lakhs. 70% I should transfer. So from that, CGST 10 lakhs is there, full 10 lakhs I can transfer. SGST 10 lakhs is there, full 10 lakhs I can transfer. If you have CGST 10 lakhs, you cannot transfer 12 lakhs. Okay, please understand that. And sir, 30 lakhs I have IGST, I will transfer 15 lakhs. Totally, if you see, 35 lakhs, it is matching 70% of 50 lakhs. It is matching, yes or no? So that is sufficient. Headwise, you need not apply that ratio. So only thing, number one, headwise you need not apply the ratio. Total ITC balance you apply that. Number two, headwise what you should see, in one head, if you have 100 rupees, you can transfer only 100 rupees there, not more than 100 rupees, correct? Here I have 10 lakhs. Can I transfer 12 lakhs to this fellow, new entity? No, sir, that is not possible. Okay, that is another point. So here, if you see again, Madhya Pradesh, the demerged unit is getting 40% assets and the old unit is having 60% assets. So if you see here, total ITC balance is 70 lakhs. From that, 40% you can transfer, means 28%, sorry, 28 lakhs you can transfer, correct? Each head, how much ever you want, you transfer based on whatever is available. In each head, 25 lakh, 25 lakh, 20 lakh is available. You transfer how much ever you want from that head. Okay, but total, if you do, it should match 28 lakhs. So here what they are doing, out of 25 lakhs, if you see, 3 lakhs we are transferring, 25 lakhs, 5 lakhs we are transferring. Out of 20 lakh IGST, 20 lakhs fully we are transferring. Total, if you see, 28 lakhs transferred. So total, your wish. Each head, sorry, total you should match the percentage. Each head, your wish. How much ever you want to transfer, you can transfer. That is what rule 41A. And here, if you are seeing, sir, that ITC balance, on which date I should consider, sir? ITC balance you should consider on the date of filing GST ITC 02, and ratio you should consider based on the assets lying on the appointed date of demerger. Hope it is clear for you. So that is what rule 41A. If you want, you can just take this example peacefully by pausing the video. So the next section, if you see, it is nothing but section 20, that is input service distributor. You know, input service distributor is a concept where, sir, there is a central office which is receiving the billings, all that stuff, and from that we are distributing the credit. So the bills are related to all the other branches, all that, sir, all the other branches, and that
billing is done at central office. The central office is receiving various inputs, capital goods, input services in its name, but the outward supply is not there from that administration office or central office, whatever it is. So the input is getting accumulated at the central office, which is of no use. So that input services, whatever they have received on that credit, this central office can distribute to the branches for which these input services are specifically related to or commonly related to. That is what the concept of input service distribution. So we receive input services in central office in the name of head office or administration building, whatever it is, and we cannot take ITC of that. So we are transferring it to the branches where output tax is generated, and the services which we are receiving at administration building or central office related to the branches. So related to the branches, we are distributing to those branches. For that, we need first of all ISD registration separately. It is not general registration. Even though you have a normal registration, you should take an ISD registration separately for doing this. Number one. Number two, this is only available on input services. Okay. Number three, this is distributed to the branches to which it is already related or actually related. The input service is actually related, no matter whether that branch is eligible for credit or not, or they are providing exempt supplies, all that, it doesn't matter to us. Our duty is to distribute the credit. Let them do what they want with that. If they are eligible for ITC, let them take ITC. If they don't, if they are not eligible for ITC, let them not take ITC. Okay, so this distribution will happen for all the branches which are operational during that period. Okay, now see, for example, there is an administration office in Andhra Pradesh which is receiving input services, and further they might be paying CGST, SGST or IGST, whatever it is, when they are procuring the services, correct? That they can distribute to branches, like the branches are in Andhra, Tamil Nadu and Karnataka, imagine. So for those branches, they can distribute the credit. Clear? Now coming to the point, sir, when we are talking about the credit, you see, sir, how the credit will be distributed. See, there are three varieties here. First of all, first variety is, sir, the input service may be purely related to a particular branch, sir. What we have received at administration office, this is service related to particular branch. For example, we received input service which is exclusively related to branch in Andhra Pradesh, then transfer the entire credit, distribute the entire credit only to Andhra Pradesh registration. No, sir, it is belonging to more than one branch. Imagine we are receiving an input service which is related to both Andhra Pradesh as well as Tamil Nadu. Then what we will do, sir, we will distribute it to both Andhra and Tamil Nadu, that credit whatever is there belonging in that input service. So that entire we will be distributing only between Andhra and Tamil Nadu, not with Karnataka. Now, sir, how do you distribute that? In the ratio of the turnover in those states. So Andhra turnover and Tamil Nadu turnover, in what ratio they are there? Let us assume here 2 crores, here 1 crore. In 2:1 ratio, we will split that input service credit. Okay, the credit whatever is related to that input. No, sir, input service related to all the recipients. Imagine we have all the branches in Andhra Pradesh, Tamil Nadu, Karnataka, correct? This input service what we are receiving is related to all the three branches. In such cases, what will happen? In such cases, sir, this will be distributed for all the three branches in the ratio of their turnover. Okay, so that is what the concept. Now, please understand there are certain key points here. Sir, if they don't have turnover in the last preceding financial year, how do we proceed? Whatever the last quarter turnover available, in that ratio you should split. That is one important point we should understand. The next one is, as I told you, distribute the credit even if the recipient is unregistered or making exempt supplies. Okay, distribute the credit whether they are eligible for IT, just like you raise invoice on the unregistered customer, etc., etc. Just distribute the credit, raise an ISD invoice. Next, the entire credit is distributed whether the opposite fellow is eligible for ITC or not, it does not matter. That is also we have already discussed. Next, sir, when you are calculating the turnover, when you are dealing with both taxable and non-taxable goods, sir, when you are calculating the turnover, exclude the central excise duty, state excise duty, central sales tax and VAT. So that is what the concept. Am I clear? So these are the key points which we should keep in mind. And how do we distribute the credit? See, when you are distributing the credit, please understand, if the input service distributor is having IGST credit with him, he can transfer IGST credit only as IGST, not anything. Okay, even though section 20 is permitting that, rule 39 doesn't permit. So simple, understand, IGST can be transferred only as IGST. Okay, sir, we have CGST credit, sir. ISD is having CGST credit. How they will transfer? If ISD, input service distributor, is having CGST credit, that can be transferred as CGST if that other branch is also in the same state of ISD. For example, sir, ISD is in Andhra Pradesh, branch is also in Andhra. then CGST credit can be distributed as CGST credit. No sir, ISD is in Andhra, but branch is in Tamil Nadu. Then CGST credit will be distributed to Tamil Nadu branch as IGST. Same way, SGST. Sir, branch is ISD is in Andhra, branch is also in Andhra. Then SGST will be transferred as SGST. No sir, ISD is in Andhra, but branch is in Tamil Nadu. Then SGST will be transferred as IGST credit. That is what the concept. Okay. Now, sir, this should be done on monthly basis, sir. Whatever is there in that month, that should be closed in that month only. Later on, you cannot proceed with that. And for this, you should file GSTR7 within 13th of the next month, and that will get reflected in the opposite fellows 2B. And based on that, they will take ITC. Okay. And please understand, ISD is only to facilitate this credit distribution mechanism. So you cannot raise an RCM invoice on ISD, because ISD registration is purely for distributing the credit, not for tax payment. So if there is any RCM liability on ISD, that cannot accept it, that cannot accept that invoice, so they should take a separate registration and get the invoice in that name. So RCM supplies cannot be received in the name of ISD. That is important point, please remember. Okay. So now, obviously, sir, ISDs may be receiving invoices and they are distributing the credit. The same way, ISDs will be receiving credit notes or debit notes also. Accordingly, they will distribute the credit. If it is debit note we are getting, ITC will increase, so ISD will distribute more credit. No sir, ISD is receiving credit note, then ITC should reduce. So ISD will reduce the credit distributed to the branches. That plus or minus will be keep on happening only. Okay. Suppose we have ISD has received a credit note. ISD has received a credit note. Then what ISD has to do? ISD, when they are transferring the credit to the branches in the next month, sir, how much ever we are transferring, from that we have to reduce that credit note amount and we should transfer. But sir, imagine this month I should transfer 2000 to them, a particular branch. Let us assume Tamil Nadu branch, we have to transfer 2000 rupees. But I have a credit note in which I should reduce 3000. 2000 I should send them, now distribute the credit. Now 3000 I should reduce. Suppose 2000 I should distribute, only 500 I should reduce now as per the credit note. 1500 I will distribute to them, 500 minus. But sir, I should distribute to them 2000 only, but as per credit note, I should reverse to them 3000 rupees. 1000 shortfall is there? No. Then what will happen? Sir, you don't distribute anything to them and 1000 rupees add to your output tax liability. That is what the concept. So that is what the concept. Fine. Now here there is a small problem. Look at this. Pause the video. Just try to see the problem. See what they are trying to do is, sir, there is an input service distributor registration. And this is in Maharashtra. For the month of March, they give the following details. Sir, this is Ganganagar branch in Rajasthan, Madhugiri in Karnataka, Kosala branch in Uttar Pradesh, Mumbai branch in Maharashtra. You see, Mumbai branch is within the state. So any transfers are happening, CGST will go as CGST, SGST will go as SGST, IGST will go as IGST. You should understand that. Now, sir, turnovers they have given. Okay, turnovers we need. They give for last quarter only. We need it for the ratio how you split. Sir, ITC is specifically attributable to these branches. So these are the ITC which is specifically related to Ganganagar branch, related to Madhugiri and all these things not available, and these are related to Mumbai branch. Okay, so these are with ISD. This will be transferred to these people. This will be transferred to these people. You know, because this is outside Mumbai, outside Maharashtra, everything will be transferred as IGST to that branch because it is specifically available to that branch. This will be transferred as it is, IGST as IGST, CGST as CGST, SGST as SGST, because it is related to that. If you see that there are ITC available on input services used commonly for all the branches, CGST 60,000, SGST 60,000, IGST 1,20,000. This they should split between all the branches, correct? In what ratio they will split? Sir, here it is 50 lakhs. So 20%, 10%, 30%, 40%. So they will split in the ratio of 2:1:3:4. Okay, in that ratio they will split. So you just pause the video, try to get the answer for this, how much the credit will be distributed after distributing the credit, how much will be the total balances of ITC in those respective branches. You just try to understand, pause the video, just go through this and try to understand the answer. Then I will just scroll and display the answer. But do it sincerely, please do it sincerely. Pause the video and try this, please. Yes. Now if you see, sir, this is the final answer. You can pause the video and take the screenshot, or you can pause the video and check the answer. Right. Hope it is clear for you. So with this we are done with input service distributor concept, and there is something related to a small issue and clarification here, sir. Whether head office can avail ITC in respect of common input services procured from a third party but attributable to both head office and branch offices, or exclusively to one or more branch offices. Sir, whether we can issue tax invoice under section 31 to said branch offices for the said input services, and branch offices can avail the same as ITC, or whether is it mandatory for the head office to follow the input service distributor mechanism for distribution of ITC in respect of such common input services. The head offices are receiving common input services which are belonging to both head office both head office and branch offices, are sometimes exclusively related to one or more branch office. In that case, sir, head office, here the clarification is, sir, head office can there is tax invoice on the branch office and distribute the credit, or separately they should take a ISD registration, was the doubt. Then it is clarified. See, they can distribute the ITC in respect of such common input services by following ISD mechanism. ISD mechanism can be opted only if the said input services are attributable to the said branch office or have actually been provided to the said branch office. In case of ISD mechanism is opted, head office is required to get itself registered mandately as an ISD. Or they can also issue a tax invoice under section 31 to the concerned branch offices in respect of the common input services procured from third party by head office but attributable to the said branch offices, and the branch offices can then avail ITC on the same subject to provisions of section 16 and 17. Similarly, head office can issue tax invoice under section 31 to the concerned branch offices only if the common input services have actually been provided to the concerned branch office. Simple, what they are trying to tell. So head offices, when you are receiving some services related to branch offices, either you follow ISD mechanism or you just raise the tax invoice under section 31 on the concerned branch offices and close that concept. That is what they are trying to tell. A small clarification, just go through that. So now we are seeing the last step of this chapter, rule 86A and 86B. Rule 86A, first of all, sir, commissioner or any authorized officer can restrict your ITC utilization, to be utilization actually. Why he can restrict your ITC utilization? Because if your ITC balance is being reflected of the because of the supplier filing the invoices, your supplier has filed the invoices and that invoices are reflected in your 2B, and that supplier is a person who is not even existing. That means you took those suppliers have to fake registration and sold something to you, or they are not doing business from the declared place of business, or without receiving goods or services you have received that invoices in your 2B. In such cases, or the tax has not been paid by the supplier to the government, or the registered person who is availing ITC, that means the recipient itself is found non-existing or not conducting the business from the registered place. So either supplier is not existing or not doing business from his registered place of business, or he has just issued invoice without supplying goods to you, or supplier has not paid tax to the government, or you, the recipient, has not been found existing or not doing business from the registered place of business. In such cases, the proper officer can restrict your ITC utilization, or even if you are not in possession of tax invoice or valid documents regarding that purchases, then also he can restrict your ITC utilization. That is rule 86A. Okay. So who has the authority? All the stuff that has been given, you can just take care of it. Now coming to rule 86B. Rule 86B is nothing but, actually in simple words, rule 86B says at least 1% of the liability, at least 1% of your gross GST liability to be paid in cash. That is what it says. Be paid in cash. That is what it says. Am I clear? 1% of the liability to be paid at least in cash is what rule 86B all about. So when this rule 86B is applicable, this rule 86B is applicable when your supplies in the month, please be very careful, supplies in the month exceeds 50 lakhs, but other than exempt supplies, other than zero rated supplies, sir, other than exempt supplies and zero rated supplies, sir, if it is exceeding greater than 50 lakhs,
the taxable supplies in that month, then rule 86B is applicable. So when this rule 86B is applicable, what is your primary duty? Your primary duty is, sir, you should discharge at least your gross GST liability, at least 1% you should be discharging in cash only. That is what the point. Even though you have sufficient ITC balance, you cannot use full ITC balance. At least 1% you should pay in cash. Okay, so look at this example, sir. The total value of interstate supply of Kasi and Sons for the month of Feb is 100 lakhs, exceeding 50 lakhs. GST is 18% full IGST. So now IGST payable is 18 lakhs, but amount available in credit ledger is 20 lakhs. And you know, sir, amount may be available in e-credit ledger 20 lakhs, but at least 1% of this liability you should discharge in cash. So 18 lakhs, what they should do, sir, 18,000 at least in cash, and 17 lakh 82,000 they can use ITC. Okay, so that is what the concept. But there are certain crazy things here, exception to that rule 86B. What are the exceptions, ma? Like rule 86B you need not follow. When rule 86B you need not follow? Sir, you need not follow rule 86B when, suppose if you are an individual, the sole proprietor, partnership from the partners, HUF the Karta, company the director, AOP BOI the members, trust, board of trustees, these people have paid their personal income tax liability more than 1 lakh in each of the 2 last financial years for which due date is over. That means based on these people, sir, based on these people, members of board or trustees, all that stuff, based on these people personal income tax liability in the last 2 financial years, these people has paid more than 1 lakh as their income tax liability, then for this particular company or partnership firm or even individual, for them rule 86B is not applicable. So this is one case where rule 86B is not applicable. Another case, sir, you have a track record, you are a registered person, you have a track record of claiming GST refund from the department, and in the last preceding financial year, if you have claimed GST refund more than 1 lakh, maybe because you are having unutilized credit ledger balance because of zero rated supplies or inverted duty structure, whatever it is, then also for you rule 86B is not applicable. Okay, so this is another case. Next, sir, if you see the cumulative liability till date, sir, I have already paid discharge more than 1% in cash, sir, then you need not follow rule 86B. And finally, sir, if it is like government department or public sector undertaking, local authority or statutory body, for them also rule 86B is not applicable. So you have understood, don't trouble the trouble here. Okay, if you trouble the trouble troubles you. I am not the trouble, I am the government. Okay, so that is what the point all about. So there rule 86B is not applicable. Okay, so that is what the concept. With this we are done with rule 86A and 86B also. So we are going through the next clarification here regarding ITC on availability in respect of demo vehicles. See, generally, I am a car dealer. I am purchasing cars and selling cars. So when I am purchasing cars and selling cars, I have certain demo vehicles. So certain cars are kept as demo vehicle for like test drive, etc., etc., all that. Whether I can take ITC on that or not is the first question. See now, if I am an authorized dealer where I am selling cars, so the dealer is selling the cars. Dealer sells the cars. So he will provide trial runs, demonstrate the features of the vehicles, all that stuff. For that, he will purchase the vehicles and he will use certain vehicles as demo vehicles. So there, ITC is not blocked. That means here ITC available. ITC available. Now, no sir, I am not using the cars what I have purchased for giving demo or trial, etc., etc., all the stuff to the customers, but I am using it for transportation of my staff, employees, management, etc., sir. Then ITC is not available. So ITC is blocked. Here ITC is blocked. Okay, this is second situation. The final situation, the interesting part here is, sir, what you are doing, you are not an authorized dealer who will sell the cars directly to the customer. You are just acting as an intermediary or an agent where the manufacturer of the cars directly will sell the cars to the customers, but you are acting as an agent to sell the cars and you will take some commission for that. What you are doing for providing your services as an agent, sir, for providing your services as a agent to provide marketing services, vehicle test drive services, all that stuff, where you are not directly involved in vehicle purchase and sale. In such cases, you are, as I told you, manufacturer will directly issue invoice directly to the customers. Okay, now the point is, as an agent here, I am purchasing some demo vehicles, correct, for test drives, and after certain time period is over, I will sell them. Now I am buying the car for providing my services as an agent to promote the car, all the stuff. I am not engaged in further supply of said vehicles. Okay, who is selling the vehicles? Manufacturer is directly selling the vehicles to the customers. As I have already told you, invoice is directly raised by the manufacturer to the customer. In such cases, ITC is not available. Sorry. That means here, dealer is not actual seller of cars. Dealer is not actually the seller of cars, but he is an agent of manufacturer. Okay, so now, sir, whether this dealer is capitalizing the car, not capitalizing the car, all the stuff doesn't matter. He cannot take ITC because he is just providing service as an agent. He is not buying and selling the cars. Okay, so dealer is not buying the, better write down, dealer is not buying and selling the cars. So whether he's taking, capitalizing the point or not, all the stuff doesn't matter here. So ITC on demo vehicles does not depend on the capitalization. As you know, the exception in 17 subsection 5 is, if you are engaged in further supply of such conveyances only, you can take ITC. Here you are not engaged in further supply of such conveyances, you cannot take ITC. No sir, as we have discussed in the first case, sir, I am the dealer, I am the authorized dealer, where I will sell the cars also to the customers directly. For that purpose, I am buying the cars and selling the cars, and for that purpose, I made certain vehicles as demo vehicles or test drive vehicles, all that. I can take ITC happily because I am buying the cars and selling the cars. So there is the clarification with respect to that. Next one, if you see, that is related to the clarification with respect to time limit for availing ITC in case of RCM supplies, where RCM supplies are there and the recipient is required to raise tax invoice. The doubt is, what is the time limit to take ITC? Time limit to take ITC is section 16 subsection 4. But sir, in 16 subsection 4, they talk about the relevant financial year in which the invoice is raised. From that, you should see 30th November of the succeeding financial year, or actual date of filing, annual date of the relevant financial year, correct? Now, in this case, which financial year I should take? Then the law says, see, when the recipient is required to raise tax invoice, the relevant financial year will be the financial year in which that invoice has been issued by the recipient under section 31 subsection 3 clause F. Simple. Just like supplier has to raise invoice, recipient has to raise invoice. And when recipient has to raise tax invoice, so what financial year he is raising, from that only you have to, the recipient has to calculate the time limit for availing ITC. So he has an obligation to raise tax invoice under section 31 time limit that he has to follow, and accordingly ITC should be taken. But sir, if there is any delay in issuance of such invoice because of there is late payment of tax also, then automatically the interest and penalty will come into picture under section 122. Okay, so simple. Recipient has to raise tax invoice and he has to pay GST under RCM. Then he should raise the tax invoice within section 31 time limit, and the time limit to take ITC on that is nothing but in which financial year he has raised invoice, succeeding financial year, 30th November, or actual date of filing, annual date of the relevant financial year, whichever is earlier. So that is the point. That means what we are saying, you should raise invoice within section 31 time limit and take ITC accordingly. If you are not raising the tax invoice according to the time limits in section 31, then because of that late payment of tax happens, and because of that you should pay interest on the tax, as well as you are subjected to penalty, right? So that is what the concept, right? That is what this clarification all about. The next clarification is with respect to ITC on ducts and manholes used while constructing this optical fiber network. So in that case, in the construction of optical fiber, cables or networks, sir, they are using ducts and manholes. On that, whether we can take ITC or not, in that department has clarified. Generally, plant and machinery, 17 subsection 5, you know, sir, plant and machinery is an exception, you can take ITC on that. So, ducts and manholes will be considered as plant and machinery. They are not being specifically excluded from the definition of plant and machinery. That means, ducts and manholes are plant and machinery. Ducts and manholes. Ducts and manholes are plant and machinery. So you can happily take ITC. You can happily take ITC. That is the concept. Okay. Right. So the next one is with respect to clarification in respect of entitlement of ITC by insurance companies on the expenses incurred for repair of motor vehicles in case of reimbursement mode of insurance claim settlement. Please understand. See, now, sir, I have a car and there is a small accident where I should change the silencer of the car or something. There should be some spare parts, etc., to be changed or whatever it is. Now, the point is, sir, there are some repairs and maintenance involved here, and this amount is borne by the insurance company. Now, here the point is whether insurance company can take ITC of it, is what the point. If you remember 17 subsection 5, there is an exception where normally general insurance repairs and maintenance servicing or locked the credits, but if it is general insurance company, they can take ITC. So, sir, general insurance companies can take ITC of the repairs and maintenance taken for the vehicles. Now, here the point is, sir, how they will provide this insurance? Now, please understand, there are two modes. One is cashless, the other is reimbursement. What does it mean? Sir, cashless means, understand what happens. The repair services are done at network garages of insurance company, and the insurance company pays approved charges to the garage. Invoice are issued by garage in the insurance company's name. Now, see, for example, my vehicle got damaged, all this stuff. I will drop the vehicle and that vehicle to the insurance company. Insurance company will take that vehicle to the garages which are having like the insurance companies with whom that garages are having MOUs, all that. So within their network garages, so they will do the repairs. So now in that, what will happen? Sir, whatever the repairs are there, that let us assume 1 lakh repairs, 80,000 is approved. 80,000 is approved and 20,000 excess cost. Now 20,000 I will pay to that garages, network garages. 80,000 directly insurance company will pay. Full cashless processing, simple. That means insurance company will not take even 1 rupee from me. Okay, this is one way. The other way is the reimbursement. That means, sir, I will take the vehicle to a non-network garage with whom insurance company doesn't have any MOU, all that. Now I will pay the full amount whatever is there, and I will give the bill to the insurance company. Insurance company will do reimbursement to me. But here the interesting thing is, sir, the bill should be in the name of insurance company. Then only insurance company can take ITC of that. Okay, so the garage issues the invoice in the insurance company's name without providing credit for repair cost. Okay, policy holders will pay it and take reimbursement from the insurance company. These are two methods here. So I hope you understood. One, there is repair and maintenance for my car. Sir, in both the cases, actually this point is for both. There should not be any line. So the same is applicable here also. We understand, sir, insurance companies, repairs and maintenance, whether they are doing cashless things or they are doing reimbursement to the customer, where customer will get the repairs and maintenance and claims reimbursement from the company. Both the cases, they are eligible for ITC under section 17 subsection 5. So blocked credit will not apply. There is an exception to blocked credit. So hope you are clear with this. Now the issue is actually, sir, as I told you, 1 lakh is the repair cost. 1 lakh is approved, 20,000 is excess. Correct? Sir, if at all, to what extent ITC is available to the insurer in case of two separate invoices by the garage for repair services, one to the insurance company for approved claim cost, another to the customer for any excess amount. So as I told you, 80,000 is to the garage and 20,000 excess amount to the customer. We have given the invoice. Now for the insurance company, ITC is available to insurance company only on the invoice issued to it. Subject, of course, the said amount is reimbursed to the customer. Please understand, that means insurance company can take ITC only on the 80,000. because that is the burden they are taking. Correct, they are not taking the burden of entire 1 lakh. So that is the point. Okay, sir. So the garage fellow gave 80,000 invoice to insurance company, 20,000 to the customer. Insurance company can take ITC only on the 80,000. Okay, fine. The next thing, what is the extent of ITC available to the insurance company in case single invoice is issued by the garage covering the full amount for repairs and services, and the insurance company reimburses only the approved claim cost? Full 1 lakh, that fellow giving the invoice, garage fellow, to insurance company in the name of insurance company. Can insurance company take 1 lakh ITC fully? No, only 80,000 again. So ITC is available to the insurance company only to the extent the reimbursement is approved, okay, to the insured, not on the full amount, not on the full invoice value. This is another thing. So finally, what? Whether ITC is available to the insurer if invoice for vehicle repair is not in insurance company's name. Obviously ITC is not available. You know, section 16 subsection 2 says, sir, invoice should be, you will be having a documentary evidence of invoice, and if that invoice is not in the name of insurance company, how will it get reflected in GST or 2B of insurance company? So it cannot take ITC. The insurance company cannot take ITC if the invoice is not in their name. Clear? So that is what the story here. Hope it is clear. A very good clarification again. So please make sure you are thorough with this. Mark it important. Okay, with this we are done with another clarification as well. So the next one, if you see, sir, if you remember, when we are going with valuation rules and when we are calculating the value of supply for the insurance premium paid for life insurances, all that stuff, sir, in the value of supply, we will exclude some portion when you're going through value of supply, all that stuff, sir. Even though the premium is paid 1 lakh rupees, from that, let us assume some 20,000, 30,000, 40,000, something or the other, based on valuation rules, we will remove some portion. Now the doubt is, should we reverse ITC because of this under rule 42 or 43? Was the doubt. Now there is a clarification regarding this. See, the clarification is on the requirement of reversal of ITC in respect of portion of the premium for life insurance policies which is not included in the taxable value. Understand, the premium paid in case of insurance policy, some portion of premium is not included in the taxable value. That is because of the valuation rules. This is neither a nil rated nor wholly exempt supply, and this is not a non-taxable supply. So you will not get a situation where rule 42, 43 comes into picture and you need to reverse ITC, all that stuff will not arise. That is what the concept they are trying to tell. A very simple and small clarification. Simple. What is that? Sir, any insurance premium, whatever you are paying on life insurance, the value of supply, some portion of the amount we will deduct because of valuation rules. For that purpose, you need not reverse any ITC under rule 42 or 43. That is what the clarification. So guys, hope you have enjoyed this lecture on input tax credit, a very important chapter, and we have revised it in a very effective way according to me. So hope you have enjoyed this lecture. So wishing you all the very best for your preparation, and enjoy your reading. That is very important. See you all in another video. This is your Mr. GST signing off. Jai Hind. Now, one interesting clarification in ITC chapter actually. So your friends or anybody would have struggled it to understand, or you would people would have explained it in a very, like, what, complicated way. All that very simple one, just looks like little bit lengthy one. Apart from that, very easy one. Please understand that. What is this concept? Now see, I'll explain this with my artistic skills here. Okay, the original equipment manufacturer, this is mainly with respect to cars. There was a doubt. See, for example, there is a factory which is manufacturing cars, and there are dealers, who are selling the cars or any goods you take. I repeat, this clarification is equally applicable for all the goods. Okay, what is this concept now? See, there is original equipment manufacturer factory. Near the factory they are manufacturing all these things, and at the factory gate itself, what the dealer will do, dealer will go to the factory gate and take the delivery of the goods whatever he is buying from the original equipment manufacturer. So the delivery is happening, the delivery of these goods is happening at the factory gate of the original equipment manufacturer. So dealer will go there and take the delivery. So what happens, sometimes dealer itself, he will go take his vehicles and take the goods, or dealer will ask, sir, original equipment manufacturer, you only arrange some vehicle and send, we will take care of the cost, we will take care of the insurance, whatever it is, or if you are paying also, no problem, we will reimburse to you. Like that they will discuss. So here the point is, as per the contract, if you see, we call this as
X works contracts. X works contract. Okay, so that means your X will not work here. So X works contracts now, sir, where the dealer will own the goods at the original equipment manufacturer's factory gate itself. So the goods are handed over to the transporter, and the OEM, the original equipment manufacturer, completes the delivery at the factory gate. At the factory gate itself, original equipment manufacturer is like, what? Okay, fine, my responsibility is over. Like that, he is leaving. Okay, so in that case, please understand that the original equipment manufacturer responsibility is ending at the factory gate. In that situation, dealer is getting these goods, right? Now the doubt is, sir, dealer is getting the entire risk at the factory gate only. Still, this goods has to travel from original equipment manufacturer factory gate to dealer's showroom or dealer's business premises, all these things. That means dealer has not yet taken physical delivery of the goods, sir. But in section 16 subsection 2, conditions for availing ITC, there is a condition that you can avail ITC only if you have actually physically received the goods. Then only you can take ITC, correct? So do you remember that only after the actual receipt of goods or services you can take ITC? Here, sir, I got the ownership, actual ownership at the factory gate, sir. But goods are still in transit. Goods are still coming to my place. The vehicles are still coming to my place, or goods are coming to my place. They are still in transit, sir. I have not physically received them. Can I take ITC? Is the point of the dealer. Now the department has observed this situation closely and told, hey, here at the factory gate itself, you are getting the ownership, you are getting total risk. So we will give you ITC then and there itself. Don't worry. That means even though the goods are not physically received by the dealer, we are seeing he's getting the risk and ownership, everything at factory gate. So we will give ITC, no problem. If you ask me, then the condition in section 16 subsection 2 itself will lose the relevance, actually speaking. So in all the cases, then people start will making X works contract agreement, all these things. Okay, so the moment the goods are sold, the invoice is raised, payment is made, whatever it is, the ownership risk, everything is passed at factory gate. So even though the goods are not physically received by me at my premises, I can take ITC. Okay, so now dealers are enjoying. Yes, super, sir. Nice clarification like that. And this clarification is equally applicable. This clarification, this same principle is equally applicable to other goods also. But point is, you should bring the goods for business purpose. If you are diverting it for non-business purpose, or in middle the goods are lost or stolen or destroyed, written off, disposed of, section 17 subsection 5 block the credit is there, you cannot take ITC. That is basic thing, sir. Please understand, that is basic clarification. The important thing is, at the factory gate, if you are taking the ownership, straight away they are giving you the ITC. So in 16 subsection 2, sir, the registered person can be considered to have received the said goods at the time of such handing over of the goods by the supplier to the transporter at his factory gate. So it is considered as recipient has received the goods. Even though he has not actually received, it is considered that he has received the goods. Okay, that means received the goods in the sense, technically it need not come to your business premises physically. You are receiving it at a factory gate, it is as good as you have received. That is what they are clarifying. Okay, and this is equally applicable for other goods also. Such a wonderful clarification. Okay, for people like dealing with these type of goods, where they are buying the goods on X factory basis, or you can say X works contract. Okay, in that way, right? So a nice clarification. So the next one, if you see, there is a small amendment in section 17 subsection 5 blocked credits. See, if you see in that, earlier we have seen any tax paid under section 74, 129 and 130, the ITC is blocked. Now, as we all know, section 74 is applicable only till financial year 23-24, and from 23-24, section 73 and 74 are not going to be applicable, but in their place we are going to see section 74A, right, from the financial year 24-25. Now what they did, in the 17 subsection 5, they said any tax paid under section 74 shall not be available as ITC. That means they are saying section 129, 130 shall be eligible for ITC. Please understand, here there is a small mistake here. Section 129 and 130, if you see, sir, in this case and in this case, both the cases, we will pay penalty only. We will not pay any tax redemption fine in section 130. So this is a mistake here from my end. I'm sorry. Taxes paid and shall not be eligible. Shall not be eligible for ITC. Shall not be eligible. Shall not be eligible. Why? Because under section 129 and 130 also you will pay only penalties. Penalties, you will never take ITC. See, tax, interest, penalty, when we pay, only tax component can be taken as ITC. Interest and penalty, you cannot take ITC. Correct. So, section 74, you are paying tax, interest, penalty, nothing is available as ITC. Section 129 and 130, there was some drafting error where section 129, 130 you will be paying only penalties, you will not pay any taxes. So that, however, it is not eligible as ITC. That is what the concept. Now, if you ask me, sir, section 74A, under this I will pay tax, interest, penalty. Can I take ITC now? You can take ITC tax only, but not interest and penalty as of now. Okay, so maybe we don't know, in future they may amend this with 74A, but as of now, sir, this is what the position of the law they are trying to tell. Earlier it was section 74, 129, 130, whatever you pay tax, you cannot take ITC. Now they have said just section 74, you cannot take ITC. Your ITC is blocked. Why? Because section 129 and 130, however, you are not paying tax there, you are just paying penalties there, so automatically you are not eligible for ITC. That is what the amendment. So students, with this, yes, we are done with the video. Hope you have enjoyed this thoroughly, and please do make sure you are sharing this with your friends and colleagues, seniors or juniors who are in need of this. And make sure when you are preparing, I always tell you, enjoy your preparation, believe in yourself, definitely success is going to be yours. From my end, wishing you all the very best. See you all in another video. This is your Mr. GST signing off. Jai Hind.